To do a balancing act with the RBI
Every
policy
day?
tomorrow, right? It's just alternating.
No, but then why don't we list it out? It's aviation delays and specifically Interglobe Aviation. There's JSW Steel and
Telecom.
There you go.
Vodafone Idea continues to remain in focus.
Yeah, and it will be an important day today, but also a really interesting deal struck between Petronet LNG and ONGC. So it's like a news-heavy day today. Any of you flying Indigo anytime soon?
I hope not.
Probably tomorrow.
I hope not. But on the global stage, there's also the yen to talk about.
Oh yes, I mean, will 18th and 19th December become the most important dates in the month of December? I think that's something that we focus on. So lots to talk about at India Market Open. Here's what you will expect on the show, including a conversation starting off with Lawrence Balanco.
All right, let's kick things off with a check of what's happening across the globe. And you had stocks that rose on Wall Street after weak private jobs report. And in fact, bond yields and the dollar fell on account of that as well. And that's because bets are rising that the Fed will cut rates as soon as next week. So take a look at the headline benchmark moves. You had the Dow that gained about 0.9%, the S&P 500 by about 0.3%. And you had the Russell 2000, which is a small cap index, that led the gains with a gain of 1.9%, and that was quite interesting. But take a look at what is happening on the yields front, because if you look at the expectations of either a rate cut or a rate hike, the first moves are often at the low end of the yield curve, that is at the low maturity of the yield curve, and the 1-month Treasury bill yield dropped as much as 8 basis points overnight to below 3.77%. And what is more interesting is that since Friday last, the drop has been as much as 25 basis points. So traders are accounting very clearly for this next rate cut that is in the offing, almost a certainty now. What has happened though overnight? You had private jobs data that disappoints. I want to say disappoints, but you had a cheer in risk assets. So expectations of rate cut being built in. But what happened was that the private payrolls posted their biggest drop in 2.5 years in November. And that data is actually contrary to what the government data is showing, which is showing softness in the labor market, but not as stark as what the private data was showing. And economists have actually cautioned that this data has very little correlation with the non-farm payrolls data, which is the official data. The private jobs decreased by 32,000 in November, and expectations had pointed to an increase of as much as 10,000 during that month. And by the way, weekly jobless claims will be reported later today as well. Let's take a look at Asia, and specifically you want to watch out for the Nikkei 225 and what is happening in Japan, because the yields there have moved higher in anticipation of a rate hike, and the worry really is about an unwinding of the yen carry trade, and that's something that could have a bearing for various risk assets the world over. Lawrence Balanco, technical analyst at CLSA, joining us this morning. Lawrence, thanks so much for taking the time. Pleasure speaking with you. Good morning. Help us understand how you see the latest data points that you're monitoring across the world. How important is this unwinding of the yen carry trade, and what are the key levels when you look at the Indian equity market?
Yeah, I mean, it's quite interesting as far as the yen carry trade goes. If we look at speculator positioning, it's nowhere near what we saw in 2024, where we saw that big unwind in the yen currency. So really what we focus on as first support for the yen is around the 155 area. But I think the important part is to take away that the speculated positioning is not as significantly short the yen as you were back in 2024. So there's less risk from that positioning aspect. As far as the Indian market goes, we've been in this sort of grinding uptrend from the February-April double bottom pattern that we saw. We had an upside target of 26,300, which we've most recently met, and we've started to see a bit of hesitation and a pullback. But bottom line is, we think for global markets, that is, the 21st of November lows is the key pivot support area. And as long as price action across global markets remain above that lows that we made on the 21st of November, we think that there's still the seasonal strength to come through and likely a positive start to 2026.
Lawrence, sorry, just so that our viewers understand this correctly, you are saying that there is a possibility for Indian markets to show the seasonal strength in the month of December and start off 2026 on a positive note. Did I get that correct?
And that's correct. And, we had 26,300 as an initial upside target, which we met. Next year, we can see the market work our way towards 28,800 as the next objective above this 26,300 area.
A lot of people tend to look at the Sensex or the Nifty in correlation with gold and that ratio and how that does. And typically when it reaches certain levels, markets tend to outperform. Now in Indian markets, that is at a lowest level in a long time. Indian markets have consolidated versus other emerging markets actually doing well. Are we setting the stage for not just the start of 2026 to be good, but the rest of 2026 to be okay as well, Lawrence?
Yeah, so looking at our outlook for 2026, we see a bit of volatility come through the second and third quarter. Now, I think one of the potential positives for India and the broader emerging markets is that we continue to see weakness in the dollar index. And we're looking at the relative ratio of the EM versus DM ratio continuing to improve through 2026. So outside of some pauses and consolidations, we do think sort of the emerging market and the India setup is that we can trend fairly well through 2026.
Okay. Lawrence, good morning. Hiral on this side. Now,
Morning.
When we're talking about what you're tracking in terms of levels as well, there will be a couple of sectors that will lead this kind of rally. Overall, currently we are talking about auto metals, which is seeing a strong move. What are charts indicating? If you have to look at 2026, which sectors which sectors are showing you strength?
Yeah, so definitely commodities. I mean, we put out a piece earlier this week just highlighting the broader commodity indices breaking out. And we've also looked at the metal space, metal miners globally breaking out. So there's some of the global ETFs that you can track with those breakouts. And we had copper break out to new all-time highs. We're getting upside target on the LME copper at over 16,000. For the LME aluminium contract, we're looking at an upside target there of 3,500. Palladium, another base breakout. So just repetitive breakouts coming from the commodity side. So we think the Nifty Metal Index can continue to improve through 2026 and just reiterate its leadership that you've seen in the second half of this year and a continuation of that into 2026. And the precious metals are likewise set to continue their uptrends. They've actually been the lead for commodities over the past 24 months. Silver broke out last Friday. You're looking at an upside target there of 65. And gold ultimately, while it's currently in a consolidation pattern since the October highs, this consolidation pattern that you've seen for gold should provide the platform for a move up to the 5,100 to 5,200 area. So broad-based momentum across the commodity spectrum.
What about financials though, Lawrence? And specifically, do you track Nifty Bank closely? The fact that it's hovering around that 60,000 mark and the sheer weightage that it has in the large cap index, I'm just wondering whether you think that there will be a resurgence for private banks heading into 2026.
Well, I mean, I'm glad you brought up private banks, because if we take a step back and we look at NSE banks, split between private banks and PSU banks, the banks index broke out in September, leading the Nifty's breakout above its 200-day. And it's still in a longer term uptrend. But really what the driver has been is the momentum shown in the PSU banks. So that's been the lead sector if you break down the Nifty Banks Index into those two separate parts. So SBI, Bank of India, Bank of Baroda, you've had strong trends there. We think that the private banks will get a chance to break out of their current consolidation patterns. If you look at HDFC, for example, you've been in a trading range for the past 3 months, and ultimately we think that does set up for a break to the upside. But currently the momentum is with the PSU banks, and if you look at the broader NSE banks, you're in an uptrend. And yes, we've got a longer term upside target of 37,000 on the Nifty, and we think banks will be an important sector driving the index up to that longer term upside target.
Lawrence, one question I have with you is in terms of what's happening with the dollar index. It's somewhere around that 99 level. Obviously augurs well when it comes to commodities and metals. From here on, if you have to look at copper, gold, silver, we are constantly at record high levels. Till what extent are you seeing strength in terms of levels if you have to track? And what should be that point where you would say, okay, this is it, from here on, it's time to book profits?
Yeah, well, so let's deal with the dollar first, because that's probably the biggest risk to the commodity trade right now. You'd need to see a close above 100 on the dollar index to suggest any potential weakness on the commodity side. But what we've seen since May is that you've had 3 separate rally attempts in the dollar index back to this 99 to 100, and we've failed on 3 occasions. This week, you've actually seen the dollar index roll back from that 100 area. It's broken back below its 50-day. And our measured downside target on this breakdown is to 89 to 90, suggesting another 9 to 10% downside for the dollar index. And like I mentioned earlier on, what we've seen in the commodity side is strong trends and fresh breakouts. That momentum continues to confirm it. So, this is the place to remain long and even add exposure, with copper's breakout this week in particular.
In fact, 3% overnight as well. And I love the title on the note, which is Berserk on Commodities. Pretty interesting. Kind of, you read that and the thought process independent of what individual levels might be. But just squeezing in one more commodity question, which is important from an Indian angle, Lawrence, which is oil. Now, do you foresee that to have some upsides from where is it right now? Or is it subdued prices that we are looking at for oil?
Well, I think starting 2026, we still remain range bound. So the $70 to $71 area has been a major cap. It used to be a floor that sort of OPEC seemed to have cut production at the level. It is a level that we've seen OPEC increase production at over the past 6 months. So that is the sort of line in the sand. If you do get oil above 70 to 71, then yes, there is upside towards the $82 area. But what we've seen currently, it's the commodity that is subdued. And we're not seeing any significant pickup to suggest that we get an imminent breakout.
Lawrence, you've spoken about the dollar, and we started the conversation with the yen, but I wonder whether you have an opinion on the rupee, because we've hit that 90 mark and we've seen a considerable slide in the recent past. Do you track the currency, and do you see any signs of maybe consolidation at this point, or further slide possible?
It's an interesting emerging market currency, because the majority of emerging markets that we track, typically you need to get a strong EM currency showing inflows and outperformance in the equity side. The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
Okay, interesting. Lawrence, if I'm to summarize what we've said, and based on what the note that you've written or the recent notes that you've come out with, it seems to me that what you are implying is that 2026 may be a year of many things, but it's certainly a year promising to be for commodities. The strength continues, and likely that they will be the big winners, at least in the first quarter or the first half of 2026, and therefore that's where bulls could focus on. Would that be a fair assessment?
Absolutely. That's where we've seen the momentum pick up, and we've got the structures in place. In broader commodities, we haven't done anything since 2022, and that's where the momentum's picking up. Absolutely.
And Lawrence, because just one more clarification, sorry, just so that people get it right, there are various facets of commodities, right? Between precious metals, copper, zinc, some others, where is it that you see the highest delta playing out, if you will?
Well, this week it's really been the base metals, right? So Ali's continued the acceleration that we had in October, copper this week, and then precious metals have been in the uptrend. They've been in for the past 12 months. We think that continues, but right here it is the acceleration that you've seen in the base metals, copper and Ali in particular.
Lawrence, my question to you is, apart from the sectors that we've already spoken about, pharma, FMCG, IT, three sectors, how are you expecting them to perform? Because mixed views coming in terms of IT. You have FMCG, which is still on that consolidation phase right now. And pharma has its own challenges, at least as of now.
Yeah, I think the fact that you range bound in all three of those make them funding shorts. If you look at it relative to Nifty, it looks like a place that you really have to be quite selective getting the right stocks, because the broader trends are they in a trading range or grinding lower slowly. So we think all three places are worth being underweight. If I had to single out one where you could try some tactical trades, it would be more in the IT space. You have seen some of the larger cap names show some slowing downside momentum, and you've seen a bit of a pickup in some of the mid cap names within the IT space. So out of those, let's say, three underperforming sectors, IT would be top, but pharma and FMCG still look weak and a place to be underweight to fund your overweight positions.
Mid-cap IT is where your bets could be. But thank you, Lawrence, so much for joining us on the show. Always a pleasure to speak to you about, and interesting to get you at a time when we're talking about Outlook 2026 as well. But moving on, if you have to talk about trade in terms of yesterday's session, we slipped below that 26,000 mark in terms of close, and it's the fourth consecutive day of negative closing that we've seen in terms of markets as well. In fact, what was interesting is that the benchmarks have somewhere outperformed their broader indices in yesterday's day. Max Healthcare, Bharat Electronics, they are the ones which fell the most. And both of these counters with Tata Consumers did a downtick of nearly over 2%. In terms of your broader markets as well, you have Indian Bank and Hoodco. They are the two counters which fell the most on mid-cap 150. Spark and Easy Trip Planners are also the top losers on your Nifty Small Cap 250 in yesterday's session. Overall, in terms of sectors, a pretty mixed day of trade is what you've seen. PSU banks, again, the top losing sector for the day yesterday. And you have Nifty IT and financials. They were the ones which were gaining as well. Metals, in fact, fell for a second consecutive session. But it's going to be interesting to see how metals pans out in today's session as well, with the way the dollar index has been panning out so far. Overall, Neeraj, what's going to be interesting is whether markets are able to sustain back above those 26,000 levels. And two, because we have a lot of stock-specific news, which are the sectors which will be able to support Nifty?
Yeah, I mean, it's a difficult call right now because suddenly out of nowhere, IT is playing that big part which is doing well, and Bank Nifty, which look showing a lot of strength, and hitting all-time highs before the Nifty does, has kind of unwound a little bit as well.
And yesterday, if you see your private banks, which were actually the top losers day before yesterday, in that last hour of trade, ICICI, HDFC, they are the ones who came and gave that support, and PSU banks, because of that divestment news, because of, the merger, the FDI, which is not happening right now, were the ones which were laggards.
Yeah, I think most traders that you're speaking to are right now refraining from taking too many heavy positions on a day-to-day basis, because the stop losses are getting cut either ways. So therefore, leave that out and try and focus on what could be done in a slightly medium term as opposed to the very, very short term, right? And that's where I think today I'm standing on the shoulders of the Bank of America team, because their India strategy note I really thought lays it out beautifully. So they say, viewers, that calendar year 26, they see Nifty at a circa 29,000, which is about 11.4% uptick. And they continue to prefer large caps over mid caps and small caps. So that's the first telling point. They're clearly saying that there is no scope of valuation expansion in India. It has to be earnings led. Now, the valuation expansion, if at all, if at all, could come in on a favorable trade deal. But this is not what BOFA is saying, this is what I'm saying. But what BOFA's view is that there is no case of valuation expansion, only earnings-led upsides. They are overweight rate sensitives and well-off consumption. I like that part, well-off consumption, simply because you want to bet where the money is. It's not about betting on X versus Y, but just that if the money is following discretionary consumption, you might want to bet there as opposed to betting on rural and mass consumption. They are underweight capex plays. They prefer financials, real estate, passenger and commercial vehicles, and regulated power utilities. And that's the safety bet, frankly, because power is such a crucial part of what the government policies that regulated power plays might actually give you a good bang for the buck per se. They are underweight industrials and cement, but they prefer select capex plays on growth visibility. And that is true. I mean, there are select capex on power, on renewables, etc., which are doing well, and you might want to bet there. They prefer pharma and aluminum, but are underweight IT, steel, and energy. They might be sulking a bit on their IT call, by the way. And they prefer defensives, which is telecom and hospitals. And I don't think anybody will debate that. You look at what Bharti's done, look at what Apollo has done. At any point of time in the last 12, 18, 24, 36 months, you put money into either of these stocks, you've come up trumps. And hence, maybe people are preferring the stability of these names. So I thought today, maybe for a change, instead of trying to focus on what individual sector might do, because a lot of stock-specific moves that we'll address, I think this was important.
Yeah, this was important. And overall, as Neeraj was mentioning as well, the overall mood is of caution. There is that indecision that creeps up time and again. The momentum indicators, if you have to track those, they're signaling some bit of weakness despite the index holding the key averages as well. Now, globally, the attention remains on your geopolitical as well as your trade cues. In fact, you have Russian President's visit to India today and tomorrow, and that will focus on defense ties, civil nuclear cooperation, and narrowing the trade deficit. And now, if you have to talk about levels, your resistance is seen at around 26,070 and 26,150. 26,000 is your crucial breakout point that you need to watch out for if you're looking at markets from a technical perspective. Support, the first level is coming in at around 25,970, and if that's broken, 25,940 is the next level you should be looking at. Sustainably above 25,940 is your critical breakdown level. If you have to talk about Bank Nifty as well, that is showing relative resilience, but falling below that 59,000 mark in intraday trade, and then recovering strongly to close with a gain is the important point. Your crucial resistance comes in at around 60,000 on your Bank Nifty, and your immediate hurdles are 59,500, and your crucial support coming in at 58,500. So, these are levels one should be watching out for. But let's head across to my colleague Puneet, who will tell us what is the F&O data indicating as well. Puneet, what are you picking up so far, taking the way markets are panning out with the kind of volatility we are seeing?
Well, most certainly, because it's been a classic play by FIs yesterday. And when you also look at the open interest distribution, it's classic that a lot of investors are on the sidelines, and that is showing up in all the data points that we track for foreign investors as well. Implied open indicating a 47-point downtick, but let's straight go to the foreign investor positions very quickly as well, because while we have seen open interest increasing for the Nifty and the Bank Nifty, there was selling in the futures for foreign investors in yesterday's trading session, and because of that, the subsequent impact has been and visibly clear on the index long. So it's now slipped to 14.06. We were at 18.5% just a couple of days ago. So the classic play that longs have been cut in by foreign investors and shorts are being built in the system. The net OI PCR is very, very bang at 1, indicating a neutral position for one call or one long build-up. There is a short build-up as well. The open interest distribution, as I was mentioning, is classic because you are seeing huge candlesticks between 25,500 and 26,000 for the puts, with 25,500 having the highest open interest, while for the calls from 26,000 all the way up to 26,500, we've seen the maximum open interest for the calls. So it's split on both ends, with traders looking to have the maximum open interest at 26,000 and 26,500 for the calls. So out of money put and out of money call options are seeing the highest interest. Now, this also indicates that this is the range that's expected, but also that traders aren't certain on both sides. So they are taking shorter positions at this point of time. In terms of open interest gainers, only a couple of them. Angel won yesterday because the monthly update was down in trade. While for open interest losers also, there's not too much happening in terms of the OI change, barring something like an HUL, which will be in focus tomorrow on the back of the ice cream business. But largely, limited, only bottoms-up play will be something to watch out for in the markets today.
Thank you so much for that, Puneet. In fact, your implied open is indicating a 50 points downtick. But let's quickly focus on the stocks that we're looking at. You have the telecom sector that will be in focus with Vodafone Idea, Indus Towers and Bharti Airtel, because as per sources, the Cabinet Secretary will be meeting the Finance Ministry and Department of Telecommunication to discuss Vodafone Idea AGR issues, and the meeting will be to discuss the scope and extent of Vodafone's AGR demand. Now, they will be considering Department of Telecom's fresh proposal on the extent of the relief. All of us know what the issue is all about, but if you have to look at impact as well, we're talking about, the way Vodafone will be able to get a waiver or not on the back of the miscalculated amount or any other portion of the amount. It will be positive for Vodafone and Indus Towers, and if there is a moratorium, negative for Vodafone and Indus Towers as well. The key question over here will be, will Bharti Airtel get a similar benefit or not? So that's the sector that we should be watching out for. Secondly, Pine Labs reported numbers. Now, this is the first quarterly result since its recent listing. It's a strong set of numbers that have been reported because they reported a profit of 6 crores versus a loss, which marks a significant turnaround. And this is a second consecutive profitable quarter, which is up nearly 25%. The operating leverage is also pretty strong because your EBITDA surged 62%. And if you talk about margins, they actually expanded to 19% from a 14%. The growth in issuing business, affordability and online payment segment is the one which is actually aiding the business for this company so far. Moving on, you have IEX. Now, it's an interesting play to look at IEX because of the ups and downs it sees. The numbers for November have been robust with a 17% growth in your overall electricity traded volumes. And this has primarily been driven by a significant surge in the real-time market. In fact, the long-term concerns do persist regarding regulatory changes. I will not go through the individuals, but overall, a good set of numbers that has come in the month of November so far. So these are the three stocks on my radar.
I would start with Interglobe Aviation, and there's quite a bit that is happening that you might have witnessed already. A lot of flight cancellations, and you've probably experienced this. Why is it happening? Well, Interglobe Aviation says that it's facing technical issues, but there's a lot more happening. In fact, what has happened over the course of the last couple of days, over 330 flights have been cancelled by Interglobe Aviation, and the Ministry of Civil Aviation has gotten involved. It said that in November itself, 1,232 flights have been cancelled, and the reasons for those cancellations are the introduction of the new FTTL constraints, seemingly 755 cancellations on account of that. What is that? The flight duty time limitation norms that came through quite a while back, actually, that requires pilots to be rested for longer periods of time and restricts the amount of time that they will be flying for. The ministry is saying that the DGCA will have to get involved and investigate why these things have happened, along with Interglobe Aviation. That meeting is set to take place. And what Indigo is saying is that they have initiated calibrated adjustments to the schedule, and they expect that it will take place over 48 hours. They will go back to normal. But they've been blasted by the Airlines Pilots Association. There are two of them. They're saying that this situation points to a failure of proactive resource planning by the dominant airline, effectively one of them, 2/3 of market controlled by Indigo. And so they're calling for a shifting of some of the slots if Indigo is unable to take these flights and do them on time. So watch out for Interglobe Aviation. Any developments through the day will bring you. Websol Energy is the second stock on my list, and this is a significant update that they've shared. The outlook going forward looks pretty good according to them. They say that the photovoltaic cells, solar, the demand is going to rise to 40 gigawatts in FY27. The projected demand for the current year is as much as 20 gigawatts. So there's a sharp increase, and the company plans to expand solar cell capacity to 5.2 gigawatts from the current 1.2 gigawatts and solar module capacity to 4.5 gigawatts from the current 550 megawatts. This is going to happen in phases over the course of the next few years, culminating in calendar year 2028. They're aiming, therefore, for a compounded annual growth rate in capacity of 50% between 2024 and 2028. They're saying that the capacity utilization over the course of October and November is pretty healthy. For Unit 1 of their solar PV facility, it's at 95% and 51% in the second unit. And the module capacity utilization in those 2 months was also at 66%, which is why they will need to expand. Mukka Proteins is the third stock on my list. Just want you to know that this is actually a stock that is just about 750 crore in market capitalization, which is why actually this order stands out. It's 475 crore or nearly that, and they've gotten this from the Bengaluru Solid Waste Management. Essentially, that's an organization, and the order is for treatment and disposal of leachate at 2 landfills. It will be executed over a period of a maximum of 4 years, or till when they complete this project. So watch out for this one in trade. It dropped quite considerably in trade yesterday.
Yep, the 3 on my list, and the first one, of course, was announced yesterday. But I just thought for the uninitiated and post the press conference, the benefit of knowing what the management was saying as well. What has happened is that JSW, as a result of the JSW JFE deal, JSW will receive roughly 30, as per some estimates, about 32,000 odd crores in cash. Also remove about 4,900 crores of Bhushan Power's debt from its own balance sheet. Remember, BPSL has about, as I lead out, enough land to ramp up the capacity to 10 million tons per annum, which also aids JSW Steel, which will be a 50% partner in this project. And of course, remember, the effect of this is that JSW Steel sharply reduces the debt on its books as well as gets capital, which is great. So only 10% of EBITDA contribution sacrificed, but has enough material to ramp up capacity in other places. As a result of which Investec, for example, is maintaining the buy on the stock with a target price of 1250. Remember, yesterday the stock was down. Today it may change a little bit. Investec says that BPSL monetization is simplifying the structure, delivers the balance sheet for JSW. JSW's consolidated net debt will reduce by 38,500 crores, which is about 50% of the net debt. That is huge. And I think the street may see some merit in that today. Petronet LNG is in focus. Petronet and ONGC have executed a 15-year binding term sheet for ethane unloading, storage and handling. Now, ONGC will reserve capacity of 600 KTPA, but for Petronet in particular, what will happen? It shall receive, store and handle ethane sourced and imported by ONGC as well as its subsidiaries. So that's the first part of the piece for Petronet LNG, excuse me, right? And then, as a result of which, Petronet expects about 5,000 crores in gross revenue over the term starting FY29. As per the math done by Somit, my colleague, the contract could add about 2,200 crores to Petronet's current value. It represents about 5.5% of the market cap. This is, of course, the NDTV Profit math, but suffice to say positive for Petronet for sure. Watch out for that. And Eris is an interesting one. They made a presentation post-market hours yesterday, 3:57 p.m. to be precise. The takeaways are, as put out by my colleague Vratik, is that is a strong EPS growth cycle ahead, FY26 to 28, expected to strengthen every year through FY28, as per the presentation, by the way. So remember, this is the management saying this, not us. Management says they're well positioned to be amongst the first to market post GLP-1. And they target about 3,000 to 4,000 crore opportunity. The EU CDMO business is in an inflection stage from FY27. The net debt to EBITDA has been reduced quite significantly. Cash generation is very strong. FY25 operating cash flow was 105% of EBITDA. So all of those metrics look okay. Let's see if the street likes the presentation and the guidance and the street rewards the stock or no. So watch out for that one. Okay, lots more in focus too, but we need to slip into a break. Come back with a lot of topical news flow and trading strategies.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizens.
Okay, JSW Steel, of course, we spoke a lot about it, and they did a press conference yesterday as well. Here, Vishwanath Nair caught up with Jayant Acharya, the Indian CEO. Listen into a small slice of that conversation.
I think it's a win-win deal for both JSW and JFE. JFE has been a long-term strategic partner with us, and it's a global steel player, well-trusted. JSW is the largest steel maker in India, and our partnership has been long. JFE has been looking for assets outside Japan to grow, and India is one of the countries they've identified for the growth. This asset provides the opportunity for not only getting a presence on ground, which is an operating asset, which has been turned around by JSW in the last 5 years. It also presents an opportunity to expand to 10 million tons and beyond. Okay. And that is what makes it attractive for them.
Let me get to the financials a little bit. 15,570 crore is the amount that 750 crore is the amount that JFE is investing for 50% stake in JSW Kalinga, which holds stake in JSW Sambalpur, which holds BPSL under it. Just trying to understand this structure and how does this benefit you and the partner that's coming in?
So the structure, I think you should basically look at as a structuring part. So what JFE is getting in is 15,750 as an equity, and they will get that in 2 tranches over the next few months. And what JSW will be getting into in this deal is that we will be getting 32,350 crores of cash gross, net of tax, that will reduce a bit, and 4,900 odd crores of debt, which is moved along with the slump sale to the SPV. So the total deleveraging which will take place in JSW Steel balance sheet will be 37,250 odd crores.
Okay, now let me welcome in Parthiv Jonsa, Vice President Metals and Mining at Anand Rathi, joining us on the show. And Parthiv, this is Neeraj here. Good morning. At the onset, apologies for keeping you waiting while we were just finishing off some of the other pieces, and thank you for waiting by, of course. Now, Parthiv, fill us in, because yesterday the street, when they initially read the first set of news flashes that came in, seemed to be disappointed with the developments. But on hindsight, on further examination, most notes that I read today, some bit of which I did myself too, seems that this deal is not all that bad for JSW.
Hi, good morning. Thanks, Nesh, for having me. And right, like you rightly pointed out, this deal is actually a win-win for both the parties at the end of the day, right? Wherein JSW is getting close to about 37,000 crores, which they can use either to deleverage or to use it across any of the other capex what they are doing at say Dolvi or the upcoming projects in Odisha and so on and so forth. GFE is getting a practically an entry into India. They were been trying to get an entry into India. Now they have finally got it directly with a 4.5 million ton kind of an entire establishment. So I don't think so. When the press release came out yesterday, there were a lot of confusion around the entire enterprise value, the equity value, and everything. But now it's all clear, and I think this deal is a very good deal, and the overall structure is very positive for both the parties involved.
What do you think is now next in store for JSW as a result of this? Deleveraging of the balance sheet, I presume, is one. They probably get capital to ramp up some of the other capacities. Is this what was a perfect setup for you for a JSW analyst over the next 12 to 24 months? Or would you want for some more things to happen for JSW Steel?
Let me just answer this a bit differently out here.
Sure.
If you see 4.5 million ton kind of a facility, right? At the end of the day, even if you just consider replacement value, it still works out about 45,000 crores kind of a number at the end of the day. So I think this EV of 53,000 crores is actually a good number just to begin with, right? Now, what you are getting, GSW will be getting a slump sale of about 24,483 crores odd number by say March or say April of next year, and then the second tranche of about 7,875 crores by July September. So at the end of the day, and plus also you have this 4,900 5,000 crores of BPSL's debt which is moving out to the new JV. So net you have a 37,000 crores and you adjust that to tax, but net you have about 37,000 crores kind of a say war chest with you. You can either deleverage your balance sheet. Basically, they are at about 79,200 crores kind of a net debt. This will go down to 50,000 odd crores, and your saving there and there itself is about close to about 3,000 crores in finance cost, give or take, right? So where we agree that, when BPSL is moving out, you have a dent of almost about 3,500, 4,000 crores on an EBITDA. But on a bottom line, you are saving that much on your finance cost. So that's positive. Now, what is the next step? The next step is basically getting Dolvi 5 million ton on stream, which is their plan, which they have already given out. After that, you have Odisha. After that, you have multiple other units. You still have Vijayanagar where they can expand further, right? So their entire roadmap to take from 30 to 50 has already been very well, laid out. Now with GFE coming in, you get technical expertise. So that's the entire JV, right? Where JFE will be taking care of the technical expertise and innovations and everything. Whereas your JSW will be taking care of all the operational aspects and all the other aspects of the entire business, right?
Yeah.
So when GFE comes in, you get that additional advantage to maybe make those value-added products at the end of the day. So that is also a very good delta where you can get at the end of the day. So that can also be a good future roadmap.
Parthiv, you seem to be constructive here on JSW as a result of this.
Yes, absolutely. It's a win-win for both the parties at the end of the day, right?
Okay. And because metals are in a rise, are you changing your targets on JSW Steel post analyzing the details, the finer details of the deal compared to what the target was maybe?
If you consider, right, as I told you, when BPSL moves out of the business, just to give a very back of the envelope calculation, this entire accrual will actually happen in FY28 because by the time everything happens, it's mid of FY27. So the main full year accrual will be from FY28. So just consider on FY28 for that matter, just as a very basic back of the envelope calculation for whatever numbers we have. When BPSL moves out, you have almost about 12% kind of a dent in the EBITDA. But that also reduces your debt to a great extent. So though your enterprise, your EV and your entire valuation goes down, but your equity value remains almost stable. So there is no hassle in the target price as far as it's concerned. So target price remains absolutely stable there on a FY28 basis.
Parthiv, very quickly, what is the target price of yours?
About 1250 or 1240, 1250.
1245, 1250. Okay, Parthiv, once again, thank you for waiting by patiently, but lovely talking to you today. Look forward to talk to you more often.
Sure. Thank you so much.
All right,
Thank you.
that's of
Appreciate
course the view from Anand Rathi. Okay, let's move on and let's get in our technical and fundamental guests on the show today. I know we've crunched this very much. So, Milan Vaishnav, founder and tech analyst at Gemstone Equity, Avinash Gorakhshekar, founder and head research at Avinash Mentor Research Services. Gentlemen, thanks so much for joining in. We are going to play a bit of a rapid fire today, gentlemen. So, bear with us today. Just too much packed into a show. Milan, good morning. Seems like we'll have a low start today. But very quickly, would you trade a JSW Steel because we are on the topic? And subsequently, are you trading the Nifty today?
Yeah, so far as Nifty is concerned, yes, I will be looking to buy at the dips. I expect to stay that in that 400-point range with 25,700 acting as a major support. And so far as JSW Steel is concerned, I would be looking at buying it only above 1160 and not before that.
Okay, and you haven't mentioned the Nifty 50. What is a? Oh, you did. You'd be buy on dips. So what picks would you give?
I still expect 26,100 to continue to pose resistance, although the maximum put OI is lower at 26,000. But I would also not disregard at 25,500. But I would also not disregard 26,000 because it's the second highest put OI, and we are still in the primary.
Milan, I got the view. I got the view on the benchmark. I'm talking about your picks, individual picks.
Oh, I'm sorry. I'm optimistic on the metal space. I'm looking to buy Hindustan Copper, buying about 340 with a target of 360, and putting a protective stop at 328. And the second one is Infosys, buying about 1575 with target of 1640 and protective stop at 1545.
Okay, so that's Infosys and Hind Copper. Milan, Avinash, stay with us. In fact, it's time. It's 8:45 and we are going to head across to Somit Sarkar, who joins me with all the chatter from the dealing room. Somit, what are you picking up? Because, I mean, JSW Steel is something that we discussed earlier as well and absolutely confirmed now.
Yes, JSW Steel has been confirmed, and given the fact that we also spoke about it yesterday, saying that the deal was quite positive and the stock did recover from the day's lowest point, and we could see a rise in trade today as well. But stocks that remain in focus, firstly, is CG Power, where if you look at the stock, it's trading near its QIP price at around 660 rupees, and dealers are multiple dealing rooms, in fact, are suggesting buy calls to their clients on this counter, suggesting it as a value buy at the current level. When it comes to Route Mobile, that stock yesterday at one point of time was up around 11%. There were buy flows on the large HNI desk. There's a buzz of a potential delisting that could happen from the foreign promoter side, that is Proximus. And BHEL and Bharat Electronics, both these counters remain in focus. There are buy flows on DI desk. Delivery volumes were also on the higher side. Dealers are expecting a rebound in the share prices of both these counters, that is BHEL and Bharat Electronics. And Biocon was part of a segment yesterday where we did indicate that there are buy flows and dealers are expecting some positive corporate development. Now, the company has announced that there will be a board meet on 6th of December, that is on a Saturday, and they will be considering a host of things, which includes fundraise and also some action in its subsidiary, that is Biocon Biologics. So keep an eye out for Biocon as well.
I want to speak about that last bit, Somit. Thanks so much for that. Avinash, are you watching Biocon very closely? Because the update that came through is that on the 6th of December, they're going to consider investing in Biocon Biologics by buying shares from the existing BBL shareholders and for various other reasons as well. Would you consider getting into Biocon at this moment?
Yeah, I think good morning, Alex. Definitely from a longer term perspective, I think Biocon definitely looks attractive. I think if they have decided to buy out equity stake, that means that, they are very much committed to this business. And more importantly, the markets would obviously be waiting that when this unit is going to unlock value for the parent company, because for a very long time we have been hearing that this company plans to go public, raise money from strategic investors. So I think, at the current levels, if somebody has a 12 to 18-month kind of time frame, definitely Biocon has shown a kind of a positive kind of, performance in Q2, and Q3 and Q4 should also be reasonably good. So I think we could definitely take a reasonably good bet here, but slightly from a medium to long term kind of time frame.
Quick answer to this. The question is, where do they get the cash? Because they currently don't have any, right? They would have to raise cash for this.
I think my sense is there could be a equity offering or maybe some sort of borrowing kind of program. But I think clearly at this level, maybe a equity offering, maybe a slightly more dilution in the parent company could be a kind of a possibility. We'll have to wait for some clarity, Alex. Here, as you rightly pointed out, that some amount of cash would come from internal accruals, but the balance would obviously be funded by either equity or maybe long-term debt.
Okay, equity or long-term debt is what the funding could potentially look like. But the next big story is Indigo, which is under the regulatory scrutiny as the DGCA begins investigating widespread flight delays and cancellations. In fact, the airline has cancelled almost little over 1,200 odd flights in the month of November alone, following continued disruptions. And in the last 2 days as well, it's been a very big number. In fact, they have been summoned to the DGCA headquarters to explain the situation and present a mitigation plan. Danish, my colleague, joins in with more details. Danish, what are you picking up? And, yesterday the conversation was that probably things are getting back on track. But we do read of a lot of other cancellations that have happened from midnight to now as well.
Well, that's correct. Even today, Indigo is expected to cancel over 150 flights. And from the past 2 days, this is the number that is on an average, the total number of cancellations that Indigo is doing on an average. In fact, Indigo is one of those airlines in India which is the largest carrier, largest fleet, biggest market share, and they operate over 2,300 daily flights. So which means that somewhere around they're cutting almost 10% of the daily flights. But as far as the regulatory scrutiny is concerned, the DGCA has summoned them today and they're expected to go to the DGCA headquarters right here in New Delhi and give them the answers that why this has happened. But in a very interesting angle, both the pilot unions, the ALPA and FIP, both three unions have slammed Indigo, and they've said that whatever flight delays and cancellations that we are noticing at the moment, it is because of Indigo's bad planning. And why do they say that? Well, right now, the country is under the implementation of the second phase of FDTL norms, and by that I mean the flight duty time limitations. So now, as per the DGCA mandate, the weekly rescue rate for pilots has an increase from 36 hours to 48 hours. And similarly, they're permitted to do just a couple of night landings, which was, and this figure was somewhere over 5 to 6 under the previous regime. But now, in order to make flying more safe, in order to ensure that the pilots and the cabin crew members are well refreshed before they are catching any flight. So that's why the DGCA mandate has come in, and this is how the pilot unions are slamming Indigo. They're saying that Indigo had good 9 months to prepare for this, and in fact, if Indigo knew that they will not be having enough number of pilots, so they shouldn't have had a lot of flights in the winter schedule. So right here we are seeing that while the airline is saying that it is facing certain operational challenges.
Correct.
But,
so Danish, basically we are saying that the flight cancellations continue. Update from the DGCA is going to be important on the back of the summons and what they get to hear. Thank you for getting us that update. We will keep coming back to you, but let's get in Mark Martin, CEO of Martin Consulting. Mark, welcome to the show and always a pleasure to speak to you at NDTV. The issues that Indigo has been facing and the reasons that they have been giving for the cancellations right now vary. What would you have to add to that?
Good morning. Always a pleasure to be with you on NDTV. Thanks for having me. I think this whole thing is a ridiculously shoddy, immature excuse. And what they're trying to do is pass the buck onto the DGCA and pass it on to the traveler. This is nothing but a tactic. And what they're doing is, as Danish said rightly, they had 9 months to comply with the CAR. Every airline, Akasa, SpiceJet, Air India, they knew the CAR was coming. And they were very clear that this regulation will be embodied into India and airline will have to follow it. They knew it. They planned their recruitment accordingly. They set their structures and schedules. How come their flights are not delayed or canceled because of crew and only Indigo? So it's very clear this is a very uncouth pressure tactic by Indigo. It's very unfair. Eventually, who suffers? The traveling public suffers. And by doing this, they're trying to add pressure on the DGCA to change the CAR, which is never going to happen. Indigo from the start has always wanted to change the CAR because they've always believed that they with their schedule, the old CAR worked great. But guess what? pilots were getting extremely fatigued.
Sure.
You were pushing pilots to operate beyond the brinks of limits.
Sure.
And this was creating a whole lot of problems with crew. And that's one of the reasons why a lot of Indigo pilots quit and moved over to Hong Kong Express and Air Asia, Vietnam, and the Middle East.
Mark, the question,
the
question that we're asking, therefore, is what is the regulatory response possibly going to be? Because at this moment, there is a call to shift some of the slots to the other airlines. Let's face it, this is an airline that controls about 2/3 of domestic traffic.
This is the largest airline in India right now. They control not just 2/3 of traffic, they control at least 55% of the traveling public if you look at the total number of flights and passenger movement. The regulator is not going to budge. Never has the DGCA budged on one airline demand. Okay, if this problem was also with Air India and SpiceJet and Akasa, then the regulator would have said, yes, the regulation is too stringent and too hard based. We need to tone it down. But that's not happened. Why does it only have to be an Indigo? And I'll be honest with you guys. You know this sector better than anybody. The bottom line is the DGCA is not stupid. They're a smart organization run by people from airlines, okay, and run by pilots and engineers, and they understand fatigue. And this is a fatigue issue. And let's be clear, pilots are not slaves. You haven't hired indentured laborers. They're pilots. They're there to do a job, to fly an aircraft with safety in their mind in the most efficient manner possible. And this regulation, at some point in time, Indigo would have to,
So Mark, basically what DGCA does is going to be very important from here on, the action that is taken, because flight cancellations continue. Thank you so much for joining us on the show and sharing your views. Let me head across to Avinash, who's waiting by patiently. Avinash, thanks for the patience. But your view when it comes to Indigo, last couple of days, the stock has been under pressure. I think, 5 to 6% in the last couple of trading sessions as well. With the November data that did come in for aviation as well, that impacted the stock. What would you advise investors to do with Indigo? And you have a SpiceJet board meeting, or I think an analyst call that is lined up today.
No, I think, Hiral, clearly, I think in the short term, Indigo is going to underperform. I think the markets were not expecting this. And I think until this regulatory issue is not resolved properly, I think you're going to see a lot of flight disruption, a lot of revenue getting lost. And I think this may continue for some more time before things get normalized. So I think, in the near term, we could see a little bit of correction on the stock, even from the current levels. We have been advising our clients to not immediately go and buy this stock. I think we could possibly see this stock going down at maybe lower levels. At that point, maybe it could be a good opportunity. As far as SpiceJet is concerned, this is a big analyst meet, so we'll also attending that. So we'll be obviously looking at what kind of commentary the management gives, for the kind of next financial year, that is for the second half of this year and the next year, that is FY27. I think a lot of troubles as far as the debt is concerned have been corrected, but I think it all remains how the management now looks at growth going forward. So Indigo is definitely not a buy now. We prefer a hold, and I think only buy on dips.
Watch out for it on the downside as well, certainly on Interglobe Aviation. It's been a packed show so far. It promises to be a packed show going forward. We have to slip into a very quick break. Do stay tuned. On the other side, we've got the market open. '25 has been a tremendous year for markets money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new
Back with India Market Open right here on NDTV Profit. Now we've discussed JSW Steel, we've discussed Interglobe Aviation, some ideas. A lot of other stocks remain in focus today. Telecom remains in focus. And Milan Vaishnav, before we thank you, I want to understand, what do you think of the setups of a Vodafone and Indus? These two in particular. Bharti is a sideshow today in terms of the action impacts, and therefore Vodafone and Indus. How is the setup looking?
Well, for Vodafone and Indus, if I look at it from purely a technical lens, then so long as it's staying above 9.75, we have some room on the upside. Some more, the stock may propel higher if it is able to navigate 11.2 levels. If that happens, well and fine. But Vodafone Idea would continue to remain, quite vulnerable to whatever is the outcome going ahead from here. Indus Towers is far more stable from a technical perspective. I expect some multi-week or say even multi-month breakout to happen above 420 rupees. So that looks much more stable on the charts as compared to Vodafone.
Okay, so that's with regards to Indus Towers versus Vodafone. Thank you so much, Milan, for joining us on the show. It's always a pleasure to get your picks as well. But let's quickly address what's happened with the rupee. A record low opening of 90.41 to the dollar is what we are tracking so far. I think, Neeraj, on a daily basis, we are hitting record low levels. But what even Lawrence Balanco told us right now is that he might see a reversal from current levels. But if there is further depreciation from here on, I think it is somewhere going to hurt your oil marketing companies.
Yeah, certainly. And a lot of other pockets as well. I mean, you keep an eye out for almost all import-led sectors, and there might be issues there. Well, we're starting off lower. Shrikant Chauhan joins in, Executive VP and Head Equity Research at Kotak Securities. Had a chance to say a hello to him yesterday in person. Look forward to seeing him at the Kotak Securities event on the 10th as well. But Shrikant, for this morning, good morning to you. How are you approaching trade? We're going to start off lower. Are you selling the Nifty, buying the Nifty? What are you doing?
Good morning, Neeraj. Good morning, everyone. So for Nifty, it was not at all expected that the way that it has fallen, it was not at all expected, because around 26,300 levels, we were of the view that the market is heading for 26,500, 700. But because of this fall in the rupee, has actually capped the upside. And now we are heading towards the important support levels. The market has made multiple higher top, higher bottoms in last 2 months. And now 25,800 is going to act as major support for the market. So we are still in the range. On the dismissal of 25,800, we can expect furthermore weakness in the market. In that case, the possibilities of hitting 25,500 would turn bright. Ideal strategy should be to look for adding position if there is any correction instead of going short. Yes, of course, if there is any rebound in the near term, close to 26,150, 200, there we should look for taking some short bait or contra bait of going short, because we are expecting market to remain in a range. So any bounce back towards 26,300 will be an opportunity to go short. But at these levels, we are very close to the support levels. And also we are very nearby to the outcome of RBI policy. So at these levels, with a stop loss at 25,800, 800, we should look for adding some long position.
Okay, 25,800 stop loss, add long positions from there on. Stay with us, Srikanth. We have Anindya Banerjee from Kotak Securities joining in. Anindya, we've again hit record low levels in terms of opening, 90.41. We spoke yesterday as well as to what should be expected. But with this continued weakness, any levels that you're tracking, number one? And two, is it going to be the direction or the levels that one should watch out for?
Thank you for having me. A very good morning. Right now, of course, the Indian rupee is under pressure because the 90 mark was an important psychological mark, and that has been crossed. RBI has been intervening, but it's not intervening as aggressively as we have seen in the past. Till the monetary policy, we could see this weakness continue. On the upside, the next level to watch will be 90.5. If that is crossed, we could see levels of 91. And the support will be around 89.80.
Yeah, the question that a lot of people are asking is, what is fair value at this point? Because a lot of people are agreeing that it slid a little too fast. Alex here, good morning. What are the key levels that you would watch out for, and what's fair value?
Right. If we consider the relative valuation of the rupee using the RER model, rupee definitely appears undervalued. But what happens is when the outflows continue, the SPI outflows continue, and there is a kind of a speculative pressure in the market, especially from the offshore market, then things can become even more undervalued. So over the near term, the uncertainty over the trade deal, as well as a bit of the yen carry trade unwinding, all those things is also causing a pressure. So in the short term, the market may get more undervalued, Indian rupee.
Okay, Anindya, quick one. If it hits 91, do you see a reversal which is in place, and at what level do you see support coming in?
The RBI is comfortable to let this rupee slide a bit because we have very low inflation and no harm in giving a support to our exporters. And they are getting the support because Indian rupee is one of the weakest currencies this financial year, if I compare the top currencies. So I think around 91 or above, RBI may come in just to cap the volatility because it has moved almost 1.5 rupees in a very short span. So, but to say that is the cap, I don't think so. It's just that RBI may just like to cap it for the time being.
That's a fair point. I guess to a certain extent, the crude level at close to $63 to the barrel is not worrying the RBI and the government too much. Anindya, thanks so much for taking the time and speaking to us. Pleasure having you. All right. The question, though, is for importers and those that are dependent on imports. And the first things that you bear in mind are the oil marketing companies, because effectively they're paying dollars for crude. And if they're paying more rupee for every dollar, it's going to have a bearing. Avinash, what's the impact of this that you would see on these companies, and any others that you would like to highlight that would get impacted on the cost side?
No, I think, Alex, the real impact of this could be felt maybe in the fourth quarter. The third quarter numbers may not get impacted fully. But I think fourth quarter, if the rupee depreciation is accounted, then I think definitely margins would come under pressure because their GRMs could be impacted. But I think other noticeable sectors like paints, chemicals, typically lubricant companies, I think companies which depend on a very large proportion of raw materials which are imported are definitely going to be impacted badly. I think clearly even tire companies could be impacted because they do import a reasonable amount of chemicals. But I think the chemical companies and the paint companies, specifically, companies which are into the paint market, I think would see little bit of margin pressure. Of course, what kind of impact it would have on their volumes and business is difficult to say. But I think clearly if this continues, then I think the fourth quarter is going to be slightly going to be impacted on the margin side. So I think net, it's not a good thing. The markets also does not like, whenever crude rises, or sorry, whenever the rupee depreciates, it's a negative sign because that obviously impacts corporate earnings. And I think unless we see a bounce back in the rupee, the markets also are unlikely to show a good bounce today. I think the market sentiment would clearly hinge on how the rupee recovers.
Got it. Okay, let's go to our big brokerage call of the day, and this is HSBC on Tata Consumer. It's an interesting note. They have initiated with a buy rating, and let's talk about the target price and what they're seeing in the note. Sharad Dubey joining in. Morning, Sharad. What are they saying?
Good morning, Alex. Global cues are very volatile, so a very interesting take. And from the broking house, that's Tata Consumer, that's domestic facing HSBC. They have initiated a buy with a target price of almost 1340 odd rupees, and they have given a positive views coming in for the long-term growth prospects. Tata Group's flagship F&B company, and it has a scope to expand and deepen its distribution going ahead in the markets. They're forecasting a 26% 3-year CAGR growth coming in terms of portfolio, out of which 37% of India revenue would be coming in for FY28. And also the margins are expected to recover, especially from the tea business segment, and the aggressive acquisitions and the distributions will pay off in the long term. So a bullish commentary coming in from HSBC on Tata Consumer.
Let's see if the stock does well. I mean, FMCG is probably the hiding space, if you will. But Sharad, thanks so much for bringing that note. Like we said, a lot of notes, a lot of stocks to focus on. Shrikant Chauhan, I don't know if you've done your stock ideas already, but if we haven't, your stock ideas for the day, and if we have, then I want a view from you on Interglobe Aviation as it's shaping up right now.
Yeah, so first I will go with the Indigo because the stock is into limelight and news flow. If we consider the technical pattern of Indigo, then it is like dropping from the highs. But at the same time, it is in the range. It has spent a lot of time. It has been consolidating within the range of 6,000. And yesterday and day before yesterday, the stock was very close to 6,000 levels. From there, all the way it is again coming back to the levels of 5,500. So close to 5,500, 5,400, the stock is having support. In fact, around these levels, we should look for adding some position if there is a positional view. With a very short-term view, it is better to stay away from taking any positions because it is related to the news flow. And then in that case, it is very difficult to maintain stop losses. So if there is a positional view, certainly we should look for adding at current levels. And for the day specifically, I would like to go with Hindalco from the metal basket. There we are seeing some silver lining. Currently, it is around 816. We can keep a stop loss at 809 for adding Hindalco at current levels with a target at 835. The other stock on which we are bullish is from the technology space, and that is Coforge. Currently, it is around 1915. We can keep a stop loss at 1880 for the target of 2000. I think the fall in the rupee should support IT stocks in the near term.
Support coming in for IT counters as well. Avinash, coming to you with regards to IEX and MCX, good numbers that have come in with regards to November update. But, you know, there is a regulatory angle to IEX. MCX, again, we did see a correction that last hour when the numbers were announced. What would you advise investors to do with both these counters and overall the capital market play as well?
No, I think Hiral, capital market plays are looking interesting. I think if you look at the demat players, NSDL, CDSL, I think very interesting because, you know, whenever there's a downtick in the market, these stocks come down. But longer term, the runway for growth for both CDSL as well as NSDL is quite strong. In fact, NSDL is available at a very attractive valuation. And it's a recent listed play. So I think, you know, with the kind of primary market action, secondary market transactions, I think these businesses are, you know, like annuity businesses. As far as the AMC companies are concerned, you know, there could be a short-term downtick in their performance, but longer term, looking at the kind of growth in SIPs, I think, you know, the AMC businesses are getting more and more stronger. More and more people are opting for mutual funds. And as far as IEX and MCX are concerned, you know, MCX is placed much better. It's a market monopoly as far as the commodity business goes. And I think despite the expensive valuations, you know, I think there is no other comparable which is available in the market. So that gives it a very strong positioning. I think somebody who's got a 2-year plus call can definitely make some money here. IEX also is a platform business, but as you rightly pointed out, that there are regulatory issues regarding the coupling issue, and I think that is something which has restricted the stock to go up significantly. So I think it would compound returns steadily, but any runaway growth in IEX is not possible because the markets are not very clear and are disappointed that once coupling is implemented, then I think the profitability is going to be restricted. So net longer term growth prospects are good, but nothing great as compared to MCX, which has got a much bigger and a longer runway.
Much bigger, longer runway, 10,219 for MCX. It's had a phenomenal last 6 months, I presume. The question only is, can it do more? Shrikant, IEX, MCX, very quickly.
On MCX, I cannot comment because it's a stock under restricted list and we have stake in the company. For IEX, yes, the stock is forming some bottoming sort of formation. But again, it is very difficult to say because at these levels, most of the time the stock came under profit-taking pressure or liquidation pressure. So it is better to stay away for the time being.
Okay, so stay away for the timing is the word coming in. How are you looking at, Avinash, the OMCs? I don't know if we did speak about that as well, but clearly on the way, the rupee has been panning out. Any advice when it comes to OMCs?
No, I think in the short term, there would be a lot of volatility for the oil marketing companies. As I mentioned to you that, these are companies which obviously get impacted the first because any rupee depreciation means that import, becomes more expensive for them. But looking at the kind of performance in the Q2, I believe Q3, they've got enough oil inventory. So the real impact of the rupee depreciation, if at all, could possibly come in the Q4. So I think, maybe you could see a little bit of downtick in the stock prices of these companies. But once the rupee recovers, I think again, you could see a little bit of action here. So net, I think somebody who's a short-term momentum trader should avoid them. But longer term, I think if they come down to reasonably attractive levels, then I think things should stabilize. Frankly, crude, if it doesn't go up, that actually is a big sentimental booster for them. But overall, I think as of now, I think avoidable. Only, long-term investors could look at nibbling into a smaller quantity.
Right. There's time for a quick answer. Shrikant, what would your top pick be based on the pre-open rates?
I think at this level, it looks TCS should be the stock to buy along with the overall performance in the IT sector. Currently, it is around 3180. We can keep a target of 3250 for the target for this with a stop loss at 3140.
Okay, Shrikant is going for TCS. I wonder if the rupee weakness has played its part into the IT sector showing some momentum. It shouldn't and it should. The opinion is always divided. Let's wait and watch how it does during the course of the day. But here's how we're starting off. Flat. Absolutely flat. Let's see if this worsens a bit, by the way. The Nifty IT yet again starting off in the green, 1/3%, by the way. If TCS might be actually revving up, let's quickly get the mid caps and the small caps and then get the stocks, individual stocks, because a lot of stocks at the broader end of the spectrum might be moving around. Let's get the heat map up and see whether TCS, JSW Steel, etc. moving. Yes, they are. JSW Steel 1.45% higher. We told you this in the morning. The very high probability that yesterday's losses would be reversed. For now, 1.5%. Let's see if it does more. Hindalco up 1%. Remember, aluminum has really revved up in the US markets as well, as has copper, by the way. Wipro, TCS, HCL Tech, then the IT pack coming into play. Very little green though, by the way, as we slip about 0.15% with a fair degree of red. Indigo, obvious casualty, 3% lower. Now, viewers, the situation around this cancellations may change with the DGCA meet today, but until that happens, the street is rightfully punishing Indigo for the kind of cancellations that have happened. 3% lower currently. Let's see if there's more. Otherwise, it's not too bad. I mean, Titan is down 0.8%. Then there's an HUL, HDFC Life, L&T, etc. It's not too bad. Reliance is flattish too. So in that sense, it's holding out. But yep, Indigo on the downside and JSW Steel and IT on the upside.
Very interesting. Not the biggest moves, and I wonder if that will change over the course of the day. Let's also look at the broader markets and see whether they're keeping pace with the benchmark. Let's pull up the mid-cap index. Oh, it's in the green. It's just about nudging in the green. What about the small-cap index? Let's pull that up as well. And it is just about flat. And this is more or less what the benchmark is also showcasing. Sectoral indices for you on the screen. I wonder if it reflects what the Nifty 50 is showcasing, and more or less the similar amount of green on the screen for the sectors as well. IT up and about That is what you saw for the large caps as well. On the bottom of the screen, you have CPSE and you have a Realty, but the cuts are just about 1/3% or so. So not too much happening there. Let's talk about stock-specific action. And first on the charts is Petronet LNG, a very interesting tie-up that it's signed with ONGC, 15 years, and it's a binding term sheet for ethane unloading. Stock is up about 2.7% or thereabouts. So it's reacting to this update. Brokerages are bullish. I do want to pull up JSW Steel just once again because we've talked about that. It has lost a little bit of that initial momentum. So we'll have to see what it does over the course of the session today. Pine Labs reacting to numbers, first numbers after the listing. It was a very decent set of numbers, margin expansion, but the street is a little cautious heading into the rest of the financial year. 0.5% lower at this point for Pine Labs. A business outlook looking positive for Websol. Let's see if it's reacting, and plans for significant capacity expansion going forward heading into 2028. Street not too pleased or not too enthused by that. Eris Life as well sharing pretty strong updates, not doing too much in trade. IEX and MCX, IEX in particular, strong updates for this counter, but remember it's gained in the recent past, so perhaps a little bit of a cooling off may have been warranted, but remember it's still far off from those all-time highs. 0.5% or so high. MCX also strong update. We did speak about MCX with Avinash. I wonder on the charts. Oh, actually, we can't get you a view on that in just a bit. Let's talk about Pace Digitech, Mukka Proteins, as well as Railtel Corp, all reacting on the back of order wins. And Mukka Proteins stands out. Remember, this is a 475 odd crore order. And this is a company that's only about 700 odd crore in terms of market capitalization, as a result of which there's a lot of interest, and that is reflective in the stock price. It is already cooled off from those high levels of 16-17% higher. Finally, Tata Consumer on brokerage impact. This is HSBC, which has initiated coverage, not too much of a reaction. Interglobe Aviation, let's pull that up one last time and see what it's doing right now. About 2%, so off the low point of the day. And finally, Godavari Power on the back of expansion plans which have come through. The stock is up about 1.5%. So all told, some very strong reactions, but for the smaller counters, here are not too much in the way of big movers.
Absolutely, Alex, that's the way it is, because a couple of names that I'm looking at right now is a Spark. Let's pull up that one on the screens, as well as a Biocon. Both of them seeing, divergent moves. Spark up 3.5%. It's a topsy-turvy ride over the last couple of days for this one. Biocon seeing cuts of nearly 3%. And, as we were indicated, that what will they do in terms of the fund aspect? And probably that's what is hitting a Biocon. Heikel is another one which is also seeing some strong moves in today's session. There you go, 4% up move coming in on this one. And Ola is another one that we should be looking at, which is seeing some bit of pressure, 2.5-3% downtick coming in on Ola Electric as well. So these are a few of the movers, but clearly a choppy day of trade is what is anticipated. 25,950 is what you're tracking on Nifty 50. Bank Nifty, similar kind of moves is what you're seeing. And your advanced decline, you're still, in terms of the breadth on the NSE, is favoring the declines as well. In fact, let's head across to Avinash to take his view. Avinash, Spark and Biocon, we've spoken about Biocon to you as already. Your view in terms of Spark, and another counter that I want to talk to you is about Eris Life Science. Anything that you would want to add on these two?
No, I think as far as Eris Life Science numbers were good, but I think markets were probably not happy with the kind of growth recorded. And I think clearly, in terms of valuations, Hiral, the stock has outperformed quite well. So, at these levels, maybe a little bit of profit booking is seen. Our sense is that maybe, the stock could remain under a little bit of pressure for some few time. But if you look at the longer term growth trajectory, they have been doing pretty well in terms of their top line and margins kind of improvement. So definitely, I think it could be a good bet for somebody who wants to take a longer term view. But yes, in the short term, the stock may show a negative kind of bias. And as far as
in terms of Eris, with regards to the move to acquire Swiss Parenterals in a 423 crore deal, what would you say in terms of the acquisition?
No, I think clearly it really remains to be seen how it adds to the EPS accretion. Hiral, I think they have done a lot of acquisitions in the past, but I think this acquisition, I think clearly the market is not very clear as to how this will add value, at least over the near medium term. So I think we are very cautious. We would prefer to wait for some time before we actually see the contours of this acquisition, getting reflected in the numbers, fully.
Speak about Hind Copper and the rest of the metal pack as well. Let's pull up the constituents of the metal index very quickly to see what is buzzing in trade. Remember, the tailwinds are very clear with the dollar index at 99, as Hiral was just telling me, and the entire pack is buzzing. So therefore, Shrikant, on the charts, what would you bet on at this moment? Would it be Hind Copper? Would it be in the aluminium space?
Yeah, today also in the morning, means since the market has started, we are witnessing some buying interest in all metal companies. And you are rightly spotted Hindustan Copper. Currently, if we consider the technical pattern, then it is forming higher top, higher bottom series. And it is very close to its 52-week highs, which is around 360, 62 sort of levels. So close to these levels, based on the performance of the market, we need to be in IT or metal stocks, and in that Hindustan Copper looks good. Currently it is around 346. The stock can move towards 365 sort of levels. Buy at current levels with a stop loss at 340 on the downside. The other stock on which we are bullish is Infosys from the IT space. So TCS, Coforge. Along with that, we would also like to go with Infosys at current levels for the target of 1625 on the higher side.
Okay. Avinash, on IT specifically, I guess the latest up move yesterday and today is on account of the rupee. But how much of a benefit would accrue to them? Don't they hedge a portion of this?
No, they definitely hedge, Alex, and I think you would not see any major impact, at least in the quarter 3. In quarter 4, depending on what kind of pricing happens, what kind of margin improvement is going to come in, I think the market is only sentimentally positive that rupee depreciates. It has a direct impact on their bottom lines, but I think the Q3 numbers are unlikely to show any margin improvement purely because of this. So I think whatever improvement does come in, of course, which is also not going to be significant, it would be marginal, that would come in the fourth quarter. So I think it's more of a sentimental booster trade, because when everything is down, I think IT becomes the most safest place to protect your capital.
Well, Shrikant Chauhan, just before we get to the top gainer on the Nifty 500, we should give kudos to Shrikant Chauhan for talking about it before the start. TCS, Shrikant, if you bought it, would you stay long? If you haven't bought it, would you buy it at these levels? TCS, yet again asking you the same question.
Yeah, I would like to stay with it because today, especially, the stock has crossed its multi-month high, which was around 3,200 levels. Yesterday also we saw some rally, but there was some profit taking. Today, confidently, all these IT companies are moving higher. Maybe we can say it's an anti-AI sort of trade which is happening in the market, and valuation, comfort, all these things are helping IT stocks to do well. But if we consider the Nifty IT index especially, it is clearly indicating us that we can expect at least 4 to 5% sort of rally in IT stocks, especially in IT index from current levels.
Okay. Now, the stock of the morning on the broader markets is Petronet LNG. And whenever there is an oil and gas news, we turn to Sumit Sarkar for trying to figure out what the impact of the development is on that individual name. Sumit, you can do with a bit of a smile this morning. It is a beautiful morning. Tell us, what is the news on Petronet and how will it impact?
So it's a deal that they have signed with ONGC for 15 years, where they will be taking the ethane that comes in, that ONGC sources from on their own basis or from their own subsidiaries, and then redeliver the same ethane to wherever ONGC requires it. So that's basically what Petronet does on a daily basis. They regasify the gas that comes on the port and supplies it to the customers. That's what Petronet is going to do with ONGC's ethane as well. And this has this term sheet is for 15 years. ONGC has signed up around 600 KTPA of capacity, which is nearly 50% of the capacity that Petronet is building at the Dahej port. Now, along with this, Petronet is expecting that this entire deal would give around 5,000 crore rupees on the top line basis starting FY29. Now, if you do the DCF valuation of this 5,000 crore, which will be generated over a period of 15 years, starting FY29, the current value comes at around 2,200 crore rupees. That is nearly 5.5% of the total market capitalization of Petronet LNG. So that's the value add that comes in for Petronet at this point of time. Moreover, analysts are expecting that Petronet could generate a higher margin of around 50-60 odd % on this revenue. So that would also be beneficial for the company, and this also removes the overhang or the concern or the investor concern that is there on this extra capacity that Petronet is building at the Dahej port, given the fact that 50% is already booked. Now just the remaining 50% needs to be booked till the time the facility comes on board, and analysts are confident that Petronet will be able to do the same. So that's the reason the stock has been buzzing. Also, the stock has been beaten down. The valuations are quite cheap, and if you look at the dividend yield of Petronet, it's around 3 to 4 odd %. So given the fact that valuations are cheap and dividend yield is higher, and this deal is another added positive, the stock is gaining in trade.
Absolutely, you said it. Thanks so much, Soumit, for that. The question is, Avinash, do you buy into that argument? Stock is attractively valued. It's a dividend play as well. Would you buy into it right now?
Yeah, I think, from a longer term perspective, these are stocks which are defensive stocks, Alex, and I think they give you a decent dividend yield and a good compounding return. See, this project is definitely promising, but I think to look at it from a earnings perspective would be little, too near term, because this project actually starts from 29, and markets would like to know what is going to happen over the next, say, 12, 15 or 18 months. So I think to that extent, this deal may not have a very big runaway impact on the stock immediately today. But yes, I think from a long-term perspective, it puts the company on a very strong footing. So I think, somebody who wants to build in a portfolio where volatility is less, the, returns are steady and compounded properly, this could be a good defensive bet in this kind of market.
Okay, a good defensive bet on a Petronet LNG. Thank you, Avinash, for that view, and thank you for joining us on NDTV Profit on India Market Open. Srikanth, stay with us. A quick view when it comes to life insurance companies, HDFC Life, SBI Life, both of them. In the last couple of days, I have been seeing some amount of pressure that's building in. What are charts indicating?
Like both these stocks are finding difficulties to sustain at higher levels. We are seeing some profit-taking pressure in these companies. But at the same time, we cannot forget that we have seen a smart rally in both the companies in last 2 months. In fact, HDFC Life is in the range, and it is finding support close to 730, 725 levels. So in case if there is any furthermore weakness in the market, stock falls to 725, 730 levels, their investors should certainly look for adding this stock to the positional portfolio. For SBI Life, we saw exceptional rally in the stock from the levels of 1700 to almost 2100. Now it is under some profit-taking pressure and corrective pattern. Again, the strategy should be to buy at current levels and more on dips, because this stock should remain outperformer from this particular space. That's my view. So close to these levels or around 1925, 1930, we should look for adding more.
So that's SBI Life. Very quickly, let's just pull up a Kaynes Technologies, because you're seeing a sudden opening slide, 4% downtick coming in on a Kaynes Technologies as we speak. Alex is just pointing out, along with this, you have a Hitachi Energy also, which is seeing a downtick in trade. Srikanth, are you seeing further weakness? Because if you look at the Kaynes in the last 5 trading sessions itself, the stock has lost nearly 8.5%.
Yeah, it's a sharp decline that we are witnessing in Kaynes Technology. It was around 7,800 levels. From there, all the way it is at 5,000. And today, especially, the stock has broken its important support level at 5,400. In fact, yesterday also it closed below the same. And maybe because of that, the technical sell-off is emerging. The next level to watch out for would be 4750. So we can expect furthermore pain in the near term. And any rally, any bounce back because of any reason, we should look for reducing some long positions, because the way the stock is falling, it is very clear that the selling pressure is huge, and at every rally, some more selling pressure can be possible.
Got it. All right. On that note, Srikanth, thanks so much for joining us as always, and a pleasure speaking with you. Have a nice day. All right, let's talk about IndiGrid, and this is India's first and largest InvIT, IndiGrid. It's in focus as the company has signed a definitive agreement to acquire Gadag Transmission from Renew Power. We'll speak to the management about this transaction and the outlook going forward, but let's get Varsha in to set things up for that conversation. Varsha, you've looked at the numbers, you've looked at the details of this transaction as well. What do you think we should focus on?
So yes, absolutely. So the transaction value or the deal value for this acquisition stands at around 372 crores, and wanted to talk about the rationale for acquisition. Why company has been acquiring Gadag Transmission. One is this is first integrate strategy of long-term stable cash flow assets, and this is expected to add almost 18 crore of net cash distributable annually in the near term, and this strengthens company's grid critical renewable evacuation portfolio. Talking about the funding and the financial impact overall from this transaction, this is funded through equity, internal accruals, and little bit of debt, and the net debt to AUM is expected to be 60.5% post acquisition. This provides stable revenue visibility due to long-term contracts. So overall, this is a positive one for the company because this will add a stable cash flow over the longer period of time. Talking about the other highlights when it comes to IndiGrid, also they're focusing on maintaining stable operations and also looking for value accretive acquisition. Also, they've added 4 transmission projects, and the execution of BESS, that is battery energy storage system projects in Gujarat and Rajasthan, is also one of the growth outlook that company is also focusing on.
Okay. Thank you, Varsha, for getting us that set up, and interesting to see how this would really add to the company's renewable energy strategy as well. Harsha, MD at IndiGrid, joins in. Harsh, welcome to the show. Always a pleasure to speak to you. Hiral on this side. My question to you is, we're talking about GTL acquisition. How does that actually fit into IndiGrid's long-term strategy when you talk about building a renewable-focused portfolio?
This fits perfectly well in our strategy. We are playing most part of our businesses in interstate power transmission assets, 75%. This fits exactly in that it's an interstate asset evacuating renewable energy projects, about 2,500 megawatt of renewable energy projects. We've also acquired one more asset from Renew called Kopal Narendra just a couple of months back, which translates another 2.5 gigawatt. So in all, it's almost transmitting 5 gigawatt hour of energy from those 2 acquisitions.
Talk about strategy in terms of acquisitions going forward as well, Harsh. What's on the anvil, and as you look forward, heading into the end of perhaps next financial year, where would you, and this is primarily transmission assets, so I'm just trying to understand in terms of evacuation capability, where do you see it going?
I think there is a fantastic opportunity within the transmission sector. We are seeing tremendous growth in investments in the sector. For our portfolio today, we are about 9,500 kilometers of lines and about 25,000 MVA of transformation capacity. We have formed Energrade in partnership with BII and Norfund, where we are developing more assets. And as we speak today, we have about 8 portfolio assets over there across battery energy storage and transmission. So we do see this segment growing phenomenally and playing a very important role in the energy transition requirement of the country.
Is there a number that you have in mind in terms of the acquisitions that you might want to have, or kind of capacity that you want to control?
We don't have a specific number in mind. We are today about 32,000 crores. When we listed in 2016-17, we were 4,000 crores. We have grown over 9x. We don't have a specific number in mind. We look for right profitable opportunity which allows us to increase DPU for our unit holders. So that's what remains in our focus. Size is just as we grow, it will keep coming.
Okay. Harsh, the question I have with you is now, beyond a GTL, anything else that is on the radar when it comes to acquisitions? Number one, if you have to look at the pipeline. And 2, what's the kind of headroom that you have for these acquisitions without equity dilution? Because your net debt to AUM has already risen to little over 60%.
Yeah. So to give you a perspective, we are allowed to lever up to 70%. And if we were to factor in that 10%, we will be able to raise another 7 to 8,000 crores of assets. Having said so, we've already got approval from the board to raise up to 1,500 crores, which we took last month. And I think we would look to raise capital to ensure that we are not restricted by growth, by capital for growth. So while we can do 7,500 crores, we are seeing sizable amount of opportunities. So we would like to continue to grow. So we would raise a little more capital.
Okay. So therefore, where would the focus be? You've also talked about battery energy storage, and this, I think, dovetails well with that entire theme, right? So would the focus be on acquiring more transmission assets, or would it be on having these battery energy storage opportunities?
We are developing battery energy storage projects. We are one of the largest. We have about 2.5 gigawatt hour of battery energy storage under development. We will be commissioning our first project very soon in next quarter, which will be about 380 megawatt hours, one of the largest installation in India today. And we see battery energy storage as core part of our transmission business. CERC has recently also issued clarification and further business models which enable transmission licensees to do battery energy storage businesses. So we do see that is a growing segment, and we'll look forward to grow it along with transmission.
Harsh, a quick clarification. You said you would need to raise money. Did you mention how much the quantum would be? Is it 700 odd crores or something else? Number one, and this would be...
We don't need to raise money.
Okay.
We have 7,500 crores of growth headroom available.
Okay.
However, we like to raise capital upfronts when we see growth opportunities to ensure that we are not missing out on growth because of that. We have taken approval of up to 1,500 crores already. We raised 440 crores last quarter via preferential issue to institutions and HNIs. And we will look to continue to do the residual 1,100 crores very soon.
So that's with regards to the fundraise. Now, when you talk about best capacity as well, a combined basis, if you have to talk about EnerGrid and IndiGrid, both have around 2.1 gigawatts approximately. What's the next milestone that you're looking at, and what are the kind of bids that are already planned if you have to look at 27 as a year?
We are seeing a lot more bids in battery storage. Just in last few months, we have seen 12 gigawatt hour of bids that has taken place. However, we are concerned about the profitability that is getting discovered in the recent bids. We see the tariffs that are there are unviable. And we are concerned that whether really the capacities will get built on these tariffs, and quality of assets will come under question, because as we speak right now, there is no common standard published by CEA on what quality standard must be followed in battery energy storage projects. And we believe that there is too many small players bidding in with aggressive assumptions. And we are of the view, I mean, we are not won any, and we are not bidding right now at these price levels. So we do see that there will be some bit of consolidation will take place. Many of the projects will not end up getting executed. We saw one accident in Gensol, which one a large project did not end up building. I think we'll have to wait and watch in terms of as these assets get built up.
Okay, so there's patience at play in that particular segment. Okay, so to sum things up, Harsh, you've talked about adding significant capacity. You've talked about raising further capital to build that capacity. About revenue and the kind of trajectory that you will see. You've already talked about the fact that you've grown significantly in terms of size. You're talking about expected revenue in FY26. I'm just wondering what the trajectory is going into perhaps FY28 or heading into something beyond that. Do you have something in mind?
So see, our projects are 35-year lives. So we have the revenue that you saw in FY26 continues for a very long period of time. So that's a stable revenue. The incremental revenue comes from the assets that we acquire or build. As we speak right now, there is approximately 7,500 crores of assets that are getting developed between IndiGrid and EnerGrid. And that give or take adds to approximately 750 crores of revenue in next couple of years when we complete them. And as we win more projects, those revenue numbers will keep going up. But as we speak today, we have visibility of another 750 odd crores of revenue getting added in next 2 years on our current run rate.
Harsh, thanks so much for taking the time and for speaking to us. Wish you all the best for the rest of the year as well.
Thank you.
All right, quick check on where the markets are right now, and you're just about flat for the benchmark Nifty 50, and we're off the low point of the day, and I think you can take that as a positive sign. But you know, on the global stage, Hiral, one aspect that a lot of people are watching, not just here in India, but globally, is the unwinding of the yen carry trade, and we've talked about that in the recent past, the fact that yields in that market have gone higher, and the expectation that there might just be a rate hike on the cards, that a lot of fund managers are viewing as one of the key risks going forward.
And to add to that, when you talk about the yields, the way the yen has been panning out as well, usually it's an inverse.
Yes, it's very weird.
Right?
It's been depreciating.
Exactly. But right now, it's a very similar trend that you're seeing on both the sides. What would this mean is the key question. And Neeraj is doing the setup for us as to what the Japanese yield surge means for the markets as well. Neeraj, over to you, and then we'll have Peter Cardillo who will be joining in as well.
So it's a big development on the global stage with what's happening with the Japanese yields. You would have heard of various terms around this, right? Yields surging, yen carry trade unwinding, higher interest rates, so on and so forth. Let's try and break it out for you. So what's happened? Japanese yields have surged to multi-year highs in many cases. So the 10-year is above 1.8%. The 20-year is at 26-year highs, and the 30-year is at 3.43% the last time I checked, which is also at record highs. Now, what's the key factor for this Japanese yields to go up? That is because the BOJ has given out statements which point out that they are exiting their ultra-loose policy, and they are also exiting their yield curve control framework that they have. And in some sense, it's a landmark, a tectonic shift for Japan as well as for the world financial markets. And why do I say so? I'll come to that in a moment. It is one, of course, it's hinting at rate hikes as well. And these have major impact on what the world markets do, not just what happens to Japanese markets. Because Japanese money is there across the world, and which is why this shift impacts all of that. So this is a significant shift, like I said, after decades of near zero interest rates and ultra loose policy. So that is what is the key crux around here. Now, therefore, what happens as a result of this? The impact. The yen typically would strengthen against other currencies. You might have near-term gyrations which are different than what usually might happen. Remember that. But as a rule of thumb, with this, the yen would strengthen as well. It's more expensive for investors to repay yen-denominated loans with higher interest rates and higher yields. As a result of which, what will happen? The Japanese investors, which have put money across the world, will take the money back. Therefore, there is a liquidity crunch, right? Globally, across various asset classes, and it sparks a risk of sentiment. And remember, viewers, this can happen even if a nation's GDP is doing well, because flows of this nature are not dependent necessarily on fundamentals, but on liquidity. What else happens? I mean, for India, for example, India could actually see more FPI outflow pressure as well. Hitherto, if you remember what experts like Jayesh Mehta have told us, that the INR is under pressure because of the daily consistent FPI outflows. That could worsen, by the way. The potential capital outflows could lead to rupee weakness further. It's a bit of a vicious cycle, if you will. One leads to the other and then it follows. So in some sense, that is the problem for Indian markets as well. Keep in mind, this plays out to an extent and then it tends to pause, plateau and reverse as well if indeed the yields and the rates were to cool off or the certainty around rates is known. But until that happens, the markets would be on tenterhooks. I dare say the December 18th and 19th, the Japanese central bank policy could turn out to be the most important event of the month of December. Okay, let's take it to Peter Cardillo. He joins in right now on the show. And Peter, great having you. Thanks so much for joining in. How do you think about this, Peter? I mean, I may have sounded off as an alarmist, but to my mind, this is a very, very important thing to take note of.
Absolutely, I agree with you, and I think this is probably one of the next crises in the foreign exchange that we're facing. Japan, the Bank of Japan has hinted to higher rates, and we've had zero negative rates for many years, and all of that suddenly is about to change, and that just simply means crises in the air. What could that mean in terms of, let's say, upward pressure in the precious metals? Quite positive. I think one of the reasons why we're seeing silver beginning to outperform its pair is because of one of the potentials that the market is facing is a foreign exchange crises. And so, yes, it's going to be quite interesting to see if the Bank of Japan does follow through and raise interest rates. And if they do, I think, the unwinding of the carry trade extends itself into maybe not a full-blown crisis, but a mini crisis.
Peter, tough to, and good morning to you from where we're at, and good evening to you. But over what period do you see this playing out? And I know that it's a tough question to ask. Is it a matter of weeks, or is it a matter of months, in your opinion?
I would say if it does happen, it's probably going to happen not on the first rate hike, but perhaps on a second rate hike. And that probably will happen in the first quarter of 2026.
Okay, so therefore, from that perspective, do you anticipate that fund managers globally are going to be a little bit more cautious than they have in the recent past? And I'm asking particularly in the context of yesterday's move, because seemingly in the United States, people are more focused on the Fed rate cut, which everyone's penciling in next week. And you saw the Russell 2000, for example, rise as much as 2% yesterday. So do you see caution creeping in?
No, I think in terms of the equity markets, I think there's room to further rise. Traditionally, we're in a bullish state of mind, you might say, and with the prospects of a rate cut next week, which has already been discounted. But I think what the market is really looking at is that the communique, and in particular, Fed Powell is going to sound very, very dovish, because if you look at some of the macro data that's been out, in fact, if you look at yesterday's ADP numbers, which show that the economy lost 32 jobs, that is the private sector. That was much more than expected. And that's another indication that the labor market is weakening to the point where it could reach a dangerous stage and could have a negative impact on the economy. That is, as people lose their jobs, that means consumers' confidence waning, and of course the big thing, which so far we have not seen, that is consumer spending falling off a cliff. But that all could happen. And so I think the Fed is going to be much more dovish, perhaps, than what the market is expecting. And that just simply means that stocks will probably continue to rise. When and if we do see a crisis, a dollar-yen crisis, then I think obviously the markets will respond in a negative way. I guess the best way to look at this over the next month or so is to look what happens to the price of precious metals.
Question coming to you on that is, again, I will talk about the yen carry trade once again. Now, we're talking about almost, $1 trillion that has been invested in this. the unwinding of that money that could happen, what's the kind of impact that it could see when it comes to the AI trade as well? Because I was hearing a conversation where it said that it would create a 10 to 20% correction in the AI trade. And to add to that, the short squeeze it could cause in terms of silver.
In terms of silver, well, I just recently raised my price target to $75 an ounce. So I think that's doable. In terms of the shiny metal, I think next year, we could get close to 5,000.
What about the AI correction risk that it could have as well in the US? If a 10 to 20% correction is anticipated on the back of unwinding of the yen carry trade, the counter impact it could have on the technology sector when it comes to emerging markets?
Well, no man is an island. And if we suffer some crises, emerging markets will suffer, and probably more than we will.
Peter, could the December 18th, 19th BOJ policy be disruptive, or do you think part of it is baked in and part of it will be baked in smoothly?
I think, it all depends how it unfolds. Look, the fact that the Bank of Japan has continued to throw hints, it's not something like the market is not expecting. If the Bank of Japan suddenly would raise rates without flashing to the markets that there's that potential probability, then I think it would be detrimental. But if they do it in incremental ways, if they hint, yes, it's going to kick off some sort of a crisis, but not to the point where we could see a major foreign exchange crisis that could really, send interest rates reversing around the world.
Absolutely. Peter, I think this is something that we're going to track for the next few weeks at the very least. Thanks so much for giving us a perspective you did today.
Thank you.
All right. Now, from global trade and the unwinding of the yen to diplomacy and geopolitics, it's an important week for all of that because Russian President Vladimir Putin landed in New Delhi and is going to be holding, or rather is going to land today in New Delhi and is going to be holding those bilateral talks with India, and the conversation with the Prime Minister Narendra Modi is going to be crucial. Let's bring in Rishabh to tell you about what's on the cards, because there's going to be defense and a lot more, could be potentially on energy as well. Rishabh, what are the key aspects to focus on?
Right, for the larger part of this year, we've been talking a lot about India and the US, but the flavor of the week is Russia. What we're seeing is the fact that, firstly, during this visit by President Putin, the trade deficit between India and Russia, that is something that will be addressed. We've seen that the current trade volume, the bilateral trade volume, is roughly $68 billion and heavily skewed in favor of Russia. Roughly $64 billion of that is what Russia is selling to India. And India is only selling roughly about $4.5 to $5 billion worth of goods and services to Russia. So that is something that is being remedied in this current visit. You had the president also talk about they're looking at expanding imports from India, and those could be in the area of pharmaceuticals, agriculture, processed foods, and many other areas. Apart from that, today itself, you have a bunch of very interesting engagements with Russia, and that is across sectors. Firstly, you have meetings with the Russian atomic energy officials. You have talks of building and commissioning a Russian small modular nuclear reactor. Apart from that, we have Russia's largest bank, Sberbank, also hosting an event today talking about what sort of financial products they can come out with for the Indian market. You have the India-Russia Business Forum, where Commerce Minister Piyush Goyal will be there, alongside the senior ministers from Russia, including the Agriculture Minister, the Digital Development Minister, the Economic Development Minister. So ties being expanded across sectors there. And apart from that, you have a military technical cooperation meeting as well, the Intergovernmental Commission, where you have the defense ministers of both countries talking to each other about how technical cooperation can be expanded. So you have energy, finance, trade, as well as defense, all key sectors in this Russia-India partnership, in this very strategic partnership that has come out. And what we can also foresee is more progress on the FTA. You have a Eurasian Economic Union that Russia is a part of, and India is looking to tie an FTA, a free trade agreement with that cooperation. So progress expected there as well. And a very key skilled mobility workers pact also that is expected, which is essentially expected to generate a lot of employment for Indians in Russia. So that is also something that can be looked forward to in this trip that Vladimir Putin is taking today and tomorrow to New Delhi.
Yeah, lots to watch out for. Thank you, Rishabh, for getting us a quick update. You know, he'll be landing at 6:30 p.m. as Alex was mentioning today as well. And updates on that, how the defense sector moves, will be interesting to watch out for. But moving on, one stock that is under pressure, Biocon. Let's pull up that one on the screens. They're considering an investment in Biocon Biologics. The stock down nearly 3%. Varsha joins it with details. Varsha, I mean, an investment in Biocon Biologics is what they're looking at, but the stock trading under pressure. What is creating this kind of pressure?
I think, Hiral, this is about the other thing which they've mentioned in the press release is they may, go for raising of funds. I think this is what Street is not liking it. Why? I'll tell you, because they recently launched QIP to raise 4,500 crore at a floor price of 340 rupees, and they in last con call they said that they wanted to merge Biocon Biologics into Biocon. Earlier they were of view that they're going to come up with an IPO of Biocon Biologics, but due to the valuation concerns and market not being good, they had considered that they're going to merge Biocon Biologics into Biocon. But now the other news is that they might go for raising of funds. This is via QIP or preferential issue or other modes. I think this is what Street is not liking it, because recently they've done 4,500 QIP, and in the last few years they've also sold some of their Syngene shares to raise the funds for growth initiatives. So overall, I think the raising of funds is what investors are concerned of when it comes to Biocon. But all the details will come on Saturday, wherein the board meeting has been set up.
All right, thanks so much, Varsha, for telling us about that, and keep an eye on Biocon heading into the weekend as well. It's time for a very quick break on India Market Open, but on the other side, we've got Rewind 2025 lined up for you. The question is, will we end the year on a high? And what's lined up for 2026 as well? We'll be in conversation with Sunil Tirumalai, who is a Chief GEM Equity Strategist, and also, in fact, Gautam Chachoria, who is the Head of Global Markets India at UBS. Do stay tuned for that. '25 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come.
Welcome back to India Market Open. The trade remains absolutely somber. So let's head across to what AMFI's semi-annual classification review for the first half of the calendar year 2026, which is around the corner with the announcement expected in the first week of January, could look like. Sharad joins us with more details. Sharad, what are you picking up? What could that reclassification look like?
AMFI's semi-annual index reject, as per Nuvama's note, this would be coming in the first week of January itself. And remember one thing, this is very important barometer for active fund managers to look into these classifications, but there are no incremental inflows or outflows which you can expect for these AMFI related stocks. So as an investor, if you are in mutual fund, then it is important for you, but if you are in direct equity, take it with a pinch of salt. Also, let's go ahead with the amount of stocks which should be coming into these categorizations. The first one is the large cap entrants, which I would be speaking about. These are the big names. This includes HDFC AMC, Bosch, Polycab, Cummins India, Canara Bank, Muthoot Finance. There are other stocks also which are in the list where you would like to see the potential large cap entrants if you look at them. And also see, these are the names coming in. This includes newly listed LG Electronics, Tata Capital and demerged Tata Motors commercial vehicle as well. Looking at the stocks which will come down from large cap definition to mid cap definition, they include Bajaj Housing Finance, Zydus Life, Lupin, Havells, REC. There are more stocks to this list where we will be looking at, and they are on your screen, which includes Indus Towers, United Spirits as well. Now let's go on to the potential mid cap entrants, and these are the list is big. Poonawalla FinCorp, Anthem Biosciences, Physics Wala, which is recently listed, that also comes to this segment. Grow, Lenskart, Meesho. Meesho, of course, the listing is also expected to take place, but it has been added in the list. Mid cap to small cap, these are the other brands, which includes Metro Brands, Honeywell Automation, Gujarat Gas. Also, we see that the overall market cap definitions is coming down. So this is the entire list which is there on the screen, where we might see the changes happening as per AMFI's categorization rules.
Thank you, Sharad, for that. So interesting names that we would be watching out for. What moves over there is the key question. But let's pull up our ITC on the screens as well. Now, they've actually maintained an outperform on the ITC, though they've hiked the target price to 500 from a 480. They're expecting a 10% plus cigarette EBIT growth in FY27, and they believe that the concerns with regards to high per stick taxes that have been shared in the draft excise document are misplaced. Such rates represent the cap and not the applicable rates. In fact, they're seeing a potential moderation in discounting post move to GST as a percentage of the retail price and the moderation in leaf tobacco costs. They believe re-rating needs clarity that cigarette tax will not increase materially post levy of new cess. In fact, on this, Neeraj, what we need to discuss about is what a finance minister said as well, that because the cess regime has to go away, they need to replace it with an additional tax, though they are not expecting the incidence in terms of the actual absolute amount of the tax burden to change. So potentially, if you have to read between the lines, the way I'm reading it is that, for example, if there is a 40 rupees tax on 100 rupees, the name changes in terms of the incidence, but the 40 rupees probably will remain at 40. It may not go down or up. And I think that's what the street is reading into. And we've not seen any correction in terms of the stock price since then.
In fact, the chatter, frankly, amongst brokerage notes right now is that, or rather dealing rooms, is that is the worst over for ITC in terms of the overhang of taxes. And I wonder if that is enough to propel the stock or no. But certainly is a small positive.
A small positive that we should be looking at. But very quickly, let's see what markets are doing as we speak. If we can just pull up Nifty 50 as well as Bank Nifty post that. Again, we are trying to inch higher. We've reclaimed that 26,000 mark yet again in the first half of the trading session. How much sustainable is that going to be is anyone's guess. But with that, Bank Nifty also pretty topsy-turvy, pretty flat right now. 59,400 is what you're tracking there. Let's just quickly pull up the sectoral indices and see what is supporting Nifty 50 and what is actually leading it lower. You know, the breath right now, Neeraj, has come in favor of the greens with IT, metals, auto stealing the limelight. It's mainly media, real estate, and probably pharma, which is trading under pressure.
Yep. And so much to talk about, by the way, in terms of what's happening on a daily basis on the market, but also what's happening at the broader end of the spectrum over the last 11 odd months and what could happen going ahead as well. So I think let's put all of this into perspective with two very special guests. So you could call them the UBS think tank, and they come to us in the month of December to try and understand how is it that they have looked at 2025 and what could be in store for an equity investor per se in 2026. Sunil Tirumalai of UBS as well as Gautam Chowcharia join in. Gentlemen, both of you, thank you so much for taking the time. I really appreciate your time. And either of you can start. Maybe I'll go in an alphabetical order. And Gautam, I'll start off with you. How do you see the performance of equities and the risk to it from 2 or 3 factors? If geopolitics was the risk for all of 2025, suddenly the Japanese yields rising has become front and center of all conversation. Is that something that will eclipse most other risks to equities and risk assets for the near term?
It doesn't seem to be happening as we speak for the broader markets. For India specifically, I think, and I'll let Sunil answer that Japanese yield question from his EM lens. But from an India perspective, I think Indian markets this year have been boxed, so to say, in a triangle of strong retail flows, but also coinciding with huge capital raising and rich valuations. In the context of fundamentals, and that boxing has continued being in that. So it doesn't come down much, but it doesn't also go up in absolute terms. What it's also meant is that India has underperformed the rest of EM because we saw strong earnings momentum in the rest of the EM, especially the tech-driven sectors. Now, whether this changes going ahead or not, look, the retail flows likely to continue strong. The capital raising pipeline remains huge. The question boils down to valuations and fundamentals. So valuations, even despite market stagnating, are not attractive in absolute terms. Yeah, you could say related to a year back, 2 years back, slightly better, or related to EM, less of a premium. But the key driver here on will be the local growth fundamentals. And that's where the debate around tariffs or geopolitics will come in as to how that weighs or does not weigh on the visibility of growth recovery in India. I'll hand over to Sunil in terms of the EM lens on the Japanese yields.
Sunil, so Gautam, thanks. But Sunil, no, I'll peg in one more thing there, right? One is the Japanese impact on emerging markets, and two, emerging markets, within the emerging markets basket, the fact that India has underperformed so much over the last 14 months, does that kind of give a bit of a floor to any large global event that may impact emerging markets?
Right. Thank you. Good morning to all your viewers. Let me answer the two parts to your questions, one after the other. I don't think I would make a big deal of the Japanese yields going up, or what people like to call as the carry trade and the unwind and so on. If you look at what's happened over the last 12 months, 18 months in terms of global portfolio flows, the world has bought record amounts of the US, in 2025. It defies all commentary and worries that people had about how the US is losing its exceptionalism and so on. But basically the US stock markets and the Mag 7 and the AI and tech names have been the favorites for global equities investors. Elsewhere, it's no longer the foreign portfolio flows that are actually determining outperformance or underperformance in a big way. US did not outperform, even though global portfolio flows chased US in a big way. And that's because in most markets, it is the domestic money that's actually beginning to drive what leads to performance and underperformance. And as we've seen in the case of India, it's not just domestic inflows, but also the outflows through capital raise activities that Gautam mentioned. And all of those things, do become important. I think the themes that you want to be, careful of or be watchful of heading into next year, I don't think it's going to be tariffs and trade, as you pointed out. But whether the AI trade globally has more legs to go, will there be more investments? When will revenue start, coming up? When will productivity gains start coming up? And those are the questions that you need to kind of think of. Now, coming to the second part of the question on India in the emerging markets context, let me put a few numbers in perspective, right? We have a quantitative tool that we call as a perception score. It's just a sentiment score, which looks at a database of about 800, 900 stocks across emerging markets, and basically tries to answer, if I take an average random emerging market stock and list it in various markets, what premium or discount are you getting, right? So I just keeping the growth same, the ROE same, the same sector, and all of those things. It's just a single, similar, same stock that moves around from one market to the other, and what kind of premium or discount. India historically, pre-COVID, used to get a 30% premium. Justifiable, that's the India growth premium, that's the India quality premium that you could argue. That has now steadily gone up to 90%. Right. I mean, I think it kind of peaked at 95% last year, but it's now down to about 90%. So that basically means that for a foreign investor, a bottom-up investor who's looking at investing into India, for the same growth, ROEs, and same sector, it's a similar stock, you need to pay 2x the valuation in India, right? So that's a good thing. I mean, in the sense, Indians can feel proud that the companies here are being valued so much, but it also means that on an ongoing basis, so the returns expectations for a foreign investor is going to be that much more challenging when you're already having to pay 2x. So I think that's why you're also seeing that the foreign flows have not been super convincing in terms of coming back. I mean, there are months when it comes back, but generally it's been very weak.
So, Sunil, to add to that, good morning, Hiral on this side. Considering this past trend where domestic investments have driven the markets, how does the shifting dynamic of domestic versus foreign institutional investors actually impact your outlook as well, if you have to look at India then?
Well, okay. So, as I said, in most markets, you need to pay close attention to what's happening to domestic flows. And India has been very strong post-COVID. Other markets are kind of catching up. I mean, some of the enabling conditions that were ripe for flows in India are kind of becoming relevant in other markets too, including policy support and focus on corporate profitability and returns and shareholder returns and so on. So I think the reason why from an emerging markets perspective we still are kind of on a relative basis we are still cautious on India purely on a flows basis is that the pickup in supply of equity capital or demand for equity capital from corporates is actually going up significantly as well. And it's I mean I won't take names of companies, but there are companies who did a big IPO 2 years ago. All the money went into the selling shareholders, and now they're coming back apparently to raise money for their own operations. Again, a big amount, right? So there is a big rush to tap into this, flows that are coming in from households.
Okay.
If you look at some numbers, pre-COVID, the demand for capital, i.e., corporate capital raises, was about 10% of the retail flows that are coming into the market, right? Now, on a larger base of retail flows, that number is north of 25%. Right, so you have a lot more money being demanded, and of course, you have to also take into account foreigners selling.
Basically, the domestic flows is something which is something that everyone is tracking right now. Which becomes important. And to take that conversation forward, Gautam, I would want to come to you on valuations. We're talking about valuations which are still elevated. Now, how are you expecting the corporate earnings growth to perform to justify these valuations and drive that further market upside? What would you want corporate earnings to be like?
So look, the corporate earnings is in two parts. One is some recovery based on a low base, based on, say, GST, based on income tax cuts, etc. That's kind of what's baked into analyst estimates, and I think the street is already pricing that in. Will that be enough for markets to break out of the box which I described in the beginning? I think not really. You will need a stronger growth recovery than what is being baked out based on analyst estimates or from all the macro drivers. And what can drive that? Obviously, the tariffs, etc., can make a difference because that will create sentiment, exports pick up, etc. That will make a difference. Secondly, the local part, the one thing which can make a difference, which is difficult to model right now, is how the credit cycle pans out. And that's what we discussed with some investors, whether the recent bottoming out of the NPL cycle, the recent commentary about growth in credit, does this mean a stronger pickup in credit growth? That's not being baked in by investors or by analysts. And that could be an interesting one to watch out and look at closely. Because, look, frankly, we've seen rate cuts, we have seen liquidity easing. But one of the things which drives credit cycle is also easing of credit standards. So as banks become more comfortable about the credit standards in their lending, including the oversight from RBI, that could drive higher credit growth beyond just the liquidity easing and the rate cuts. And that's something I think is worth tracking. And to me, beyond geopolitics, beyond US tariffs, that will be the key to drive a surprise or not drive a surprise. But clearly, there needs a surprise on growth for markets to break out from where we are now.
Gautam, the overarching views that we've had from the buy side, who must be guys that you guys service as well, your peers said might be servicing. But when we talk to them about where is it that they would want to put incremental capital to work for a better part of 2026, and the views seem to be centered around financials, the higher end of consumption, discretionary per se, but even that within that premiumization in a meaningful way, and in some sense, energy transition or some form of energy. Is that a good space that to you guys as well? Do you second that? And is there some additions that you would want to make to that list?
No, these three are themes which our analysts bottom up are also pushing. Exactly the same. Financials selectively in consumption are more higher and more driven by premiumization, including in automobiles and energy basket as a whole. And energy for us is not just transition, but including the traditional thermal space. Where we are seeing for this entire supply chain, the profit pool will be much bigger. Growth rates will be much higher in the next 3 to 5 years than we have seen the last 5 to 8 years. So these three thematics remain very common discussion point with investors and for us also. Now, depending on the investors, there is debate around IT services. The tactical investors are trying to position for a short-term positive momentum based on commentary, based on currency moves, etc. The longer-term investors are still holding on rather than jumping in. So there is debate around IT services. The other sector where we are quite bullish is the entire quick commerce. That remains an interesting space where we continue to see, including from our analyst, the TAM estimates expanding. So it's not just the stocks have done well, but it's also backed by TAM analysts expanding, TAM numbers or estimates expanding.
Okay, and at least final question from my end to you, Sunil. The other opinion that seems to be coming is that if 2025 was marked by being completely bottom up as a market, for India at least, and then you look at other emerging markets as well, could it be quite the reverse in 2026 in that there could be a top-down approach? Sure, bottom-up ideas will work, but could there be a top-down approach in that as a market, maybe the index could rally as a much safer proposition as opposed to trying to be very picky and ignoring the large caps and the index?
Unlikely in our view, right? So, I mean, we don't expect, so the condition you're talking about is essentially one where there is a big rally in the index or a big correction in the index. A lot of stocks go up together or a lot of stocks go down together, which means that there's a big common theme, top-down theme that's been playing, and you need to get that theme right. We're not expecting that heading into next year. So it would still remain, very bottom up. You need to look at, sectors where there is the turn that's happening on the earnings, momentum, where upgrades are happening, where positive surprises, that Gautam mentioned, are expected, and so on. No, we don't expect that, even not just for India, but even at a global level. Our expectations are, even for the global indices, are upside on equities in dollar terms is not more than 10-12%.
Okay, so interesting conversations coming in there, but thank you, Sunil. Thank you, Gautam, so much for joining us on the show. It's always a pleasure to speak to both of you on India Market Open. But viewers, completely out of time. And Neeraj, this has been an interesting day of trade. Though markets not doing too much, we've still reclaimed that 26,000 mark, but a day with heavy news flow and absolutely great coverage.
And IT ruling the roost, 1.5%. If there was ever an index that moved exactly in tandem with how the rupee depreciated, you reckon it is IT.
Yeah, and I think that's the conversation we should be taking forward on the channel as well on the day like this, because clearly benefits coming in for IT. How much more, how sustainable is the key question only on NDTV Profit. But thank you so much, viewers, for joining in from the team that put the show together. Neeraj, myself, Alex. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here
as the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy.
Hello and welcome. You're watching Ask Profit right here on NDTV Profit. I'm Anushi Vakharia and with me is Puneet Zaveri. Now, this is a show where you get all your stock-related queries answered, be it fundamental or technical. We have both the guests or experts with you to get. You can either WhatsApp us or call us to get all your queries answered. But Puneet, first let's talk about the markets. Now, if you just look at the breadth of the markets, it's not on a great note that we're looking at. There's FII selling, which has continued for fifth straight day. Along with that, if you look at the rupee also, that continues on a new record low. Today as well, that's what we are looking at. Nifty 50 currently about 0.4% of an uptick. Still better off from what the day's lows were concerned. But if you just take a quick check on the USD INR rate, that's at 90.2 is currently what we are looking at. In terms of the bank Nifty also, if you're just looking at that right now, we are seeing flattish moves over there. About 0.2% of an uptick is what we are looking at. In fact, let's pull out the point contribution table to get a sense with regards to what's happening with the benchmark indices. We are seeing RIL, TCS and HDFC Bank right at the top, while there's pressure with something like Eternal as well as ICICI Bank, even Maruti, some bit of pressure is what we are looking for that as well. In terms of the sectoral picture though, what we are looking at is a mixed bag essentially. We are seeing Nifty IT right at the top, 1% of an uptick, followed by metals and PSU banks also. PSU banks yesterday saw a 3% of a beating on the back of the news that foreign investment would stay at the levels of 20% and would not see an uptick, which was what was expected before. While Nifty Pharma and Media, if you look at that, that's seeing a downtick of around 0.8% in today's trading session. So that's on the sectoral and the benchmark indices that we are looking at. But Puneet, talk to us about the broader markets as well.
Yeah, very quickly, just want to point out a couple of stocks on the BSE 500. So let's skip across to that because mid-cap, small-cap has been in the green and we'll hopefully get some perspective there by the end of the trading session to continue to be in the green. But largely, India Cement up almost 5.2%. And you can see the tech names, L&T Tech, Happiest Minds, on the back of the rupee depreciation. IT is a big gainer. So you are seeing those positive moves on that. AkzoNobel is continuing its positive momentum. That's another key positive, up almost 2.8%. Yesterday, the stock was up almost over 5 to 6%. So continuing that move. On the losers side though, Biocon and Hitachi Energy are the biggest losers in the trading session. But let me welcome in our guest for the show today, Shaina Mukaddam. She is the independent market expert on the fundamentals, while Kush Bora, founder kushbora.com, joining in on the technicals. Both of you, thanks so much for joining in and a very good morning to both of you. Let me first go across to our first caller for today. Manav from Gurugram is dialing in for a stock query. Manav, very good morning and welcome to Ask Profit. What's your query?
Hi, good morning to everyone.
Good morning,
I have a query on I have 50 shares of ABFRL, which I bought it before the demerger.
Okay.
At an average price of 240 somewhere around.
Okay.
So after the demerger, I got 50 odd shares of ABLBL also.
Okay, got
so
it.
the price, so the price got recalculated according to both of their valuations. So currently I'm in profit in ABLBL, but it's showing me loss in ABFRL.
Right.
So I'm just confused. Should I keep both the counters, or should I sell one off and keep one, or should I keep both?
Right. No, Manav, fair question. Let me go across to Shaina for this real quickly. Shaina, because of the demerger, he's got both shares of Aditya Birla Fashion as well as the lifestyle brand. Any view, any kind of recommendation that you have if he should continue to hold both or sell out of either of those counters?
I would say it is better to exit both these counters and accumulate more in AB capital. There, I believe in over the next 2 to 3 years, I think that will do better. So he will be holding AB capital. So it's better to consolidate his holdings in AB capital. The other two are not really making too much money in terms of financials, business-wise. So it's better to shift, in my view.
Okay, so that's with regards to AB Capital is what we are looking at. But now the next question is from Vanita Bala. She's writing to us from Kuwait and wants to understand, is this the right time to buy MCX for a long term? And she's looking at a period of over 5 years, wants to understand the valuation picture on this and whether the current levels are a good time to enter. So Shahina, let me come across for something like a MCX as well. What is your view regarding this?
The MCX has given you that wonderful return and it's done very well. and I'm very positive on all exchanges. So I am positive in the long term, even on MCX. But in terms of valuation, if I was to pick between a BSE, NSE is of course not listed, but you can take it, unlisted stock, and MCX. I would still go with a BSE and NSE rather than MCX. I think MCX after the rally has become a bit expensive. So I would, you can definitely add, but better to add at corrections. It's a bit expensive now.
Okay, so expensive valuations are what we are seeing for MCX at the current levels. So that's the view with regards to this particular counter. But moving on to the next caller, Ajay is calling to us from Ambala. Hi Ajay, how can we help you today?
या गुड मॉर्निंग मैम, गुड मॉर्निंग टू ऑल द पैनल मैम। मैम मेरा क्वेश्चन ये है कि मेरे पास अभी 10 लाख रुपीस इन्वेस्टमेंट पॉइंट ऑफ व्यू से रखे हुए हैं। एक्चुअली मुझे कुछ क्वेश्चन पूछना था कि मैम मैं ये मिड कैप या स्मॉल कोई भी ब्रॉडर मार्केट में 4-5 स्टॉक्स में इन्वेस्ट करना चाहता हूँ, ऐसे 2 लाख या 250 लाख 2.5 लाख के हिसाब से 4 डिवीजन में। तो मैम मुझे लिस्ट ऑफ स्टॉक कुछ बता सकेंगे आपके फंडामेंटल में कि जो 1 साल के लिए पॉइंट ऑफ व्यू से मैं इन्वेस्ट कर सकूँ?
आप ये जो 10 लाख का एलोकेशन कर रहे हैं वो आपको फंडामेंटल्स के हिसाब से करना है। सो आई जस्ट वांट टू अंडरस्टैंड
आज के पॉइंट ऑफ व्यू से मैम कि कौन से मिड कैप या स्मॉल कैप जो अच्छे लॉन्ग टर्म मतलब 1-1.5 साल में अच्छा रिटर्न दे सकें, वो फ्रेश इन्वेस्टमेंट मैम।
जस्ट वांट टू अंडरस्टैंड अजय कि अभी आपका जो पोर्टफोलियो है, आप ने पहले कोई इन्वेस्टमेंट्स किए, कोई सेक्टर्स में आपको ऑलरेडी प्रेजेंस है, तो आई वांट टू अंडरस्टैंड योर ओवरऑल स्ट्रैटेजी आल्सो।
यस मैम, मेरे पास मैम टीसीएस है। मैंने कल क्वेश्चन पूछा था, मेरे पास 700 शेयर्स टीसीएस के पड़े हुए हैं मैम, और 3068 के रुपीस के हिसाब से। इस स्टॉक में 50% हमारा पोर्टफोलियो टीसीएस में ही है, बट अनदर थोड़ा सा मेरे पास 10 लाख रुपीस स्पेयर पड़ रहे थे, तो मेरे पास इसीलिए मैं इन्वेस्टमेंट पॉइंट ऑफ व्यू से मेरे पास टीसीएस है मैम, टीसीएस है और 1-2 स्टॉक्स हैं, बट मुझे और बाकी स्टॉक्स में समझ में नहीं आ रहा था क्या करना है।
ठीक है, let me go across to our expert then. Shahina, I want to understand from you. So 50% of his current allocation that we are looking at is in TCS. So it's majorly the IT index is what we are seeing. Now he wants to invest more in the small and mid cap names. Firstly, valuations, which companies would we see in this particular space where valuations are attractive, and that too for a long-term picture if you have to enter at the current levels?
So in the small and mid cap space, as of now, I think you can look at hotels, because wahan par you have got the rupee depreciation that has happened. I think that will be a positive. So in that you can look at one of the two. Lemon is good, Chalet is good. Pick one of the two. Even ITC Hotels is good. It's in the mid cap space, so you can pick one of these three, depending on what you're comfortable with. Second sector that I would go in for as of now with a 2-year view, 2 to 3-year view, is in the metal and mining space. So यहाँ पर the mid cap space that is there would be GMDC, which is not only doing good mining in India, but they're also looking at international markets. So, and another one is in copper. Copper prices have gone up a lot. And I think you can look at Hindustan Copper. It's already moved up in the last 2-3 days, but I still think even from current levels, there is a good up move, because Hindustan Copper has about 40% of the domestic mining copper. They have got that in their portfolio, and plus expansion is on the cards. So I would say Hindustan Copper is another sector that he can look at. IT he already has, so I will not mention IT. He can look at some other sector in consumer durables. So basically spread your portfolio over 5-6 stocks, and in small cap especially. And then you can look at the longer term. Another small cap stock would be, I would say, Shakti Pumps, which has corrected a lot. And there, I believe they have got a very big order. So 1,000 crore order that could drive a 20-25% growth during the current year. They are in a good sector in solar power pumps. So there, I would say that it can give you an opportunity over the next 2-3 years. I like Heritage Foods also in the small cap space. Their milk prices are stabilizing, and Heritage Foods is getting into newer segments like ice creams. So I think there over the next 2-3 years, the correction has been there. So from here on, I believe you can keep adding a smaller quantity so that you build your portfolio over the next 2 to 3 months, because the market itself is seeing some bit of softness. So be careful, don't leverage, and add to your portfolio with a 2 to 3 year perspective.
Got it, Shaina. So Ajay, आपके लिए लेमन ट्री, शैले, ITC होटल में से एक, GMDC, हिंद कॉपर, शक्ति पम्प्स और हेरिटेज फूड्स, ये 7 स्टॉक्स शाइना ने रेकमेंड किए. The next question that we're getting is an interesting one. Arjun from Kolkata is asking for the next 7 to 8 months if he can enter into JSW Energy and Apollo Microsystems. Kush, pleasure speaking to you again. What would you recommend Ajay to do?
Hey, hi, very good morning to everyone. I think JSW Energy is something that he can hold up on, in the sense that, the stock has actually seen some profit booking, and the support levels that were, being tested of 475, that's been broken. So I think I would wait and watch, and that too on the back of volumes. So maybe close to the, 450, 445 zone, if the stock once again attempts to take, a support and rebounds, then, you could consider. But for now, the downturn is there and on the back of volumes. I suppose the other stock that you mentioned was Apollo Microsystems, right?
Yes, Kush.
So this one's going into a consolidation mode, but the support levels of 255 are being held on to for a 7 to 8 month time horizon. Not a bad idea to enter when the stock is consolidating. So yes, Apollo Microsystems is something that you can enter right now. Keep a tight stop loss at 255. On the way up to 95 and about 310 are your targets. So Apollo Microsystems you can enter now. JSW Energy on declines.
Well, that's an interesting call, Kush. Up almost 130% already, but Kush is seeing more upside on the charts, so that's interesting. But we have another caller now coming in from Kerala. Jijo is dialing in for a stock query. Jijo, very good morning and welcome to Ask Profit. What's your query?
Yeah. Good morning to all. My query is Bajaj Finance Housing Finance Limited.
Okay.
I was holding 1,500 stocks at average of 97. So I don't know the valuation wise is good or not. When I see the price to book, it's less. So I bought yesterday. So I want to know the long-term perspectives for you.
Got it, Jijo. Let me take it across to Shaina. Shaina, Bajaj Housing, a key one that's corrected quite a bit from its highs of over 180 rupees. I think currently trades are around 4 times price to book. What would you recommend Jijo to do? How long should he hold on to this investment?
Well, so the valuation is expensive. It's 4-time book, yeah. And if you compare it with the other housing finance companies, it is expensive. See, a second point I want to add over here, the selling by the promoter, I don't see it as negative because they had 86% market share, equity holding, sorry. So now the equity holding has to be brought down to 75%. So the process of selling equity has just started. We saw the big lot earlier. So this overhang of stock, they are still not at 75%. So this overhang of stock is going to remain for the next 6 months or 1 year. So I would say I would not be buying Bajaj Housing as of now. It's a great stock, good management, but I would be looking at it for making a return on the investment, maybe 2 quarters down the line. Otherwise, you hold it for 2-3 years, that's okay. But I would say now is not the right time.
So not the right time for Bajaj Housing is the view coming from Shahina. But the next query, that's from Paresh, who's writing to us from Bengaluru. He has a question. ITC has bought 1,300 shares at an average price of 420, currently facing a loss of 23,000 on the counter. Wants to understand whether he should continue to hold, buy or sell this one. Kush, let me come down something like a ITC. It's not a stock which has done so well this year. Even in the last 6 months or something, we are seeing flattish moves over here. So what would your view be with an ITC right now?
ITC would be a hold right now. The stock's actually consolidating with a negative bias, but it's trying to find its feet. And, while you don't have a very strong sign of a recovery or a revival, at least, as I said, the counter's consolidating. So I would continue to hold ITC, tight stop loss at 385. Upsides could take some more time because, as I said, volumes on the upside are still missing. The stock hasn't really participated in the rally that the market is taking place. But this is due for a bounce, and once once you see early signs, you could see 420, the level that is bought it at, and higher levels also. Because after a consolidation, the breakout could also be sharp. But as I said, could take time. 385 is your stop loss. Continue to hold ITC.
Okay, so that's the view regarding ITC. Next, we have Rajesh, who's calling to us from Hyderabad. Hi, Rajesh. How can we help you today?
Hi, good morning. I'm Rajesh. I started my investment journey, and from the last 6 months, I have been investing in mutual funds, and I want to explore stocks. So I want to check when is the right time to enter E2E networks with a long-term view.
Rajesh, any particular reason that you're interested in E2E network? Was it fundamentals or technicals? What's the key rationale behind this?
I'm looking into the technicals. In fact, now that this is a naive subject for me, I'm just curious to know more about this company.
Okay. I'll take this across with Kush then. Kush, your view with E2E network?
Not so positive. There have been a couple of attempts at rebound, and they've fizzled out. The stock has seen a negative crossover of the 20 and the 200-day moving average. So the death cross also forming there. Volumes also on the way down haven't really abated. So it doesn't really suggest that the selling pressure is over. My suggestion on E2E networks would be to exit. And if he's currently looking to enter, then this is not your stock to enter right now. The stock could see a rebound here and there because it's deep into oversold territories, but the medium-term structure does not suggest an immediate upturn. So I would be a little cautious and avoid E2E networks.
Got that. That's Kush's view on E2E networks. It's another stock that's attracted a lot of interest from retail investors. The next one is Satwik Green Energy. Now it's a recent listing. Our viewer has bought roughly 480. He's holding. Pramod has been holding 30 shares. Currently at a loss of about 2.6 thousand. So he's asking if what should be the further course of action. So Shaina, let me come to you. I know it's a recent listing, but any view that you have on this stock?
No, I'll pass this. I don't really track new issues too much.
And any view that you have on these solar PV as well as these renewable solar plays, because there's been a bunch of listings apart from Satwik as well, something like Fuji amongst others. So what would be the differentiator that investors should watch out for amongst all of these plays versus the listed like Premier, like Vari amongst others?
I think the management quality and the size of the business is most important. Because I think that is where it is going to be driving their order book as well as their performance. The competition is going to be intense in the sector. All of them are increasing capacities in a big way. So I would actually stick with the larger ones because there is too much competition. So I wouldn't take the risk of getting into the smaller ones. But of course, I don't have any specific opinion on the one you mentioned.
Got it. Fair point, Shaina. But let me go across to our next caller for today. It's coming in from Hyderabad. Ravi is dialing in for a stock query. Ravi, very good morning and welcome to Ask Profit. What's your query?
Yeah, very good morning. I have a query on GV Vernova T&D India. Currently, I'm holding 18 shares bought at 3170.
Okay.
So just want to know, can the losses will be covered in next 6 months or 8 months?
Got it. Let me go across to Kush real quickly. Kush, on GE Vernova, Ravi is bought at 3,170. It's trading just a tad below 2,900 right now. Any chance of it coming back to his buying price in the next 6 to 8 months?
Yeah, I would give it a fair probability. The reason is that, if you see the early April rally, the stock actually jumped up quite a bit, more than doubled. Actually, there was a very significant uptick. From there on, there's been some consolidation, some support that the stock is trying to take at the 2,800 mark. But, some profit booking after such a strong rally is par for the course. The medium-term structure remains intact. So I would suggest a hold on GE Vernova T&D. Slightly deepish positional stop loss at 2650. But as I said, the overall structure is intact. There is consolidation right now, and the decline volumes have also started to thin a bit, which is also a good sign. So yes, continue to hold. There is a fair probability that in the next 6 to 8 months, he could see his buying price and slightly higher levels also.
Okay, moving on to the next caller. It's Selva who's calling to us from Tamil Nadu. Hi, how can we help you today, Selva?
Yeah, madam, good morning. I purchased 100 shares of Dredging Corporation at the rate of 1,380. Now I am running a loss of around 50,000 rupees.
Right.
Can you suggest what is the further course of action? Where shall I dispose it off or shall I wait?
Okay, let me take your query with Kush. Kush, we have seen a subsequent correction in this counter from its highs in 2024. At the current levels, should he continue to hold it? He's facing a loss of about 50,000 on the counter. What's your view?
So, look, the medium-term structure for this one is not so great, as you rightly pointed, that the stock has taken a beating around the, after the 1450 high that it hit. So, his buying price is also quite elevated around those levels. But the silver lining is that for the last, 9 months or rather this whole calendar year, the stock has been attempting a rebound. it has been seeing selling pressure and resistances, but that is obvious. There would be investors and traders like himself, who would want to exit especially if the buying prices are lower. So he could continue to hold this one. I would give it a low probability that his buying price would be seen in the next 3 to 6 months kind of a time frame. But from here on, the stock has the potential to hit the 990 and about 1050 mark. So he could exit around those levels. Because at around those levels his losses will be lesser, and also these are some technical resistance levels. So continue to hold, keep a stop loss at the 800 mark. He's already seen a lot worse in terms of prices. So keep a stop loss at 800, exit close to the 990, 1050 zone. Your losses will be slightly lesser compared to what they are right now.
Got the view, Coach. But it's time for our first round of the rapid fire in this edition of Ask Profit. Coach, as well as Shaina, you know the drill. Keep your answers on buy, sell or hold, so that we can take as many queries as possible and answer a lot more also. Let me take in the first one on Utkarsh Small Finance Bank. A viewer has bought it at 56. What should he do, Shaina?
Switch. Exit.
Okay, Soma has bought 50 shares of Indian Overseas Bank, wants to understand the short-term outlook, whether she should average at current levels. Kush, your view?
No, I wouldn't suggest an average, but she could still hold on to this one with a stop loss at 35.
HPCL at 468. What should Aishwarya do, Shaina?
I would say it's a switch.
Coal India at 204. Balaji has bought 130 shares, whether he should hold or book loss. Kush, your view?
Exit.
Short-term view on Bandhan Bank as well as NMDC. Kush, what should Shankar from Delhi do?
Bandhan Bank is very clearly an avoid. And as far as NMDC goes, I think you could hold on to this or keep a stop loss at the 73 mark, and positionally you could see about 78.5 and 80 plus levels also.
Shahina, Pramod wants to know, is it the right time to buy L&T Finance considering its valuations? What is your view?
Yeah, it can be a buy at current levels.
Bank of India.
Medium term.
Got it. Bank of India 145 is a share price, 1000 shares. What should Michael do, Shaina?
Yeah, he can hold it. Also hold.
Okay, Satish wants to know, is it the correct time to enter Max Healthcare? It's for a long-term perspective. He wants to know your view with this. Shahina.
Yes, he can hold it. Yeah, he can buy or hold it. Yeah.
LIC Housing at 632. Kush, should he continue to hold?
No, I would suggest an exit on this one.
Okay, Venkatesh wants to know about Patel Engineering bought 5,000 shares, whether he should buy more at these rights issue. Shahina, your view?
No, I would say it's an avoid.
Inox Wind bought at 134 rupees. Shaina, should he continue to hold?
Yeah, I personally hold, so I guess it's a hold. And also I want to see, I hold a lot of other stocks that we have discussed. Small quantity, but I do hold.
Got it.
Okay, Shankar holds 1,000 shares of RVNL at a price of 422. Kush, what would your view be? Should we continue to hold?
Exit.
Siemens bought in August 2024. He's not mentioned a buying price, but it's flattish, so it might be at the current price. Kush, what should he do?
Continue to hold. Positional stop at 3150.
Okay, Priyanka has 451 shares of Hutco at 273, wants to average it at current levels. What's your view, Kush?
She can consider at the current levels she can consider averaging at the current level, but I would suggest a positional stop at 210.
PNB bought at 125. What should he do, Shaina?
Yes, he can hold it. It's a hold.
Got it. Well, that's the end of the first round of the rapid fire of this edition of Ask Profit. A lot more queries on the other side. Stay tuned. We'll be right back after a quick break.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments
the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Hello and welcome back. You're watching Ask Profit, a show where you get all your fundamental and technical queries answered. You can either call us or even WhatsApp us on the numbers that's flashing on the screen. But before we go and talk about more queries, it's time to take a deep dive in the F&O market setup and see how the cues are shaping up for trade today. We have Sharad standing by to just discuss the snapshot for today's trade.
Thanks, Anushi, for that. There is expiry at play when it comes to Sensex, and we have seen a lot of volatility, at least in the initial hour of trade. But now there is a significant up move coming in, especially the IT names. They are doing well on the back of a very strong dollar as rupee has hit its record lows. Tech Mahindra, TCS, HCL Tech, and even support coming in from majors such as Reliance and Asian Paints as well. In the downtick side, not much happening, but looking at the spot prices, there is an interest coming in. Open interest is on the higher side. Let's pull up the contracts where we see the action coming in. The options data was initially suggesting bearishness, but now there's a mixed trends happening. Either side of the call and put option, there is an action coming in. Let's pull up the BankX segment to see where the action is lying. And over here, some divergent trends are definitely there. Let's pull up HDFC Bank and ICICI Bank, how they are faring, and both of them you can see is faring in the green as well. In the contract specific also, the action is moving slightly towards the put side where the writing is on the higher side. But let's go on to the stock specific moves where the action is coming in. The long build up in Petronet LNG and PB Fintech. Short covering, two candidates coming in this as well, which includes HFCL and Yes Bank. And if you look at the long unwinding names, they include Paytm and Torrent Power as well, but not much action. The volumes are lesser in this space, but short build up, Biocon and Keynes make it to the list. So these are the important stocks on the Sensex expiry. They are buzzing in trade.
Well, thanks so much for that, Sharad. But, we have the next question that's coming in on WhatsApp as well. And, Kush, this for you, Happiest Minds at 750, 300 shares is what Sunny has bought. And Sunny is requested for your view. He's also asked us to take this question quickly because he has to go pick up his daughter. So, what's your quick view on this stock?
Hi, Sunny. Thanks for asking me specifically. I would suggest a buy on Happiest Minds, stop loss at 495 and targets on the upside, 535 and about 560.
Okay, so that's with Happiest Minds is what we are looking at. But now we have a caller joining us. It's Vivek who's calling to us from Mumbai. Hi, Vivek. How can we help you today?
Yeah, hi. And hi to Kush. And this query was basically on TCS, and I've been holding this stock since 2022. And I'm at a loss at this time, but the dividend is also kind of making it up. And therefore, I have arrived at the price of 3,300, which is mentioned, although it is slightly more. So I'm currently at a loss of about, 9,000 on this. So wanted the view which Kush has, whether, this rally is a durable rally on TCS, or would it be more prudent to move out of TCS and move into a counter like Eternal?
Okay,
would that be a good idea so that, I can kind of hold this for 2 years, moving from TCS into Eternal?
Okay, so still it's a long-term perspective that you're looking at, right?
Yeah.
Okay, Kush, so specific query for you again. This is with regards to TCS versus an Eternal is what we are seeing. What would your view be with this?
Hey, hi Vivek. First off, thanks for directing this to me specifically. It's just incidental that today on our advisory, we've released a buy call on TCS, but the second target happens to be 33.40. It's obviously a momentum-based target, just about above your buying price, the one that you've mentioned. So my suggestion would be continue to hold on to this one. The street is divided as to, what's the fate of the IT sector. A lot of the analysts have turned constructive. I have my skepticisms, to be honest, but cannot deny the momentum that has been built in some of the big names, especially TCS and HCL Tech, and also some of the smaller names like Persistent and Coforge. So my suggestion would be continue to hold on to this one. 30-40 is the second target that we've kept on our call. I think the stock has the potential to go to 375 levels also. But you would be better off doing a trailing stop loss strategy, which is if the stock does dip to some support levels, exit. Now, as far as your second query goes, Eternal, I'm very constructive on Eternal. I am in fact looking at a buying opportunity on Eternal. The only reason we've not initiated a call just yet is because the fall that started about a month and a half ago has not stemmed, and there is a gap around the 275 mark. So if that gap gets filled rather, and the stock does show a recovery, I would be constructive, and it will not be a bad idea to consider Eternal as a buy. So yes, on the way up, once the fall settles, Eternal is a good choice for the next 2 years.
Very interesting question. So there, Eternal is the one that could be on focus at 275 according to Kush. It has corrected from the highs quite a bit, but this one to watch. The other one is coming in from Venkat Ramani from Bengaluru. He wants to invest 1 lakh rupees in any one of the auto stocks. He's mentioned Tata Motors, passenger vehicle, Mahindra and Mahindra, Hyundai is the three options that he's given. China, either of the ones that he's mentioned is something that you like, or do you have any other recommendation in the auto space?
Well, I would say in four-wheelers, Maruti looks the best as of now. So it doesn't, none of the three. But yes, even M&M of the three that he's mentioned would look good because you have good growth in volumes, both as tractors as well as their four-wheelers, CVs also. So I would just go with either of Maruti or M&M.
Okay, so that's the overall perspective on auto space and the topics right there. But now moving on, it's Shailendra who's calling to us from Bhubaneswar. Hi Shailendra, how can we help you today?
Good morning, madam. I'm having 130 shares of Network Technologies at the rate of 2211.
Right.
I want to hold for 1 year.
Okay, first of all, just want to understand, Shailendra, when did you mark an entry in this particular counter? Because I'm seeing that you've already made a profit of 1 lakh, so congratulations on that.
I purchased on 1st August 1925.
Okay, okay. Let me take this across to Shahina then for her view with regards to Netweb Tech. Shahina, if you see, he's already made a decent amount of profit on this and wants to continue to hold it for another year. Are you constructive on this particular counter for this additional year that we are looking at?
Yeah, I think Netweb, while slightly expensive in terms of pure valuations, I believe, he's gotten at a very good price. And in fact, I would say that, he can even further add at, say, closer to about, on dips around 3,000 levels. They have got a good order book position, and I think they're in a niche segment which is growing fast, cloud computing, etc. So he can add, hold what he's got and add at lower levels.
Got the view, but we have another question on Aegis Vopak terminal. Now it's a counter that started to see traction with analysts over the last couple of months, and Chanukya from Hyderabad is asking if it's the right time to enter the stock. Kush, on the charts, any view on Aegis Vopak?
I would say rather limited data, so a positional call will be very difficult. So I'm going to have to pass this.
This counter by any chance?
No, I'll pass it.
All right. Let me take across the next question then. This one's coming in on Shakti Pumps. Actually, Shaina gave her view that it was one of the stocks in the earlier part of the show. Our viewer has bought 70 shares at 1150. Jyoti from Hyderabad is asking a short-term view. So, Kush, what would you recommend on Shakti Pumps? Are you as positive as Shaina is?
With the kind of decline that the stock has seen, I will remain a little skeptical, but I would suggest a hold on this one. And the reason for that is that stock's gone into the oversold territory, and there could be a rebound. Also, there is a positive RSI divergence setting up, which suggests that there could be some rebound that could come about. Although her buying price is very high, I would look at levels of 675 and about 750. From a short-term perspective. Maybe around those levels, if things turn constructive, then the tide could turn for Shakti Pumps. But for now, it's a hold. Keep a stop loss just under the 600 mark.
Okay, a hold is the view for Shakti Pumps. This is on basis of technical. Shahina gave her view where she was constructive about this counter. So mixed picture is what we are seeing. But moving on, Narayan is calling to us from Hyderabad. Hi Narayan, how can we help you today?
Hello, good morning, madam.
Good morning.
I am Narayan from Hyderabad. I bought IRB Infra 1694 shares at the average price 68.86 paisa.
Right.
Can I hold or exit, or otherwise it is average?
Okay. So this is for a period of 1 year or further than
1 year.
1 year. Okay.
I will wait up to 1 year.
Okay. Shahina, let me come to you on something like a IRB Infra. Now, if you just look at the sector in general, a lot of these stocks have corrected on the back of the order pipeline, which is also there, which has rather been on the muted side. Even in terms of the execution part of it, we are seeing some bit of pressure over there with the order book remaining muted. And along with that, even working capital cycle has been an issue for a couple of these road players that we are seeing. What would your view will be for something like an IRB Infra?
Well, I think after this correction, and it can correct a bit more. So if he's a one-year holding investor, I would say that he should he can continue to hold, but I see some bit more softness in the shorter term. They are doing pretty well in their average revenues that they are getting from their tolls. So I would say you can continue to hold. If you're a longer term investor, you can keep a stop loss close to about 40 maybe. I would see this going up to about 47, 48 in maybe 6 months time. So I would say hold as of now.
Well, got the view, Shaina on IRB Infra. We have the next query coming in from Sai Karthik from Dallas, Texas. He's a regular viewer. So, Sai, thanks so much for sending in your query. He is holding 200 shares of Adani Enterprises, bought at 2,403, and asking a 3 to 6 month view on this stock. Kush, on the charts, what would you recommend?
I'd suggest a hold. There have been multiple attempts at a rebound, but the stocks faced selling pressure at slightly elevated levels. Nevertheless, it is supporting. It is taking support at the 2,000-2,100 mark. So as long as that is intact, I think the medium-term structure should be fine. So continue to hold with a stop loss at the 2,100 mark.
Okay, so hold is what we are seeing for Adani Enterprises, but a standard disclaimer that the channel that you're watching is part of the Adani Group as well, so do keep that in mind. But moving on, we have the next query from Anil John. He's writing to us from Kuwait. He wants to understand the fundamentals of Anthem Biosciences and wants to understand whether it's the right time to take an entry in this particular counter. Now, do note that it's a recent listing that we are seeing in picture. It listed in July or something onwards. Shahina, have you tracked this particular counter? What is your view with regards to this?
No, I'll pass it. I've not.
Okay, Kush, moving on, I understand that the time period would be rather restricted on this one. So, do you have a view with this?
No, I'm going to have to pass, as you said, very limited data.
Okay. I'll take the next query then. If you look at the next query now, that's from Jagdish. He wants to buy 1,000 shares of Belrise Industries. I'm assuming that it's a long-term picture that he wants to understand. So, Shahina, let me come to you on something like Belrise Industries. What is your view with this?
Well, it's about 14,000 crores of market cap. It's not making any money. It's sort of making losses as of now. No, sorry, I've got it wrong. Actually, I'll pass it. I don't really track this stock, so I'll let Kush take the technicals.
Got Kush, on the charts, any view on Belrise? The listing price of roughly about 90 this at the start of this year. It's done well for its investors. Any view on Belrise for you?
Again, limited data, but from whatever I have, the stock is in a very near-term uptrend. You could consider an entry and keep a stop loss at the 155 mark. That's the 50-day moving average support zone. The recent correction or the recent dip that you're seeing in the last two sessions could still be a healthy one, given the kind of medium-term uptick that the stock is seeing. So yes, you could consider a buy. Keep a tight stop loss at 155.
Okay, do note that it's a 80% of an uptick that we've seen that since it's listed. So that's Belrise Industries view. But moving on, we have Ramesh who's calling to us from Hyderabad. Hi Ramesh, how can we help you today?
Yeah, hi team, good morning. I am the regular viewer of Ask Profit. So I wanted to invest a 2 lakh on the NCC. So it is a real estate space I wanted to add into my portfolio. Is it a long-term view? So is it the right time to enter into the stock? Do you have any recommendation in this sector with the...
Okay, let me take this to Shahina then, and thank you so much Ramesh for being a regular viewer. We really appreciate that. Shahina, your view with NCC, it's been in focus on the back of recent order wins as well. What would you say?
Yes, it's got good orders. It's got and it keeps getting orders, good orders. Valuation wise also it's not expensive. Still, I would say do not buy it at current levels. Wait for a correction. I would say closer to about 165, 160, 165, which is not too much lower from here. But I would say do not buy it now. Wait for corrections and buy it then. Wait for about 5% correction and odds and then add.
Got it. That's Shaina's view on NCC. But we have another query from Pune, and Pooja is writing to us on WhatsApp. She has a query on the outlook of Interglobe Aviation amid the current disruption that we are seeing, and we will put the spotlight on that as well. But Shaina, quick view on the stock?
Well, it is, the only one that you have and the best one that you have in the space as of now, listed space. So yes, but there is a lot of disruption. I think over the next 3 days, we are going to see this disruption continue. So, of course, if you want to buy, and it's an expensive stock. So you want to buy, you buy it at lower levels, not at current levels. I would say close to about maybe 5,400, 5,000. that maybe 5,350, those would be better levels to add.
Got it. But viewers, since this has been one of the key talking points on across social media, we have been covering the story as well of the number of disruptions that flights have happened, especially with Indigo. We ought to put some more focus on that. And, we do a profit intelligence segment in India Market Close. We have, brought it in this show for today because Indigo is in a row after multiple flights cancelled across major airports, which were affecting thousands of passengers, left stranded as well as leading to long queues at terminals. But what will be the impact of all of this on the company? Let me bring in Somit to get us a perspective on that. Somit, over to you.
Indigo has been in focus for the last couple of days, and this is largely because of the flight cancellations that have been announced by the company. So we have tried to gauge what could be the actual financial impact on Indigo, given the fact that there has been a lot of hue and cry about these flight cancellations. Firstly, just to give an idea, over 350 flights have been cancelled over the last 2 days, and on an average, Indigo operates nearly 2,200 to 2,300 flights on a daily basis. So as a percentage, flight cancellation is just 7 to 8% of the total flights that Indigo operates. Now, what could be the financial loss? So we are assuming that if a company continues to earn what they earned in the third quarter of FY25, and if the company continues to incur the cost what they did in third quarter of FY25, that is last year, then in third quarter of FY25, the company earned a revenue per unit of 5.44 rupees, and the cost that it incurred per unit cost was close to 4.83 rupees. Now, out of this total cost of 4.83 rupees, fixed cost is 40%, 60% is variable. And whenever a flight is cancelled by an airline, they actually save on the variable cost and they incur just fixed cost. So fixed cost stands at around 1.93 rupees per unit, and the variable cost stands at around 2.9 rupees per unit. So Indigo, if you look at, has on an average around 190 seats, and the average kilometer that an airline aircraft flies is close to 1,000 kilometers. So if you try to gauge the notional revenue loss that the company might incur on cancellation of each flight, that is 5.44 rupees that it earned as a revenue last year, multiplied by 1.9 lakh crore. 1.9 lakh crore is derived by multiplying 190 seats with 1,000 kilometers. Then the notional revenue loss would be around 10.3 lakh rupees for Indigo on cancellation of one flight. But the impact on profitability, in fact, would be much lower, because I explained to you that they only incur fixed cost and not the variable cost. So if you minus the variable cost then from the notional revenue, then the cost that they actually see on the profitability would be just 2.5 rupees on a unit basis. And if you multiply 2.5 to 1.9 lakh, then the actual loss for Indigo on cancellation of one flight would be just 4.8 lakh rupees. Now they have cancelled 350 flights, so 350 into 4.8, the total cost for them so far would be around 17 odd crore, or the total loss for them so far would be around 17 crore. Now to put this number into perspective, in the third quarter of FY25, the company had a profit of 2,450 odd rupees, and 16.9 crore is the loss that the company will incur because of the 350 flight cancellations so far. So that is just 0.7% of the total profit that the company had earned last year. So obviously, this is not going to have much of a big impact on the financials of Indigo in the third quarter of FY26 as well.
Thanks so much for that, Somit. And viewers, we do try to get you perspective of what you should watch out for in terms of stock prices from a guest, but also the research side as well. So hopefully that piece by Somit, a very detailed one, has helped you. But before I go ahead, let me just take Kush's view very quickly as well, because we did get the fundamental view. Kush, on the charts on Indigo, what do you expect the near-term momentum to be, or is it largely that we should just be concerned on the flights, and so should Anushi, because she is flying out today with an Indigo flight as well. But what would you recommend?
Yeah, well, all the best to her. But no, from a near-term perspective, there is definitely pressure, but medium-term, I remain very constructive on Indigo. I will look for buying opportunities, when this storm kind of settles down. The 200-day moving average is acting up. The stock did slip below it, but is right now trading, above that mark. I think this dip from a medium-term perspective could well turn out to be a buying opportunity. As I said, I just want the fall to stem and the stock to start showing any signs of recovery.
Okay, so that's with regards to Indigo is what we are looking at. Hope everyone, including me, has a safe flight today. But moving on, it's Shankar who is calling to us from Chennai. Hi Shankar, how can we help you today?
Hi, definitely. Good morning. I bought
5 Hitachi Energy. That means our India shares at the rate of all to 22,222 rupees.
Right.
What is the outlook for 3 months?
Okay, for a 3-month
Because
perspective.
suddenly they fall around 1,200 rupees yesterday and today.
Right. Let me take this across with Kush then. Shankar, he can help you with a technical check on this one. Kush, what would your view be?
It's not a bad stock. I think he just got stuck with the wrong price in the sense that, slightly elevated price at the high price for the last couple of sessions that the stocks had. So my suggestion would be continue to hold. There is definitely selling pressure that came in yesterday. Today also you're seeing that pressure, and as we speak, the stock is actually hitting the low point of the day. So this could perhaps accelerate, a little on the downside, but the medium-term structure very well intact. A deepish stop loss that I would suggest on this one would be close to the 19,000 mark. That's where some of the key support level on technicals come in. But like I said, medium-term structure intact, just the price is elevated. So hold this with a stop loss at the 19,000 level.
Okay, so hold is what we are seeing for Hitachi Energy. But now coming to the exciting part of this particular segment, it's rapid fire round. And this is the second rapid fire that we have on the show. So Kush and Shahina will keep the answers as short and crisp as possible. Starting off with the first query, it's from Upendra, who holds 100 shares of TBO Tech at an average price of 1482. Wants to understand whether he should sell now. Kush, your view?
No, I would suggest a hold on this one. Keep a stop loss near the 1635 level.
The next one that we're getting is a 1 to 3 year view. Actually, we have taken Bajaj Housing Finance. So let me take another one. It's on Hutco, 2,000 shares bought at 235. Kush?
No, so Hutco is a hold, and like I said before, the stop loss on this one is 215.
Okay, Shahina, this one is for you. Amrita has bought Biocon at market price of 415. Wants to understand whether she should continue to hold it. Your view?
Yeah, continue to hold.
NLC India bought at 55 rupees per share since 2021 is what Vishwanta holds. What should he do, Kush?
Not a bad idea to book partially.
Okay, Ajit is holding 18 shares of Inox India at the price of 1258. Wants to understand whether he should accumulate more. Kush, your view?
No, I would wait up.
Abbott India bought at almost 29,000 levels. Shaina, what would you recommend?
About India, I would say it is a switch.
Okay.
Exit.
Okay, exit is the view. Now Shiva is holding 500 shares of Freeman at the price of 600 for last 2 years. Is facing a loss. Wants to understand whether he should continue to hold. Shahina, your view?
It's a hold.
Moil bought at 280, 500 shares. What should he do, Kush?
Sorry, what's the buying price?
Moil, it's bought at 280.
Continue to hold, keep a stop loss at 315.
Okay, Yogendra has bought 100 shares of Tata Elxsi at an average price of 6687. Wants to understand the view on this. Shahina, your view?
It's a hold at current levels. Yeah.
Apollo Hospitals bought at 7,560. Shahina, what should he do?
It's a hold.
Okay, 600 shares of NLC at the price of 555 is what Vishwant holds. Okay, that is done. So we'll take the next question from
Shanti Gold.
Satyan. He's bought Ethos at the levels of 2,500 6 months ago. Wants to know whether he should continue to hold. Kush, your view?
Yes, continue to hold Ethos. Stop loss at 2950.
A medium-term view on Shanti Gold. What would you recommend Shaina for Sachin to do?
I'll just pass this. I don't know.
Kush on the charts, any view?
Yeah, another recent listing. So.
Okay, Michael is holding Gujarat Gas shares and this is at the price of 650. Wants to understand 1 year outlook, whether he should continue to hold. Your view, Shahina?
I would say it's a switch.
The last one, our viewer Gauri is actually making 45% returns on Coforge as well as LTI Mindtree. Kush, should he book out some losses right now?
I would suggest a partial profit book on both of them, but continue to hold both the counters. The momentum strong with the pack, the entire pack.
Got it. Well, Kush as well as Shaina, thanks so much for joining in, giving us your views, because we've been able to solve 53 queries. So appreciate your insights on all of those 53 queries. But viewers, that's all the time that we have on this edition of Ask Profit. Thanks so much for sending in all your queries. We are almost at 230 queries for the week. So we'll be back tomorrow with a lot more. Stay tuned. KYC comes up next.
2025 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And today, Anushi, the company is a Raymond Group company, but it is a demerged version of it. The realty business is coming in. And largely, there is no major coverage from the analyst community as well. And a lot of our viewers actually wrote to us and they stated that let's figure out what is this company all about. But there are a lot of questions about this company. But after its listing, Anushi, it hasn't been a great returns for the shareholders, of course, who are holding in the Raymond in that demerged basis. But let's put out the questions, what we want to actually know about the company. The first question is, which categories is the actually company focusing on? Is it the mass affluent or is it the recently announced luxury segment? They have a massive project in Thane, that's something which we'll be looking out for. And will this expansion involve non-MMR markets as well? MMR is the Mumbai Metropolitan Region markets, to simplify for our viewers, and how the demand queries are actually coming up for these new projects. Interestingly, Anushi, the third quarter is a very heavy quarter for realty space as well.
A lot of launches.
Yes, exactly. Launches, pre-sales, which you track. Land monetization plans ahead, that's something which we'll be looking out for. Will they go for JD, JV on an asset-light basis? And the timeline for the promoter press release, that is an overhang in this stock as well. And cash flows also, we saw in H1 numbers that got impacted, maybe because of upfront higher costs in the realty space. So these are the key questions for this company. Very less tracking of the company. That's why I think we should give a 360-degree view to our viewers for KYC. So Anushi, what is it about the company totally?
On that note, let's start off with what's happening with the company. So if we just talk a little bit about it, it's mainly its presence is in the MMR region, and it's a real estate development company of the Raymond Group. You know, Sharad just spoke about the recent demerger which took place. That was Raymond Lifestyles as well as Raymond Realty now. So it was demerged from the Raymond Group on 14th of May onwards, and then it subsequently got listed from July onwards. So since then, we'll be tracking its performance and how the financials of FY25 have also shaped up. But just a little bit about the kind of portfolio that the company has. Now, it has about 100 acres of land parcel in Thane. If you take the whole long-term portfolio consideration of the gross development potential size that we're looking at, 40,000 crore is what we are seeing. Thane land parcel of 100 acres. Along with that, they've signed joint development agreements as well. So this adds up to about 25,000 crore. JD opportunities adds up to about 14,000 crore. So cumulative 40,000 crore is the kind of mix that we are looking at. Now, do note that currently of this 100 acres land which is there, 55 acres of Thane land is currently under development, of which if we look at the realization part of it, revenue potential is around 13,200 crore, of which so far 8,200 crore have already been sold. While if you look at the remainder, from that, they have collected 6,300 crores so far as well. So, you know, FY26, the second half, the FY27 picture is an interesting scenario, considering that they have this huge land parcel which is already in place. With the JDAs, they have a development potential of around 14,000 crore. We'll see a couple of launches coming in these next 3 to 4 months, in the 6 to 9 months period itself. And these are 3 to 4 launches that we are seeing across Bandra and other key regions in Mumbai as well. Balance will be launched in the next 12 to 18 months is what we are looking at. So if you just take a mix of what's happening, your Bandra, Mahim, Sion and Wadala are some of the key areas where these JDAs are coming in picture. And if you are looking at that, all of these are located in MMR region. They do not have a presence apart from these particular markets that we are seeing. In terms of the mix also, while it is in premium and luxury, I want to just point out how the owned land bank is shaping up and how the JDA is, since, you know, JDA is a rather asset-light model that we are looking at that. So current FY25 and 28, if you just pull up that one, from a 78% mix, now it is estimated that that would be 50% or odd so in FY28, while JDA contribution from 22% will move upwards to 50%. Now, this is the management's aim to bring this ratio to 50-50. So this is an interesting part that we are looking for the company. And with these key launches planned in the second half, how pre-sales and thereof the cash flow shape up is something that we should be watching out for, right?
Yes, Anushi, the expectations is a very important portion, she pointed out. But Anushi, the entire KYC segment, there are 8 parameters where we judge the company. But remember, it's not fair at times because the company's history itself is on a very short notice, and there is a literally zero analyst coverage in this segment. But nevertheless, our format of the show is first we take in the income statement, operational parameters, especially for a real estate company. We are also taking in the balance sheet and the cash flow. These are the four most important parameters in the financial segment. Apart from this, the shareholding pattern, how it's actually panning out post the demerger, and the street cred, how the stock has reacted. It's a very short-term basis, but nevertheless we will take them in. Valuations is also there, and overall outlook, that is very much important, that we'll be judging the company on. So 8 parameters where the momentum would be coming in for. But Anushi, starting with income statement, what are you gathering from here? I think H1 numbers is something which you'll be looking at now.
Absolutely. So, before I talk about the income statement, I want to point out to the key operational metrics because, with real estate companies, we have pointed out that there's lumpiness in terms of how the revenue shapes up, how that is recognized. So, if you just look at the pre-sales number, now by the end of FY25, we are looking at a pre-sales of 2,300 crores, showing about a 3% of a growth. This is in comparison with a 67% or a 40% of growth figures that we've seen. So how H2 will shape up is something that we should be watching out for, because even in the first half, there was a dip of around 35%. So pre-sales for these last 2 periods have been on the muted side, but the management is quite optimistic on achieving that 20% of pre-sales guidance. So that is on a positive that we are seeing. Collections also, while they've maintained a 21 to 22% of a growth in these last 2 fiscals, this time the collections were also down about 18%, but they expect recovery also in this particular metric. So considering all of these parameters and a huge launch pipeline that they anticipate in the second half, we've given this a neutral rating. Do note that the 4-year pre-sales CAGR, that stacks up to about 55%, and 4-year collections CAGR is 64%. So the history has been rather on the positive side. It's now the expectation and execution which will be a key monitorable to watch out for, right?
Thank you very much, Anushi, for that. And it's a very important thing you stated is first, let's just put in the operational parameters. Then I think I'll just discuss the income statement and revise it once again. So already a neutral rating coming in from Anushi when it comes to the operational parameters. And that's the first thing to look at, not the income statement. Now let's look at the income statement. The revenue growth over here, that's of course 1,000 crore plus in H1. And EBITDA numbers are also there, but largely we do not judge a company in terms of these numbers in the real estate space. Net profit for all companies, it matters. It's decent, it's around 77 odd crore rupees, but the company needs to have a long history for us to judge as well. But net, it is decent, and margins 22.9% ahead of this demerger. Now you see that's actually coming down, so that might be a cause of concern. But nevertheless, let's give it more time to the company as well. So it will be a neutral rating coming in from my side.
So on the margin part, there is expectation that this would scale back upwards to 20%. So that would be something that, the street should be watching out for, whether this 20% number will be there in the next FY27 figure that we are looking at. But moving on to balance sheet now, if you just look at equity and other equity, of course, there would be divergence in terms of how these 2 numbers shape up, considering that there was demerger, so there would be new shares issued. So taking FY25 and H1 in comparison on a like-to-like basis would be unfair, but we'll just point out how the H1 has shaped up. Other equity stood at about 1,200 crores, almost up to 1,300 crores, while borrowings are 564 crores and cash in bank at 214 crores. So this, considering the first half, remains on the healthier side. So it's the future periods that we should be watching out for. Hence, considering the first half performance, considering the debt to equity level, which is on the lower side that we are looking at, we've given this a thumbs up.
Okay, a thumbs up coming in for the balance sheet. Cash flow, very important trigger for a real estate company. But of course, we see the history is less, but it's on the lower side. Operating cash flows in H1 was down almost 300 odd crore rupees. Even the net cash flows is there just a mere 53 odd crore rupees. And we have seen that these cash flows, there's of course a lumpiness involved in that as well. Maybe initially the JV expenses which the company might be undertaking, that's why the hit is coming more on the cash flow. So because of that, based on the current numbers, I will give a thumbs down for the cash flow segment.
Okay, so that's on cash flows is what we are seeing. But moving on to shareholding pattern now, we'll have two periods of data as of now. Promoter holding remaining constant at 48.9%, while FIIs have offloaded some bit of that share that they had from June levels. We're looking at about 11% stake as of the second quarter end, while DIIs have about 4.5% of stake, and public holds 35% of overall value to the company, which is there. Hence, considering that there's limited data as of now, we'll be tracking for upcoming quarters as well on how the FII and DII mix shapes up. We've given this a neutral rating.
All right, neutral rating coming in for the shareholding. But overall, let's look at the street cred. Post its listing after the demerger, there hasn't been much returns coming in for the investors. Last 1 month stock is down 19%. But the cause of concern for me, since listing is down almost 46 odd %, and that downtick is something to be actually concerned about. Whether is this a wrong pricing which came in during its listing, or there's a lack of analyst coverage. A lot of questions do come in, but as and when company comes out with its own investor presentation, the management is going to talk with us in some time, then we'll get more clarity in as why there is so less coverage in this counter as well. But it has been on a free fall, so that's a cause of concern for me. So I will be giving a thumbs down for this category.
Okay, coming to the valuations now, what we've done is, while price to earnings, we've derived at a multiple of around 44 times, and this is based on the 12-month trailing EPS, which is there. It seems like a metric that we should be constantly watching out for. It seems on the higher side though. So how this shapes up, considering that there's lumpiness in terms of where the income statement numbers are, we've given this a neutral rating as of now. So that's on the valuation part that we are looking at. So, but coming to the outlook forward, which is there, now here is the interesting story. Firstly is the 20% of pre-sales growth expectation, which is there. Along with that, now the mix in terms of joint development agreements, that is expected to be 50% in this next 2 to 3 years. Now this is an asset light model that we are looking at. So how the financials will improve with this higher mix is something that should also what we should be seeing. If we just talk about the planned launches which are there, now the company expects about 2 new launches on its own land, which is the Thane land parcel that we've talked about. Along with that, there's 3 to 4 new JDA projects which are coming. So if you just take a cumulative figure for the second half itself, it's a 5,000 crore of gross development value that we are looking at. And this is with the expectation that going forward margins will stabilize at 20% or so, which is a high uptick that we have seen from the FY25 and first half levels, going back to its previous trajectory which was there earlier. But along with that, they're also seeing that the cash flows, which we talked about earlier, that being positive as well from the second half. So that's the overall outlook that we have for the company. It's a neutral that we've given, right?
Sure. And let's just revise the overall standings, how the KYC ratings stand. And largely it has been neutral on the income statement and the operational metrics, which Anushi pointed out. Balance sheet was decent, but cash flows is a cause of concern is coming in. And let's pull out the shareholding and the valuation neutral here. Street cred, we have given negative because there's a massive wealth erosion post its listing, and that's a cause of concern. We'll be dealing with the management. Outlook, it's neutral to positive overall. But net, it's 4 out of it. Is generally, historically, we give that's an average number coming in for the company. But of course, there was a big conversation you had, Anushi, and that was with Harmohan H. Saini. He's the MD and CEO of Raymond Realty. Please listen in.
Let me start off by understanding this new product launch or new project launch that we are looking at. If you can give us more details of this.
Sure. So this is a project which we are launching, which is in the luxury segment. The name of the project is Invictus by GS, and the location is BKC Bandra. This project has a total revenue potential of 2,000 crores, and it will be executed over the next 4.5 years. We are launching it today. The work at site has already begun, and we are geared up for welcoming customers over there. We've already seen a very good initial response. This is going to be premium 3-bedroom, 4-bedroom, and even higher configuration, which will be available for sale. And good inventory with the excellent location. And this is what we have currently launched, and going forward we would be launching more projects also. Since you mentioned our pipeline. So outside of Thana, we are launching another project in Wadala soon. End of December, beginning of January, that launch will happen. That's also a large project with revenue potential of about 5,000 crores of top line. And after that, in Q4, towards the end of Q4, we have another project which is in Sion that will be launching. That is with a revenue potential of about 1,700 to 1,800 crores. That's a project called Address by GS. Wadala will also be an Address by GS product. Apart from that, in Q4, we are also launching projects in Thana itself. So in Thana, we have already in H1 launched one Invictus by GS, one Address by GS. And in Q4, we will be launching a 10x product, which is a 2-bedroom community that has a revenue potential of over 1,000 crores. And then we are also launching a retail-focused high street inventory in Thana, which is Park Avenue. That there also the revenue potential is approximately about 1,000 crores. So in all, between now and end of the year, we'll be launching 3 projects outside of Thana and 2 more in Thana.
So, Mr. Sani, just want to understand, while the overall potential that you've given is around 40,000 crore, and I'm assuming this is a 5-year perspective that we have for FY26 and 27, what's the kind of overall gross development value that we are seeing, and how is execution going to shape up is also another question that I want to understand, considering that you're also targeting for an annual run rate of around 4,000 crore of revenue. So, help us with that as well.
So what you're referring to is the pre-sales number.
Right.
So if you see last year we did pre-sales of approximately 2,300 to 2,400 crores. It's 2,300 some odd number. And what we've given a guidance that we will be giving a 20% growth over that, which takes the current year close to 3,000 crores. And we are on target to achieve that number with all the launches that we have planned. And this is how the entire year's planning was done by us. So in H1, we did pre-sales of about 760 crores, and it is going to be heavy in H2 for us. But that's how it was planned. And going forward also, FY27, if I see, there also we are looking at a 20% growth because with all these projects which we would have launched by end of this year, that growth would be more or less locked in because we will have enough inventory available in Thana and outside of Thana to give us that kind of a growth number. And the 4,000 crore number that you mentioned that we will achieve, it will be towards the end of 28 or beginning of the year after that. We would have hit that number if you take this 20% growth run rate that I mentioned.
So just want to understand on that aspect, while you're maintaining a 20% of a booking growth, that's the pre-sales growth that we're looking at, the first half, we are looking at a decline of over 35% or odd. So is it on the basis that most of your launches are skewed towards the second half that we are seeing, or were there any other concerns like how other real estate players have also pointed out with regards to regulatory overhangs being there, or there would or pricing now playing into a factor which has led to that softer acceleration? Because across industry, if we see, there has been a slowdown in terms of whether volumes have been concerned. So just want to get the overall industry perspective as well, and how you are positioned for the second half, and even if you can give us a picture for FY27 as well.
So, for us, the situation was quite unique because we didn't have enough inventory to sell. So we did not see any hiccup or delay as far as the demand front is concerned. In Thana, we had such a bumper Q4 of last year that we didn't have enough inventory available for this year to show a big H1. But having said that, it was also planned in that manner because all our launches, when we see outside of Thana, because of the way they were lined up and how we had signed those projects, they were scheduled to launch only in H2. So, we have not experienced any regulatory overhang or any pricing pressure in any of our projects also. We've underwritten these projects at very fair assumptions, keeping in mind what the market is in terms of its cycle. So unless, we are compelled to sell at a very high price and then you see pricing pressure, I don't think we are in a situation like that. Can't say much about generally what the other players are experiencing. But as far as the market is concerned, I have not seen any evidence of pressure either on pricing or on volumes. When you talk about the growth number for us, for H1 as compared to last year, in our industry, you can't really compare quarter on quarter because a lot is dependent on when the launches are happening for each project, because you see a significant bump up in sales when the launch takes place.
Understood. So it's a 20% plus of growth that we can expect for FY26. And from what I'm hearing from the commentary as well, there's a lot of emphasis on Thane market, right? So just want to understand what's the kind of pricing growth that you're seeing there? What is making you excited about this particular region? Are there any other regions like Thane as well that you're going to be focusing on with new launches there as well? If you can give us more perspective on that as well.
Yeah, so Thane has been our home ground because we started our business in Thane, that's legacy land. So naturally, it's a 100-acre plus parcel. So there you will see a slew of launches over there from us. It's a very, very strong market. Still one of the best markets in Bombay in terms of the social infrastructure and the affordability factor as far as pricing is concerned. It has a very cosmopolitan crowd, so it attracts all kinds of people, not only one segment. So it's a very strong, very deep market. So naturally, we want to stay focused on that as one part. The other part that we are focusing on is in and around BKC. We have taken a very, very strong position in the market. So all our projects, if you see the various new projects that we have signed, are all creating a ring around BKC. So the one we are launching today, Invictus by GS, is right next to BKC. Then the Wadala one, which we are launching, that's another big launch this year. That is also within 10 minutes of driving distance from BKC. The Sion is literally walking distance from BKC. You just have to cross the railway line and you're there. And now with the connector from the Eastern Express highway straight landing into BKC, it's a very, very prime location. And the other projects that we have signed, which we will launch next year, also are right next to BKC. So these are the two primary areas that we have focused on, looking at the segment that we want to serve, which is the premium segment to luxury segment.
The management is very upbeat about BKC and Thane regions, and an important disclosure is also coming in from the company. Hardly tracked counter, tested the patience also of the investors. But let's just pick up the key management takeaways, Anushi, from this discussion and which you had done. They are going to launch 3 or more projects outside of Thane by year end itself. That's pretty interesting on that. But the numbers front, I think you should tell our audience what they're actually planning, a 20% odd growth.
Yeah, so 20% is the kind of pre-sales growth that they're expecting. And this is with margins also inching upwards to 20% or also that we are seeing. Apart from that, we're also looking at an important piece is that now there's no regulatory overhang, which has been a theme for the South-based players that we are seeing. Along with that, even pricing pressure is something that has not been a concern for the business, right?
Yes, that's a qualitative statement coming from the management, and net, we would say that there is a positive commentary coming in, but we need to give the company more time so that more data comes in and then we can give them proper ratings. As of now, it's 4 out of 8 in KYC. That's all for the show today. Stay tuned to NDTV Profit.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is
Sensex expiry fails to dampen the street spirit as benchmarks trade in the green, with Nifty staying strong above 26,090 leads with major gains. Autos in the fast lane and metals shine, but pharma on the back foot. Meanwhile, FII sell-off, trade deficits and strong dollar pulls down rupee further as Indian currency touches another low. IT stocks, in fact, continue to gain even as government plays down the decline, saying that it expects rupee to strengthen next year. Brokerages remain largely bullish on JSW Steel after 50-50 joint venture with JFE Steel. Management calls the deal a win-win situation for both players. Meanwhile, aviation regulator DGCA launches probe into Indigo's widespread flight disruptions after the airline cancelled more than 150 flights, even as passengers continue to suffer. Federation of Indian Flights says that the cancellations are not linked to new norms, but just poor planning. And all eyes remain on the crucial Modi-Putin meet. The much-anticipated visit by Russian President underscores critical bilaterals on the defense, pharma, agri and tech services sectors. Ukraine conflict and crude imports to make it to the agenda. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. And first things first, let's start with the top story of the hour, and that without a doubt has to be the meeting between Modi and Putin. In fact, in terms of the meeting, this is a very high-stakes meeting. We'll be taking you through what else makes it to the agenda. And the first one, of course, air defense deals is something that we've got to be talking about. Other than that, we should be also taking a look at what else makes it to this agenda, because it's actually the tech transfer part of the picture, as you can very clearly see on your screens as well, that also makes it to the list. Missiles, submarines, that is the kind of things that you need to be looking at in terms of the defense, in terms of the contours of the deals that are outlined. That is something that we'll be looking at shortly as well. And oil pricing and future energy needs is also very important. And we'll actually be delving deep into the data as well when it comes to this in just a bit. But long-term energy security, of course, makes it to the agenda. And lastly, when you take a look at what else makes it to the agenda, we should also be taking a closer look at India-Russia trade ties. Because, of course, in terms of both nations sharing a long-term relationship, that is something that you have. You're looking at an all-weather friend for India. And the relationship, of course, is going to be centered on the purchase of defense equipment, especially in terms of this particular meeting. That is something that makes it to the agenda. The other piece of the picture, of course, is energy, and we'll come to that in just a bit. But because if you take a look at the ties of 1985 to just about 2021 to 24, you're taking a look at a decline when it comes to Russia's share in some of those defense imports as well. And that's also very important to take a note of. Other than that, let's also take a look at why Russia is really important when it comes to this. Why exactly are we discussing this meeting, and why is this extremely important? Because Russia, of course, is India's fourth largest trading partner. You're looking at an all-weather friend as well. Trade volume, you're looking at $68.7 billion in FY25. And other than that, India's exports to Russia make up about $4.88 billion. That's something that you're looking at. Other than that, there's India's exports to US that also amounts to $86.5 billion. So that's something that you're looking at, and trade surplus with the United States. Just to give you a little bit of context here, $41 billion is what you're looking at, which is the largest. And trade deficit with Russia is $59 billion, which is the second largest after China. Now, in terms of the surplus, only with top 2 of the 15 partners. You're looking at US and Netherlands making it to that list. And that's also very important to take a look at. So that largely underscores the importance of this particular visit. US trade, of course, spans multiple sectors. Just to give you a little bit of background, so there's pharma, auto parts, electronics, as well as chemicals and apparel that make it to that list. And we'll also be taking a look at the differences as well. Each US trade category is worth about billions of dollars. Quickly, let's also take a look at the Russian trade part of the picture as well. So it's petroleum that makes it to that list. Top of that list, in fact, and that's also something that we should be looking at, but no single export category, of course, to Russia exceeds $1 billion. And top 10 categories, in fact, are making up about 44% of exports. So that's something that we're looking at. But tell you what, let's also, with that, take a look at the discussion that we have in mind for you. So that's broadly the agenda that we have. And we do have Anil Trigunath, who's joining us, who's a former ambassador on the show. Thank you so much, sir, for taking time out this afternoon and joining us. The first thing... Right. The first thing that I've got to be asking you is, first of all, in terms of this visit, the timing, in fact, is key. Of course, we've been discussing a little bit about what possibly could be making it to the agenda. So off the top of our heads, or anybody who's been reading the headlines, of course, defense and energy makes it to the list. But I believe it's also the timing that is also key when it comes to the friendlier stance that, you have US president taking towards China. That approach seems to have softened just a tad bit. So keeping all of that in mind, how are you looking at the meeting in terms of coming at a critical juncture right now?
Well, Chancy, if you understand that for the last 20 odd years, we have had a special privileged strategic partnership, and these annual summits are an integral part of that. And normally, if you come to think of it, most of these summits take place in November and December, and since 2001 onwards. And therefore, this particular visit is important in the sense that this is after nearly 4 years that President Putin is visiting India. Secondly, it is after the Russia-Ukraine war that happened, which has caused a lot of disruption across the whole global value supply chains. But India and Russia trade relations, India and Russia strategic partnership is, as I say, is a substantive. It is also...
Well, absolutely, and I like that you brought up that point when it comes to the part about how this is extremely important in terms of the timing, and that's also something that we'll also be discussing with Mr. Trigunath, and that is also very important to take a look at. And just in terms of how important the entire number is, the energy security bit of it, that's something that we've discussed. Defense cooperation is something that is in focus, and we'll try and reconnect that line with him. In the meantime, let's also very quickly take a look at some important updates that have come in the last few minutes. And in terms of Fitch ratings, that has raised India's FY26 growth forecast to 7.4% from 6.9%. This, of course, is going to be a very important story, and we'll get back to it in just a bit. But for now, let's also quickly take a look at why they've done that in terms of the rationale coming in from Fitch. They're also citing resilient domestic demand, but the agency expects momentum to cool in FY27. Now, GDP is seen moderating to 6.4%. That's also something that they're talking about for now, and private consumption also remains the primary engine driving India's FY26 expansion. That's also something that they're talking about. So you're looking at their earlier forecast at 6.9% and revised one at 7.4%. And a bunch of other triggers that they've, in fact, helped us out with. And we'll try and get back, Mr. Trigunath, to get you a little bit of a sense of why defense makes it to the top of the list, why energy is extremely important, and why this particular meeting is coming at a very critical juncture. But speaking of a critical juncture, we've got to be taking a look at what is happening with silver prices, because it seems that seasonal tailwinds, in fact, are top of the list when it comes to silver. A bunch of factors that you're looking at when it comes to the metal, as you can very clearly see on your screen. Supply concerns, of course, make it to the top of that list. So it's that historic squeeze that you had back in October, and silver has, in fact, managed to surpass that level that we saw coming in back then. And you're talking about a metal that does not, it's called the devil's metal for a reason. In fact, let's take this conversation across to Navneet Damani, who's the Group Senior VP, Head Commodities Research as well at MOFSL. Thank you so much, Mr. Damani, for joining us this afternoon.
Thank you for having me on the show.
Well, this is a great time to be talking to you because, this is called the devil's metal for a reason. There's a bunch of volatility, but
This year, you have seen silver be decisively higher, and you know how. 97% year-to-date gains is something that you're looking at. I believe back when you were looking at silver during the COVID levels, I don't think any of us could have been talking about $60 an ounce being just a stone's throw away when it comes to silver, isn't it?
Well, definitely it surprised many market participants. But if you take two step backs and see what has happened in gold, that has not happened in silver. Gold has been rallying ever since 2022, 22, 23, 24, 25. All these 4 years, gold has given some reasonable returns, upwards of 18-20% each year. But silver has been a laggard. It didn't participate for the first 3 years, and this year, 2025, it's caught up to all the gains, or the kind of gap between gold and silver is kind of reduced to a very large extent. It's been in a deficit for the last 5 years. This is the fifth successive year, which will have a 95 million ounce deficit. To top it up, around 70% of the silver comes from refining and mining of industrial metals, and industrial metal itself are struggling for production. So that means it's kind of a scenario where production has been very low and demand has been very high from electric vehicles, from solar panels, and all the other aspects that we've discussed in the past. Along with that, the beauty is that gold prices have given reasonable return. De-dollarization is a theme around the world. People have been investing in gold and silver not only just for safe haven bets, but for returns perspective, which it's been giving it for the last 6 to 12 months. So people are kind of moving on from their debt portfolio, from their equity portfolio, to chasing something which is giving them reasonable returns, and they can hold as store of value. So that is all is culminating in gold and silver at this point in time, which is giving you the kind of returns it has in the last few days and weeks.
Well, absolutely, and those are some very important triggers that we've been talking about for a bit. But I wanted to understand if you think the industrial demand part of it is also extremely important to look at. Because when I was taking a look at some data, it seems like in the last 8 years, you've seen that strength really arrive when it comes to industrial demand. So is that also a part of the puzzle that you're looking at when it comes to silver?
Well, it's a massive demand from industrial metals, not only from industrial metal, but from jewelry, from solar, from EV, from 5G technology, hydro. All these demands have culminated in the last 1-2 years. And as I mentioned, that supply has not been able to catch up to that fashion. The another leg of demand which is coming this year around is from ETFs, where ETFs typically buy silver and hold it in vault. They do not come out into physical use. You've seen iShare iShare International Silver Holdings at record highs on domestic front. Also, silver ETFs are holding about 30,000 crores worth of silver. So all these are lying in warehouses, not coming into actual use, which is making a already deficit market more tighter. So financialization of this asset has led to the kind of shortage in the market and has led to the spike in the prices. And it is going to get better and better in terms of returns over the next year as well. That is what we believe.
All right then, so with that, supply is covered, demand is covered, but there's another factor actually that makes it to our list when it comes to silver, right? I quickly wanted to get a sense of what you think about two things before we let you go. One, what do you think about the entire Federal Reserve part of the picture? Because lower interest rates, of course, increase the opportunity cost of holding silver. How much of a factor, one, do you see that, playing in? And the second one is, what kind of forecast do you have in mind when it comes to silver, at least by the end of this year?
Well, over the last 15-20 days, it's been an interesting swing as to what the Federal Reserve is going to do. We've seen that the possibility of a rate cut from 90% came down to as low as 40%, and then it is again back to 90%. And that is what has started the next leg of run-up for gold and silver. We've seen them correct post-October, and now, as we speak, they are closer to lifetime high once again. We strongly believe that rate cut is likely to be delivered, and the commentary is going to be very, very important, because we have about 40 plus days of a shutdown in the US. Their interest rates are pretty high. Debt servicing cost is on the rise. Inflation trajectory is rising, and along with that, the 37 trillion worth of ballooning debt is going to be a overhang for the next few weeks and months and quarters also. So all these are going to culminate and going to have a very strong commentary, which will set the course for 2026 for these metals. We believe that demand side concerns are going to be there in the next year as well. Some bit of cannibalization will happen to other metals, but the demand side story still continues to indicate that even if say 15-20% of the metal move to copper or some other metal like aluminum, it is going to be another record high for silver. We believe that by the end of 2026, we'll be around 75 or $80 on the COMEX front, and on the domestic front, roughly around 2,40,000 rupees.
Mr. Damani, that is a very bullish forecast that you're looking at in terms of 75 and 80, and I don't think that we could have even imagined these kind of numbers when it comes to silver in terms of the price back in the COVID days when we were looking at the metal as well, despite the safe haven boost coming in. Thank you so much for taking time out this afternoon and helping us understand when it comes to demand and supply and a bunch of those other triggers as well. There you go. That's a very bullish forecast coming in for a metal that is hitting a record high almost every other week. Let's also take a look at some turbulence though. Let's shift focus. Talk about Indigo a little bit, because Indigo in fact is under regulatory scrutiny as the DGCA begins investigating widespread flight delays and cancellations as well. The airline in fact has cancelled about 1,200 flights just in the month of November alone, and you can't be, you've got to be adding that number in terms of what you've seen coming in the last 2 days itself. Following continued disruptions, Indigo has in fact been summoned to the DGCA headquarters to explain the situation, present a mitigation plan as well. Danish in fact is joining in with all of those very important details there. Danish.
Well, that's right. Right now, I'm standing just in front of the DGCA office, and we are here since the past 2 hours. We haven't seen anyone from Indigo coming in for the meeting yet, but this is for sure that the meeting has been called today as the DGCA has summoned Indigo. Talking about the flight disruptions today, we have gathered data from different airports. Delhi airport will be seeing 33 Indigo flight cancellations today. Hyderabad will be seeing flight cancellations of around 60 Indigo flights. We are also waiting data from other airports, but even today, we can clearly say that Indigo's flight disruptions continue, and till now, till whatever we have assessed now, over 150 flights of Indigo will be cancelled today. But coming to a big controversy that has just erupted last night, ALPA and FIB, which are two different pilot associations, they have clearly said that whatever is happening right now, the number of flight cancellations that are taking place, it could be an arm twisting method by Indigo, because just a few months back, DGCA clearly informed all the airlines about the new flight duty time limitation rules, and according to those rules, the rest period, the weekly rest period of pilots has been increased from 36 hours to 48 hours, so which clearly states that there is an extra 8 hours rest period for the pilots which has been mandated. So and usually the pilots have a shift of 10 hours, which includes the flying time, also their duty time. So this is one of the reasons why we are seeing this, and both the pilot associations have alleged that Indigo had a lot of time to fix everything. They had a lot of time to have a proper roster, but just to do arm twisting with the government, they're alleging that they did not follow these rules, and somehow Indigo is planning to stretch it for long, so that somehow they can tell the government that we need some more time for the FDTL norms to accommodate ourselves according to that. But all in all, if we see from a passenger perspective, it is a very sad situation.
Well, absolutely, and it's a very sad situation indeed, and this is quite the hassle when it comes to the passengers as well. Thank you so much, Danish, for getting us all of those very important details. And speaking of important, then let's get back to the conversation that we in fact started the show with, and we do have Anil Trignath, who's the former ambassador, joining us. Thank you so much for being with us, and thank you so much for joining back. I just wanted to understand and get back to the point that you were making earlier when it comes to why this particular meeting is extremely crucial. We've discussed it a little bit about what could possibly be making it to the agenda. So it'll be nice if we had your perspective. I'm sure our viewers are very curious.
Thank you, and sorry for the disruption earlier because of the phone call. In fact, as I said, that this is a standard practice that with Russia, we have these annual summits for the last 25 years. So this will be the 23rd summit. And very often these are held generally in the months of November and December, as we have seen in the past also. And this time, this visit is very significant because it is happening at a time when there is a tremendous global churn that is taking place. What we know that Prime Minister Modi and President Putin have this tremendous partnership, friendship, and a mutual trust. So this is a relationship which is very substantive, which is also very symbolic in the given disorder that is prevailing. And this is a strategic partnership in action, as I say it. I mean, in fact, as Dr. Jaishankar said, that the world has changed, Russia has changed, India has changed, but the only constant that remains is this partnership. So that says it all. Russia has always stood with India, and now India has also greatly appreciates Russia's security concerns, while Prime Minister Modi continues to work for peace and dialogue and diplomacy and end this war as soon as possible because it has tremendous impact on the global supply chains. But this particular time, we are thinking that the Russians have once again tried to come back in a bigger way in the defense sector with India. You know, about 65% of Indian equipment is of Russian origin. And even though, as you had shown, the imports may have come down, direct imports, but that is not only because that we are diversifying everywhere, depending on the technologies and our requirements, but we are also emerging as a major exporter ourselves.
Right.
And like, you know, the BrahMos missiles, which are a joint venture between Russia and India. And so we will see a more make in India being developed, and Russia is likely to again broach about Su-57 manufacturing in India, which is their fifth generation aircraft, also S-500. And so we are looking at a lot of this. Then another thing is the trade, which has suddenly grown. We used to struggle to get about $10 billion to $30 billion, which was the target. But suddenly, due to this war and due to India.
No, actually, I also wanted to.
I mean, this.
Yeah. No, one thing I wanted to understand, I understand that that's the entire defense part of the picture, right? And that's extremely important to look at. But what, you have recently had in terms of a trend emerging is that you do have US calls to reduce Russian oil imports. And against that backdrop, I really wanted to, I'm very curious to understand what you think about that as well, because is India going to be doubling down on energy ties during this particular visit? Is that something that you're penciling in when it comes to this entire other part of the picture as well? Because yes, defense is extremely important, but so is energy, right?
You know, for your strategic autonomy and national interest, it is always very important to have diversified suppliers. We have seen what happened to Russia, United States unilateral policy that directly impacted on us in a very peculiar manner. And therefore, it is important that India diversify this trade. But Russia is one country that has stood by us, and we have seen it in the time-tested relationship. So as far as energy security is concerned, that is predominant for India. So I doubt very much that we are going to significantly reduce. But we are already, diversifying. We import our crude oil, including from the United States, from 17, 18 countries. And so we are looking at different places, but it has to be cheap, it has to be competitive, and the unilateralism of various countries, including the United States, is not acceptable to India. So they will find ways where we are.
Absolutely, sir. And, that's something that's extremely important that he's highlighted for us in terms of why this is really important when you look at the imports, when you look at the numbers, you're looking at a lack of diversification. That's something that he's highlighted in terms of imports from Russia being highly concentrated, because it's actually 84% of imports that you're looking at in terms of petroleum products. I quickly wanted to, before I let you go, sir, if I have you with us, I wanted to try and understand without wasting any more time, your top 3 takeaways when it comes to this visit, because you've talked about a bunch of things, and it's extremely important to also summarize it before we let you go for our viewers, because this is a very high stakes meeting that we're talking about. Defense is there, energy is there, China is there, Eurasia is there. There's a bunch of things that we're talking about, and you're there with an eagle's eye. So I want to try and understand your top 3 things when it comes to this meeting.
Well, I think there will be more new areas of understanding as far as defense deals are concerned. There will be more focus on the nuclear cooperation, civil nuclear cooperation, as well as the space cooperation. I think that what we will be seeing more is payment mechanisms, as the Russian central bank has opened an office here. We'll also see a greater focus on people-to-people exchanges, including the possibility of about 1 million Indians being required by Russia, and how India and Russia can use these surplus funds to be utilized for investment purposes in these strategic sectors. India is also looking at possibilities of greater investments in Russia, especially in its Far East, and that will perhaps be seen. Of course, we will see the Russian effort as well as Indian effort, how to bridge the trade deficit. and how to smoothen the currency and the mechanisms of payment between the two countries. And that is going to be a major thing. It will also be a message that irrespective of the global churn, India-Russia ties will continue to remain strong and time-tested.
Well, absolutely. Thank you so much, Mr. Trignath, for joining us. This is an all-weather friend that you're talking about when it comes to Russia. And there you go. That's why this meeting is extremely important. And this is what you could be expecting. So that's one high-stakes meeting covered for you and one metal with high returns. But that's all the time that we have on the show. Thank you so much for tuning in.
– 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Hello and welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri, and over the next hour or so, we'll try and put focus on a lot of key stories, key stocks, and some key news flows as well. So, and also get you perspective on a lot of key stories like Rupee, like IT, amongst others. But before that, and a lot more on the other side, let's first look at how the markets are doing, because it's been a stellar recovery to say the least on the Nifty 50. We are now in the green for the first time. We were maintaining, when implied open of a negative downtick at the start, started in the red, but since then we've continued to build on to that. What's very interesting is from roughly about an hour ago or so, where we finished Ask Profit, we have given us some of those gains. So the Nifty 50 right now at just a tad above 26,000. When you look at the heat map though, a lot of stocks have now come into the green compared to the reds as we started in the heat map. So almost roughly 33 stocks now in the green for the Nifty 50. The likes of Tech Mahindra, TCS, HCL Tech, Infosys, Wipro are the top gainers for the Nifty. We are also seeing something like SBI Life also giving some positive gains on Nifty 50 as well. So largely the rupee depreciation, while it is making investors nervous, IT companies are having their own on today's trading session. On the downside, seeing some pressure on a couple of stocks like Maruti Suzuki amongst others, but we'll continue to monitor that aspect because at least for now, we are in the green. When you look at the advanced decline ratio, it'll give you a perspective of what's happening in the broader markets as well, because again, the declines were favoring at one point of time, very neck and neck now, and you can see the advances have also given up a lot of those gains that happened at that time. So it's another one that we'll monitor, because going forward, we would want to close above the 26,000 level. Mid caps, small caps, the other one where the mid caps are in the green, up almost 0.4% at one time, given up some of those gains, while the small cap is now in the red, just a tad bit, but still in the red as well. And individual names is the other one. Finally, that I want to just quickly highlight in terms of BSE 500 is what I'm talking about. Hindustan Copper, India Cement, L&T Technologies is the other one. That are the top three gainers. IT continues to be the top mover even in the broader markets as well. So you have Coforge also up in the gains. On the losing side, Hitachi Energy, Biocon, and Ease My Trip are the other ones. But we spoke about the rupee. We'll get to what happens to IT in just a bit. But joining in now is Abhilash Koikara. He's the head of Forex and Commodities at Novama Professional Clients Group. Abhilash, very good afternoon, and thanks so much for joining in today. Let me first start off with, how are you seeing the near-term trajectory on the rupee? What should traders watch out for?
So in the short term, obviously the bias of the rupee is towards depreciation. Rupee has broken the 90 plus levels, and as we speak, we are close to 90.40. So there are two or three factors, Puneet, which has played in. One obviously is the tariffs on India, which is among the highest in the globe, right? We are at 50%. Second, if you look at the trade deficit numbers, which came out in October, they were close to $42 billion, which is putting pressure on current account deficit. And since we had muted FPI and FDI flows this financial year, so we are seeing the balance of payment dipping into a deficit of close to $10 to $12 billion. The third part to it, and which is basically driving the volatility currently, is the market dynamics. So we are seeing exporters being on the sidelines, delaying their sales in dollar. And we are seeing importers very aggressively coming to hedge, especially after the 90 handle kind of got taken over. Also, the cost of hedging today for importers is only down to 2.3% per annum. So which makes a lot of sense for importers whenever they're in panic to kind of hedge their exposures. So these three factors, the higher tariffs, the current account deficit pressure due to higher import bill, and the market dynamics where there is delay in export sales from exporters is what is driving the rupee towards 90.40. In the short term, we feel that this can kind of get extended Puneet towards 91, 91.20 levels. Because as in case of any asset class, when there is extreme pessimism or optimism, we tend to overshoot. So in terms of levels, we are looking at anywhere between 91 to 91.20 in the short term.
Abhilash, the other key question is also of RBI's positioning, right? Because tomorrow we have the MPC outcome coming in. Largely, apart from the interest rate cuts, I think rupee is going to dominate a lot of those conversations. How do you see this position?
Right. So if you look at the RBI's intervention strategy, right? So as per our information, we are seeing close to $45 billion of selling in spot market. However, their intervention has been significantly higher in the forward market. So if you kind of take in the estimates of November, we should have close to $70 billion of sales in the forward market to kind of curb the depreciation path of the rupee. Now, there's a logic to it. The logic being if RBI aggressively intervenes in the spot market, that kind of reduces the rupee liquidity in the system. Right, we have just moved from a liquidity deficit to in the banking system to a liquidity surplus. So RBI is very carefully threading that part, and that is why most of the intervention is on the forward market. From a RBI perspective, what we have heard from the new governor is that they are okay, or at least it looks like they are okay for a broader range of rupee. However, they would like to curb volatility. And in the last meet, it was clearly mentioned that the 3 to 3.5% depreciation is a normal norm for rupee. So from an RBI perspective, obviously they have been trying to intervene to stem the volatility, but it as compared to a previous regime, it feels that they are more comfortable to have a broader range for rupee as long as the high volatility is curtailed.
My final question to you, Abhilash, you mentioned about the short-term trajectory of where the rupee could be a tad above 91 rupees to the dollar. What do you see the long-term trajectory though? Do you expect it to come down back again to the 18.8, 89 rupees against the dollar right now?
Yeah, in the long term, we are kind of looking at a favorable rupee appreciation, and there are 2 or 3 factors to it. One, I think once this, so what kind of really jittered the market was there were noises that the trade deal will happen in November end. Now there are noises that will happen at the year end. So once that is out of the way, and even if you get a tariff between 15 to 20%, I think that will push the exports up because there will be more clarity, right? So that will kind of self-correct the balance of payment a bit. Second, once that clarity emerges, we'll see FPI inflows coming into the market, which we are close to $17 billion of equity outflows in this year. So we will see then FPI flows come into the market, which will again support the rupee. And third, also, I feel that the market dynamics in terms of market positioning will change because we expect that there should be a 2.5% kind of correction in the rupee towards appreciation once the news is out. Even if you look at from a valuation perspective of the rupee, right? So currently we are around 4% undervalued on real effective exchange rate. Korean won is flattish for the year. Japanese yen is up around 2%. Chinese currency is up around 3.5%. We are down around 5%, right? So there's an auto correction which is also kind of due in the market where we are from 4% undervalued. Even we come at par, that will lead to a 2.5% kind of appreciation. However, as I said, the main trigger for that will be some clarity on the US-India trade deal. And that is why from our perspective, from a 6 to 12 month perspective, we feel that rupee should appreciate to around 88.5 once this trade deal information is out in the market.
Well, Abhilash, we'll leave it at that. Thanks so much for joining in, giving us perspective of what you see as the short-term, long-term, as well as the RBI move on the rupee as well. But let me welcome in Raghvendra Kedia, the founder of Prosperity Advisors at this point of time. Raghvendra, very good afternoon to you. Thanks so much for joining in to Profit Buzzers today. A very specific question on rupee as well as the impact on the oil and gas space. Because the city gas distributors do get impacted because of a depreciating rupee, while there is some positive impact on companies like ONGC and the explorers basically. How do you view the rupee in context of that to the oil and gas space specifically, and what should investors watch out for?
Puneet, we believe that 90s would be the new normal. In a best case scenario, maybe an 88 or 89. But this is kind of a stimulus from the government or the RBI, where they are not intervening for any strength versus the dollar, let it depreciate. So the exporters would continue to gain. Now, that said, the oil refining companies is where we would go overweight. So ONGC, Oil India, and HPCL would be our picks, and we are going light or exiting the OMCs, where BPCL and IOCs are somewhere which might see the dent in the days ahead. So broadly bullish on refiners and bearish on OMCs. So that is the approach we are having on the overall oil sector in perspective of the strength in US dollar versus a weakening rupee, which will continue in the weeks ahead.
So that's so Raghavendra is bullish on the refiners, so that's a key point coming in. But rupee also has a direct impact on IT, and today we're seeing all of those moves on the IT stocks because of that. Because it's a like-to-like correlation, right? The amount of depreciation that we've seen on the rupee, all those stocks are up by a similar percentage, and hence on our profit intelligence segment, though, Jasmeet is now joining in to track how the rupee slide is powering a fresh margin tailwind for the IT majors. Jasmeet, over to you.
Well, right, thank you for that. If you look at the overall IT pack, IT has been buzzing in trade, and this year has been off IT. Given that from Q1 we saw the trend coming in a little slower than the overall macro environment weakening for IT, and now we have rupee tailwind helping IT grow. If you look at the overall rupee record, it hits low around roughly 90 odd rupee in trade, lifting the overall positive IT sentiments. Historically, 1 to 3% drop in the rupee compared to the dollar and pound, we see a positive boost on the overall revenue aspect. Well, given that, what exactly happens is the dollar building converts to higher Indian rupees immediately, helping the company grow their margins and top line also boosting the profits. Well, if you look at stocks like TCS, Infosys and Wipro, majority of the revenue, roughly 75 to 80% of it comes in foreign currency, helping the company grow. If you look at why the currency movement matters for Indian IT, getting the nitty-gritties of the particular company, we see that the offshore mix is something that helps the company grow, given that most of the companies have most of the employees in the offshore mix. That's roughly 3x of the overall on-site mix. That basically would mean that company is earning in dollars, but again spending in rupee, given Indian economy is in the rupee dominated, where the costs remain the same, but the top line grows, helping the company expand the margin. Now, if you look at the overall percentage of it, we see every $1 move in the rupee basically helps IT by 30 basis points in margin, and this 30 BPS margin depends on the overall margins of the company. While this particular movement of 30 BPS is a very large when it comes to big players like TCS, Infosys, because they have reached their growth cycle, and any uptick in the margins would really help the company grow and boost the overall investor confidence. While lastly, we see like the hedged players like LTTS and LTI Mindtree also get benefited as their hedged forex gets in turn charged by the movement in the currency. While lastly, the rupee weakness boosts the overall competitiveness of the Indian players in the market. Given the increased value of rupee, they can charge lesser to the clients and be competitive in the global market. So this is a positive impact of rupee, what we are seeing on Indian IT and the sector being in green.
Well, thanks so much for that, Jasmeet. But we will take this conversation forward also to get a more perspective of what investors should do. And Sushovan Nayak, the IT analyst at Anand Rathi Institutional Equities, is also now joining in to get us that perspective. Sushovan, very good afternoon to you. Thanks so much for joining in. It's Puneet this side. It's been one of the major gainers, right? The IT pack as a whole, it's back in focus largely and possibly because of the rupee depreciation. Any kind of analysis that you can share with us of every rupee depreciation on the dollar? How do you see that benefit on the margins for the IT majors, and who do you see getting that benefit to the most in terms of the current quantum based on the exposure to the US, to the euro, amongst others?
So, basically, thanks for the opportunity. So, the ones which tend to benefit, if you look at it from a 100 bips depreciation in the rupee, you effectively get a 30 to 40 bips benefit from a margin perspective. But then that is assuming that this is with respect to the US dollar, right? So what we really like are the teams which would have a higher exposure to the US. Within the large caps, we have companies like LTIM, which should significantly benefit on account of it. And within the mid caps, companies like Emphasis are also something that should also benefit given the higher US exposure. What also happens with IT companies is there would be cross-currency headwinds, which also may impact them depending upon their exposure to Europe or the other economies as such, right? So that is something that we need to be cognizant of. But in my view, these were the thoughts from a large cap and a mid cap perspective. And the other bit is, if you look at what's happening in IT companies, is the ones which are having higher exposure towards BFSI, they tend to benefit significantly. Because BFSI structurally has been doing really well across international IT companies. And what we also get as a feedback is that the discretionary demand seems to be increasing there after having discussions with multiple companies and also from the various con calls of international IT companies. So that gives us comfort to BFSI focused names and higher US exposure as such. So these were the names which at least came to my mind. And yeah.
So Sean, also, you made a very interesting point that the exposure to BFSI for all those companies that have that high exposure also get that benefit. So I'm guessing the likes of Persistent and also the large cap peers, because they have a higher exposure to these sectors. The mid cap ones have a high exposure towards healthcare, travel, amongst others. So is that something that you see a benefit in Q3 earnings as well? I'm sure that it's still a month away, so the exact figures won't be out there. But according to you, Q3 generally a weakish quarter for the IT players. Do you see that benefit translating to the large cap players at this point of time?
So generally, as you rightly mentioned, Puneet, that we have a furlough quarter in Q3, as a result of which the number of days which will be the billable days will reduce, right, as a result of that. And that happens a little more prominently in the BFSI pack as such. So, but nevertheless, the point, as I mentioned, is if you look at the higher US focus plays, they will be potentially benefiting. And as you mentioned, companies like Persistent, which do have higher BFSI focus plays, they are continuing to do well. Even if you look at someone like an Emphasis, which I mentioned, right, that's got almost 65% BFSI exposure. Infy has got a decent BFSI exposure. So these are the names which, anyways, we really like from a large cap perspective. And Infosys, LTIM, HCL Tech, these were our top picks within the large caps. And in the mid caps, when you look at the BFSI focused names like an Emphasis, which also have got higher US exposure, that is also something that's beneficial for them.
One more question, Shravan, largely, and thanks so much for giving us your picks as well. Largely on what's happened with India now, because do you feel that the conversation over the next couple of quarters will also be macro-led for all of these players, and all the noise about AI amongst other factors will not be reflective, at least in the numbers for the next 2 quarters? Is that your analysis as well?
So, Puneet, here, this is also something which I have been mentioning for quite some time now. So when I'm talking about from a Gen AI perspective, right, what is basically happening in the US is obviously the hyperscalers now, they have come to a capex of $400 billion per annum to that extent. And if you look at Gen AI monetization, that basically is not translating, right? So that is something that most of the hyperscalers will start focusing on. And in the process of that, you will end up focusing on the services part. So what we believe is that possibly services, software, these are the ones which will start re-rating. And companies which are the Indian IT companies are something that should be poised to benefit on account of this. Because if you look at Accenture, if you look at all the international IT companies such as EPAM, they have very clearly mentioned that they are focusing a lot on the data architecture as well as cloud modernization. And for Gen AI revenue monetization, enterprise AI monetization, this is something that is a requisite. When I say this, it's basically services, so which should benefit Indian IT companies as such.
Got it. So Shravan, we'll leave it at that. Thanks so much for joining in and getting us your perspective of the rupee benefit. We look forward to our next conversation. I'm sure we'll be talking to you a lot, given what's happening with the rupee right now. But appreciate your time today on the show.
Yeah, thank you so much.
Thank you. Thanks so much for that, Shravan. But we also got some global perspective on this as well. And CLSA's Lawrence Belanco says that the rupee's recent weakness looks close to maturing, with a reversal likely if it dips below the 90 rupee to the dollar level. Let's listen into what he had to say.
The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
Well, let's move forward with the show now, because it's also time to what we call, for trending in trade segment today. It's a new one that we started this week. It's a snapshot of the stocks and the spaces that are making the most noise today. And we begin with Ease My Trip. My colleague Jasmeet is back with us to get us the details about this particular counter. Jasmeet, over to you.
Well, if you look at the stocks in trending in trade today, we have a set of 5 very interesting stocks, starting off with Ease My Trip. When we look at this particular company, we see that the company is currently having a cool-off trade in session today, given it's almost down 5.5%. Well, this cool-off comes after a strong rally that the company saw a couple of days back, and the rally was on the back of the recent winter sale announcement for the company. Generally, Q3 we see lesser movement in top line for the company, given that people have a lot of festival back home and people generally avoid traveling. But the company's new sale of the winter edition is something that boosted the company's stock to go up to 20% in trade. So after that particular rally, we see that the company shares are currently cooling off, and the current volumes are twice the 20-day average for the particular company. Now, lastly, if we also look at the dates for this particular carnival, would be anywhere with December 2nd or December 9th, showing the overall impact on the company's top line to happen in the Q3 for the company. So all in all, we see a cool-off rally cool-off trend for this particular company as of now, and that's why the stock is buzzing in trade today.
Well, thanks so much for that, Jasmeet. Raghavendra, coming back to you, and thanks so much for patiently waiting by. Let me first, get your perspective on, this particular space where Ease My Trip operates in. That counter has been hammered because of other issues. So let me take a broader question on what you make of all of the listed players like Yatra, like Ixigo, amongst others. Is there a preferred pick that you have as one of the beneficiaries of the higher travel if that happens in this particular quarter?
So Puneet, we do like the lifestyle sector, as we would like to put them in a basket, whereas the spending goes up, these sectors would do well. Yatra continues to be our preferred pick, but Easy Trip Planners is an avoid, considering the massive exit of the promoters in 2024 and 2025. So with this new announcement in terms of some discount carnival, it might be good for a customer or a client to actually look at this particular portal company. But from an investor point of view, it's a total avoid, considering the promoters have extensively exited the stake in this company. So with that said, Easy Trip Planners is an avoid. We do like lifestyle sector, and Yatra is a preferred pick, but overall, Indigo Interglobe Aviations continues to be a buy on dips for a longer term horizon, considering higher occupancy rate, operational efficiency, and an increasing market share. So in the entire lifestyle sector, Indigo continues to be a top pick.
Got that view, Raghavendra. And Interglobe, has been in the news today. We have been speaking quite a bit and extensively about the number of flight delays, possibly having a reaction on the stock as well. But Hindustan Copper is the other one in focus on a completely different trajectory compared to something what Indigo is doing in trade. Up 6% in trade. It's been one of the biggest beneficiaries of the increasing prices of copper globally. And getting us more perspective is Jasmeet again here to tell us about Hindustan Copper. Jasmeet.
Well, yesterday we saw in trade Hindustan Zinc buzzing on the back of silver prices rising. In the similar trend, we see that Hindustan Copper buzzing in trend on the back of the copper pricing rising. And given that copper prices have hit all-time high, leading to the overall growth for the company. Now, if you look at the overall stock performance, it's nearly up 11% in last 5 days and is buzzing and almost up 6% in trade today. Now, given that company's recent announcement, company had recently signed and with NTPC an MOU for mining, where this particular MOU is for the joint investment critical minerals and mining, and this MOU to help company further grow their stance in the global and economic market. That's something led to the stock boost in trade yesterday, and today we see it getting bust on the back of the copper prices again. So all in all, positive set of news for this particular company. But interesting to watch out how does the Q3 pans out and how does this rise in particular copper prices help the company in the margin and the top line.
Thanks for that, Jasmeet. But Raghavendra, a very short 30-second answer if possible because of paucity of time. Would you still buy into Hindustan Copper right now if you missed this rally?
We would buy, we would consider 415 as a target, that is around 13-14% upside. Global deficit of copper and a structural bull rally. So we are bullish on Hindustan Copper at 360, 415 target, 13% upside.
Thanks so much for that, Raghavendra. But viewers, time for a very quick break. We will be right back. Lots more action on the other side and a key conversation with the management also. Stay tuned to Profit Buzzers.
2025 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Welcome back. You're watching Profit Buzzers right here on NDTV Profit. We are putting the spotlight on some key stocks: Neogen Software, Pace Digitech, Mukka Proteins, and RVNL. Let's first pull up Mukka Proteins in the chart also, and it'll give you a perspective of why the stock is in focus, up almost 5% now. And Varsha is back. Varsha is with us to get us some perspective on all these stocks. Varsha, over to you.
Well, thank you so much for that. I'll be talking about first is Petro LNG, wherein they've signed 15-year ethane USH services with ONGC, and the Petronet is developing ethane storage tank capacity of approx 1.70 lakh cubic meters, and the ONG shall receive capacity of approximately 600 kilotons per annum at Petronet's facility, and the expected gross revenue potential from this stand at around 5,000 crores, and the transaction to commence from FY 28 to 29. Talking about Neogen Software, they've received 13.9 crore order from Mercedes-Benz Financial Services India. Now this is for a loan management system, and the order execution period stand at around almost 5 years. Lastly, I'm going to talk about Mukka Proteins, wherein the stock is up almost 14-15%. Now they've received order worth rupees 474 crore from Bengaluru Solid Waste Management. Now this is for treatment and disposal of legacy accumulated in landfill sites, and the order execution period stand at around 4 years. So these are three stocks which are on my watch list and are in the news today on the back of order flow and technically the news flows.
Well, thanks so much for that, Varsha. But let me go across to Raghvendra very quickly on a couple of these. Raghvendra, how do you firstly, do you have any coverage on Mukka Proteins, because almost just an 800 crore market cap company, but an order win of 474 crores over a time period? How should investors look at it? Any coverage you might have?
So, Puneet, we don't cover this company, but this is definitely an eye catcher. You would actually see how the earnings are reported in the next quarter. So this order win actually makes it, put it in our radar, kind of a shopping list if there is a good earnings and the commentary is in sync with the earnings. So we would actually consider this on our radar now with this eye-catching positive news.
We also have Osho Krishan. He's the chief, manager, technical and derivative research at Angel One. Osho, always a pleasure. Very good afternoon to you. Let me get some perspective on Petronet LNG. Actually, it's for the first time in a long time that we're seeing such a huge move on the stock. Does this positive agreement of 15 years augur well on the charts for the company too?
Very good afternoon. Firstly, thank you for inviting me.
Osho, yeah, go ahead, Osho.
The recent technical developments in Petronet is definitely a very bullish kind of a movement, and it is placing the development has been placed at a very strong historical support around the zone of 270. So 270 historically also has provided very strong cushioning to the counter, and the same levels have again started cushioning at current levels also. So I'm expecting that in a short-term point of view, yes, definitely the development can be seen on the higher end. 290 to 95 will be the immediate target for Petronet. But from a medium-term perspective, I will wait for the zone of 295 to 300 get surpassed on a decisive manner and a sustained manner. Then only from there onwards, we can see some kind of trend reversal in the technical chart of Petronet. But for short-term perspective, still 15 points of room on the higher end is expected in the short-term time frame.
Got the view, Osho, but it's important, viewers, that you also know about AMFI's semi-annual classification review as well. Now, this is for the first half of calendar year 2026, which is around the corner, with the announcement expected in the first week of January. My colleague Sharad is now joining in to give us more details on this one. Sharad.
AMFI's semi-annual index reject, as per Nuvama's note, this would be coming in the first week of January itself. And remember one thing, this is very important barometer for active fund managers to look into these classifications, but there are no incremental inflows or outflows which you can expect for these AMFI related stocks. So as an investor, if you are in mutual fund, then it is important for you, but if you are in direct equity, take it with a pinch of salt. Also, let's go ahead with the amount of stocks which should be coming into these categorizations. The first one is the large cap entrants, which I would be speaking about. These are the big names. This includes HDFC AMC, Bosch, Polycab, Cummins India, Canara Bank, Muthoot Finance. There are other stocks also which are in the list where you'd like to see the potential large cap entrants if you look at them. And also, see, these are the names coming in. This includes newly listed LG Electronics, Tata Capital, and demerged Tata Motors commercial vehicle as well. Looking at the stocks which will come down from large cap definition to mid cap definition, they include Bajaj Housing Finance, Zydus Life, Lupin, Havells, REC. There are more stocks to this list where we'll be looking at, and they are on your screen, which includes Industars, United Spirits as well. Now, let's go on to the potential mid cap entrants, and these are the list is big. Poonawalla FinCorp, Anthem Biosciences, Physics Wala, which is recently listed, that also comes to this segment. Grow, Lenskart, Meesho. Meesho, of course, the listing is also expected to take place, but it has been added in the list. Mid cap to small cap, these are the other brands, which includes Metro Brands, Honeywell Automation, Gujarat Gas. Also, we see that the overall market cap definitions is coming down. So this is the entire list which is there on the screen, where we might see the changes happening as per AMFI's categorization rules.
Well, thanks so much for that, Sharad. But we told you that, Indigo largely under scrutiny on a lot of cancellation in terms of price, and now DGCA has actually begun investigating the widespread flight delays as well as cancellation. Now, the airline has actually cancelled a whopping 1,232 flights in the month of November alone, following continued disruptions. Now, Indigo has been summoned to the DGCA headquarters as well to explain this particular situation and present a mitigation plan. My colleague Danish, who's been on top of the story, joins us with more details. Danish, very good afternoon to you. What are some of the key aspects from this?
Very good afternoon to you as well, Puneet. So right now I'm standing right in front of the DGCA office. Indigo officials are expected anytime post 1:30 p.m. and that's when they will go face to face with the DG himself, and they will have to give out the reasons and why has Indigo arrived at this particular position right now, because all the airlines in India had ample time to follow the new FDTL norms, and by that I mean the new flight duty time limitation norms, due to which the weekly rest period of pilots has been changed from 36 hours weekly to 48 hours weekly. And after that, we are seeing that the DGCA has been quite active since last evening, and they have summoned Indigo at the DGCA headquarters.
Well, got it. Thanks so much for that, Danish. But the cancellations have hit operations in Delhi, Mumbai, Hyderabad, as well as Bengaluru, amongst other key cities. Our reporter Sujata Dwivedi also joins us from Mumbai's Terminal 2 airport, and Deepak Bopana has all the updates coming in from Bengaluru as well. Please take it away.
Indigo flights at Mumbai Airport continue to face delays and cancellations. At present, we are here at Mumbai Airport, and like you see behind me, this is the departure section of Mumbai Airport, where you see that passengers, though, are arriving on time, but once they arrive at the airport, they get to know that either their flight is cancelled or it has been delayed by number of hours. Now, the biggest impact on the airline's operations has come from crew shortages and the recently implemented pilot and cabin crew rest regulations, which have made it difficult to operate several flights on the schedule. Adding to this, there are technical issues, there are heavy air traffic congestion during peak hours and sudden disruptions in scheduling, all of which have worsened the situation. Now,
well, but another key stock which we are putting our focus on is Suzlon, and let's cut across to my colleague Sharad Dubey, who is in conversation with Girish Tanti, the co-founder and vice chairman of Suzlon Group. Sharad, take it away.
Well, thanks for that, Puneet. And joining us with the management, we are having Girish Tanti. He's the co-founder and the vice chairman at Suzlon Group. A very good afternoon to you, Girish, sir. First question, of course, company has been holding its manufacturing day today itself, and there was an initial press conference also where there was a bullishness in company's capacity expansion. The first of all, I'd just like to know about, what are the growth plans coming in, going ahead for the company, say in the next 6 to 12 odd months?
Yeah, thank you. As a company, I think you're aware that we now have an order book of in excess of 6 gigawatts. And the idea from here on with the installation of these new facilities which we are looking at, these are all smart factories that we are putting in place with state-of-art technology integration that we are doing in that. Primarily on 4 pillars, we are having AI to come into play. We are also using IoT, automation and robotics. So with this, in terms of productivity, performance and safety at workplace will be significantly enhanced. And these facilities are largely being built up to meet, serve our order book on hand.
Mr. Tanti, of course, the industry, we have seen some cancellation of orders taking place. Company specific also, there was a recent news that there was an LOA of almost 42 gigawatts and a cancellation coming in. So is this like a one-off or is this a trend likely to continue? Because there is some concerns in the industry. So you'd like to just want your views on that.
Yeah, I think just for clarity, I think there are no cancellations associated with Suzlon, so there should not be any confusion in that regard. I think what you're probably referring to is that the PPA signing, which is due, almost 40 gigawatts worth of PPA, which from the central bidding, which has to get into firm PPA signing, is being questioned. This is primarily on account of a significant portion of this, almost 90% of it, is solar PPAs which have been done. I think as the market has moved from a pure single source play to a fixed and dispatchable renewable energy, which is basically wind, solar and storage together, the kind of PPAs also are likely to shift from a pure play of solar to an FDRE. If that happens, effectively what it means is there will be a better balance going ahead in terms of wind contribution to the overall energy transition of the country.
Does that actually impact the wind sector capacity addition also, and any kind of slow moving orders in your backlog here?
No, I don't think so. And as I said, any change that would happen in that regard would have a positive impact on wind.
All right. That means you're saying that the wind capacity addition might have some important tailwinds also in the industry. But Mr. Tanti, overall the inquiry pipeline for the new orders, how are they looking right now? Of course, right now the monsoon season is also over and there is a sign of a private capex also picking up. But inquiry pipeline, what's the view over there?
Yes, I think it's very robust. I mean, if you look at today, our first review period as a country for the energy transition is to achieve 500 gigawatts by 2030, of which 100 gigawatts is to come from wind. Today, the industry has crossed 53 gigawatts of installed capacity. Of the balance gigawatts, what we are seeing that almost 40 gigawatts worth of PPAs are signed and orders are at various stages of execution. So with that, effectively, we have a visibility of almost 95 gigawatts purely from the bidding environment to achieve the 100 gigawatts target by 2030. In addition to this, there is a significant uptake from the private sector, the C&I segment, where and also the PSU segment for their own green energy transition. That demand itself is about 70 to 80 gigawatts from renewable energy. The wind component would be about 30-40 gigawatts. So I think from multiple approaches, if you look at it, both from central bidding, private sector participation, PSU, and the state bids which are now also increasing, all put together, I think we have a very strong clarity and visibility for the wind sector going ahead.
And Mr. Tanti, the last question is, of course, on the BESS side, BSS. So this battery energy storage systems, is there anything company announcing on that segment? Because there's a lot of buzz in the industry.
Yeah, so if you see today, effectively, the market has shifted from a single source play to an FDRE. What this means is that today, with a combination of wind, solar and battery storage, we are able to produce clean power on demand 24/7 at a price point which is cheaper than any other conventional energy source. So effectively today, the limitation which the wind and solar had historically, where you could get the energy only when the sun is shining or the wind is blowing, is actually getting resolved with battery storage coming into play at a price point which is making it viable to have wind and solar available on demand. So I think with this combination, what we are seeing is that there will be a significant uptake in our journey towards the energy transition and achieving the 500 gigawatts of renewable energy by 2030.
All right, Mr. Tanti, thank you very much for taking out your time and speaking to NDTV Profit. Best of luck for the future.
Thank you. My pleasure. Thank you.
Well, that's the management of Suzlon. But Osha, let me come to you very quickly on the charts for Suzlon. Would you mention that it's still from this level? Where do you expect the momentum to go?
Overall, the technical setup is quite bleak in the counter because the short-term moving average and even the counter is below the short-term and the long-term moving average. So I expect that until it surpasses the zone of nearly 58 to 60 on a decisive and sustainable manner, till that time better to stay on the sideways. On the technical front, the technical parameters are now likely to plunge into the oversold terrain. So from here onwards, I expect that the downside is still there, but there might be some kind of limitation on the lower end. 47 to 46 will be the downside target for a very short-term perspective. But from there, from that zone, one can look for accumulation purpose from short-term point of view. But only a decisive surpass above the zone of 60 can see some kind of significant trend reversal in Suzlon.
Raghavendra, in this particular space, do you think Suzlon makes the cut as one of your picks, or what do you like right now in the renewable energy and the considering space as well?
So, Puneet, broadly as an equipment manufacturer in the renewable space, we continue to like Suzlon. The stock has corrected in the last 3 months or 6 months horizon. But if you see in the last 5 years, it has given a 20 times returns from an almost bankruptcy levels where it was at heavy debt. The company is now net cash positive, and there has been a massive turnaround across their order book, operational efficiency, and domestic and global order wins. So it's a buy on dip stock, and there has been some correction in the recent past. So at 51 levels, we think this is a 30% upside in a 1 year investment horizon. So a target of around 65, but that disclaimer continues to be, it's a high risk, high reward trade, but we are bullish on Suzlon and buy on dips. And at current levels, a 30% upside for a 1 year investment horizon is also possible.
Well, the other counter that's also in focus, and thanks so much for that, Raghavendra, is also Biocon, because it is considering, investments in Biocon Biologics. And Varsha is here with us to tell us what might lead, what is the reason to the stock being down almost 5% today. Varsha, what could that be?
Well, so the board meeting is being set on December 6th, and there are 2 agendas which will be focused upon. One is the investment in, Biocon Biologics through the purchase or acquisition of securities, and the second one being, fundraising option through QIP or preferential, issue. Now, overall, why the stock is down? Let's highlight that. One is the fundraise which is being done in biologics, considering the high growth. that the biologics has seen. But the point here is this is the second fundraise. So recently they had a fundraise of around 4,500 crore. In a short span of time, you're doing a second fundraise which will dilute the shareholder earnings, and this is one of the reasons why you're seeing the stock is down almost 5%. Now the fundraise, in my opinion, which is being done is to improve debt to EBITDA ratio, and the fundraise coming too soon is the key concern here, which will dilute existing shareholders earnings. And onto the debt picture, if I were to talk about, they had almost 1.2 billion of debt. With the fundraise, there will be a better position to chase growth. That is altogether a correct option. But all this, the high debt that you're seeing, all this has led because of the Vitrise deal that they did, and all this has triggered that everything. But the second fundraise that they're doing, maybe investor is not liking it, considering the dilution that this may get into. So overall, this is one of the reasons why you're seeing the stock is down almost 5% in trade today.
Well, thanks so much for that, Varsha. And Varsha highlighted a very key point in the analysis that the fundraise might be coming a little earlier than what Street had anticipated, and hence something that's not liking at the Street at the moment for Biocon. But Raghavendra, how would you see this particular update coming in for Biocon? Is it that at this point of time, for those who are holding on to the shares, what would you recommend for them?
We would recommend it's a sell and exit at current levels. This is earnings dilutive step. Second, dilution very recently. The debt levels are increasing, and even at the earnings level, company is trading at a P multiples north of 70 times to its EPS. So that's very expensive. That gives almost negligible margin of error. So considering high valuations, high debt, and this earning dilutive step, we would actually not have any fresh buys at current levels, and even if someone is holding, can look to exit Biocon at current levels of 389, 390.
Osho, would you concur with the fundamental view on the stock as well for the charts? What would you recommend?
See, technically, the counter has failed to surpass the zone of 400 on a decisive manner. Today, definitely because of the news, the counter has been into a kind of a corrective phase. But overall, I expect that momentum can be seen on the lower end for a very short-term time frame. Near about 370 to 365 will be the short-term target. But from there onwards, again, we can see some kind of consolidation in a zone of nearly 360 to 400, and a sustained move beyond 400 can be seen as buying opportunity. But for now, better to stay sideways. My view is I have the same view that at current levels, one can even try to exit or can accumulate more on dips of around 360, and any breakthrough above 400 can provide a kind of a buying opportunity in the counter. For now, better to wait for some kind of correction zone and try to accumulate on the lower levels.
Well, let's also pull up, a counter Tata Consumer as well. It's and see what that is doing in trade. It's not doing too much, but HSBC actually had a very interesting brokerage note on it. It has initiated coverage on the stock with a buy, citing long-term growth for the counter that they are banking on. They have a target price of 1,340. They also mentioned very interestingly that the company's food and beverage company has quite a lot of scope to deepen distribution, which will drive growth, and hence they feel that they are forecasting almost a 26% CAGR between FY25 and 28 for its growth portfolio, also highlighting that margins could also get an additional fillip because of the tea business, and 37% of India business contribution from just 28% right now. So a lot of positives that could be coming in for Tata Consumer. How do you view this, Raghavendra? Because as a stock, we haven't been discussing too much about this one over the last couple of quarters because of results that were weaker, prospects in the international business as well as margins impacted due to the tea business in India. Do you feel that it's just a time correction? It's an interesting opportunity and a juncture that Tata Consumer finds itself right now?
Puneet, you said it very well. It's broadly a time correction. And we believe that it is at a threshold where the premium would come from its wide distribution network. And there could be a positive catalyst, a big trigger where the international business could actually see another listing or a demerger kind of a thing, which is largely the global tea business in North America, which would trade at extensive premiums, considering it is present, has a good market share in America and the Canada. So that the global business is showing some green signs in terms of recovery, and broadly the domestic business has a wide distribution network, good corporate governance, extensive products. So Tata Consumers on a dip is a buy, but considering the GST cuts, income tax cuts, and the good monsoon as an FMCG counter also, this could augur well in the quarters ahead. It could be a core portfolio stock, safe and steady investment stock for a longer term investment horizon. We believe a double-digit return of around 15% on an annualized basis for a 3 to 5 year investment horizon in Tata Consumer Products.
Very interesting, Raghvendra, and thanks so much for that view. But also it's important to keep a track of Vodafone Idea. Apart from that, it's also important to keep a track of Indus Towers and Bharti Airtel as well, because Cabinet Secretary is expected to meet Vodafone Idea as well as the DOT, which is Department of Telecom, to review the AGI relief proposal. Now, sources are saying that waiver talks are back on the table, and the meeting with the Finance Minister as well as DOT will be to discuss the scope of the AGR demand, review of Department of Telecom's fresh relief proposals as well. And this is, of course, sources to NDTV Profit, so it's an exclusive that we're getting you. Now, all of this issues, of course, of what we've discussed a lot, that as per Vodafone Idea, the AGR dues are vastly overstated and not in a position that the company is right now to pay this particular amount. Cash versus accrual accounting differences is what they've cited as an error in calculations, and this deductions disallowed were due to some missing documents as well. But it's a key one that we'll track. Any relief on this counter would be a key positive for Vodafone Idea at this point of time. But Raghvendra, let me come back to you very quickly on this. While this will be a big benefit for Vodafone Idea, another big indirect beneficiary would be Indus Towers, right? How do you view both of these counters?
So for Puneet, for trading reasons, we would actually like Vodafone Idea and Indus Towers both, and consider this news to augur well in the next few days. And a trading upside of around 7 to 10% possible in Vodafone Idea, and similar upside in Indus Towers in an immediate time horizon of, let's say, 4 to 8 weeks. There could be some kind of trading gains if one enters Indus Towers at 400 or Vodafone Idea at current levels of 10.50.
Sure. A quick 30-second answer, if possible, on Indus Tower. What would you recommend investors to do on charts?
Well, Indus Tower is looking very lucrative at current levels. It is on the verge of giving a breakout. Any breakout above the zone of 415 can provide a very strong momentum in the counter. On the higher end, I am expecting a target of nearly 455 to 460 on a short-term point of view. So overall, on a broader term perspective, it is on a verge of giving a flat pattern breakout. That's on a weekly time frame chart. So the broader structure is very positive, near about 480 to 500 will be the medium term target. But from short term perspective, 455 to 60 will be the target, and one can look for buying opportunity in this counter.
Well, Raghvendra as well as Osho, thanks so much for joining in. That's all the time we have on this edition of Profit Buzzers. Appreciate your time on the show. But viewers, Small Cap Buzzers comes up next. Lots more action on the other side.
2025 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, this means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
रहमान सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. And Varsha, if you look at the benchmark index, we did try to cross the 26,100 level, but we did not. We lost it by just 2 points. And from the day's highest point, we are now down around 85 odd points, trading with gains of just 0.1%.
Yes, absolutely. And let's look at the contributors when it comes to Nifty 50. As Somit was saying, Nifty 50 is up 0.09%, I would say. Let's pull up that chart. Who are the contributors? Wherein you have TCS, you have RIL, You have Axis Bank, HCL Tech, and others which are pulling up the Nifty 50. Well, IT sector is in focus. This is on the back of rupee hitting low. But on the loser side, though, you have HDFC Bank, ICICI Bank, Kotak Bank, and Interglobe. As you rightly know, what's the reason for that? So also banking sector is under pressure. But let's talk about sectorial heat map. Let's see what sectors are buzzing today. I think barring Nifty Bank and media, everything is in focus today. If you see Nifty IT, Realty, FMCG, metal, all are up. Nifty Infra, Energy, and Nifty Finance, Nifty Bank is down, or all the sectors are under pressure. But let's see what broader markets are doing. Let's pull up Nifty Midcap 150. Let's see what that index is doing. Well, onto the broader market, there you go. Nifty Midcap is up 0.12%. Let's see what small cap is doing. Nifty Small Cap 250, if you see, is down almost 0.19%. Let's pull up BSE 500. Let's see which are the gainers and losers over there. There you go. Hind Copper, India Cements, Delta Corp, Petro, LNG, L&T Tech are some of the counters which are buzzing when it comes to BSE 500. On the loser side, though, you have Hitachi Energy, Biocon, GM Financial, and MAS Financial, which are on the losing end. But moving on, let's shift our focus on Ratnavir Precision. Now, this stock is under focus after the company launched a QIP issue of up to rupees 211 crore rupee. While Jasmeet joins us with more details on that. Jasmeet, over to you. What are the key details over here? Please let us know.
Well, thank you for that, Varsha. If you look at this particular company, the stock has been buzzing in trade, but over the year, the stock sees selling percentage down 30-odd%. If you look at the recent news of the company has launched this QIP of roughly 211 crores, and this particular QIP to be used to fund their working capital as they want to expand the top line. While the given QIP has a floor price of rupees 152 odd rupees, which is at a discount given the current level of the stock. But though the QIP is a discount, the stock is still buzzing, showing the strong interest of the investors in the company with the long-term goals. We look at the company, what the company does. This company operates in manufacturing stainless steel washers and various products. Company has roughly 10,000 plus SKUs in their portfolio, with expanding their base to export markets and also catering to domestic markets as well. If you look at the key takeaways from the Q2 financials, it's a very strong set of numbers for the company. They reported historically strongest quarter so far. What they say is the company increased the FY26 guidance as well to 1100 odd crores versus 1050 earlier. While company also says the EBITDA margins to improve to 7% just 2 years ago to currently 10.5%. They're seeing the improvement coming in, an improvement to sustain going forward, which is bringing in the overall positive sentiment for this particular stock. While lastly, we see that the power cost for the company will go down by 90% in next 2 years, given the company is investing in the solar plant, which is currently 2 megawatt. They will be increasing to 4 megawatt, which will take down the overall power cost and help the margins grow. If we look at the last aspect of the export of the company exports only 20-odd%, and they plan to maintain the same going forward. In terms of key financials, we see revenue at 286 odd crores, while margins are at 10%. Margins are slightly down compared to the one YOY basis, but the company remains positive about expanding them going forward. While the outlook for the company remains strong for FY25, they are targeting a top line of rupees 1500 odd crores versus 1100 odd crores in FY26, and for FY28, they are targeting a top line of 1800 odd crores. While to bridge the gap between the 1100 odd crores of top line to 1500 odd crores, they are taking the additional QIP of rupees 200 odd crores for the same purpose to fund the working capital. While in terms of the margins, they want to expand the target of 8.5% for the PAT margins, which is currently at 6-odd%. So all in all, we are seeing a positive outlook for this particular company, and even the stock is buzzing in trade.
Thank you so much, Jasmeet, for all the details. Well, on that, let me also invite our guest, Prashant Tapse, who is Senior Vice President at Research Analyst at Mehta Equities. Well, Prashant, welcome to our show. Prashant, any view on Ratnavir? Jasmeet was talking about all the growth plans and, the guidance that the company has given and the shift towards the EBITDA, increase in EBITDA margin. Any view? Do you track this counter?
I don't track this company, but looking at the numbers, what the anchor has said right now, I think the numbers looks good. The vision of the promoters or the business model looks very good at this point of time. And the valuation side, I think with the stock is trading at a 15 PE and less than 2 price to book valuation, and considering the top line growth, what management is penciling, as well as the margin improvement from 10 to 11 to 13%. I think if that goes well with the plan, and the working capital which they are rising right now, I think that will work to the company's working capital need, which is the need of the hour. So I think this business model needs high working capital. So if that has been supplied to the company manufacturing facilities, I think that can do well. Obviously, last 2 quarters they have been very much stable in terms of performing. The margins have improved from 8% to 10% in the last quarter. I think second half would be better, increasing to 11 to 12. So that looks very good for me at this point of time.
Right. Shifting focus to one other stock that has been buzzing in trade, Uptown, on the back of the recent announcement. Let's get in Khilen Shah, the promoter of the company, to give us more details on the same. So you came out with an announcement where you said that of 500 crore, around 150 crore will be utilized to repay debt. My first question, by when will this fundraise complete? And because of this debt repayment, what will be the interest cost savings that will happen?
Thank you for having me. The preferential issue is awaiting the approvals of the stock exchanges. We are expecting the approvals shortly. We are on track. We expect to complete the fundraise within this month itself. But of course, that is subject to the exchange approvals. A portion of that debt, close to around 150 odd crores, is expected. A portion of the proceeds from the preferential issue are expected to be utilized towards the debt repayment, and which will help save approximately 15 to 20 crores of interest per annum.
Right before we continue with Khilen Shah, an important announcement coming in onto your ticker. The India gets a $2 billion Russian submarine deal ahead of Putin's visit. Now, this would be important for multiple defense companies, to start off with Garden Reach, Cochin Shipyard, Mazgaon Dock. These are all the shipbuilding companies that could stand to benefit. And if there are more such defense deal that comes in during this meet, then stocks like Bharat Electronics, Bharat Dynamics, Hindustan Aeronautics all remain in focus. The entire defense pack would remain in focus ahead of this crucial India-Russia meet that will happen from today evening. Keep an eye out for the defense stocks that could be buzzing on the back of this news. Khilen, coming back to you, you mentioned that the fundraise will complete by the end of this month, and post that immediately will repay. Sorry, I must have missed the amount. The interest cost saving amount, I might have missed.
So we're repaying approximately 150 crores of debt, which is running at approximately 15% per annum. So it's looking at approximately 20 crores of interest saving per annum from the repayment. Of course, that is only a portion of the proceeds are being utilized towards the debt repayment, which is close to around 150 crores. The balance is being utilized towards business development and acquisition of FSI and land.
Right, and the remaining 350 crore, what are your plans? How are you going to utilize that?
So we are going to utilize it towards business development, towards acquisition of FSI in our existing projects, and also acquiring some new projects within the MMR region.
Understood. Hello, Mr. Shah. This is Varsha this side. Welcome to NDTV Profit. Talking about some business now, you achieved more than half of pre-sale guidance in FY26, wherein you were targeting of around 6,000 crore. Would you want to, inch up your guidance? Would you surpass this?
So we've given a guidance of 6,000 crores for FY26. The guidance depends on the approvals and from the projects in the Mumbai region. So specifically our 25 downtown project and the launch of our Chembur second phase and the launch of our Ghatkopar second phase, and 25 West, which is our Bandra luxury project. So 25 downtown, 25 West and Chembur are all on track. And therefore, we feel that we will be able to achieve this number of pre-sales of 6,000 crores. At the moment, we do not want to revise the guidance, but if we do get the approvals for other projects, we will certainly upward revise it.
Understood. Also, Mr. Shah, coming to your preferential issue proceeds, how will the debt levels go down? And also, are you planning to fund it for other projects as well?
So from the 500 crores that we are raising, 150 crores is approximately being utilized towards repayment of debt, and the balance is being utilized towards, balance 350 crores is being utilized towards business development. And by that, I mean acquisition of FSI in our existing projects where the FSIs are enhanced, and the and also in terms of acquisition of new projects in the MMR region. So we are definitely looking to kind of increase our land bank by approximately 2 million square feet through this.
What I meant was, Mr. Shah, where after your proceeds, where will the debt level stand around? I mean, what is the
Sure.
current debt, and what will be
Sure.
the end number you will be reaching to?
Sure, sure. So, apologies, I missed that part of the question. So we will. So currently we are at approximately 1,000 crores of debt on the listed side, without the merger, and we'll be paying 150 crores. So we'll be at approximately 850 crores on the debt on the list co.
Right. And what is the update on the merger? Earlier, I believe you had received approval for two, with one of them was awaiting. So what's the current status of this?
So two of the three planned mergers have received exchange approvals, and the NCLT filings are in process. The third one is awaiting the exchange approvals, and we will expect that the exchange approvals will happen shortly. And then we will file for NCLT. We do expect, and we had said this in the calls as well, that by FY27, we expect that the merger processes will be completed. However, the effective date of the merger is 1st April 2025.
Understood. Also, considering your H2 on the heavier side in terms of key launches, what launches should we look for, and the overall gross development value will be at?
So in terms of the launches, the most significant launch is the Tower 5 of our 25 downtown project, wherein we're doing 15,000 square foot apartments, and this is at a prime South Mumbai location. We're also looking at our Chembur project phase 2 called Uptown Seasons, where we're also launching luxury residential apartments, and our 25 West project, which is in Bandra, wherein we are launching ultra luxury apartments. These are the three planned launches in the second half of this year. And in terms of value, they are the launch value of these three projects combined exceeds approximately 20,000 crore rupees of only this Tower 5, 25 West, and our Chembur project, 25,000 crore rupees.
Understood. Also, Mr. Shah, you saw profit impact, due to inventory with low yielding margins. What's the guidance for FY26, and how new launches margins, favor versus your older one?
It's a fair question. The projects, because we follow the project completion method when it comes to revenue recognition, the projects which were coming to closure in this year were projects which were launched much earlier when prices were not as high. Obviously, the projects that were launched now are at far higher margins, especially on the luxury segment. We have we've got completed our Andheri project and Chembur project, a few wings from the first phase, which were obviously at lower price points. So those were the lower price margin projects which kind of got completed. In fact, going ahead in this quarter itself, we have another project called Rising City in Ghatkopar, where we are getting completion of a phase of the project, which was also relatively low margin. However, going ahead, these are all higher margin projects. For example, in the luxury segment, with respect to 25 Southwest Downtown, the future phases of our Chembur project, they're all much higher margins.
Lastly, sir, the total development value, I believe, of the ultra luxury and the premium project is close to 45,000. How will execution shape up over the years for these projects?
So the good news is that all of these projects are absolutely on the floor and are being executed as we speak, whether it's 25 Downtown, 25 South, 25 West. In fact, with respect to 25 South, our Prabhadevi project, that is in a closure stage, and we expect the completion of the project within 6 to 8 months. With respect to 25 West, one of the towers out of 4 is at halfway completion stage, and we're launching the other 3 this financial year. And with respect to 25 Downtown, the construction has started in a full-fledged, and we expect the completion of 25 Downtown project over a period of next 5 years, because it's an 80-story tower. And with respect to 25 West, the Bandra project, we expect the completion of the entire project over the next 3 years. So the completion are all on track, and the approvals for all these 3 luxury, super luxury projects are very much in place. And we expect no hassles or no delays when it comes to completion.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way ahead for Uptown. Well, that was the management of Uptown, quite strong about and quite optimistic about the outlook for the second half of this financial year. But shifting focus, let's get in Sharad to understand what's been buzzing in the F&O side. Sharad, how's the BSE F&O
segment looking like in trade today?
Well, Somit, the expiry angle which is there, the market has come down to a very short range. We are expecting more volatility to come in today, but we see that today overall there is a recovery. Sensex is largely in the green, but not so much of movement, be it the put ratio or the call ratio. That's at a stable 0.7 odd%. Addressing the Sensex, important key takeaways, the IT stocks have maintained their momentum, which was there last time at 1045, what we have seen. But some selling has started coming in Maruti's counter. That's what we'll be looking at. Looking at the contract itself, it's almost even Stevens, as I had stated earlier, and this is on your screen. BankX is something where there is a bit of more volatility and a correction there. We see there's much more downtick coming in there, especially led by both the bigger names, SBI and HDFC Bank. We can see other losers also include ICICI Bank. So not much happening here over in segment. The call contracts are there where the action is much more coming up, especially in the writing front. Also, let's look at the stocks which would be important. The key long build-up, they include Petronet LNG and Coforge. Both of them are up more than 3% in the day's trade. Looking at the short covering, these are the stocks which would be in focus. HFCL and Bharat Dynamics, especially defense stocks ahead of the meeting with Putin and PM Modi. And long unwinding, this includes only Hindustan Zinc. And lastly, I'd like to point out the key shorts which are there in the focus. They include Hitachi Energy and Biocon. So actions are happening in bits and pieces, but not much attractive day when it comes to an expiry in the BSE Sensex space.
Thank you, Sharad. That we'll keep an eye out for how the expiry turns out for the FNO stocks. Prashant, before this FNO snapshot, we spoke to the Uptown management. You must have heard the conversation. Management is quite optimistic for the second half of this financial year. Also, the deal pipeline or the launch pipeline looks quite strong over the next couple of years. How are you looking at this counter, Uptown? They recently also announced a fundraise of 500 crore.
Yes, very positive, in line with what management is also expecting, a very optimistic outlook for their launches in the second half. But again, one should not consider this company to watch on a quarter-on-quarter or first half or second half. It should be considered on a full year basis, because a lot of completion phases are on the end, and I think second half would be a better picture for investors to watch on. Overall, with respect to their gross development value, which is almost like 40,000-45,000 crores, if that executes very well in line with their expectations, and there can be a good high margin penciling into their P&L account, so that will give a lot of clear picture about the going forward. Plus, again, their merger and amalgamation will give a lot of big picture for a company to grow very faster. We are very much optimistic on this company, and I think it's the right time to have some kind of positive outlook on the company.
Well, thank you so much, Prashant, for that view. Moving on, Alpex Solar is in focus today. Well, it's scaling aggressively with new solar cell and module capacities that will nearly double output over the next year. But we are here joined by Mr. Ashwin Sehgal, who is President and Managing Director at Alpex Solar. Well, Mr. Sehgal, welcome to NDTV Profit. Pleasure to have you. My first question would be, do you want to revise your guidance, the target of 1500 crore that you had given? Because in the first half itself, if I were to talk about, you did close to around 900 crore. Would you want to revise upwards the guidance of 1500 crores of revenue?
Alpex Solar, during our guidance meets, we have given a guidance that we will be growing at 2x from top line as well as bottom line at a 2x rate. And according to the same guidance, we have grown more than 2x, in fact, in this year. So, yes, we had given a target of 1500 crores, but we are likely to surpass these targets, and we will grow at a 2x rate. Thank you.
Right, Mr. Sehgal, this was about the revenue growth. What about margins? Where do you see your margins going when it comes to FY26 and of course FY27?
Okay, as you might be aware, Alpex is going in for backward integration, and we are putting up a cell manufacturing unit at Kosi in NCR with a 2.2 gigawatt of capacity. This will start commercial production sometimes by the end of April or May, and with the 2.2 gigawatt, and we hope that at least 1 gigawatt of cells will be sold in the next year. So the cell business, as you know, is much more profitable and generate an EBITDA of around 35-36%. So our overall blended EBITDA will increase and reach more than 25%. Similarly, our PAT also will increase with the commensurate with the EBITDA.
Understood. Well, Mr. Sehgal, some other big players, are adding capacity when it comes to forward integration of, solar to, then you have BESS, that is battery energy storage system. Some are integrating themselves with inverters. Others are going into transformers. Just wanted to ask you, are you looking towards these areas such as, BESS?
Yeah, thank you once again, Varsha, for this good question. Yes, we are putting up one of the most modern and most efficient cell manufacturing line at our Kosi unit with 2.2 gigawatt capacity, and we have plans to go in for a battery energy storage system, but as we are a conservative company, so we would like to announce these investments after our cell manufacturing units come into picture. And similarly, aluminium, we started way back. We were the first ones to come up with the aluminium backward integration. It is now fully functional, and we have 18,000 tons of capacity for a solar frame, which gives us a lot of freedom in terms of not only the product manufacturing, but also give us leverage in terms of profitability. Thank you.
Well, understood. Well, thank you so much, Mr. Sehgal, for joining this conversation. Always pleasure to have you, and all the very best for the business. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no...
A narrow range on expiry is what we are seeing, which is absolutely unusual. Welcome to India Market Close with Sharad Dubey and myself, Hiral Dadia. And this is exactly what Sharad and I were just discussing before the show started, that the kind of range that we are seeing right now, somewhere in that range of 140, 170 points on intraday levels. And this is on a day when we have an expiry going on. But we did go to that 26,000 mark in intraday trade, have come back below that. 25,970 is what you're tracking on Nifty 50 as well. And you're seeing further cuts coming in on Bank Nifty, which is down nearly 0.4% to almost 0.5% in trade. So the deal when it comes to the financials is something which is hurting the street in today's session. Let's quickly look at what the VIX and the advanced decline ratio is indicating since morning to now, because there was pressure. If you see India VIX as well, pretty stable. We've seen that range of between 10.58 to 11.27, so no major, gyrations coming in on that front. Let's quickly look at what's happening in terms of the advanced decline ratio as we speak right now, because that'll tell you what the breadth looks like. Very interesting, I think, There has been convergence that happened when we started off the trade, widened again for some part of the trading day. You've seen that convergence happen yet again, and now you've seen the mouth opening further down. Almost 1,400 declines coming to versus 980 advances. So the breadth is in favor of the bears as we speak. Let's look at Nifty 50 components and see what's happening on that front, and then we'll look at the broader markets as well. Clearly, it's the IT segment which continues to see the gains, and basically it's the tailwinds from the rupee depreciation that are coming in favor of all these names. SBI Life, which is interesting, it was one of the top losers when we started off the trading day. Now it is in one of the top 3 gainers. Adani Enterprises, ONGC, Bajaj Auto, HUL, BEL, one of the defense majors coming in on the top gainers list as well. But Interglobe Aviation continues to trade under pressure. Some recovery has come in, but 2% downtick on the back of the disruption that we're seeing in terms of flights. Maruti, Kotak, Eternal. Eternal is very interesting because there's a Daulat Capital note which says sell Eternal and buy a Paytm. So interesting note coming in there. We will give you more details. Dr. Reddy's, SBI, a few of the other top losers, but the breath over here has somewhere turned in favor of the greens when you talk about the large cap names. Let's look at the sectors and then we'll look at the broader markets as well. In terms of individual sectors, IT, real estate, defense is seeing a pickup right now. And again, this is on the back of Russia, India, Modi-Putin meet that is expected to happen. Putin will be coming to India, I would beg your pardon, by 6:30. But apart from that, media, durables, Bank Nifty, and the private banking space continues to drool under pressure. Let's look at the broader markets as well, and then we look at NSE 500 components. Mid-cap 150 again at the day's lowest level, so there is pressure building up there. And if you have to look at the small cap 250 as well, after that surgence for a short amount of time in the green, it's majorly traded in the red and again at near the day's lowest levels with cuts of 0.3% coming in there. If you look at BSE 500 components, India Cements, interesting one, 7% up move coming in there. Hind Copper, again, that's moving on the way. Metal prices are panning out. Petronet, LNG as well on the back of the JV. Strong moves there. Delta Corp, L&T Tech, Bikaji Foods is very strong. Coforge also, in fact, a lot of bets coming in when you talk about mid-cap IT versus large-cap IT right now. And that's where the action is. Hitachi Energy losing out, and along with the Hitachi Energy, you have Keynes Energy, which is also under pressure. Suzlon, RBL Bank, a few of the other losers. So a whole host of names which are buzzing, Sharad. But I think few factors we need to watch out for taking expiry into consideration today.
Expiry, RBI, MPC, and even Modi, PM Modi and Putin's meet as well. Largely macro factors are something which is driving the markets. But Nifty is still stuck in the lower range of 25,950, 26,050. So largely trades are not being made. 20-day EMA are the key levels for both Nifty and Nifty Bank. Nifty PCR is also stable. It's at almost 0.7, 0.8 times. So there's no clear trend coming out, whether it's bullish sentiment or a bearish sentiment. And during these times, what happens is even the VIX is on the lower side, then option strategies become tentatively useless. But apart from that, the Sensex expiry is also at play, and the rupee is trying to find some strong congestion at the 90-odd levels. If you could just show the rupee, there is a significant improvement coming in. If you look at the day-to-day basis price, but overall still the sentiment is on the negative side.
It hit a low of 90.4041 and the
conversation was 91.
Exactly. So I mean, this is interesting. But a lot of people are talking about a pullback as well from levels of 90-91. So it's going to be interesting.
So a lot of short people will get a squeeze, and that's what's happening right now in the counters. That's why you're seeing the dollar. Small caps are not continuing the performance, and last 3 sessions, Hiral pointed out also that they're losing the steam. The value buying is out. IT stocks are gaining for the second straight day. RBI MPC meet is also there. Interest rate sensitive stocks would be important. 25 bips rate cut is expected, but we never know. With a very high the dollar coming up, might be that there might be a very small chance that there might not be any rate cut also. But European markets, they are still opening positive if you look at it, and that's of course on the news flow coming in that the RBI, the FMC meeting, we are expecting that there will be almost 92% chance of rate cut as there more data comes out, which is suggesting a very weak labor market as well. But lots of pushes and pulls are happening here, and there is of course confusion which side the market will go on, and the closing will be very important. To decode this confusion, we are having our tech and fundamental guest Kush Bora from kushbora.com and Aditya Shah from Hercules Advisors. A very good afternoon to you, gentlemen. Kush, the first question is, which side are we actually on? Because right now divergence is going across. A couple of macro events will be coming in the next 2 odd days. Of course, the setup on a medium-term basis is fine. But if you had to take some positions or bets, will it be today or will it be less?
Hey, hi, Sharad. First of all, very good afternoon to you and to all the viewers. I'm on the side of optimism. Does not mean that you go out and buy just right away. But let me give you a couple of data points, just to support that idea. If you look at the index, yesterday's support and today's support both have come around the 20-day moving average. I think you also briefly alluded to that. After 4 sessions, today Nifty's made a higher high, higher low formation on the daily setup. which is an indication that yes, perhaps from a near-term perspective, at least the bottom looks to be in place. Again, it could be a little too soon, but that's the first indicator. PCR also close to 0.85. So even if the index slips a little, there will be that support coming in. 26,000 call and put, both of them have had a very strong base, and the premium comes roughly to about 200 odd rupees. So the range, from that calculation also comes at 25,800, 26,200. And those are the technical levels also that tie in beautifully. So yes, we've seen a sharp bit of, a profit taking on the index, Nifty in particular. And, we've seen some selling pressure on from the higher side today as well. But as long as this 25,800, 850 support zone is intact, and till the time the 20-day moving average is respected, I think the bias will continue to remain positive. We remain in that upward sloping channel, and that trend could continue. I think the market is just waiting for a positive trigger to go out and conquer that 26,300 and then 26,500 levels once again, at least the 26,300 once again.
Okay, so interesting levels to watch out for. Trend remains positive. Kush, your top picks in this kind of a market?
I'm still going with both longs here, and the two sectors that are doing well. So it's from the IT and the pharma space. From the IT space, it's the big boy TCS. Very interesting move on this one, in the sense that there was a mild resistance around the 3,200 mark for the last few sessions. That's been taken out. Very healthy volumes yesterday. Today also, volumes are very, very encouraging. So yes, from a near-term perspective, 3260, 3340 are your targets. 3150 is where you place that stop loss. Pharma pack has also started to revive. We did discuss Natco Pharma yesterday. That stock's been doing well, but today it's Ajanta Pharma. After about 3 to 4 months time frame, the stock's now convincingly above the 200-day moving average. Volumes also on the upside. Relative outperformance, relative strength very clearly apparent. So 2665, 2730 are your targets on the upside. 2535 is where you keep that stop loss. So TCS and Ajanta Pharma.
TCS and Ajanta Pharma are the picks coming in from Kosha. But on to our stock of the day segment, we are having Petronet LNG. The stock is up in trade today on a back of an ONGC signing a 15-year ethane handling deal, and that's worth 5,000 crore rupees. Somit is here to tell us more. Somit, this is a very big deal coming in for Petronet LNG.
Yes, definitely a positive deal coming in for the company, and what they will be exactly doing here is that they will be managing the ethane supplies. They will be handling the ethane supplies for ONGC. So that's what Petronet's deal is, and this Petronet is expecting this project to start contributing in terms of revenues of around 5,000 crore rupees over the 15-year period starting FY29. So it's a long-term contract that has been signed. Now, what is the impact of this on Petronet? Now, what Petronet here means for them is that they will continue charging 78 rupees per MMBTU, and they will have a provision to increase these charges by at least 5% every year going forward. And over these contracts, the company could generate margins of 50% plus. The company has not confirmed this, but analysts are quite sure that the company could generate margins of more than 50% on this project. And this 5,000 crore revenue, which will be spread over a 15-year period starting FY29, the current value or the current DCF value of this stands at close to 2,200 crore rupees. So this 2,200 crore is nearly 6% or 5.5% of Petronet's market capitalization, and that is the biggest reason why we are seeing this 4.5% move in the counter, because this project or this order adds nearly 5.5% of the company's overall value, and that's the reason it's 4.5% move that we are seeing in the counter. Brokerages continue to remain quite bullish on Petronet. Nomura has come out with this note where they have maintained their buy rating on the counter with a target price of 360. They say that they are viewing this announcement as a positive development for the stock, and they expect that the remaining 50% capacity of the counter may also be booked anytime soon going forward, and the Petronet continues to remain one of the top picks in the oil and gas space. Similarly, UBS also has maintained a buy rating with a target price of 340. They are saying that this order win improves the visibility of revenue growth for the company going forward, and they also believe that this will elevate investor concerns around Petronet's project execution going forward.
Okay, interesting take coming in when it comes to Petronet LNG as well. And as Somit was mentioning, almost 2,200 crores is what could be added to Petronet's current value, representing almost 5.5% of its market cap, and that's the reason why you're seeing such a strong surge on this counter. Aditya, let me come to you on this one. With regards to Petronet, What do you make of the ONGC pact where they will be executing this 15-year binding term sheet for ethane unloading, storage as well as handling? What is your call on the stock as well?
So from my perspective, I'm positive on Petronet LNG. We've seen a lot of problems in Petronet LNG with respect to the USD in 2018, 19, 20. That has eased off. The stock continues to remain cheap, and gas is a theme of the future as we move from conventional fuels to gas. Petronet LNG is the one who's going to benefit. The dividend yield on the stock also continues to be really very good. So from my perspective, on the oil and gas space, Petronet LNG continues to be the top pick together with GATE.
All right, as the street is awaiting the result of RBI MPC meet, NDTV Profit gets a lowdown on what the analysts are penciling in from the last policy meet of the year. Vishwanath Iyer is here with more details. Vishwanath, take it away.
So in the midst of all of this news flow around the rupee, growth, inflation, finally, you're having the Reserve Bank of India Governor Sanjay Malhotra coming out and laying out the MPC or the Monetary Policy Committee's plan for December. Now, there is a wide expectation that there is going to be a rate cut by the Reserve Bank of India and the MPC. The MPC might bring down the repo rate by 25 basis points. Of a poll of 36 economists, 24 believe that there's going to be a 25 basis point cut. About 11, however, believe that there's going to be no cut. And just one economist out there believes that there's going to be a 50 basis point cut. What are some of the factors that the RBI and the MPC will consider before announcing their decision to cut rates or hold rates? Now, the expectations are that they will look at the Q2 GDP numbers because those are the most recent set of numbers that have come in. GDP for Q2 of this financial year came in at 8.2%. That was a massive jump from what was widely being expected to be an okay quarter. But then at 8.2% really surprised most people out of the blue. For the first half of this financial year, that growth number, GDP growth number, is about 8%. The next factor that to be considered is, of course, CPI inflation. There, as of October, CPI was at about 0.25%. That's a monthly reading for CPI inflation. That's coming in much below the expectation of the RBI and most market participants. In fact, now, most economists believe that the future readings, which is November, December, and January, you might see some readings coming in the negative territory. And that might be a problem as well that the RBI will have to address, because if there is low inflation, ideally an inflation targeting central bank should be cutting rates. But alongside that, you've also got a high growth base for India, and that will limit the RBI's ability and the MPC's ability to go out and cut rates. So we'll watch out for how they weigh these factors against each other. The other factor that will play a crucial role is, of course, where the rupee is. At 90 rupees or close to about 90 rupees against a dollar, rupee is at an extremely weak level, with what traders believe is highly oversold and highly undervalued. So the RBI has to also take that into consideration, because any rate cut decision will have an impact on future weakness of the rupee. Currently, everybody's watching out for the US trade deal to come in as the next piece of next trigger for the rupee to start appreciating. But before that, you might see more weakness, especially if the RBI cuts rates. What you will also watch out for is the RBI's commentary around growth and inflation, whether the RBI's estimates of growth and inflation for this financial year change at all. Remember that they are on the lower end of the expectation on growth and on the higher end of the expectation on inflation. On both those counts, the RBI's estimates are very widely different than what the actual numbers are. So we'll have to see whether the RBI goes ahead and fixes those numbers. The RBI governor in a recent interview has said that there is room for cutting the repo rate. This is something that he mentioned in the October policy as well. However, the timing and the quantum of that rate cut is something that the RBI and the MPC will decide over the course of time. We'll wait and watch whether that commentary and communication to the market changes at all at the RBI.
Okay, thanks, Vishy, for that. It's going to be very interesting because the dynamics in terms of for the RBI have completely changed with what's happening when you talk about the GDP, when you talk about IIP, the GST collections, the fiscal deficit number that has come in, and in turn, the rupee, the way that's panning out, because that somewhere sets an imbalance when it comes to your crude and gold bills as well. But to discuss this further, let's get in Gaura Sen Gupta, Chief Economist at IDFC First Bank. Gaura, good afternoon and welcome to the show. Hiral on this side. My question to you is, you know, I know you have been slightly cautious when it comes to what the RBI is going to do, but from the last couple of days with the way the rupee has been panning out, does anything change according to you for the RBI to make their decision?
No, we have maintained status quo. So we had a status quo call. It's definitely a close call. The governor did indicate that there is space to ease rates. But the reason why we are still maintaining a pause call for the December policy is because from the growth perspective, Q2 GDP at 8.2, more importantly, high frequency indicators, whatever limited that we do have, is showing that the recovery is holding up even in the post festival season. So there is some moderation in pace, which was expected because I think the October quarter got the support of the GST cut. So there was a postponing of consumption there. But we are still seeing post the festival season, there is a sort of a pickup that has held up. Urban consumption is showing good signs. Rural has become broad-based in Q2 itself. So the need for a cut is much lower. The reason why it stays a close call is because of the fact that inflation, as per us, inflation is averaging at around 2% for the quarter. For the year FY26, the target for the monetary policy is 4%, and even next year, our inflation is tracking at 3.9. So it's comfortable from an inflation perspective. But the reason why we wouldn't advocate for a cut in December is because the space is, as per us, maximum 1 to 2 more cuts, 1 to 2 cuts maximum. So given the volatile situation, you will want to use that policy space when downside risk to growth materialize. Right now, we still don't have any clarity on the trade deal. The last statements that did come out from, let's say, both the governments, both India as well as US, have been positive. So we are still hopeful that we may get a deal. And so it's better to wait for clarity and then take appropriate policy action. From a growth perspective, there's no urgency for a cut.
Hi Gaura, this is Sharad here. RBI intervention, this seems like it has been benign over the last 2 trade sessions as well, and that's why rupee did get a kind of a belt treatment. Almost that 90 levels is something which the traders are saying is a major congestion zone, despite an improvement in today's charts as well. How do you see that? Will we see this RBI intervention or more commentary coming in tomorrow's meet?
Definitely, if last time it was part of the policy statement where the governor said that they will take appropriate measures for the currency. If it's not part of the policy statement, definitely a question will get asked in the post-policy press conference. So definitely we do expect some indication from RBI regarding FX management, some statement. There could be also some measures that the RBI announces to ensure that the flow of dollars into the economy improves. Right now, the major challenge, that is the reason why we are having depreciation pressure, is because the capital flows have really slowed down. It's not a trade, it's not a current account issue. Current account deficit, yes, it's widening, but it's still pretty low. For us, the full year current account deficit is tracking at 1.6% of GDP. It's lower than that psychological 2.5% of GDP. It's the capital account, the slowdown FDI, not FDI, sorry, the slowdown in FPI, the debt capital inflows, etc., which is the real issue for the INR. So some measures to boost dollar flows into the market, or some indication from RBI regarding currency management is expected. We are also looking for some guidance on liquidity, especially domestic liquidity, whether the RBI gives us any hints of a potential liquidity infusion, which we do expect will be needed in Q4 FY26.
Gaurav, my question to you is now, we're talking about a status quo is what your expectation is. But when you talk about the RBI's policy stance, what is the likelihood of the RBI changing its policy stance from neutral in the coming months, and what are the indicators that are most important for this kind of a decision, number one? And two, how is the RBI balancing the need for credit growth in the economy with the potential risks associated with prolonged high interest rates?
So the change in stance is not expected. We expect the stance to be neutral. The reason being we are towards the end of the rate cutting cycle. If they change the stance to, let's say, accommodative, that means that you have a deeper rate cutting cycle. As per us, they have space of maybe one cut or maximum two cuts. So we are towards the end of the rate cutting cycle, and a neutral stance doesn't prevent a rate cut. So from a stance perspective, we would assign a very low probability. But what could change that is, let's say, if there is some pronounced downside risk to growth, then only will the rate cut cycle be deeper. Right now, from an inflation perspective, though there is space, if you look at inflation, it does go up. So FY27 inflation is coming close to 4%. For us, we are at 3.9. From a interest rate perspective, the cost as the cost of the credit or the interest rate, for example, the policy rate, monetary policy is accommodative for us. In terms of, the cost of credit is not the reason, is not holding off credit offtake. Bank credit since the August onwards has actually picked up, currently tracking at 11.5%.
Thanks a lot, Gaurav, for that. You're giving us an entire 360-degree view on the economics and the expectations what we will have from the RBI MPC. But there's a very strong domestic voice, which was Gaurav, but we have an international voice also. CLS's Lorenco Banco says the rupee's recent weakness looks close to maturing, with a reversal likely if it dips below 90. Listen in.
The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
And that's exactly what is happening. You are seeing some bit of a reversal that's coming in from levels of around 90.40. How sustainable is it going to be is what we have to see. But let's shift focus, the impact of this rupee depreciation on Indian IT, because that is what is probably boosting margins of tech companies as well. And that's the reason why you're seeing these kind of gains that is coming in terms of Indian IT companies. Let's just pull up the IT index and see what's happening on that front. And then we look at the components, because TCS was a call that Shrikant Chauhan had given this morning, and it was one of the top gainers. There you go. Gains in that range of almost 1.5 to 3.5%. All components of Nifty IT index also trading in the positive. Now, let me come to you on this one, Kush. Again, I'm talking to you about IT. There is a tailwind in the form of a rupee. Is this now still convincing you?
Convinced or not, the momentum speaks for itself, right? So there's no denying the momentum. It does come up to the resistance of the 39,000, 40,000 zone, which is the previous swing high, that it made in June. So yes, there could be some profit taking, some resistance coming in, but even that is some distance away. In fact, if you look at the texture of our calls as well, yesterday it was, LTI Mindtree, today TCS, a few sessions ago it was Signity Technologies. So it's already starting to, show up in the calls and the selection that we are making. So momentum is for sure there. Will it last or not? The time will tell. But I think if you have to play momentum and if you have to take trading bets, you have to stay with strength. And IT is definitely showing that right now.
Okay, so that's the view on from a technical side. Aditya, how are you looking at IT? I mean, with the way it's panned out in 2025, the tailwinds coming in the form of rupee depreciation, would you be a buyer of Indian IT companies? And within that basket, how would you club in, or how would you select between your large cap versus your mid cap ITs? Because the bullishness is very much evident in the mid cap IT companies and the small cap IT companies, not that much in the large cap IT companies when you talk to a couple of analysts.
So from my perspective, I am positive on the IT pack already for the last 6 months. I believe a lot of problems of the IT sector will get solved over a period of time, and these companies will continue to do well. Within this space, I have a bias towards the large cap IT space. The mid cap IT space continues to be really very expensive. So within the large cap IT space, HCL Tech and TCS continue to be my topics. Within the mid cap IT space, an NLT Infotech Mindtree or KPIT or NND Technology Services, those companies continue to be my topics. Mind you, if you are a long-term investor, only then you should invest in these companies. If you are a short-term investor, IT could give you some bit of more pain before which it could start to stabilize.
Okay, so those are picks coming in from Aditya Shah in terms of IT. Thank you, Aditya, so much for joining us on the show and sharing your views. And both the space, pieces that we've spoken about, Petronet LNG and Nifty IT, where Aditya Shah is absolutely positive on as well. But we'll quickly slip into a short break. Lots more lined up on the other side on NDTV Profit. Please stay tuned.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स जो टीम है, उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
बुझो जरा भी प्यास जिसके हम ना हो जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course.
Welcome and welcome back. You're watching India Market Close. My name is Alex Matthew. With me is Sharad Dubey and Hiral Dadia. Of course, they've been here for the last half an hour. Guys, you know, when you're in an aircraft, and since the conversation today and yesterday has been about aviation, you
Not being in the aircraft.
Not
the
yet, but
conversation
in the
is
airport.
being outside the aircraft.
Okay, bear with me. Since we're talking about aviation, you know how in the aircraft they ask you to fasten your seatbelts when there's turbulence, and still when you hit that air pocket, there's a lot of up and down? Well, that's exactly what's happening with the benchmark today.
Absolutely.
It's choppy.
It's absolutely choppy. The range on the day of expiry is also something which is very narrow. And I'm sure Sharad has something to add to it.
Well, I spent 8 hours in the airport as well.
You didn't get on the flight, so you didn't experience the turbulence. But let's take a look at the chart for the Nifty 50, and you'll see what I mean. Because there's been so much chop and churn from that low point to the high point, back again to below the mark. And now we're trading with just about gains of 0.1%. And let's see if the market breadth reflects that. And you will see this in the advanced decline ratio when you pull it on the screen, because this is more or less the trend across the market. You started off with the declines in the driving seat, and then it was eclipsed by the advances. Once again, you're seeing a gap between the advances and declines, but declines ruling the roost heading into the end of trade. And this now just about 50 minutes odd of thereabouts for the end of trade. But let's talk about aviation, and let's talk about Interglobe Aviation, because the latest is that Indigo is clarifying that it has not been under probe by the Director General of Civil Aviation, despite the fact that there are news reports. We've brought you updates as well, saying the Ministry of Civil Aviation is called for a meeting between the regulator and the airline to resolve these delays that have been taking place. Let's go to Danish to find out what the latest is from the DGCA headquarters. Danish, what can you tell us about what's happening right now?
Well, the Indigo officials have reached the DGCA office just a while back, and what sources are telling us right now is the fact that the meeting has begun, and Indigo was summoned by the DGCA yesterday. So within 24 hours, we are seeing a lot of regulatory action that has happened, and in accordance to the summon, Indigo has come to the DGCA office, and over here they will be providing the mitigation plan, that how do they really plan to ensure that going forward, post 48 hours, how they are planning to stabilize their operations because yesterday after Indigo informed everyone that the flight cancellations are also because of the new FDTL norms, and the new FDTL norms, the second phase of that kicked in just a few weeks back, and after that we are seeing a spate of cancellations and delays by Indigo. The pilot organizations like the ALPA and FIP, they are clearly alleging that this is just an arm twisting tactic by Indigo. They are not following what the government asked them to follow. They have raised many questions that if they knew that they don't have adequate number of pilots, then why did they apply for so many slots in the winter season? And similarly, they have raised a lot of questions on the DGCA, on Indigo, that how come all of this is happening. So both the pilot organizations are requesting highest level of intervention in this fact, and they feel that Indigo should be fined in some way or the other, because ultimately the normal passenger like you and I, they are at the loss right now. So as soon as the meeting ends, we'll update. But all if we see a tight scrutiny by DGCA is happening right now inside the headquarters.
Sure, absolutely. Thanks so much, Danish, for getting us the latest. And of course, we'll come back to you to find out what the outcome of that meeting is. And remember, the airline is saying that it is going to compensate, as the case may be, in the event of cancellation. But of course, airports are also sending out messages to passengers to say, check your tickets on an ongoing basis, or check the status of your flight on an ongoing basis to find out whether there's a delay or a cancellation. Meanwhile, what is the implication for Indigo and Interglobe Aviation? Here's a Profit Intelligence to talk about the financial impact of these cancellations, etc., that could well go on for the next week or so. Somit, who tracks the space very, very closely, is joining in to tell you about that. Somit, impact on the financials, specifically on the bottom line?
Indigo has been in focus for the last couple of days, and this is largely because of the flight cancellations that have been announced by the company. So we have tried to gauge what could be the actual financial impact on Indigo, given the fact that there has been a lot of hue and cry about these flight cancellations. Firstly, just to give an idea, over 350 flights have been cancelled over the last 2 days, and on an average, Indigo operates nearly 2200 to 2300 flights on a daily basis. So as a percentage, flight cancellation is just 7 to 8% of the total flights that Indigo operates. Now, what could be the financial loss? So we are assuming that if a company continues to earn what they earned in the third quarter of FY25, and if the company continues to incur the cost what they did in third quarter of FY25, that is last year, then in third quarter of FY25, the company earned a revenue per unit of 5.44 rupees, and the cost that it incurred per unit cost was close to 4.83 rupees. Now, out of this total cost of 4.83 rupees, fixed cost is 40%, 60% is variable. And whenever a flight is cancelled by an airline, they actually save on the variable cost and they incur just fixed cost. So fixed cost stands at around 1.93 rupees per unit, and the variable cost stands at around 2.9 rupees per unit. So Indigo, if you look at, has on an average around 190 seats, and the average kilometer that an airline aircraft flies is close to 1000 kilometers. So if you try to gauge the notional revenue loss that the company might incur on cancellation of each flight, that is 5.44 rupees that it earned as a revenue last year, multiplied by 1.9 lakh crore. 1.9 lakh crore is derived by multiplying 190 seats with 1000 kilometers. Then the notional revenue loss would be around 10.3 lakh rupees for Indigo on cancellation of one flight. But the impact on profitability, in fact, would be much lower, because I explained to you that they only incur fixed cost and not the variable cost. So if you minus the variable cost then from the notional revenue, then the cost that they actually see on the profitability would be just 2.5 rupees on a unit basis. And if you multiply 2.5 to 1.9 lakh, then the actual loss for Indigo on cancellation of one flight would be just 4.8 lakh rupees. Now they have cancelled 350 flights, so 350 into 4.8, the total cost for them so far would be around 17 odd crore, or the total loss for them so far would be around 17 crore. Now to put this number into perspective, in the third quarter of FY25, the company had a profit of 2,450 odd rupees, and 16.9 crore is the loss that the company will incur because of the 350 flight cancellations so far. So that is just 0.7% of the total profit that the company had earned last year. So obviously, this is not going to have much of a big impact on the financials of Indigo in the third quarter of FY26 as well.
Okay, this is interesting in terms of calculation, Soumit. Thank you so much for getting us this number. And to be noted, we're talking about around 350 odd flights. You can multiply the same number because we spoke about the month of November where the number of cancellations is about 1,200 odd flights. And to add to that, the December woes do continue. Let me get in Samir Dalal from Natwar Lal and Sons as well. Samir, welcome to the show. Always a pleasure to speak to you on NDTV Profit. My question coming to you is, I'm sure you've heard the calculation that Soumit was getting us through in terms of the impact that Interglobe Aviation would see. How would you look at Interglobe Aviation? Because we're just talking about a 0.7% kind of a profitability impact right now with 350 flights. You multiply that, yes, it could be a little higher. And on top of that, you have a SpiceJet, which has an analyst meeting today. So there could be some information that could be coming in from there as well. Your view in terms of aviation and specifically Indigo?
Okay, so as I've always stated, I'm not a very big fan of the aviation sector. Having said that, Indigo is probably the best airline and the only airline in India that is investable at this point of time, given the fact its scale, size. It's going to be difficult for competition to come about, and they command some amount of premium. But I mean, I disagree with the calculations and the point that was made that, the profitability impact will be lower because every flight that does not fly is added cost without revenue. So in fact, it has a double negative impact on the total profits. So I wouldn't look at it that the variable cost is not there, but the revenue has completely been wiped out. So the cost has to be split now amongst the lower number of flights that they've got. So it would affect their profitability. So hopefully the cancellations stop. Again, not a big fan of airline industry, so I have not invested either in SpiceJet or Indigo.
Fair point. Let me go across to Kush just to find out whether there's a case to sell based on the technical levels, right? Because the stock is down about 3% intraday. What are the key levels that you're monitoring, Kush?
Hey, hi, Alex. No, the stock has nosedived. I mean, it's been a turbulent descent. So I wouldn't go short just yet because it's approaching the oversold territories. And, the immediate support for this one is at 5,400. But if that is broken, then the next level of support is at 5,200. So let's see where the stock lands. But as I said, with the kind of fall that it's already seen, supports might just kick in. And, you might see some sideways consolidation. So don't short, but don't go long either. There aren't enough signs to suggest that, there's this sharp dip of 4 days is making a strong case for buying. So I would wait and watch on this one.
All right, thank you very much, Kush, for that. And of course, be careful also if you're booking your tickets in the next 2 to 3 days. But let's go into our bulls and bears segment. And cement space has caught my interest. And interestingly, the trends are slowly coming up of this sector. For the last 2 to 3 odd years, this sector had consolidation. But now some green shoots are also coming up. So first of all, let's see the bull case scenario for the cement sector. Pricing is expected to improve in the fourth quarter, and that's where the better demand is also lying. There has been a suppressed demand in the last 2 odd quarters as well. But the price which was there in the month of November, that was lower side on 0.5 odd %. That means the demand has still not picked up on a current level basis. Also, another bull case scenario is that a lot of signs of private capex pickup is started to come in. L&T, HDFC Bank, all have started talking about it. And when this happens, cement also has a lag effect on that. The bear case, near-term pricing is still an issue because there's a cap put on the GST rollout, and slowly these cost reduction benefits are coming on the price impact as well. The third bull case is that correction has made the risk reward favorable in a lot of counters in the cement space if you look at the EV EBITDA multiples, while the bear case scenario is that the imported petcoke prices, they have a higher impact on the dollar. The dollar is right now near its record high levels as well. Amongst the brokerages also, the views are very different. Jeffrey's view is that they are remaining constructive on a 12-month basis, and interestingly, BOFA's view is that they are staying under view about this. Also, let's look at the most target price potential on the next 12 odd months, and that is JSW Cement. That's a 38% return potential coming with a target price of 150 rupees per share. While bear case, we can say it's not negative, it's flat. That is Ramco Cement because there was a rally in this stock and a flat return potential coming in. So JSW Cement is something which the street is looking out for with the highest bullish kind of return potential in the next 12 odd months. So these are the divergent trends coming in the cement space.
Thanks so much, Sharad, for laying that out. Samir, if you were to talk about some of the metrics that you are tracking, the latest updates, of course, is that the pricing trends are not the best. After a couple of quarters where you saw the improvement in pricing that led to that better than expected margin performance for these cement companies, it seems to be easing out just a tad bit. And so from that perspective, if you were to look at the EBITDA per ton metric and say you would pick from the lot to say which has the best, which would it be?
Us, EBITDA per ton has been Shree Cement historically, and that doesn't change. I mean, but look, we discuss about the fact that cement pricing pressure has been there, but the cement industry has been working. And if you look at the last 5 years, 70% utilization consistently, and even in the face of this low utilization rate, they have managed to remain profitable and keep prices firm when and as needed. So I do believe that that trend will probably continue. You see, what's happened is the industry has become very concentrated, where the top 5 to 6 players control over 50% of the market, 55-60% of the market. So when that is the case, you definitely have some amount of pricing power. And we do also believe that the infrastructure push, which is your real estate, which is your roads, plots, bridges, the works, is going to continue to see a lot of investment over the next many years, because that is the need of the hour for India. So is cement going to keep growing? Yes, it is. Is profitability going to remain there? Yes, it is. Valuations are a little bit on the higher side, but these valuations can sustain if utilizations move up to 85-90%. The only problem with that is constant capacity addition by players, which is not allowing the utilization rates to go up. But we do believe that they will remain profitable. So we are on the bull side for cement. Just we feel that for the time being, it may be a sideways movement before the run-up, because capacities that are new ones that are coming will also need to be absorbed quite better before the run-up starts.
Understood. Okay, and that's a fair point. All right, I want to draw your attention to IT, just to pull up a few of these counters that are now quite significantly off the high point of the day. And by the way, that's a lovely metric, right? Because it tells you about the USD INR move as well as the move in the IT space. But pull up these charts if you can. Persistent Systems, HCL Tech, Tech Mahindra, Emphasis, Coforge, Wipro, and then TCS. These are all off about 1% or so from the high point of the day. And so the question is, Kush, would you take money off the table if you have the charts?
Well, Alex, not really. The reason being that, the run-ups actually just started, and, it's now starting to perhaps look a little sustainable. And if you look at the sector rotation graphs as well, this is the one that will perhaps stand out, for some time to come. This, along with perhaps metals, will, start to stand out, because see what's happened with the banking pack, right? The private banks were already under pressure, consolidating, and now they're starting to see some cut. PSU banks had something going for them. The announcements that came yesterday have sort of dampened the spirit. So where does the big money go? I mean, ideally it'll go in the IT space only. Yes, some profit taking is visible, but nothing to be worried about. The larger trend, or at least the medium-term trend, does seem intact. I would actually hold positions in Persistent, Emphasis, TCS for that matter, with trailing stop losses rather than book profits at the current level.
So Kush has stated to hold the positions if you are having in these IT names. Alex had pointed this out. But now let's move on. My colleague Sumit Sarkar joins in with all the chatter from the dealing room. Sumit, which are the stocks in focus today?
Right. The first stock that remains in focus today is Biocon. Now the stock is down owing to two reasons. Firstly, the street is disappointed because in the notice that had come out on the exchanges, the company is also talking about considering QIP, and the second reason was long unwinding, because previous 2 days we had seen a sharp up move in the stock price. So some profit booking has also led to this downfall in the share prices. But what dealers are now indicating is that the company could potentially consider a share swap to merge Biologics, a subsidiary, into Biocon, and the merger ratio could well be in favor of Biocon is what dealers have indicated. When it comes to Shriram Finance, mutual funds are a seller in trade today. In fact, dealers have indicated that two prominent mutual funds who own a sizable stake in the company have been selling their shares in trade today. For Birlasoft, there are strong buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter in trade today. And when it comes to SRF, multiple dealing rooms are recommending positional buy calls to their clients for this counter. There are two triggers that dealers have highlighted. The first one is that there is a sharp pickup in volumes that they're expecting to happen in the second half, and the second one is the ref gas, which is one of the key products for the company. The prices for the same have continued to remain quite stable. And the last stock on the list is Hitachi Energy. That stock is down around 7% in trade. It was down 4% yesterday. It's one of the top F&O losers in trade today, and dealers are indicating that a potential order loss is one of the major reasons why the counter is down in trade. In fact, dealers have clearly indicated that the order win that could have come in for Hitachi Energy has now gone to GE Vernova, and hence we are seeing this kind of a downtick when it comes to Hitachi Energy. Over the last couple of days, it has fallen more than 10% in trade.
Thank you very much, Somit, for that. Kush, let's just mark Hitachi Energy. The stock has taken pressure the last two-hour trading session, down almost 10% if you show it. Kush, further room for downtick coming in this category because of a potential order loss?
There could be, but if I just put things in context, I mean, the stock did have a good run-up as well, starting late October. So the last two sessions that you are seeing, yes, could be, is in all likelihood because of the news of the order loss. But I think the stock could perhaps find support at the 19,750 mark. So my suggestion would be, if you have a position, you should continue holding on to this one. If it does go sideways around the 19,750 mark, you could see some consolidation and then perhaps the next leg of up move coming on. So I wouldn't be too worried if the support zones are held. Yes, it's a sharp round of profit booking, but the support zones are close by.
Samir, quick view on this one. Hitachi Energy ended the quarter September with an order book of 29,400 crore rupees odd, and assuming that there is some loss on account of an order loss, it's still got a substantial order backlog. Would you be a buyer at these levels, or would you wait?
I think I would wait. I find, again, valuations extremely expensive. Yes, orders are there. Yes, execution will happen. But for something like this, you pay a fair price. And for me, valuations are a bit rich.
So that's with Hitachi Energy. Very quickly, in terms of the EMS sector as well, from a Keynes Technologies to our Amber Enterprises, PJ Electroplast, that entire space has been under pressure. Keynes itself is down little over 6% in trade. PG, again, it did hit a day's high, but trading in the positive. Let's look at Amber Enterprises as well. Again, at the day's lowest levels. In fact, Amber and Keynes, a very similar chart. If you see on the screens, in fact, Kotak Securities has flagged key areas of focus in today's session as well when it comes to Keynes 2025 annual report. Let me head across to my colleague Puneet to tell us more. Puneet, what are you picking up in terms of the annual report? I know, we've spoken to the management earlier as well. A lot of commentary that's coming in from there is something that the management has already spoken to us about. But the stock at the day's low is telling you something.
Well, most certainly, and there has also been some selling which we've seen over the last, last month or so. Very famously, Motilal Oswal came out and sold their stake in the mutual fund business, of course, of theirs in Keynes Tech, and since then it has been on a downtrend. But overall, what Kotak is highlighting is, of course, based on 2025 annual report, and as you rightly said, a lot of those issues have been starting to work on from Q1 of FY26. But they have mentioned that significant revenue as well as profit contribution from the smart metering business is a positive. But there's been ambiguous accounting treatment for goodwill of the acquisitions that they've done in the last couple of years, where they've also mentioned a very sharp increase in the intangibles for the technical know-how of these said acquisitions. So that's a concern that they've flagged. They've also flagged that there's been a 22-day increase in the net working capital business, something we spoke to them post Q2 earnings, and they have mentioned that there are a lot of actions that are underway to reduce the net working capital below 100 days. The free cash flow is the other one where they will continue to focus on that. But CAPEX, as they've already announced, for the OSAT business as well as for the PCB business will be high over the next couple of years. So you will start to see a slight pinch on that aspect. But management has reaffirmed post the last two quarterly earnings that a lot of these issues are transitionary, and as and when from January of 2026, when the new ventures start to come in, a lot of the capex will be taken care of by those said entities. So while this report, it does highlight about the challenges faced in 2025 on the basis of net working capital amongst others, these are transitionary issues which have happened in the past, and it's important to look at the management commentary that they mentioned post-quarterly earnings, as you rightly said.
Okay, thank you so much for that. Samir, what would you advise investors to do for these other names like Keynes Technologies, Amber Enterprises, both of them drooling under pressure today?
Yeah, they have been, but then also they had run up quite a bit in the past, right? So what you're seeing is maybe time consolidations. Yes, of course, price consolidation as well, but this was required because all of these stocks had run up significantly. If you pull up a slightly longer term period of 2 years, you'll see the kind of run ups that they've had. So this is okay. We think the industry still got a lot of growth ahead. Amber, Dixon, Keynes will keep doing better as things move forward. You know, AC business has struggled in the recent past because of weather not being conducive, early monsoons, not a very big summer. So, you know, these kind of things are not going to keep repeating. And the penetration, if you look at it also in India, only about 30% or 40% of India has air conditioning. Fridges at 40%. I think washing machines are at 8 or 12%. So the entire EMS space for manufacturing in India has a long way to go. It's just that valuations needed a correction, which is happening, which is fine. I think these are good long-term investments. One needs to see where the value starts emerging and when growth starts to pick up. I think you will see all of these stocks moving back up over a period of time.
Okay. That's an interesting take from a fundamental perspective. If I have to come back to Kush, do you have a similar opinion in terms of charts as well?
Yeah, just a quick point. I mean, this is where all the fundamental analysts, including Samir, will be so happy. And, you know, it's their "we told you so" moment, because all of these had shot up. And I would hear just one thing, that the valuations are far too stretched. Took a while coming, but it's here now. So yes, I mean, you know, that's from, that's my kudos to all the fundamental analysts, as I said, including Samir. The only one that I like in this space is PG Electroplast. It's already had its fair share of drubbing. It's starting to see some sort of an uptick. You know, it's slow and steady, you know, very gradual, but nevertheless an uptick, you know, among the entire space. The rest of the pack, the last 3 weeks, the downturn has been on the back of very serious volumes, including this week. So I wouldn't really go out bottom fishing, but the only one that's showing strength, PG Electroplast, that's the one that you can consider if at all you're really in love, with the entire space.
Regards to EMS as a sector, but let's quickly slip into a short break. On the other side, we'll get to the buy today, sell tomorrow, picks as well from Khushbu Rafi. Stay tuned to NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है, उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning,
Welcome back to India Market Close on NDTV Profit. Now, investors are exploring multiple ways to actually go ahead and hedge against the rupee depreciation. Several options are available. I'm sure all of us are wondering what could those options look like, because this is a slightly tricky situation right now. And Alex has all the answers for all you viewers and investors as to how you can actually hedge against the rupee depreciation when it comes to making your investments. Alex, go for it.
Well, whether it is a trip abroad on a vacation where you're concerned about how much you're spending to buy those dollars that will fund the trip, or it is sending somebody abroad to study for foreign education, you need to watch the value of the rupee against the dollar. So is there a way to protect against the falling rupee? Let's talk about a few options. The first one that you can consider is gold, because India is a price taker. It's an importer of gold, and gold is denominated in dollars. So when you're buying gold, it is fungible, and so essentially, if you're buying an ETF, then the price of that ETF in rupees is adjusting for depreciation on an ongoing basis. If you look back the last 20 years, on an average, the rupee has depreciated about 3% or thereabouts, and the ETF is actually adjusted for that. Now, beyond this, you can also look at investing in a few mutual funds through either mutual fund schemes or ETFs that are India listed. The problem is that the SEBI has an overarching limit for the industry, $7 billion for the mutual fund schemes and a further sublimit of $1 billion for ETFs, and that has been hit, as a result of which these schemes are not issuing new units in the ETF space, and schemes are not investing more money in international assets unless they have the ability to do so when redemption comes through. And the result of that is that there's a huge gap between the traded price of ETFs in India and the net asset value of the fund. I looked at one example, and that's Nippon Hang Seng Bs, and it's trading at a 19% premium to the NAV. So when you're buying it, you're not really paying what you should be paying per unit for this ETF. It's a dangerous thing to do. So what should you consider doing? Well, Gift City is an option for you. There are a few mutual funds that have gone ahead and launched schemes that are outbound for retail investors, but even here, there is a minimum amount that you will have to cough up, and that's $5,000. It's not a small amount of money. And remember, if you put more than 10 lakh rupees in something like this through the LRS route or the liberalized remittance scheme route, you will have to have a tax collected at source of 20%, which you can adjust down the road when you claim your returns. So it's not the most easy route to consider for large sums of money. And finally, through the liberalized remittance scheme, you can also have a foreign account, a trading account that you can have through Indian brokers or through Indian brokers that have foreign partners, and that allows you to buy stocks or ETFs directly. Just bear in mind that the capital gains treatment is different from equity here in India, and it's a 24-month cycle for it to be considered long-term capital gains, after which it will be 12.5% of capital gains. So there are options available for you apart from holding dollar in physical form, which is not really a good idea.
Thank you so much for that, Alex, because this is really informative as well when, you know, investors want to look at multiple other options as well. But also, let's get in Rajesh Palviya from Axis Securities. Rajesh, welcome to the show. A choppy session of trade is what you're looking at. We managed to scale above those 26,000 levels back again in terms of intraday trade today. But again, if you see in terms of what's happening, it's a topsy-turvy ride. It is expiry as well. Range is narrow. What are the levels that you would be tracking and what's the direction you're staring at?
Good afternoon. So the direction is still on the upside as we are able to, defend this 20-day moving average in the previous fall and around 25,900 is a good put base concentration and major put writing is attracted around those levels. So I think till we are holding about 25,900, I think near-term trend is also likely to remain on the bullish side. Though short to medium term structure is improved, and I think we are in uptrend only, and possibly once Nifty crosses about 26,100, I think short covering action could trigger, and then Nifty can scale up further higher to 26,200, 250 zone in near term basis. So buy on dips is the strategy at this juncture. Bank Nifty also took support from its put base concentration of 59,000, 58,800. That's the major support area for the Nifty at this juncture. Until these levels are intact, I think here also one needs to deploy buy on dips kind of strategy, as overall structure for Bank Nifty is also on the bullish side. The sector where we are finding that strength based on the technical parameter like automobile, pharma, IT, banking, NBFC, capital goods, all these spaces are showing sign of strength. Even metal is also showing sign of strength on the short to medium term perspective. So I think here many stocks where we could find opportunity to buy in these kind of market. So one needs to be selected in terms of stock picking as well as on the sectors also. So overall structure is bullish. Buy on dips, one needs to adopt a strategy. 25,900 should be your stop loss. Target is 26,250 for Nifty.
Got it. All right. And closing above 26,000 is something to watch out for on the benchmark Nifty 50. What about individual stocks, Rajesh? What are you looking at?
So first stock where we are focusing is APL Apollo. After a corrective move of last 3 weeks, now stock has shown very strong recovery from its upsloping trend line support area on the weekly chart. Looking at the movement in stock in last couple of days, stock has now able to regain above its near-term moving averages. So we believe that this stock can scale up to the next target of 1815, 1820. On the downside, one needs to keep stop loss towards 1750. And the other stock where we are focusing is Siemens. Siemens managed to give breakout of its falling channel on the weekly chart. And this is the fourth consecutive week where stock is making higher high-low formation. It's a sign of sustained buying action. Stock managed to give breakout of long consolidation on a monthly chart also. So we believe that now Siemens has shown sign of bottoming out, and we could see upward trajectory. So for trading point of view, 3420 we are projecting target. On the downside, 3330 should be keep as a stop loss.
All right. Samir, I'd like to get your view on a couple of these pharmaceutical companies, specifically Biocon. So do stay with us. Let me just set the context or ask Varsha to do so. Biocon is set to consider investment in Biocon Biologics. And the interesting part is how it's going to fund this transaction. Varsha is joining in with the details here. Varsha, they've called a board meeting to do exactly this, right?
Yes, exactly. So the board meeting will be on December 6th, that is Saturday, wherein the decision will be taken. Well, what they're going to do is they're going to invest more in Biocon Biologics, which is the growth lever for the company, and also they're also considering fundraise. And this is, Alex, one of the reasons why the stock is under pressure. Stock is down almost 5% because this is the second fundraise recently which the company has been doing. Now, why more funds are needed? One is, of course, the Biocon Biologics is a very high growth segment, and this segment or this this will need more capital for the company to grow, and company wants stronger balance sheet to chase global biosimilar opportunities. So the aim is to improve debt to EBITDA ratio. Now, talking about the biologics business, why this is a good growth driver, if you see the revenue was up 25%, EBITDA was up 40%, and a company had a good operational performance also. Now, talking about the high debt overhang, if you see, the main pressure point over here is the debt in the books of Biocon, and this is what is hurting investors. If you see, after the Viatris deal, the debt picture for the Biocon jumped from $300 million to $1.5 billion, and the leverage remains very high, and the management needs fresh capital to ease balance sheet stress, and one of the reasons why they're going for the fundraise. Now, why this is concerning investors and why maybe the stock is down 5%, because this is the second fundraise that the company will be doing. They already raised 4,500 crore earlier, and another fundraise means dilution, which investors normally don't like, and this is probably the reason why the stock is under pressure, because going for the fundraise, then again dilution of shareholding pattern will upset investors, and hence the pressure in Biocon.
Right. Thank you so much for that. Samir, a quick view when it comes to Biocon as well as the other pharma majors as well, which have been buzzing in trade. You have a Spark, which has been seeing a good ride. You have, Wockhardt as well on the back of Zenith, which has been pretty much up in trade. Again, tailwinds coming in for a Dr. Reddy's when it comes to semaglutide sale. That's the GLP-1 portfolio. How would you look at these names?
Okay, so first let's talk about Biocon, since that was discussed in detail. The way I look at fundraise, fabulous. You're getting money at 70 times earnings. So if you look at the yield, it's like 1.5%. If I look at the earnings yield versus my borrowing cost, which is probably as high as maybe 8-9%, right? So I'm saving 6.5% straight. I think it's a win-win for everyone, existing shareholders also, that the fundraise happens and they repay some of the debt. Now coming to the business opportunity, still for Biocon is still very large in the biologic space. They've launched a few medicines. They have more in the pipeline which should be launching soon. And as those get on stream, you will see turnover and profitability increasing. So I think Biocon makes a good sense to buy. You just need to see what the pricing of the fresh issue could be. If it's a rights issue at a slightly lower price and you're already a shareholder, buy that. If it's a QIP of some sort, then yeah, you could probably consider buying into the stock, because we are long-term positive. And in the pharma space also, we remain quite positive and constructive. We've been saying it for a while that the US market is huge. The number of drugs that are coming off patent that Indian companies like Dr. Reddy's, like Lupin, Sun Pharma, Torrent, and many more have filed, they will continue to see traction going forward. Their top line and bottom line growth will remain in the 15 to 20% comfortably going forward. And last, Wockhardt, which has got this approval for this new drug, I think that's going to be a game changer for them if it actually launches finally, whenever it does, because they are going to have a protection for that drug for a period of time, which means they'll be able to capture the market share at pricing that is suitable for them. So if that goes through, I think Wockhardt could probably be on a trajectory of its own and probably even cross 2000.
Right, Samira. But let's move on to other stocks also which are buzzing in trade. Websol Energy, Newgen Soft and Mukka Proteins are making headlines today. Varsha joins us with all the list of buzzing stocks. What are the reasons for this, Varsha?
Well, talking about Websol, they came out with a corporate presentation wherein they expect demand for solar cells to rise to around 4 gigawatt by FY27, and the projected demand for solar PV cells in FY26, if you see, is around 20 gigawatt. And for that also, they are increasing their capacity when it comes to cells to 5.2 gigawatt from current 1.2 gigawatt. They are also expanding their capacity when it comes to solar modules, which is to 4.5 gigawatt from 550 megawatt currently. And this expansion is expected to be executed by calendar year 2028, and they're aiming for CAGR capacity growth of around 50% between 2024 to 2028. Next on the list is Newgen Software Tech, wherein they've received 13.9 crore order from Mercedes-Benz Financial Services for loan management system, and the order execution period lies highs around 5 years. Last on the list is Muka Proteins, wherein the stock is buzzing. This is on the back of 474 crore order win from Bengaluru Solid Waste Management for landfill sites, and this order needs to be executed within 4 years.
Thank you very much, Varsha, for that. Rajesh, out of these three stocks, I'm trying to avoid Muka Proteins because of lower volumes in this counter generally. But in case of Websol or the other stock which you discussed, anything looking interesting on the charts?
So Websol was in correction mode, and in last couple of days, some recovery has taken place from its oversold trajectory. But still, until the stock not crosses over 115, 117 zone on a weekly closing basis, trend is still remain on the weaker side. So those who have bought at lower level can try to book some partial profit around 117. That's the immediate hurdle for the stock. But Newgen is showing sign of some bottoming out as stock is now available near to its multiple support zone on the weekly monthly chart. So for Newgen, the important support area is placed at around 870, 880 zone. If it continues to trade above these level, I think some recovery we may see in the near term perspective. Any breakout over 920 could take this stock further higher to 1000 level also.
With regards to a couple of stocks that are in the news. But let's address a couple of other counters or sectors that will be in focus on the Modi-Putin meet that is on the agenda between today and tomorrow. You know, if you have to talk about individual sectors as well, it's mainly defense that will see a good boost that could be coming in there. And that is one of the sectors which is gaining in trade today as well. Let me ask Samir this. Samir, any stocks or sectors that you identify that could be beneficiaries that should be on investors' radars today?
So from the Putin meet, I think the defense sector is one of the spaces that could be something that one can look at, but we need to see what eventually gets signed. Now, I have another worry that comes up. If India and Russia agree on a lot of positive things, where does that leave us with the US trade treaty? Because the 25% import duty is because we are kind of supporting the Russian war. And if we keep buying defense from them and we're doing more trades with them, does that push the can down further for the US trade treaties? So for me, if anything, I would look at is maybe defense, where companies could get technical knowledge, because Russia does deals with India where they do a technology transfer. So India gets that ability to make it themselves in the future. So that is one space that one can look at, but barring which, I mean, I don't see anything major benefiting from investment purpose.
Amir, very quickly on this, right? Because in the recent past, we've been talking about nuclear energy. And if you look at uranium, apologies. If you look at uranium deposits the world over, and anyone that could potentially supply India with enriched uranium for the production of nuclear energy, it is Russia. Would you agree?
Absolutely. I mean, they are one of them. Of course, other countries are also there. But it's not going to be that we are going to get the technology with one visit of his here, or we're going to get the uranium. And if we do start picking up things like that from them, how is the US going to react to that? Because at the end of the day, look, the reason the Indian rupee has fallen also as significantly is because our exports to the US have taken a bit of beating, right? So we want that to resume. So you don't want to be showing overtly friendliness. You want to get your work done and also make sure you keep the other party happy.
Absolutely. Samir, thanks so much for taking the time today. Absolute pleasure speaking with you as always. All right, let's talk about what is at stake here. And of course, Vladimir Putin is set to land in New Delhi later today and hold those key bilateral talks over the course of tomorrow. Of course, today there's only the dinner with the Prime Minister that has been scheduled. But there's lots on the cards. And in fact, at the bottom of your screen, you're seeing the Commerce Minister making statements about the Russia trade with India and the fact that there is quite a big deficit at this point and the fact that it needs to be corrected. We've got Rishabh joining in to tell you about what you should look forward to. Rishabh?
Right, for the larger part of this year, we've been talking a lot about India and the US, but the flavor of the week is Russia. What we're seeing is the fact that, firstly, during this visit by President Putin, the trade deficit between India and Russia, that is something that will be addressed. We've seen that the current trade volume, the bilateral trade volume, is roughly $68 billion and heavily skewed in favor of Russia. Roughly $64 billion of that is what Russia is selling to India. And India is only selling roughly about $4.5 to $5 billion worth of goods and services to Russia. So that is something that is being remedied in this current visit. You had the president also talk about they're looking at expanding imports from India, and those could be in the area of pharmaceuticals, agriculture, processed foods, and many other areas. Apart from that, today itself, you have a bunch of very interesting engagements with Russia. And that is across sectors. Firstly, you have meetings with the Russian atomic energy officials. You have talks of building and commissioning a Russian small modular nuclear reactor. Apart from that, you have Russia's largest bank, Sberbank, also hosting an event today talking about what sort of financial products they can come out with for the Indian market. You have the India-Russia Business Forum, where Commerce Minister Piyush Goyal will be there, alongside the senior ministers from Russia, including the Agriculture Minister, the Digital Development Minister, the Economic Development Minister. So ties being expanded across sectors there. And apart from that, you have a military technical cooperation meeting as well, the Intergovernmental Commission, where you have the defense ministers of both countries talking to each other about how technical cooperation can be expanded. So you have energy, finance, trade, as well as defense, all key sectors in this Russia-India partnership, in this very strategic partnership that has come out. And what we can also foresee is more progress on the FTA. You have a Eurasian Economic Union that Russia is a part of, and India is looking to tie an FTA, a free trade agreement with that cooperation. So progress expected there as well. And a very key.
So I think lots to watch out for. Thank you, Rishabh, for that. And sorry to cut you on this one, running short on time. Very quickly, let me go to Rajesh. Your BTST, STBT calls.
So I think Coforge from mid-cap IT space is looking attractive, and the way stock has managed to give breakout on the near-term chart, we believe that this stock can extend its gain. Possible target towards 2000 to 2020 we could see in the continuation of this up move. So one can buy Coforge with stop loss of 1930.
1930 is what you should be watching out for. Thank you for that, Rajesh. Stay with us. In fact, let me head across to my colleague Jasmeet, who's getting us the trending stocks towards close. Jasmeet, what's trending?
Well, thank you for that. Starting off with Ease My Trip, the stock is tanking in trade today. We see the stock is seeing a cool off, given that the stock had recently hit all-time 20% high in the trade after the recent announcement. So that's something we'll be watching out for. The announcement was with regards to the winter carnival sale, which saw a positive up move for the stock, and the stock is buzzing in trade up almost 2.5% even today. Well, the next stock is Hindustan Copper. Well, the stock is buzzing on the back of increased copper prices. As the copper prices hit all-time high, is something leading to the growth for this particular company. As well as the company recently signed an MOU with NTPC for mining for domestic and global services. That's also something that's supporting the stock going forward. Well, the third one is TCS. As per media sources, OpenAI to partner with TCS with regards to AI infrastructure in India. While OpenAI with the project of Stargate, they want to increase the expansion in India, and TCS being a partner for Hypervault, their recent investment data center is something that will be in focus going forward. Well, lastly, I have Ola Electric. Well, stock hit 52-week high in trade today. The stock has been tanking over a year. It's almost down 52%, and the trading volumes today were at 7 times the 20-day average. Given the guidance of the management, it remains completely strong as the management aims for 1,000 to 1,200 odd crores of top line by FY27. Given that particular outlook, the stock is still tanking in trade. On the other hand, the gigawatt factory, the management commissioned at 2.5 gigawatt is something the management is saying to expand to roughly 5.9 gigawatt by the March of FY26, which will be in focus. On the back of all of this positive guidance, the stock is still tanking.
Thank you very much, Jasmeet, for that. But both the stocks, Ola Electric, that 40 odd levels, that has cracked. It's a very important technical level. A lot of buying was there institutionally. But then let's just show the journey of Ola Electric, how it's expanded out the last 2 to 3 odd months. There was a euphoria. It went up almost to 60, and then the correction happened. And you see, that's the numbers coming in 3 months. It's down 44 odd percent. Rajesh, is there more downtick coming in for Ola Electric going ahead, or is there a kind of a value emerging in these levels?
So overall structure is weak. Series of low top, lower bottom formation. Stock is now at all-time low trajectory. There is no recovery. There is no sign of recovery at this juncture. So I think maybe we could see further more pressure. 32 would be the next target if it continues to trade below 40 level.
Okay, that's with regards to Ola Electric that we are watching out for. In these last couple of minutes of trade, Rajesh, any trade that you're identifying which could be, I know you've given your BTST, but that's something that is just cropping up which you didn't really think of a trade?
So I think some buying action has been there in defense space, and I think Mazgaon Dock and BDL, these two stocks are showing sign of buying interest, and I think BDL from its multiple support area has given a pullback action. So we could see some follow-up buying action in tomorrow's session also. 1580, 1590 would be the next target. On the downside, 1505 needs to keep as a stop loss.
Okay, so Bharat Dynamics and Mazgaon Dock is something that one should be watching out for in trade. One more question I have for you is a Paytm versus Eternal. Different plays altogether, but you did have a brokerage note which said sell Eternal, buy Paytm. Is that what is indicated on the charts as well, Rajesh?
So yeah, if I go with the structure also, Paytm structure is more promising compared to Eternal at this juncture as the stock is holding about 20-day moving average. So yes, one can remain invested in Paytm as overall structure is bullish, and we believe that till stock is trading about 1280, trend is remain on the bullish side. Once the stock crosses over 1370, I think trajectory would be further higher to 1450, 1500 also.
Wider market, we're now looking at Hitachi Energy at 8.2% low at the low point of the day, and Keynes Tech also is losing as much as 6% or thereabouts. Rajesh, if you were to trade Keynes Tech, what are the key levels that you would watch out for?
So I think further more down move can be there in this counter. 4750 would be the next target where we could see Keynes Technology to slide further as the stock has broken its immediate support area of 5000 also. So I think 4750 would be the next target.
Thank you very much, Rajesh, for giving your views in the technical space, and we see the markets also focusing on how that it's actually panning out. And today, of course, Sensex expiry was at play, but look at the divergence coming in. Nifty Banks that was actually good at 2 o'clock, but then there was a movement happening in. But slightly that Nifty is expected to close above the 26,000 mark, and that's coming in after 2 to 3 odd trading sessions as well. Let's look at how the constituents have actually panned out for the Nifty 50 index, and this was the day. It was a narrow range, but you see the sea of green coming in, and IT actually holding the pack. Stocks such as TCS, Tech Mahindra, Wipro holding the fort, but the life insurance stock, there was a significant up move in both of these counters, which includes both SBI Life and HDFC Life. Also looking at the losers over here, Reliance is here, and that's down almost 1% odd, but the biggest loser is Interglobe Aviation. That's down almost 2.5% odd. Let's look at the sectors, how they have actually performed in the day's trade. And we have spoken about the IT stocks. That's Nifty IT is up almost 1.3%. Even the defense space, that is also buzzing. Looking at these numbers and ahead of Russia and India's diplomatic meet. Also tomorrow, PSU Bank slightly coming back into the green. But overall, net we see there is a downtick in the metal space and also in the consumer durable segment. Also, let's look at how the advanced decline ratio has panned out, how the markets are looking like. And we see there has been so much change of hands coming in, but net, it's actually falling on the decline segment mostly. Let's look at how the mid-cap index and the small-cap index has performed. The Nifty mid-cap index, it's largely, if you see in the intraday chart, if you can pull that out, the Nifty mid-cap 100 index, it's likely to end in the day's low levels. It's in the red, and same story goes for Nifty small cap. No recovery happening here, but if you look at it, the Nifty has actually done well in this segment as well. BSE contributors, how it's actually panned out, that's also important in day's trade today. India Cements is something which you are looking at. The stock is up 10%. Hindustan Copper, Hikal and Delta Corp also gaining in trade. Amongst the losers, if you look at it, this includes Hitachi Energy, Biocon, Keynes, JM Financial, and even Godrej Industries making it to the list where there has been a significant selling pressure. Apart from this, let's look at what you should be prepared for tomorrow. A lot of macro data coming in, US jobless claims, US balance of trade, Japan forex is very much important. But stock split is also there for CAMS, that's coming at 10 rupees to 2 rupees. And domestically, the anchor lock-in, these two is coming out, Prostram and Suds accessories as well. The NSE board meetings, if you look at it, this includes the financial results for the recently listed company Tenneco, C8 and Jaiswal's important fundraise, and the most important interest rate sensitive stock especially is the RBI MPC. The street is confused whether it will be a 25 basis point cut or it will be a status quo. So these are the important triggers which we'll be looking at tomorrow, especially on the macro side, as the setup till now still looks like it might be a range bound. That's all for India Market Close. Stay tuned to NDTV Profit. Up next, we are having Market Express.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
Hello and welcome. You're watching Market Express and I'm your host Makshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So Nifty ends the day above 26,000 level. Sensex ends marginally in green with an uptick of 50 points. Advanced decline ratio tilted in the favor of the declines. And if we talk about the sector, so most of the sectors have ended the day in the green, with IT sector gaining on the back of a declining rupee. So media and energy were on the back foot. Here's all eyes on the crucial Modi-Putin meet. The much-anticipated visit by Russian president underscores critical bilaterals on defense, pharma, agri and tech services. Ukraine conflict and crude imports too on the agenda. In more news on Putin's India visit, India will pay about $2 billion to lease a nuclear-powered submarine from Russia. The delivery of the vessel has been finalized after roughly a decade of talks. Talks for leasing the attack submarine from Russia had stalled over the years because of price negotiations. The two sides have now agreed on the deal, with Indian officials visiting a Russian shipyard in November. So India expects to take the delivery of the vessel within 2 years, although the complexity of the project means that it could be later. Here's the rupee slide to record lows is proving to be a tailwind for India's IT sector, with the currency down 1 to 3% against the US dollar and euro. Revenue translation is getting an immediate lift. So this is as dollar billing converts into higher rupee earnings. Now, since 75 to 90% of its revenue come from, in foreign currencies, majors like TCS, Infosys, and also Wipro were among the gainers in today's trade. So the weaker rupee also widens margins because offshore delivery costs remain rupee dominated. And for context, offshore margins are nearly 3 times higher than on-site work. So typically, a 1% move in the rupee can actually shift the margins by roughly 30 basis points. Here's our Websol Energy is betting big on India's solar surge. Industry demand for photovoltaic cells is projected to hit 20 gigawatts in FY26 and double to 40 gigawatts by FY27. So to capture this growth, Websol is planning a massive capacity expansion. Solar cells to 5.2 gigawatts from 1.2 and also modules to 4.5 gigawatts from just 550 megawatts. So this rollout is targeted by 2028, implying a 50% annual growth rate in capacity over the next 4 years. Next up, we have Lupin. That has inked an exclusive licensing deal with US-based Valorum Biologics. Under the pact, Valorum will handle commercialization and distribution of ARML Lupig in the US. I beg your pardon. It's the distribution of Arm-Lupeg in the US, while Lupin will manufacture and supply the drug. So Lupin will receive an upfront license fee and also royalties on the net sales. So Arm-Lupeg is used for patients undergoing chemotherapy, making this agreement a strategic push into the oncology space for Lupin. Next up, we have BML that has bagged a 157 crore order from Lorem Rail Maintenance. The order is for supply of switch rail grinding machines, which are critical for maintaining rail tracks and also ensuring operational safety. So this deal, reinforces BML's position in specialized rail equipment manufacturing and also adds momentum to its order book in the infrastructure and rail maintenance segment. Copper prices are on a tear globally, and Hindustan Copper is riding the wave. So the stock has jumped 11% in just 5 sessions as rising copper prices boost the demand and also valuations across the sector. Adding to the momentum, the company recently signed an MOU with NTPC Mining aimed at collaboration in critical minerals, which is a space that's gaining strategic importance. So analysts say that elevated copper prices could actually keep the sentiment strong for metal stocks in the near term. Electricity trade volumes on the Indian Energy Exchange saw a sharp uptick in November. Total trade rose nearly 18% year-on-year, and this was driven by strong growth in the real-time market, which surged over 40%. So prices have also moved higher. Real-time market rates have climbed 9%, while day-ahead prices were up nearly 7%. However, day-ahead volumes stayed flat at around 5,668 million units. Next up, we have Petronet LNG that has locked in a major long-term deal. they have signed a 15-year agreement with ONGC for ethane unloading storage and also handling the services. So as part of the arrangement, Petronet will provide an ethane storage tank capacity of 1.7 lakh cubic meters. ONGC, meanwhile, has committed to reserving roughly 600 KTPA of that capacity. So the transaction is expected to generate around 5,000 crore rupees in gross revenue, and operations are set to begin between FY28 and FY29. So this marks a significant step in strengthening India's ethane logistics and also midstream the infrastructure. Viewers, next up we have Nugent Software Technologies that has secured a notable global client win. They have bagged a 13.9 crore rupee order from Mercedes-Benz. Now the contract is for implementing a loan management system, reinforcing Nugent's presence in the enterprise-grade financial automation. So the project will be executed over a 5-year period, and this will also add visibility to the company's long-term revenue pipeline and strengthen its footprint in the automotive financial services space. Next up, we have Pace Digitech that has announced a significant order win, securing a 99.7 crore rupee contract from Advait Green Energy. So the deal is for supplying an LFP battery energy storage system. For context, that is a key component in renewable and grid stabilization projects. And under the delivery schedule, Pace Digitech will supply 50% of the BESS DC blocks by March 15th of 2026. And the complete system is expected to be delivered by April 2026. So the order adds strong momentum to the company's presence in India's fast-growing energy storage sector. Next up, we have Mukka Proteins that has also announced a major contract win. They have secured a 475 crore rupee order from Bengaluru Solid Waste Management Authorities. The project involves the treatment and also disposal of legacy leachate. Now, it is to be stationed at the Mitta, Ghana, Hali and also Kannur landfill sites. So this will address one of the city's long-standing environmental challenges. So the order will be executed over a 4-year period, marking a meaningful diversification for Mukka Proteins. Biocon is also back in focus this week, with the company announcing that its board will meet on December 6th. So the agenda will involve considering a potential investment in Biocon Biologics, its biosimilars arm. So the proposal includes buying shares from existing Biocon Biologics shareholders. A preferential allotment is also among the options being evaluated. Alongside this, the board will review a broader, fundraising roadmap. So this would include commercial papers, equity securities, QIP, a rights issue, preferential issues, or other capital raising mechanisms. Next up, we have Rail Vikas Nigam that has also bagged a new order worth 145 crore rupees from Southern Railway. So the contract is for the supply and testing of traction substations. This is a key component for railway electrification. The execution timeline for the project is set at 540 days. RVNL has been actively securing orders in the infrastructure space, which remains a focus area for the company. And viewers, Amphi is gearing up for its semi-annual categorization update with potential changes for the first half of calendar year of 2026. So the list serves as a reference framework for active domestic fund managers. However, no incremental inflows or outflows are expected purely due to the recategorization among the potential shifts. So notable large cap entrants could include names like Muthoot Finance, HDFC AMC, Canara Bank, Hero Moto, Tata Motors CV and LG Electronics. So potential mid-cap entrants include Endurance Tech, Poonawalla FinCorp, Lenskart, Misho and Physicswala. Let's look at some brokerages, and they remain bullish on JSW Steel. Investec has a buy call with a target of 1,250 rupees, citing expectations of net debt reduction. Morgan Stanley also stays overweight, pegging the stock at 1,300 rupees. Jefferies is even more optimistic, maintaining a buy with a 1,400 rupees of target, saying that recent transactions will strengthen the balance sheet. Analysts see that improving fundamentals and financial discipline as key drivers for the steel major. Viewers, Indigo Airlines has cancelled over 400 flights in the past 3 days as disruptions continue. And today alone, it has crossed over 180. Now, the airline has pointed to some key factors affecting the operations. This include the tech glitches, schedule changes, and also weather conditions, along with increased congestion, updated crew rostering rules. To contain the disruption and restore stability, Indigo has said that it has initiated calibrated adjustments to its schedules. The airline said that these measures will remain in place for the next 48 hours. They added that this window will allow it to normalize the operations. Next up, Dream 11 is making big changes. At a press briefing, co-founder of Dream 11, Harsh Jain, has announced that Dream 11 is set to exit the gaming segment completely. He said that they would instead become a sports entertainment platform and also plans to become a second screen for live sports viewers. The platform will allow viewers to watch matches along with creators and also set to go live on the App Store and Play Store in the next 24 hours. In a major development in the computer hardware space, Micron has announced that it will discontinue the crucial consumer brand which used to sell computer RAM and SSDs. Micron, which is a key player in the technological supply chain, said that it will no longer make memory and storage services units for Crucial. So, although the company has confirmed that the Crucial will continue to honor warranty service and also support for existing products, its products will no longer be available at the major retailers worldwide. So, Micron's announcements come as part of the company's pivot towards artificial intelligence. Because Meta has started removing Australian children under 16 years old from its Instagram, Facebook and Threads platform a week before an official teen social media ban begins. Now, the tech giant has announced last month that it had begun notifying users aged between 13 to 15 years old that their accounts would start being shut down from 4th of December. An estimated 150,000 Facebook users and also 350,000 Instagram accounts are expected to be affected. Threads similar to X can only be accessed via an Instagram account. Meta Platforms has poached Apple's most prominent design executive in a major coup. Now, this underscores a push by the social networking giant into AI-equipped consumer devices. So the company is hiring Alan Dye, who has served as the head of Apple's user interface design team since 2015. So reports suggest that Apple is replacing Dye with long-term designer Stephen Lemay. Now, the move represents a seismic shift in Silicon Valley, showing that Meta is committed to becoming a name brand maker of hardware devices. Now, in an effort to permeate the Indian tech ecosystem, OpenAI is in talks with Tata Consultancy Services to build an AI compute infrastructure in India. As per media reports, this is a clear indicator of OpenAI's ambition to leverage the Indian market as part of its global Stargate project. Also, India has the second largest base of ChatGPT users in the world after United States. So the report adds that OpenAI is finalizing a leasing agreement for at least 500 megawatts of data center capacity. This will be from Hypervault, a new infrastructure unit backed by TCS and also private equity firm TPG. Fitch Ratings has revised India's GDP forecast for FY26 to 7.4% from earlier 6.9% as per the global rating agency. Private consumer spending is the main driver of growth this year, supported by strong real income dynamics and also increased consumer sentiment. So the estimates come nearly a week after government data showed that India's GDP has quickened a 6-quarter high of 8.2% in the second quarter of FY26, which is up from 5.6% in the same quarter last year. So the agency has added, however, that the growth may slow down in the later years. On to some national news now, viewers. The Supreme Court has directed all the high courts to submit details of pending trials related to acid attack cases across the country within 4 weeks, terming the 16-year delay in one of the trials in a Delhi court as a national shame. The bench sought the details from the registry of all the high courts within 4 weeks. The CJI said that asset attack cases should ideally be tried by special courts to ensure swift justice. Union Minister for Road Transport and Highways Nitin Gadkari has clarified that government-backed studies show no significant performance issues or component damage from using 20% ethanol blended petrol. Now, in a written response in Parliament, he also confirmed that no compensation fund for E20 related damage is under consideration. Gadkari also clarified that vehicles sold before April 1st of 2023 were designed for E10, while vehicles sold after that date are E20 material compliant. Now, while this does not bar older vehicles from using E20, it does mean that they were not originally engineered for higher ethanol content. Union Minister Nitin Gadkari has also said that the current system of toll collection will come to an end within a year and an electronic system will take its place. So this is to ensure a seamless experience for the highway users. The new system has been rolled out in 10 places and will be extended across the country within a year. Gadkari has also said that currently 4,500 highway projects worth 10 lakh crore rupees are ongoing across the country. The National Payments Corporation of India has developed the National Electronic Toll Collection Program, which is a unified platform for electronic toll payments. Here's opposition MPs held a protest at the Parliament House complex against the air pollution in Delhi as the winter session entered its 4th day on Thursday. So Delhi's air quality was in the poor category on Thursday morning, with the overall air quality index at 299. So 3 Congress MPs, Manikam Tagore, Manish Tiwari and Vijay Kumar alias Vijay Vasant, also moved adjournment motion notices in the Lok Sabha to discuss the rising air pollution in Delhi NCR and other parts of North India. The United States has announced sweeping changes to the structure and also membership of the G20 ahead of its 2026 presidency. So they have declared that South Africa will not be invited to participate and also have outlined plans for what officials are calling a new G20 shaped around American economic priorities. The move marks a major departure from precedent and signals, Washington's intent to recast the forum's agenda under President Donald Trump. The 2026 summit will coincide with the United States' 250th anniversary. Officials have described the event as an opportunity to showcase the values of innovation, entrepreneurship, and perseverance that made America great. On to some more international news. The Trump administration is tightening rules for H-1B visa applicants, ordering enhanced vetting for foreign workers seeking to enter US. The move aims to scrutinize applications more closely, focusing on skills and also qualifications. Companies hiring foreign talent may face additional checks, slowing down the processing of visas. Now, this could impact tech and other industries relying on skilled overseas workers. The Trump administration is weighing an expansion of its travel ban from 19 countries to more than 30 in the wake of last week's shooting of 2 National Guard soldiers in Washington, D.C. Homeland Security Secretary Kristi Noem has recommended the U.S. president to increase the travel ban to 30 to 32 countries. So the Trump administration paused the immigration applications such as requests for green cards for people from 19 countries banned from travel earlier this year. So this comes as part of sweeping immigration changes in the wake of the shooting of 2 National Guard troops by an Afghan national. A U.S. Air Force Thunderbird F-16C Fighting Falcon has crashed during a training mission in the Southern California desert. The U.S. Air Force clarified that the pilot survived the crash by ejecting safely. According to the U.S. Air Force, the crash has happened around 10:45 a.m. on Wednesday during a training mission over controlled airspace in California. So the jet was assigned to the Air Force's elite demonstration team based at Nellis Air Force Base. So the pilot has received non-life-threatening injuries during ejection and is also being treated at a hospital. Here's on to some more global news. China has rejected Japan's Prime Minister, reaffirming his stance on Taiwan, escalating tensions in the region. Beijing says that such comments interfere in its internal affairs and also warns against actions, could destabilize cross-strait relations. So the exchange comes amid ongoing regional security concerns, with both the countries monitoring the situation very closely. Yes, Google has released its annual India's Year in Search 2025, the A to Z of trending searches. So report says that it highlights the search trends that defined what Indians were looking for this year. So on the entertainment side, Sayyara stars Aneet Padda and Ahan Pandey took Google search by storm, followed by Final Destination and Kantara, while many searched for rising stars like Vaibhav Suryavanshi and Jemima Rodriguez. Others looked up to the Women's World Cup. So Fukuoka also emerged as a popular breakout destination. Now coming to the memes and the internet, the 67 meme went viral this year, which was followed by Arjun Kapoor and the Vishal Mega Mart security guard meme. Viewers, Spotify has rolled out its personalized Wrapped 2025 in India, giving users a quick look at the music, podcasts and audiobooks they spent the year with. According to Spotify, Arijit Singh topped India's chart as most streamed artist for the 7th year in a row, followed by Preetham and Shreya Ghoshal. And another highlight is that romance continued to dominate listening habits across the country. Sayyara by Tanishq Bagchi emerging as the most streamed album in 2025, followed by Ashiki 2 by Mithun in second place for the second consecutive year. With that, viewers, it's a wrap on this edition of Market Express, and stay tuned to NDTV Profit for more news and updates.
Woo! 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I am honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, this means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
Over 400 Indigo flights cancelled in 3 days. Aviation Minister Ram Mohan Naidu calls a meeting with all stakeholders at 4 p.m. today over Indigo flight chaos. Indigo denies any probe information, claims that DGCA has sought information on flight cancellations only. Russian President Vladimir Putin will arrive in India today at 6:30 p.m. PM Modi and Putin bonhomie is in focus today. According to Bloomberg sources, ahead of the visit, India clinches a $2 billion Russia submarine deal after nearly a decade of talks between the two countries. Russia's largest banks, Sberbank and JSC First Asset Management, have introduced a new mutual fund, First India, offering investments linked to the performance of the Nifty 50 index. Market recovers nearly 100 points from the day's low. Nifty closes above the 26,000 mark, snaps 4-day losing streak. TCS and SBI Life Insurance gain the most in Nifty. Benchmark indices outperform broader market indices. Rupee closes above 90 against US dollar, ends 21 paise stronger at 89.98 against the greenback. Big huddle on Vodafone AGR. Cabinet Secretary to review relief plan. Finance Ministry and the Department of Telecommunications officials meet on Vodafone Idea AGR demand. DOT's fresh relief proposal is on the table. Meesho IPO day 2, overall subscription over 5 times. However, retail investors lead with over 7 times subscription on the second day. Big development after crackdown on online gaming. Dream11 exits gaming segment, enters new venture of sports entertainment, aims to become second screen for live sports viewers. Dream11 to go live on App Store, Play Store in the next 24 hours. Hello and welcome viewers. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we'll be taking you through some of the major updates when it comes to national, international, as well as news related to markets. But on to our top story this evening. It's chaos in the skies and panic on the ground. Indigo, India's largest carrier, has cancelled over 180 flights across Mumbai, Delhi, Bengaluru and Hyderabad, leaving thousands stranded and desperate. On-time performance, which is also called as OTP, has crashed to just 19.7%, which is a staggering fall from 35% the previous day. The airline struggles with crew shortages after the implementation of new flight duty time limit rules designed to ensure pilots get adequate rest. The DGCA has summoned Indigo, demanding explanations and mitigation plans. Meanwhile, at airports, nationwide emotions are boiling over. Passengers stranded for up to 14 hours, crying, pleading, furious, and sharing videos of long queues, confusion, and silence from customer support. Indigo says the disruption is triggered by a mix of tech glitches, winter scheduling, congestion, weather, and new crew rostering rules. The airline has promised to stabilize operations within 48 hours. But for tens of thousands stuck today, that promise might be too late. The question now is who takes the responsibility and how soon will the skies calm down? Let's go across to my colleague Danish, who joins us from the ground. Danish, what's the latest that you're gathering from the ground?
Well, right now I'm present just outside the Civil Aviation Ministry. Just an hour back, the meeting between DGC and Indigo officials ended. We are yet to know what exactly happened in that meeting, what were the directions that were given to Indigo from the DGCA. But after that, we came to know that India's Union Civil Aviation Minister, Mr. Ram Mohan Naidu, will be chairing a meeting at 4 p.m. With all the stakeholders. Well, this meeting has been called on after the entire Indigo incident, which we saw. And as you said in your anchor read, that thousands of passengers are stranded. Social media is full of a lot of sad videos of people that are waiting inside the airports from the past 10 to 12 hours. So this meeting has been called, and all stakeholders, and by that I mean the DGCA, BCAS chief, and officials from other airlines have also been called. And while we were standing outside, we saw officials from Air India, officials from Indigo and other airlines also entering inside the ministry to just talk about that what exactly is happening. So sources are telling NDTV Profit that this meeting has been called by the minister to ensure that whatever Indigo is going through right now, other airlines don't have to go through that, and the minister just wants to ensure that there is less chaos at the airports, as Indigo has already announced that they would be looking at stabilizing the operations post 48 hours. So 24 hours of that has already passed. Over 180 flights today have been cancelled. So we are yet to know that what exactly the directions are from the government, and the government has taken a proactive step by calling this meeting, by inviting all the stakeholders to really understand that what exactly is happening. But if we look at the other airlines, none of the other airlines are cancelling their flights. It is just Indigo which has cancelled so many flights. The data that the government gave us yesterday, in November itself, Indigo cancelled over 1,200 flights. So this is a huge impact. And why do I say that? Because Indigo is India's largest airline, the largest fleet carrier, the one with the biggest market share, and Indigo always boasted of a very strong OTP performance. But the story is completely different from the past 2 days. 2 days back, their OTP was 35%. Yesterday's OTP of Indigo was 19%. So this is something that we haven't seen Indigo struggling through. And like I mentioned earlier, that the pilot associations have clearly stated that this could be an arm twisting act by the airline, because they said that if we look at the other airlines, everyone has their roster in plan, and if Indigo really wanted to get a lot of winter flights, then they should have submitted a proper plan to the government. So the reason why the flights are being cancelled is the fact that because of the new FDTL norms, they have to be followed. The pilots have to be given a proper 48 hours rest instead of 36 hours. So that is where a lot of chaos is happening. But we'll have to wait and watch, and we'll have to see that how things turn around after that. Whether after another 48 hours, whether there will be some kind of relief from for the Indigo passengers or not. But we'll have to wait for a few hours to see that what exactly is the latest directive from the government, and we'll bring you the latest.
All right, Danish, thank you so much for giving us the latest updates when it comes to this utter chaos that Indigo has been putting its customers through. But moving on, the airlines industry has been in a tizzy since the last 2 days, as Indigo has reported more than 300 cancellations. Cancellations, in fact, during November crossed 1,200, over 1,200, as Danish already pointed out. And in fact, Chhatrapati Maharaj International Airport witnessed 85 cancellations today itself. My colleague Ronit John gives a sneak peek into the current situation prevailing in Mumbai. Ronit, what are you seeing there right now, and what are passengers saying all about?
The major reasons behind these cancellation is that the FDTL norms have come into effect. These norms state that there should be longer resting period for the crew members, that includes the pilot also, and Indigo has failed to comply with all those norms.
No, flight got cancelled. We were supposed to fly by 1:55, but when we reached the airport only we came to know that flight is cancelled. We tried web check-in also, but that was not working.
I was supposed to go to Cochin, and the flight was scheduled at 1:55 today, and now the status is cancelled.
So has airlines given any communication, or has any rescheduling been done as to what is going to happen and all?
I had received no intimation from the airline side regarding the cancellation. I tried to do the web check-in a while ago, and then only I came to know that it is cancelled. And no intimation was done, and no rescheduled notifications yet.
As of now, we haven't got any informations. We haven't seen any Indigo staffs also. So we are searching for Indigo office or Indigo staffs.
The Indigo sources, they were saying that a statement will be issued by around like 5 or 6 p.m. as to what will be the initial course of action. So through that, maybe the passengers will come to know that what are the steps that they have to undertake in the near future.
And viewers, our reporters are actually reporting from all across the nation. Delhi too, in fact, has been hit hard. 33 flights cancelled, hundreds of passengers still waiting without confirmed updates, and frustration growing every hour. Several have told us they've spent the night on airport floors. Let's cut across to Tanushka at Delhi airport tracking this developing situation. Let's take a look at what she's gotten over there.
We have a passenger here who's also faced the, aftermath of the tire disruption and cancellations caused by Indigo at this point. So tell us your name and which flight, what?
My name is Satif Sehgal, and I am flying from Hyderabad to Delhi. Then I have another connecting flight from Delhi to Dubai in evening. So the problem was like Indigo, like I was waiting there at till 7:40. My flight was about to leave that airport at 7:45, but they asked us to wait. Even more people were waiting there. All are affected, like those people and others also. So what happened? Like we waited for 1.5 hours, and then they said now it will be delayed by 30 minutes. So we asked, okay, this tell me whether it will be cancelled or in like exact timing when I can go, or because I have a connecting flight. So they said we don't have any estimate. We don't have enough crew members with us. That's why flight is getting delayed. And then again I waited for 2 hours, like without knowing my flight will be there or not. It will be cancelled or so. It created a lot of problems. Total it is from 7:45 and I started at 10 from Ahmedabad. So it is like more than 2 hours.
And viewers, to help us make sense of this situation, I have with me Vipul Saxena. He's an aviation expert. Thank you so much, Mr. Saxena, for giving us your time and joining us at this given hour of the day. My first question to you would be, in 3 days, over 400 Indigo flights have been cancelled at major airports across the country. First, Indigo said that it's a tech snag, later blamed new roster rules and congestion. What went wrong, and is this truly just about the new crew rostering rules, or is there something bigger that's not being seen at the forefront of this issue?
I think firstly, let me make one very bold statement that globally, I think it's only Indian carrier operators who are really very arrogant and really careless about the regulations and also passenger comforts and passenger safety. You can see the example of Air India, which has flown one aircraft whose airworthiness certificate was expired and flew for 8 days. I mean, there's no compliance being done by these people. Similarly, this rule of FDTL, which in Indigo is giving reason now, it was supposed to be actually implemented from March 24. But that time, all the airlines lobbied and they said that we'll do it in phased manner. So first phase was supposed to be completed by July. And I think all of them complied with this. And this phase was supposed to be, last phase was supposed to be done from 1st of November, which was well known to everybody. And accordingly, they were supposed to have the number of crew, number of pilots, cabin crew and everything, available at the right time. This most surprisingly, what I feel is that for winter schedule, they are supposed to give their planning to DGCA for approval in the month of September. And at that time, they were supposed to ensure that for the winter schedule, they have number of pilots and engineers and also cabin crew available. So I think the plan which they given to the DGCA was a misleading plan. And DGCA probably trusted them being one of the biggest airlines and a big organization. So I think this needs to be investigated and some stringent action is to be taken against Indigo. Otherwise, things will not improve. They will keep violating laws and rules, and only suffering party will be passengers. Because this 48 hours, what they're talking about is unbelievable. It will never happen because the number of flights which have been cancelled over last 2 to 3 days, what will happen to those passengers whose flights have been cancelled or rescheduled? In my opinion, it will take minimum 10 days to recover from this situation, only when they really have number of pilots available.
Mr. Saxena, then are you blaming poor planning, non-compliance, and a weak way of handling the entire situation for the chaos that Indigo is putting its customer through? And now that the DGC and the Civil Aviation Ministry has stepped in, how did it spiral so badly before action was taken? Does this point to a bigger gap in airline regulation or crisis planning?
No, this is, I think, as I said, totally careless attitude towards the regulations and also passenger safety, because as per the new regulations, airlines are supposed to have more number of pilots for the flight schedule for winters, which they have given to DGCA. DGCA assume, because when they give schedule in the month of September for winter schedule, it is on the basis that they will have sufficient number of pilots and cabin crew available to operate these flights. It is a basically trust between the operators and between the DGCA. And I'm sure airline knew about it, that they will not have these numbers, but probably they thought some kind of lobby will work out. They will get some more time, or maybe when the chaos happens, automatically government will give some more time for them to comply with this. I think this was a very arrogant approach and very ruthless approach towards the passengers, and that's what I would say. And in last 2 days, I got the information the DGC has really deployed their officers to see that passengers are not at discomfort. I got so many calls from passengers that they've been stranded for 6 hours in the airport. No cancellation, no care been taken as per the regulations of the DGCA. If the flight is delayed or cancelled, what kind of care is to be taken by the airlines? No action has been taken. Even rescheduling has been done for 2 days, 3 days, and all mercilessly.
Okay.
So I think unless government comes out heavily on Indigo, no message will go to other airlines.
Mr. Saxena, the thing is that the magnitude of the problem is huge. Indigo almost operates about 2,200 to 2,300 flights on a daily basis. It's one of the most economical flight carriers in India. It's the most widely operated domestic airlines in our country. And when such a situation happens, there are a lot many people on stake. What can, according to you, be done to prevent such large-scale disruptions in the future? And I'd also like you to comment on an obvious question that comes to my mind is, if Indigo is blaming the new roster format for pilots as one of the reasons behind this lag and the rescheduling and the cancellation of flights, what was the situation before? And were pilots not being given enough rest at all?
See, India was not following the international norms earlier. They were giving 36 hours of rest to the pilots, and also a number of night landings were more. So all those now, as per this new regulation which came into effect from March 2024, is aligned with the international norms, which all airlines across the world are following. And by now, even Air India and SpiceJet also have implemented this norm. It's only Indigo which is violated, in my opinion, because no other airlines is facing this problem. I have not got any call from Air India or SpiceJet or any other airline, or even Akasha, that their flight have been cancelled or rescheduled because of crew problems. It's only with the Indigo. So Indigo has been singled out clearly that they have taken things for granted, assuming that when the chaos happens, government will give some more time, which is not the case.
Okay, all right. Thank you so much, Mr. Saxena, for giving us your time and helping us make sense of the situation. As you said, the high-stakes meeting is on and we'll have to see what comes out of it. But moving on, viewers, it's a big day for India's geopolitical front as Russia's President Putin has departed for his 2-day visit to India. He's visiting at the invitation of Prime Minister Modi for the 23rd India-Russia Annual Summit. This is his first visit here since the Ukraine conflict began back in 2022. So this is a visit after 4 long years. Just ahead of the visit, though, India and Russia have finalized a landmark $2 billion deal for the lease of a nuclear-powered attack submarine. Under the 10-year lease, India will receive an advanced Akula-class vessel, larger and more capable than the 2 INS Chakra submarines previously leased from Russia, for training and operational development. In another landmark move, Sberbank, Russia's largest lender, and JSC First Asset Management have rolled out First India, the country's first mutual fund giving ordinary Russian investors direct exposure to India's booming stock market through the Nifty 50 index. Moreover, 10 intergovernmental documents and more than 15 agreements and memorandums between commercial and non-commercial entities of the two countries are being prepared for signing. Going forward, intensifying trade and economic relations has been identified as a priority area with a target of increasing bilateral trade to $100 billion by 2030 for both these nations. Let's now go across to my colleague Gauri Dwivedi for a heads up on Putin's visit.
The president will be here in just about 3 hours. He will be here for the 23rd Russia-India summit that will take place. There will be a dinner that will be hosted in his honor by Prime Minister Modi today in the evening. And the formal set of engagements begin from tomorrow morning. There will be a ceremonial welcome. And there will also be a visit, of course, at the Rajghat. And the bilateral discussions will take place at the Hyderabad House. between Prime Minister Modi and President Putin tomorrow. And there really is a lot that's really on the table for the two leaders and for the two countries, from energy security to food security to agriculture and, fertilizers. Those are really very important aspects. Not food security, but agriculture and fertilizers are the other aspects of the discussions that will take place. And also trade per se as well, Gargi. There's been a lot of focus about how much oil India imports from Russia, but there is now a growing consensus, especially both in India and Russia, that this trade needs to probably be more balanced, in which case India's exports to Russia, particularly for pharmaceuticals, could really be one of the most important aspects that could come up for discussions. Besides that, defense could really be the big highlight. It continues to be the backbone of the India-Russia relationship and is likely to get a fresh fillip tomorrow as well, when discussions will feature around India's purchase of S-500 that's being discussed amongst several others as well. So all in all, there's a lot lined up. The India-Russia relationship itself is extremely holistic in nature, covers all gamut of a bilateral partnership, from energy to trade to civil nuclear to, of course, fertilizers as well. And all that will be important even as the world watches this crucial meeting.
NDTV also interacted with Daria Sharsovia, our own reporter from Red Square, Moscow. The subject varied from how Putin's visit is being projected in the Russian media, the importance of our ties with the Kremlin, the top priorities of Putin, and a lot more. Let's listen into a brief snippet from that interaction, especially where she talks about how Russia sees this as a strategic partnership. Take a look.
Well, it is a strategic partnership. That's how the Russian president himself has described the relationship between Moscow and New Delhi. And this is the way that the Russian media are portraying this all-important visit. That is also the beefing up of the relationship with the long-standing partner, because Moscow has been saying that its ties with India go back decades, and those are decades of friendly, amicable, and strategically important relationship that the two share. So the Russian president will be in India shortly, and for this visit, Moscow has been preparing for quite some time. They are expecting to make sure that they expand cooperation in different areas, including defense, including military cooperation, but also, obviously, paramount sector for Russia, energy. And they will be trying to make sure that their trade portfolio is much wider than just that focused on energy.
And speaking at the India-Russia Business Forum, Commerce Minister Piyush Goyal highlighted the various Indian sectors that could open up to Russian demand. He also spoke of our skilled demographic dividend, saying that India's workforce can fill Russia's 3 million talent shortage. Let's listen in to that portion of his comment.
Russia has a huge demand for a wide range of industrial goods, consumer products, presenting multiple untapped opportunities for Indian businesses. Many sectors with a strong potential would include, as you were mentioning, the automobile sector, whether it's cars, tractors, heavy commercial vehicles, electronics, smartphones, data processing equipment, heavy machinery. Also a demographic dividend, the young, hardworking, talented, skilled men and women can fill Russia's large 3 million talent shortfall that I'm told.
And viewers, when I started speaking about Putin's visit to India and the significance of this crucial meeting, I also spoke about a landmark move. Sberbank, Russia's largest lender, and JSC First Asset Management have rolled out First India, the country's first mutual fund, giving ordinary Russian investors direct exposure to India's booming stock market through the Nifty 50 index. To help us understand more details of this very fascinating development, I have with me Jasmeet Singh Ghai, my colleague, joining us live from the newsroom. Jasmeet, it's a clear indication of their confidence in our Indian stock market. What can you give us?
100%, I 100% agree with that. Now, if you look at something like a Sberbank being the largest bank of Russia, coming alongside with the asset management company to launch India First Mutual Fund, clearly indicates how confident they are in the Indian industry when it comes to the stock market. Now, well, this particular move will give the access to the Russian investors to directly get an easy access towards the Indian stock market. While with this move, the particular mutual fund will call as First India, which will easily cater to the top Nifty 50 companies of Indian companies. If we look at the overall aspect, the NSE supports plans to boost this further with the clarity and easy market access. This not only ends there, but it also will create a simple bridge between India and Russia in terms of the financial understanding. So all in all, we see policy moves coming in ahead of Putin's visit to India. It's wait and watch to see what more comes up during this particular visit.
Okay, thank you so much, Jasmeet, for giving us that perspective on this mutual fund that would open up to Russian investors via the Nifty 50 index. But viewers, the India-Russia visit, all updates, whatever you would want and whatever is important, you will get them here only at NDTV Profit. And of course, we will line that up with other things as well. So stay tuned, keep watching Profit 360 as well as NDTV Profit throughout the day. And thanks for watching.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And today, Anushi, the company is a Raymond Group company, but it is a demerged version of it. The realty business is coming in. And largely, there is no major coverage from the analyst community as well. And a lot of our viewers actually wrote to us and they stated that let's figure out what is this company all about. But there are a lot of questions about this company. But after its listing, Anushi, it hasn't been a great returns for the shareholders, of course, who are holding in the Raymond in that demerged basis. But let's put out the questions, what we want to actually know about the company. The first question is, which categories is the actually company focusing on? Is it the mass affluent or is it the recently announced luxury segment? They have a massive project in Thane, that's something which we'll be looking out for. And will this expansion involve non-MMR markets as well? MMR is the Mumbai Metropolitan Region markets, to simplify for our viewers, and how the demand queries are actually coming up for these new projects. Interestingly, Anushi, the third quarter is a very heavy quarter for realty space as well.
A lot of launches.
Yes, exactly. Launches, pre-sales, which you track. Land monetization plans ahead, that's something which you'll be looking out for. Will they go for JD, JV on an asset-light basis? And the timeline for the promoter press release, that is an overhang in this stock as well. And cash flows also, we saw in H1 numbers that got impacted, maybe because of upfront higher costs in the realty space. So these are the key questions for this company. Very less tracking of the company. That's why I think we should give a 360-degree view to our viewers for KYC. So Anushi, what is it about the company totally?
On that note, let's start off with what's happening with the company. So if we just talk a little bit about it, it's mainly its presence is in the MMR region and it's a real estate development company of the Raymond Group. You know, Sharad just spoke about the recent demerger which took place. That was Raymond Lifestyles as well as Raymond Realty now. So it was demerged from the Raymond Group on 14th of May onwards, and then it subsequently got listed from July onwards. So since then, we'll be tracking its performance and how the financials of FY25 have also shaped up. But just a little bit about the kind of portfolio that the company has. Now, it has about 100 acres of land parcel in Thane. If you take the whole long-term portfolio consideration of the gross development potential size that we are looking at, 40,000 crore is what we are seeing. Thane land parcel of 100 acres. Along with that, they've signed joint development agreements as well. So this adds up to about 25,000 crore. JD opportunities adds up to about 14,000 crore. So cumulative 40,000 crore is the kind of mix that we are looking at. Now, do note that currently of this 100 acres land which is there, 55 acres of Thane land is currently under development, of which if you look at the realization part of it, revenue potential is around 13,200 crore, of which so far 8,200 crore have already been sold. While if you look at the remainder, from that they have collected 6,300 crore so far as well. So, you know, FY26, the second half, the FY27 picture is an interesting scenario, considering that they have this huge land parcel which is already in place. With the JDAs, they have a development potential of around 14,000 crore. We'll see a couple of launches coming in these next 3 to 4 months, in the 6 to 9 months period itself. And these are 3 to 4 launches that we are seeing across Bandra and other key regions in Mumbai as well. Balance will be launched in the next 12 to 18 months is what we are looking at. So if we just take a mix of what's happening happening. Your Bandra, Mahim, Sion and Wadala are some of the key areas where these JDAs are coming in picture. And if you are looking at that, all of these are located in MMR region. They do not have a presence apart from these particular markets that we are seeing. In terms of the mix also, while it is in premium and luxury, I want to just point out how the own land bank is shaping up and how the JDA is, since JDA is a rather asset light model that we are looking at that. So current FY25 and 28, if you just pull up that one, from a 78% mix, now it is estimated that that would be 50% or also in FY28, while JDA contribution from 22% will move upwards to 50%. Now this is the management's aim to bring this ratio to 50-50. So this is an interesting part that we are looking for the company. And with these key launches planned in the second half, how pre-sales and thereof the cash flow shape up is something that we should be watching out for, right?
Yes, Anushi, the expectations is a very important portion, she pointed out. But Anushi, the entire KYC segment, there are 8 parameters where we judge the company. But remember, it's not fair at times because the company's history itself is on a very short notice and there is a literally zero analyst coverage in this segment. But nevertheless, our format of the show is first we take in the income statement, operational parameters, especially for a real estate company. We are also taking in the balance sheet and the cash flow. These are the 4 most important parameters in the financial segment. Apart from this, the shareholding pattern, how it's actually panning out post the demerger, and the street cred, how the stock has reacted. It's a very short-term basis, but nevertheless, we will take them in. Valuations is also there, and overall outlook, that is very much important, that we'll be judging the company on. So 8 parameters where the momentum would be coming in for. But Anushi, starting with income statement, what are you gathering from here? I think H1 numbers is something which you'll be looking at now.
Absolutely. So, before I talk about the income statement, I want to point out to the key operational metrics because, with real estate companies, we have pointed out that there's lumpiness in terms of how the revenue shapes up, how that is recognized. So, if we just look at the pre-sales number, now by the end of FY25, we are looking at a pre-sales of 2,300 crores, showing about a 3% of a growth. This is in comparison with a 67% or a 40% of growth figures that we've seen. So how H2 will shape up is something that we should be watching out for because even in the first half, there was a dip of around 35%. So pre-sales for these last 2 periods have been on the muted side, but the management is quite optimistic on achieving that 20% of pre-sales guidance. So that is on a positive that we are seeing. Collections also, while they've maintained a 21 to 22% of a growth in these last 2 fiscals, this time the collections were also down about 18%, but they expect recovery also in this particular metric. So considering all of these parameters and a huge launch pipeline that they anticipate in the second half, we've given this a neutral rating. Do note that the 4-year pre-sales CAGR, that stacks up to about 55% and 4-year collections CAGR is 64%. So the history has been rather on the positive side. It's now the expectation and execution which will be a key monitorable to watch out for, right?
Thank you very much, Anushi, for that. And it's a very important thing you stated is first, let's just put in the operational parameters. Then I think I'll just discuss the income statement and revise it once again. So already a neutral rating coming in from Anushi when it comes to the operational parameters. And that's the first thing to look at, not the income statement. Now let's look at the income statement. The revenue growth over here, that's of course 1,000 crore plus in H1. And EBITDA numbers are also there, but largely we do not judge a company in terms of these numbers in the real estate space. Net profit for all companies, it matters. It's decent, it's around 77 odd crore rupees, but the company needs to have a long history for us to judge as well. But net, it is decent, and margins 22.9% ahead of this demerger. Now you see that's actually coming down, so that might be a cause of concern. But nevertheless, let's give it more time to the company as well. So it will be a neutral rating coming in from my side.
So on the margin part, there is expectation that this would scale back upwards to 20%. So that would be something that, the street should be watching out for, whether this 20% number will be there in the next FY27 figure that we are looking at. But moving on to balance sheet now, if you just look at equity and other equity, of course, there would be divergence in terms of how these 2 numbers shape up, considering that there was demerger, so there would be new shares issued. So taking FY25 and H1 in comparison on a like-to-like basis would be unfair, but we'll just point out how the H1 has shaped up. Other equity stood at about 1,200 crores, almost up to 1,300 crores, while borrowings are 564 crores and cash in bank at 214 crores. So this considering the first half remains on the healthier side. So it's the future periods that we should be watching out for. Hence, considering the first half performance, considering the debt to equity level, which is on the lower side that we are looking at, we've given this a thumbs up.
Okay, a thumbs up coming in for the balance sheet. Cash flow, very important trigger for a real estate company, but of course we see the history is less, but it's on the lower side. Operating cash flows in H1 was down almost 300 odd crore rupees. Even the net cash flows is there just a mere 53 odd crore rupees. And we have seen that these cash flows, there's of course a lumpiness involved in that as well. Maybe initially the JV expenses which the company might be undertaking, that's why the hit is coming more on the cash flow. So because of that, based on the current numbers, I will give a thumbs down for the cash flow segment.
Okay, so that's on cash flows is what we are seeing. But moving on to shareholding pattern now, we'll have two periods of data as of now. Promoter holding remaining constant at 48.9%, while FIIs have offloaded some bit of that share that they had from June levels. We're looking at about 11% stake as of the second quarter end, while DIIs have about 4.5% of stake, and public holds 35% of overall value to the company, which is there. Hence, considering that there's limited data as of now, we'll be tracking for upcoming quarters as well on how the FII and DII mix shapes up. We've given this a neutral rating.
All right, neutral rating coming in for the shareholding. But overall, let's look at the street cred. Post its listing after the demerger, there hasn't been much returns coming in for the investors. Last 1 month stock is down 19%. But the cause of concern for me, since listing is down almost 46 odd %, and that downtake is something to be actually concerned about. Whether is this a wrong pricing which came in during its listing, or there's a lack of analyst coverage. A lot of questions do come in, but as and when company comes out with its own investor presentation, the management is going to talk with us in some time, then we'll get more clarity in as why there is so less coverage in this counter as well. But it has been on a free fall, so that's a cause of concern for me. So I will be giving a thumbs down for this category.
Okay, coming to the valuations now, what we've done is, while price to earnings, we've derived at a multiple of around 44 times, and this is based on the 12-month trailing EPS which is there. It seems like a metric that we should be constantly watching out for. It seems on the higher side though. So how this shapes up, considering that there's lumpiness in terms of where the income statement numbers are, we've given this a neutral rating as of now. So that's on the valuation part that we are looking at. So, but coming to the outlook forward, which is there, now here is the interesting story. Firstly is the 20% of pre-sales growth expectation which is there. Along with that, now the mix in terms of joint development agreements, that is expected to be 50% in this next 2 to 3 years. Now this is an asset light model that we are looking at. So how the financials will improve with this higher mix is something that should also what we should be seeing. If we just talk about the planned launches which are there, now the company expects about 2 new launches on its own land, which is the Thane land parcel that we've talked about. Along with that, there's 3 to 4 new JDA projects which are coming. So if you just take a cumulative figure for the second half itself, it's a 5,000 crore of gross development value that we are looking at. And this is with the expectation that going forward margins will stabilize at 20% or so, which is a high uptick that we have seen from the FY25 and first half levels, going back to its previous trajectory which was there earlier. But along with that, they're also seeing that the cash flows, which we talked about earlier, that being positive as well from the second half. So that's the overall outlook that we have for the company. It's a neutral that we've given, right?
Sure. And let's just revise the overall standings, how the KYC ratings stand, and largely it has been neutral on the income statement and the operational metrics which Anushi pointed out. Balance sheet was decent, but cash flows is a cause of concern is coming in. And let's pull out the shareholding and the valuation neutral here. Street cred, we have given negative because there's a massive wealth erosion post its listing, and that's a cause of concern. We'll be dealing with the management. Outlook, it's neutral to positive overall, but net it's 4 out of 8 is generally historically we give that's an average number coming in for the company. But of course there was a big conversation you had, Anushi, and that was with Harmohan H. Sani. He's the MD and CEO of Raymond Realty. Please listen in.
Let me start off by understanding this new product launch or new project launch that we are looking at. If you can give us more details of this.
Sure. So this is a project which we are launching, which is in the luxury segment. The name of the project is Invictus by GS, and the location is BKC Bandra. This project has a total revenue potential of 2,000 crores, and it will be executed over the next 4.5 years. We are launching it today. The work at site has already begun, and we are geared up for welcoming customers over there. We've already seen a very good initial response. This is going to be premium 3-bedroom, 4-bedroom, and even higher configuration, which will be available for sale. And good inventory with the excellent location. And this is what we have currently launched, and going forward we would be launching more projects also, since you mentioned our pipeline. So outside of Thane, we are launching another project in Wadala soon, end of December, beginning of January. That launch will happen. That's also a large project with the revenue potential of about 5,000 crores of top line. And after that, in Q4, towards the end of Q4, we have another project which is in Sion that will be launching. That is with a revenue potential of about 1,700 to 1,800 crores. That's a project called Address by GS. Wadala will also be an Address by GS product. Apart from that, in Q4, we are also launching projects in Thane itself. So in Thane, we have already in H1 launched one Invictus by GS, one Address by GS. And in Q4, we will be launching a 10X product, which is a 2-bedroom community that has a revenue potential of over 1,000 crores. And then we are also launching a retail-focused high street inventory in Thane, which is Park Avenue. That there also the revenue potential is approximately about 1,000 crores. So in all, between now and end of the year, we'll be launching 3 projects outside of Thane and 2 more in Thane.
So, Mr. Sani, just want to understand, while the overall potential that you've given is around 40,000 crore, and I'm assuming this is a 5-year perspective that we have for FY26 and 27, what's the kind of overall gross development value that we are seeing, and how is execution going to shape up is also another question that I want to understand, considering that you're also targeting for an annual run rate of around 4,000 crore of revenue. So help us with that as well.
So what you're referring to is the pre-sales number.
Right.
So if you see last year we did pre-sales of approximately 2,300 to 2,400 crores. It's 2,300 some odd number. And what we've given a guidance that we will be giving a 20% growth over that, which takes the current year close to 3,000 crores, and we are on target to achieve that number with all the launches that we have planned. And this is how the entire year's planning was done by us. So in H1 we did pre-sales of about 760 crores, and it is going to be heavy in H2 for us. But that's how it was planned. And going forward also, FY27, if I see, there also we are looking at a 20% growth. Because with all these projects which we would have launched by end of this year, that growth would be more or less locked in, because we will have enough inventory available in Thane and outside of Thane to give us that kind of a growth number. And the 4,000 crore number that you mentioned that we will achieve, it will be towards the end of 28 or beginning of the year after that. We would have hit that number if you take this 20% growth run rate that I mentioned.
So just want to understand on that aspect, while you're maintaining a 20% of a booking growth, that's the pre-sales growth that we're looking at, the first half, we are looking at a decline of over 35% or odd. So is it on the basis that most of your launches are skewed towards the second half that we are seeing, or were there any other concerns like how other real estate players have also pointed out with regards to regulatory overhangs being there, or there would or pricing now playing into a factor which has led to that softer acceleration? Because across industry, if we see, there has been a slowdown in terms of whether volumes have been concerned. So just want to get the overall industry perspective as well, and how you are positioned for the second half, and even if you can give us a picture for FY27 as well.
So, for us, the situation was quite unique because we didn't have enough inventory to sell. So we did not see any hiccup or delay as far as the demand front is concerned. in Thana, we had such a bumper Q4 of last year that we didn't have enough inventory available for this year to show a big H1. But having said that, it was also planned in that manner because all our launches, when we see outside of Thana, because of the way they were lined up and how we had signed those projects, they were scheduled to launch only in H2. So, I mean, we have not experienced any regulatory overhang or any pricing pressure in any of our projects also. We've underwritten these projects at very fair assumptions, keeping in mind what the market is in terms of its cycle. So unless, we are compelled to sell at a very high price and then you see pricing pressure, I don't think we are in a situation like that. Can't say much about generally what the other players are experiencing. But as far as the market is concerned, I mean, I have not seen any evidence of pressure either on pricing or on volumes. When you talk about the growth number for us, for H1 as compared to last year, in our industry, you can't really compare quarter on quarter because a lot is dependent on when the launches are happening for each project, because you see a significant bump up in sales when the launch takes place.
Understood. So it's a 20% plus of growth that we can expect for FY26. And from what I'm hearing from the commentary as well, there's a lot of emphasis on Thane market, right? So just want to understand what's the kind of pricing growth that you're seeing there? What is making you so excited about this particular region? Are there any other regions like Thane as well that you're going to be focusing on with new launches there as well? If you can give us more perspective on that as well.
Yeah, so Thana has been our home ground because we started our business in Thana. That's legacy land. So naturally, it's a 100-acre plus parcel. So you will see a slew of launches over there from us. It's a very, very strong market. Still one of the best markets in Bombay in terms of the social infrastructure and the affordability factor as far as pricing is concerned. It has a very cosmopolitan crowd, so it attracts all kinds of people, not only one segment. So it's a very strong, very deep market. So naturally, we want to stay focused on that as one part. The other part that we are focusing on is in and around BKC. We have taken a very, very strong position in the market. So all our projects, if you see the various new projects that we have signed, are all creating a ring around BKC. So the one we are launching today, Invictus by GS, is right next to BKC. Then the Wadala one, which we are launching, that's another big launch this year. That is also within 10 minutes of driving distance from BKC. The Sion is literally walking distance from BKC. You just have to cross the railway line and you're there. And now with the connector from the Eastern Express highway straight landing into BKC, it's a very, very prime location. And the other projects that we have signed, which we will launch next year, also are right next to BKC. So these are the two primary areas that we have focused on, looking at the segment that we want to serve, which is the premium segment to luxury segment.
The management is very upbeat about BKC and Thane regions, and an important disclosure is also coming in from the company. Hardly tracked counter, tested the patience also of the investors. But let's just pick up the key management takeaways, Anushi, from this discussion and which you had done. They are going to launch 3 or more projects outside of Thane by year end itself. That's pretty interesting on that. But the numbers front, I think you should tell our audience what they're actually planning, a 20% odd growth.
Yeah, so 20% is the kind of pre-sales growth that they're expecting, and this is with margins also inching upwards to 20% or also that we are seeing. Apart from that, we're also looking at an important piece is that now there's no regulatory overhang, which has been a theme for the South-based players that we are seeing. Along with that, even pricing pressure is something that has not been a concern for the business, right?
Yes, that's a qualitative statement coming from the management, and net, we would say that there is a positive commentary coming in, but we need to give the company more time so that more data comes in and then we can give them proper ratings. As of now, it's 4 out of 8 in KYC. That's all for the show today. Stay tuned to NDTV Profit.
rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money. Through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. When it comes to investments, often you look at the returns, but you look at the returns before you consider tax and certainly before you consider cost. And this is not something of a criticism, it is just the reality of how most people approach their investments. But is there a question to be asked here? Can you construct a low-cost, high efficiency portfolio using the passive route? Some people have said yes, but let's dive a little deeper into that question. Joining me to talk about the options available to you in the Indian market is Prableen Bajpai, the founder of FinFix Research and Analytics. Prableen, thanks so much for taking the time as always, and good evening to you. Let me ask you this. Has the passive industry in the mutual fund space come of age? And the extension to that is, are there enough options available to construct a fully passive portfolio?
Hi, Alex. Good evening. With more than 650 schemes, I think there are enough options for available to investors to actually create an all-passive portfolio. If you're looking at the AUM industry-wise, passives are now at 17% of the overall industry of mutual funds, which is, I think, quite encouraging. The overall AUM currently is around 14 lakh crores, which I think has increased tremendously, especially since 2019. It's almost 6.4 times in rise in the assets which are held. So overall, absolutely a lot of choice available to investors, especially post-COVID, Alex. We've seen the rise in the number of NFOs which were launched, which are catering to the passive space. We've seen passive fund launches, not only in the equity space, but debt, gold, silver is something which is, relatively recent. Of course, international investing. So I think across regions, across market cap, across different categories, there is a huge variety. And there's an interesting recent survey by Motilal, which actually gives us an indication of how and where passive stand in mutual fund portfolios of investors. And this survey is based on roughly about 3,000 representatives. So it's a sample size of 3,000 and about 120 wealth advisors, including SEBI-registered advisors and distributors. And that says that 68% people who were surveyed, they actually say that they have one passive fund in their portfolio, which is very interesting. And 76% say that they've heard of ETFs and index funds, but which also leaves us with 24% who haven't heard of passive investing. So I think, yes, there is a rise, and it's no ways a fringe or a very, it's not on the sidelines, it's becoming mainstream. So passives are definitely here with the bank and continue. I think it will just get stronger, the inflows and the presence in portfolios.
Yeah, let's talk about some of those options in the equity space, right? Because the question a lot of people have is it representative of wide enough basket? Your traditional options that people have gravitated towards is the Nifty 50 or the Sensex, and now increasingly the Nifty Next 50 is what people are going towards. But what about the broader markets?
Absolutely, Alex. There is enough availability in terms of schemes which cater to not only the large caps, which is the Nifty 50 and Next 50, but also the mid cap. In fact, within mid caps alone, there are 3 different indices which are now available to investors. One is the mid cap 50 index. The next is the mid cap 100 index, the Nifty 100 index, and the Nifty 150 mid cap index. So 3 within the basket of mid caps. And if we are looking down the market cap and we are looking at small caps, then we have the Nifty Small Cap 50 available. We have the Nifty Small Cap 250 available. And of course, it is also a small cap, but how it is categorized in terms of an index is the micro cap. So we also have the micro cap 250 index available. So I think enough availability. We have so many of these different beta strategies which are coming up. So I don't think there's any dirt in terms of availability of products. It's out there, but of course, how a portfolio needs to be constructed and whether an investor would stick to it, because there is so much of activity in the active fund space as well. That is a question, very important question.
So therefore, let me ask you about construction. And ultimately, we're talking about the pros and cons of having an all-passive portfolio. The big pro, of course, is the cost factor, right? And there could be a huge difference. You're talking about maybe a percentage point of difference between an active and a passive fund, right? But can you have a core versus satellite allocation that you arguably are able to construct with an active option? And here we're talking about core as in something that is stable, and satellite, which will give you the alpha in your portfolio.
So core, Alex, we all understand that core and satellite together, which is, dividing your portfolio into two parts where, like you said, that the large part of your portfolio is the more stable options that you have, which is something that you can hold for the long term, 20, 30 years as well. And then the satellite is more of your tactical call, something that you would want to invest in and then eventually exit and, look at slightly riskier options there. So that's the satellite part. Of course, within passives, a combination of creating a core and satellite is totally possible, because within the core, we can, of course, add the mid caps, we can add the large caps, and to some extent, the small cap also becomes a part of your core, because in a very long-term portfolio, small cap should be part of the core. Along with that, I think commodities in form of gold and as well as, some debt products can be creating your core. And in the satellite, there are enough number of passive funds now which cover different themes. They are covering different sectors. For example, the defense index is there, bank index, there is the pharma index. So many of these schemes are tracking these different indices, whether it is the IT or even consumption for that matter. So there is definitely enough scope for any sort of a satellite and core portfolio to be constructed. But at the same time, Alex, because you just touched upon costs, and there is a huge variation in cost, because that does result in a compounding factor. But within, and we're only talking about direct schemes, so direct index and direct active funds. Within those, the variation is really stark, because, of course, any passive fund would bring down the cost because it's just about 10 paisa to 40 paisa, let's say. But within the actively managed funds, if we are just looking at the mid caps, the variation is like from, 0.30 paisa, 30 paisa to almost 2 rupee, 100 rupee, basically 2%, that means. So not necessarily that every index also will always bring in a very, very low cost. There are some actively managed funds also which are actually having a low cost. And I think in India, we investors, when they're looking at core and satellite, can actually look at a combination of active and passive as well to construct this sort of a portfolio.
Yeah, I mean, that argument is a strong one to make, particularly because you have schemes that are 60, 70, 80,000 crore in assets under management, and the requirement by SEBI is to have the lower expense ratio as you go up in the assets under management, right? So Parag Parikh, if I'm not mistaken, is over 1 lakh crore, and therefore 0.7, 70 basis points or so. On the direct side, I'll have to check that. Maybe you can remember.
I think lesser than that. In fact, lesser than that on the direct side.
Yeah, so it's pretty low. All right. So the question therefore is, if you are to use passive even in your debt, and you mentioned silver and gold ETFs, should you do that?
So debt, of course, I think, Alex, target maturity funds are one of the best options to utilize when you have a you have the clarity that this is what I'm investing in and I need the money after 5 years or 10 years, because you have a maturity date. So I think within that, target maturity funds are a great space to be. There are more than 100 schemes available to investors. A bit of their charm is taken away by the change in the taxation, but I think they still become very remain relevant because there is deferred taxation. There is a lot of prediction in terms of what sort of returns you can get from the debt scheme. trading, the expense, like you mentioned, is really low. It's just about 10 pesos, 15 pesos somewhere. So you still have liquidity. And the underlying holdings are mostly government securities, state development loans, and PSU bonds. So I think a debt definitely is a very interesting space. And you also have the without maturity sort of passive funds, which are the gilt funds, which are open-ended, and there is no timeline on the maturity, and they're open, but they cover a certain period of the gilt holdings. For example, 8-year holding to 13-year holding kind of case would be there. And likewise for gold and silver. So for gold and silver, there is no active option as it is. So passives is the only way forward. But investors shouldn't jump onto it because, like gold and silver has really, really moved up so much that that requires a bit of caution that you're not taking, chasing the returns.
Yeah, don't chase returns, but then this is something that you can fit into your portfolio construction for the long term. I do want to ask you about final strategy, because there's also smart beta funds. Would that fit into your satellite portfolio? And if I were to ask you to construct a portfolio for somebody, and you were to suggest options, not necessarily for everybody to do, and obviously everyone does their own research, how would it look?
So smart beta, Alex, I think that's a very, very interesting space. And what we do is that you apply certain filters to a basic index that we see on the news and we track is the Nifty 50. In the mid caps, we usually look at the mid cap 150 index. But let's say we apply certain filters such as momentum or quality value are applied, then you have these variations. So the parent is like Nifty 50, but then you have offshoots where these variations are there. And these are smart beta strategies. So I think I'll say that smart beta strategies in certain cases can actually be part of your core as well. And I'll give you two examples. I'll give one example for the large caps. I would say that within the large caps, if you're exploring Nifty 50, and there you must look at the counterpart, which is the Nifty 50 equal weight, because it gives you diversification across top 50 companies, but in equal proportion. And in terms of returns, Alex, in the last 5 years, Nifty 50 has given us 12.58% returns. SIP returns I'm mentioning here. Nifty 50 equal weight has given us 16.07% returns. So it's a decent outperformance. And over 8 years, because the equal weight index is only 8.5 years old. So over 8 years, Nifty 50 has given us 13.69% returns, but equal weight has given us 16.65% returns. So it's a simple basic strategy to invest in the top 50 in equal proportion. And likewise, for the mid caps, you have the momentum index and the quality index. And again, their momentum index has topped, it has beaten the mid cap 150 and the quality. There are times, different time periods, 5, 8, 10 and 15 years. And we have data up to 15 years there, Alex, where 150 and momentum have interchangeably done well. So if I have to create a portfolio for the very long term and it has to be all passive, and then I'll go with 4 schemes, I would go with equal weight index for the large caps because it's a value centric approach. I would go add momentum in the mid caps because then it's giving me exposure to the momentum strategy. For the market cap based strategy, I would go with the micro cap 250 and I will add gold along with it. So 4 schemes.
Fantastic. All right. And it's low cost. It's something that is holistic in the approach. And of course, if you want to throw in and you're focused on the low cost approach, you can throw in a few of the larger active managed funds which have proved their track record over a period of time. But do keep an eye on the cost as well, because that makes a big difference. And Prableen mentioned that the compounding over a period of time makes a huge difference, especially when you hit that 1 crore mark, which I hope a lot of you will hit over the course of the coming years. Prableen, thanks so much for taking the time. Pleasure speaking with you as always.
Alex, I'll just add one thing here, that while we, cost is a very important thing, but there's this advertisement which I want to mention, and it says that जब महंगे दाम वाली क्वालिटी सफेदी और झाग कम दाम में मिले तो कोई ये क्यों ले वो क्यों ना ले. So index can definitely fit into that definition, but there are for active funds, I think if they're able to justify the fee, then definitely I think it should be a mix of active and passive.
But for those people, probably the counter argument to that is that you have to pick and choose the active fund to win as well, right?
Yes,
so
absolutely.
That is where an issue comes. And of course, that is why people come to people like you, distributors and advisors that give the right advice. But if you're doing it yourself and you want to erase that from the possibilities of the problem of choice, if you want to remove that from the equation, then passive is the way to go. Praveen, thanks so much for taking the time.
To come back to excise, the Central Excise Act will now back again get the cigarette items and retaining largely the incidence of tax, we are imposing the excise on these demerit goods. That's the sum and substance of the story behind why now excise is coming in. So in general, I also want to highlight the fact, since the intent is not to tax tobacco and tobacco products lesser than what prevailed earlier, it's important for us and this August House to recognize the fact that during the GST period, tax on tobacco-related products, even with the cess being there, could not reach the benchmark which the WHO sets every year. Meaning, they have what is called as Tobacco Affordability Index of Tobacco Products. They have an index called Affordability Index of Tobacco Products. They monitor the rates which prevail all over the world and point out where the rate is well below the benchmark they set. And therefore they say you're making tobacco affordable, meaning people are not being disincentivized from buying cigarette unless you keep it at a certain level. And there are several countries which keep changing the tobacco rate, linking it to inflation, and even otherwise, annually they keep changing the rate so that the rate is itself a disincentive so that people don't end up buying more cigarettes because now that it's become cheaper. And in that context, 80 countries revise tobacco taxes annually, as I said, linking to inflation and also looking at their periodic excise schedules. Australia increases tobacco's excise automatically by CPI plus an additional 12.5%. New Zealand does the same exercise plus 10%. Philippines, Turkey, South Africa, all of them also do an automatic escalating way of pricing tobacco products. EU member countries do 60% over and above the CPI on a weighted average basis, and many countries do exceed 70 to 75%. So what we need to do in India is to see if we are making tobacco affordable, which we don't want to. We want to make sure there is a deterrent, and therefore at the moment, India's total tax incidence on cigarette is approximately 53% of the retail price, which is substantially lower than the World Health Organization's recommended benchmark of 75% of the retail price, or it is even more than 75%. So, as I said, many countries impose over the CPI 80, 85%, 75 to 80%, and so on. So we want to keep that in mind, and therefore the rate fixation has happened, keeping WHO's benchmark as well, and making sure that we don't make cigarettes affordable. But here, there's one element, I think one of the honorable members has spoken in brief about BD, but I want to highlight the fact, sir, that whilst doing this, even BD comes back to excise. But there is no change in tax incidence of BD. Considering the fact that the workers who roll BD come from a lower economic strata of our country, we had made sure that nothing goes to hurt the livelihood propositions but of the BD rollers, but equally continuing with very many schemes which will give them health awareness. I'll read that out a bit to highlight, sir. When I say there's no change in the tax incidence of BD, I just want to put it on the record here so that honorable members will appreciate In the current regime, which will continue till the end of this month because of the compensation cess, which is the scheme of things since 2017 when GST was brought in, the GST rate, as I said, on BD is 28%. And there is this NCCD, which is a calamity-based collection that we do. For handmade BDs, for every 1,000 units, we charge 1 rupee. If it is a machine-made BD, then for every 1,000 units, we charge 2 rupees and not more. Together with that, as I said, basic excise duty continued as a token gesture even during the GST regime when the compensation cess was being collected. The central excise was kept at a very nominal rate. And how nominal is nominal? 5 paisa per 1,000 units. Not 5 rupees. 5 paisa per 1,000 units, which is man-made, and 10 paisa per 1,000 units if it is machine-made. So this is what prevails currently. Exactly what prevails now is what is going to prevail after excise comes into play. So the proposed regime will have BD at 18% as recommended by the 56th GST Council. That is why when the next generation GST was announced, a lot of people said, what have you done? GST BD rate was at 28, over and above that there was some cess, now minuscule cess, but over and above that, so 28% is the rate at which BD was and continues to be till 31st. But we had to move it along with very many items because 28 is not available anymore as a rate under GST. So every item moved to 18 unless it was a sin item which went to 40. Cigarettes went to 40. BD did not go to 40. It, on the contrary, moved to 18 because there was no more 28. So from 1st January or whenever this new thing comes into play, in GST it will be at 18. So a lot of people question saying you've reduced the price because you've reduced the tax on BD. But that is because we didn't have 28, so it went to 18. The NCCD portion continues to be the same as 1 rupee for every 1,000 BDs, handmade, and 2 rupee for every BD for 1,000 units if it is machine made. That continues as it is. And the basic excise duty, where it was 5 paisa per 1,000 and 10 paisa for per 1,000 machine made, will be at 10%. Together, the incidence on BD will be the same. It shall not worsen the situation or it shall not have a negative impact on BD rollers. That's an upfront statement I want to offer. So now I come to specific points which many members have raised. I want to address them. Pramod Tiwari ji, while speaking, apparently has said that the bill is silent on tobacco farmers. And what will happen to the workers who are working in the tobacco related, in the tobacco cultivation and so on. And also he has observed that this is against devolution. I want to first correct this impression, sir. This is an excise duty. It's not a cess. We'll talk about cess tomorrow, day after, whenever it comes. But this is an excise duty. This excise duty, by the very nature of taxable pool, will join the taxable pool and it will be devolved per the Finance Commission's recommendation to the states. It is not against devolution, it joins the taxable pool. That is one thing. Second, sir, there are several schemes from the government to take care of tobacco farmers. Now, this scheme has been on since 2015-16. It's called Crop Diversification Program, Rashtriya Krishi Vikas Yojana, and it runs in 10 states, major tobacco producing states, where farmers are encouraged to move from tobacco to other crops. I'll read out the states where this is happening. Andhra Pradesh, Bihar, Gujarat, Karnataka, Maharashtra, Odisha, Tamil Nadu, Telangana, Uttar Pradesh and West Bengal. In all these states, has it had an impact? Yes, it has had an impact because over 1.12 lakh acres of land has shifted from tobacco growing to other crops. And I'm talking about a period between 2017-18 to 21-22. So what are the crops to which they moved? Each state focused on its own area, but largely sugarcane, if it is an irrigated area, sugarcane, groundnut, oil palm, cotton, chili, maize, onion, pulses, and turmeric, if it is irrigated. If it's non-irrigated area, or if it is a state-specific subject, I'll read out the example of 3 states. Telangana tobacco growers moved to producing Bengal gram and chilies. Odisha, from tobacco, they moved to vegetable growing and maize. Karnataka, they moved from tobacco to soya bean and sugarcane. So, this move from tobacco growing is being encouraged, and 10 states have been given that attention through this program. As I said, more than 1.12 acres of land have moved from tobacco to other.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I am honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money. Through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors.
Lawrence Belanco, technical analyst at CLSA, joining us this morning. Lawrence, thanks so much for taking the time. Pleasure speaking with you. Good morning. Help us understand how you see the latest data points that you're monitoring across the world. How important is this unwinding of the yen carry trade, and what are the key levels when you look at the Indian equity market?
Yeah, I mean, it's quite interesting as far as the yen carry trade goes. If we look at speculative positioning, it's nowhere near what we saw in 2024, where we saw that big unwind in the yen currency. So really what we focus on as first support for the yen is around the 155 area. But I think the important part is to take away that the speculated positioning is not as significantly short the yen as you were back in 2024. So there's less risk from that positioning aspect. As far as the Indian market goes, we've been in this sort of grinding uptrend from the February-April double bottom pattern that we saw. We had an upside target of 26,300, which we've most recently met, and we've started to see a bit of hesitation and a pullback. But bottom line is, we think for global markets, that is, the 21st of November lows is the key pivot support area. And as long as price action across global markets remain above that lows that we made on the 21st of November, we think that there's still the seasonal strength to come through and likely a positive start to 2026.
Lawrence, sorry, just so that our viewers understand this correctly, you are saying that there is a possibility for Indian markets to show the seasonal strength in the month of December and start off 2026 on a positive note. Did I get that correct?
And yeah, that's correct. And, we had 26,300 as an initial upside target, which we met. Next year, we can see the market work our way towards 28,800 as the next objective above this 26,300 area.
A lot of people tend to look at the Sensex or the Nifty in correlation with gold and that ratio and how that does, and typically when it reaches certain levels, markets tend to outperform. Now in Indian markets, that is at a lowest level in a long time. Indian markets have consolidated versus other emerging markets actually doing well. Are we setting the stage for not just the start of 2026 to be good, but the rest of 2026 to be okay as well, Lawrence?
Yeah, so looking at our outlook for 2026, we see a bit of volatility come through the second and third quarter. Now, I think one of the potential positives for India and the broader emerging markets is that we continue to see weakness in the dollar index, and we're looking at the relative ratio of the EM versus DM ratio continuing to improve through 2026. So outside of some pauses and consolidations, we do think sort of the emerging market and the India setup is that we can trend fairly well through 2026.
Okay. Lawrence, good morning. Hiral on this side. Now, when we're talking about what you're tracking in terms of levels as well, there will be a couple of sectors that will lead this kind of rally. Overall, currently we are talking about auto metals, which is seeing a strong move. What are charts indicating? If you have to look at 2026, which sectors are which sectors are showing you strength?
Yeah, so definitely commodities. I mean, we put out a piece earlier this week just highlighting the broader commodity indices breaking out. And we've also looked at the metal space, metal miners globally breaking out. So there's some of the global ETFs that you can track with those breakouts. And we had copper break out to new all-time highs. We're getting upside target on the LME copper at over 16,000. For the LME aluminium contract, we're looking at an upside target there of 3,500. Palladium, another base breakout. So just repetitive breakouts coming from the commodity side. So we think the Nifty Metal Index can continue to improve through 2026 and just reiterate its leadership that you've seen in the second half of this year and a continuation of that into 2026. And the precious metals are likewise set to continue their uptrends. They've actually been the lead for commodities over the past 24 months. Silver broke out last Friday. You're looking at an upside target there of 65. And gold ultimately, while it's currently in a consolidation pattern since the October highs, this consolidation pattern that you've seen for gold should provide the platform for a move up to the 5,100 to 5,200 area. So broad-based momentum across the commodity spectrum.
What about financials though, Lawrence? And specifically, do you track Nifty Bank closely? The fact that it's hovering around that 60,000 mark and the sheer weightage that it has in the large cap index, I'm just wondering whether you think that there will be a resurgence for private banks heading into 2026.
Well, I mean, I'm glad you brought up private banks, because if we take a step back and we look at NSE banks, split between private banks and PSU banks, the banks index broke out in September, leading the Nifty's breakout above its 200-day. And it's still in a longer-term uptrend. But really what the drive has been is the momentum shown in the PSU banks. So that's been the lead sector if you break down the Nifty Banks Index into those two separate parts. So SBI, Bank of India, Bank of Baroda, you've had strong trends there. We think that the private banks will get a chance to break out of their current consolidation patterns. If you look at HDFC, for example, you've been in a trading range for the past 3 months, and ultimately we think that does set up for a break to the upside. But currently the momentum is with the PSU banks, and if you look at the broader NSE banks, you're in an uptrend. And yes, we've got a longer-term upside target of 37,000 on the Nifty, and we think banks will be an important sector driving the index up to that longer-term upside target.
Lawrence, one question I have with you is in terms of what's happening with the dollar index. It's somewhere around that 99 level. Obviously augurs well when it comes to commodities and metals. From here on, if you have to look at copper, gold, silver, we are constantly at record high levels. Till what extent are you seeing strength in terms of levels if you have to track? And what should be that point where you would say, okay, this is it, from here on, it's time to book profits?
Yeah, well, so let's deal with the dollar first, because that's probably the biggest risk to the commodity trade right now. You'd need to see a close above 100 on the dollar index to suggest any potential weakness on the commodity side. But what we've seen since May is that you've had 3 separate rally attempts in the dollar index back to this 99 to 100, and we failed on 3 occasions. This week, you've actually seen the dollar index roll back from that 100 area. It's broken back below its 50-day. And our measured downside target on this breakdown is to 89 to 90, suggesting another 9 to 10% downside for the dollar index. And like I mentioned earlier on, what we've seen in the commodity side is strong trends and fresh breakouts. That momentum continues to confirm it. So, this is the place to remain long and even add exposure, with copper's breakout this week in particular.
In fact, 3% overnight as well. And I love the title on the note, which is Berserk on Commodities. Pretty interesting. Kind of, you read that and the thought process independent of what individual levels might be. But just squeezing in one more commodity question, which is important from an Indian angle, Lawrence, which is oil. Now, do you foresee that to have some upsides from where is it right now, or is it subdued prices that we are looking at for oil?
Well, I think starting 2026, we still remain range-bound. So the $70 to $71 area has been a major cap. It used to be a floor that sort of OPEC seemed to have cut production at the level. It is a level that we've seen OPEC increase production at over the past 6 months. So that is the sort of line in the sand. If you do get oil above 70 to 71, then yes, there is upside towards the $82 area. But what we've seen currently, it's the commodity that is subdued. and we're not seeing any significant pickup to suggest that we get an imminent breakout.
Lawrence, you've spoken about the dollar, and we started the conversation with the yen, but I wonder whether you have an opinion on the rupee, because we've hit that 90 mark, and we've seen a considerable slide in the recent past. Do you track the currency, and do you see any signs of maybe consolidation at this point, or further slide possible?
It's an interesting emerging market currency, because the majority of emerging markets that we track, typically you need to get a strong EM currency showing inflows and outperformance in the equity side. The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
Okay, interesting. Lawrence, if I'm to summarize what we've said, and based on what the note that you've written or the recent notes that you've come out with, it seems to me that what you are implying is that 2026 may be a year of many things, but it's certainly a year promising to be for commodities. The strength continues, and likely that they will be the big winners, at least in the first quarter or the first half of 2026, and therefore that's where bulls could focus on. Would that be a fair assessment?
Absolutely. That's where we've seen the momentum pick up, and we've got the structures in place. You know, in broader commodities, we haven't done anything since 2022, and that's where the momentum's picking up. Absolutely.
And Lawrence, because just one more clarification, sorry, just so that people get it right, there are various facets of commodities, right? Between precious metals, copper, zinc, some others, where is it that you see the highest delta playing out, if you will?
Well, this week it's really been the base metals, right? So Ali's continued the acceleration that we had in October, copper this week, and then precious metals have been in the uptrend. They've been in for the past 12 months. We think that continues, but right here it is the acceleration that you've seen in the base metals, copper and Ali in particular.
Lawrence, my question to you is, apart from the sectors that we've already spoken about, pharma, FMCG, IT, three sectors, how are you expecting them to perform? Because mixed views coming in terms of IT. You have FMCG, which is still on that consolidation phase right now. And pharma has its own challenges, at least as of now.
Yeah, well, I think the fact that you range bound in all three of those make them funding shorts. If you look at it relative to Nifty, it looks like a place that you really have to be quite selective getting the right stocks, because the broader trends are either in a trading range or grinding lower slowly. So we think all three places are worth being underweight. If I had to single out one where you could try some tactical trades, it would be more in the IT space. You have seen some of the larger cap names show some slowing downside momentum, and you've seen a bit of a pickup in some of the mid cap names within the IT space. So out of those, let's say, three underperforming sectors, IT would be top, but pharma and FMCG still look weak and a place to be underweight to fund your overweight positions.
Mid cap IT is where your bets could be. But thank you, Lawrence, so much for joining us on the show. Always a pleasure to speak to you about, and interesting to get you at a time when we're talking about Outlook 2026 as well.
Two very special guests. You could call them the UBS think tank, and they come to us in the month of December to try and understand how is it that they have looked at 2025 and what could be in store for an equity investor per se in 2026. Sunil Tirumalai of UBS, as well as Gautam Chowcharia, join in. Gentlemen, both of you, thank you so much for taking the time. I really appreciate your time. And either of you can start. Maybe I'll go in an alphabetical order, and Gautam, I'll start off with you. How do you see the performance of equities and the risk to it from 2 or 3 factors. If geopolitics was the risk for all of 2025, suddenly the Japanese yields rising has become front and center of all conversation. Is that something that will eclipse most other risks to equities and risk assets for the near term?
It doesn't seem to be happening as we speak for the broader markets. For India specifically, I think I'll let Sunil answer that Japanese yield question from his EM lens. But from an India perspective, I think Indian markets this year have been boxed, so to say, in a triangle of strong retail flows, but also coinciding with huge capital raising and rich valuations. In the context of fundamentals, and that boxing has continued being in that, so it doesn't come down much, but it doesn't also go up in absolute terms. What it's also meant is that India has underperformed the rest of EM because we saw strong earnings momentum in the rest of the EM, especially the tech-driven sectors. Now, whether this changes going ahead or not, look, the retail flows likely to continue strong. The capital raising pipeline remains huge. The question boils down to valuations and fundamentals. So valuations, even despite market stagnating, are not attractive in absolute terms. Yeah, you could say related to a year back, 2 years back, slightly better, or related to EM, less of a premium. But the key driver here on will be the local growth fundamentals. And that's where the debate around tariffs or geopolitics will come in as to how that weighs or does not weigh on the visibility of growth recovery in India. I'll hand over to Sunil in terms of the EM lens on the Japanese yields.
Sunil, so Gautam, thanks. But Sunil, no, I'll peg in one more thing there, right? One is the Japanese impact on emerging markets, and two, emerging markets, within the emerging markets basket, the fact that India has underperformed so much over the last 14 months, does that kind of give a bit of a floor to any large global event that may impact emerging markets?
Right. Thank you. Good morning to all your viewers. Let me answer the two parts to your questions, one after the other. I don't think I would make a big deal of the Japanese yields going up, or what people like to call as the carry trade and the unwind and so on. If you look at what's happened over the last 12 months, 18 months in terms of global portfolio flows, the world has bought record amounts of the US, in 2025.
Hello and welcome to NDTV Profit, joining us in this special broadcast where we're actually here at the offices of Dream 11 in BKC, Mumbai. Office for a few more weeks is what I understand, but I have with me Harsh Jain, the co-founder and CEO of the company. Harsh, after a pretty long few weeks or months that have been spent in trying to figure out, there's one big court case that the result has not been that great, has not been very favorable. What are these companies going to do next? And you were first out of the gate, or at least in the press, you were first out of the gate to come out with a financial services app. But now you're talking about an entertainment platform and exiting the gaming sort of concept entirely. Tell me a little bit about what the thought process has evolved like over the last few months, and how is it that you're approaching this new idea?
Yeah, thanks. Thanks for having me. I think that the last few months have been a lot of soul searching, thinking how do we pivot now from what we were doing to where we can continue adding value. And we went back to our roots. In fact, in the office is about we're moving from BKC back to Worli, where we were for I think for 14 of our last 18 years, before just moving to BKC. But we went back to thinking, why did we start Dream 11? And that was to make every match more exciting. That has always been our mission for Dream 11. And if fantasy sports and the freemium version of fantasy sports has been struck down by the government as they don't want it, and they passed regulation and law that says that we don't want it, and PROGA is a law now. We don't want to do that. Obviously, we can't do it, we don't want to do it. And so we said, what did Dream 11 do that made it work? And the fact was that Dream 11 basically enhanced a match. It made every match more exciting by making you an active participant instead of just watching TV or watching a match, you could now actively engage and feel that you are part of it in a bigger way. Today's day and age, we find that everyone is watching a match alone at home because the internet has perfected the art of watching the match on your phone or on your tablet or on your screen, TV screen, connected TVs. And so we're all watching alone. But we all want to watch together. But no one has the time. No one has the inkling to go create a plan, go like we used to create with going to a pub or a bar or a club or a friend's house. We don't do that anymore. So we said, okay, how do we allow people to watch a match alone together? I know it's paradoxical, but that's the problem. And that's why we saw that the new generation really wants to connect with their friends and loved ones over video calls. So how do we get video calls to integrate with the sports match in a way that they can enjoy watching that sports match together with their friends from the comfort of their home? And that's what the new Dream 11 is about.
You aim to be a second screen platform, right? I'm trying to understand why that second screen, because even 10 years ago, everybody wanted to be the primary screen. But now I think there's this aspiration that how can it keep you distracted enough from your original activity?
Yeah, I think the second screen experience is something that's always been there. Like at least for me, whenever I'm watching sports, I might be watching it on Hotstar, but I'm opening CricBuzz and I'm seeing the scorecard, some commentary, what's happened, who's coming batting, who's gone before. So we're always using a second screen because the first screen is not something you can control. The first screen is something that you're just passively viewing. The second screen becomes your active engagement and control. And that's why Dream 11 succeeded, because it actively engaged you in a way that you could pick a team, you could see how you did. Today our second screen now pivots from gaming to watch-alongs. Now you can have your favorite creator watching the match and watch their excitement, their raw passion, energy, their expressions as they go through this roller coaster emotion of watching sports. And that's what we want to bring to every household. Watch-alongs is something that has been immensely popular worldwide in many other places. Twitch is a great example of a streaming platform for gamers. People love to watch other people playing games and talk about their feelings and what they're going through. Gen Z today wants raw, unfiltered commentary. They want commentary which will have a bias, which will have a standing, which will have favorite teams and favorite players and have an opinion on everything. And that's what I think they'll find in Dream 11.
So when you're talking about creators coming on the platform and creating the kind of content that your audience would like to engage with, firstly, how is that process going about bringing these creators on your platform, because they already exist on other platforms and they're fairly comfortable doing that, versus this which will be entirely new. The other part of this is also bringing people in, because you have in the recent past talked about curbing budgets for specifically, let's say, marketing. So how are you getting your customers on board with this new?
So fortunately, we've been continuing free-to-play fantasy since the real money gaming ban, Proga ban. We've been continuing free-to-play fantasy, and until we pivoted our product, because of which we already have 20 to 30 million people who come to our app every month. Just because they love fantasy sports, they want to play for free, they want to compete, they want to feel connected with that sports match. Now that we've launched today, actually right now, we've launched Dream 11 with watch-alongs. We're hoping a substantial portion of these 20-30 million people that come to make their team will also like to watch along. So we don't need a marketing budget. We already have millions of people that can hopefully convert. If they convert, we'll be like a startup. If our users convert and they like what they're using, they'll tell their friends about it. And there the virality begins. So of course we'll have some marketing budget internally to just tell our user base, because they have a fairly substantial 250 million users, not all of whom are active. Many of whom think that Dream 11 was only RMG. We have to remind them now, we have to tell them and inform them that gaming is done. Now we're a second screen sports entertainment platform. So please come and try out something that you liked about Dream 11. This is our new product. Please try it out.
You've, famously, as compared to the rest of the industry, which immediately reacted with pay cuts and job cuts, you famously retained your entire workforce at Dream 11. But you also talked about the fact that some of these people will be redistributed into other projects that are part of the Dream 11 umbrella. Tell us a little bit about that as well.
So we wanted to have Dream 11 going back to a startup, because it is a startup again now, a young startup. And so we had 1,000 people working on Dream 11 earlier, but now for the new version we needed less than a couple hundred. So now we have less than 200 people on Dream 11, but this winning team, this team that has done so well to build Dream 11 and to create a great product is still a winning team.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world.
Good evening. Welcome to the big question on NDTV Profit. I'm Vikram Oza. Now, Prime Minister Narendra Modi is going to meet Russian President Vladimir Putin in New Delhi. This visit loaded with history, strategy, and also timing. Putin is returning to India after a 4-year gap. He was last here in the year 2021. So now he's here to reinforce what both countries call a special and privileged strategic partnership. But this is not a routine summit. It comes with military, energy, and geopolitical stakes running higher than at any point in decades. In the run-up to the talks that the two countries are going to have, New Delhi, of course, has already cleared the key deliverables from ratifying the long-pending military logistic pact, which is called RELOS, the Reciprocal Exchange of Logistic Support. That has been ratified. Also, India has secured a $2 billion deal to lease another Russian nuclear-powered attack submarine. So the agenda for the Putin visit is stretching across defense co-production, long-term oil contracts, there is civil nuclear cooperation, fertilizers, recruitment of Indian workers, and yes, a new payments framework as well, which could include the dirham route. It links Russia's SPFS system, which is short for System for Transfer of Financial Messages, SPFS, and that could be linked with India's RuPay network. All of this is happening as the US tightens sanctions on Russian oil. It is cracking down on major suppliers like Rosneft and Lukoil, and it presses India now to reduce dependence on Russian crude. And this even as Western pressure is growing to end the Ukraine war. That pressure has been building on Russia. So what's on the table this time between the two countries as they meet? India is, of course, looking at an additional S-400 missile system, and they're even exploring Russia's next-gen S-500 Prometheus, along with potential cooperation on the Sukhoi 57 stealth fighter, with deeper technology transfer this time. And on the economic side, New Delhi wants long-term certainty on discounted Russian oil. India is looking for solutions to the payments headache, also expanded agricultural access to the Russian market, and a push to narrow that 59 billion trade deficit. It's a yawning one, which incidentally is India's second largest after China. And Russia, for its part, has signaled fresh interest in India, from seafood and shrimp imports to high-yield agriculture, fertilizers, and plans by Sberbank to expand operations and invest surplus rupee funds into Indian government securities. Now, Russia is India's fourth largest trading partner. Bilateral trade has hit $68.7 billion in FY25. But the imbalance over there is quite stark. India is exporting just $4.8 billion, and oil and arms are dominating those imports. So no Indian export category to Russia is actually crossing that $1 billion mark. In fact, India has a trade surplus with only 2 of its top 15 partners. That's the US, and the other country is the Netherlands. And the biggest surplus, which is $41 billion, is with the United States. So compare India's trade with the US and then with Russia. With the US, India trades across pharma, auto parts, electronics, and textiles, and each category is worth billions. With Russia, that relationship is narrow. It is down to crude oil and defense hardware and fertilizers. So that asymmetry is at the heart of India's challenge. But defense is still the cornerstone in the relationship that India has with Russia. It has been so over the years. It is the backbone of their ties. From aircraft carriers to nuclear submarines and missile systems to joint production, Moscow has been New Delhi's primary supplier for decades. But the dependence is shrinking now. Russia's share of Indian defense imports has actually fallen from 78%, that's between the year 2001 and 2004. Now, between the year 2021 and 2024, it has come down from 78% to 34%. Even so, Russia remains India's #1 arms supplier. And the partnership today is more about co-development and technology transfer than that dynamic of a buyer and seller. But then what about the oil rush and the new conundrum that has come up? Because since 2022, India has leaned so heavily on discounted Russian crude. From $1 billion of Russian crude, that was the dependence in 2017. This year alone, it is $57 billion, with Russia supplying up to 35% of India's crude oil needs. But that landscape too is shifting after President Trump's additional 25% tariff penalty for Russian oil purchases. And that has taken the total tariffs on India to 50%, and that has been hurting. Now the new US sanctions targeting Russian suppliers. With that, India's imports this December are projected to hit a 3-year low. Now, some Indian refiners are sourcing non-sanctioned Russian grades. Others, like private refiner Reliance, they've stopped processing Russian oil entirely. So it's a complex moment for India's foreign policy. This Modi-Putin meeting is unfolding at a moment when Russia is simultaneously, one, trying to stabilize a crucial legacy relationship with Moscow. Secondly, India is managing the world's toughest sanctions regime around Russian oil. And thirdly, diversifying defense. And they want to move it away from Russian systems. And yet at the same time, we're trying to deepen our strategic, military, and economic cooperation with our largest trading partner, which, of course, is the United States. Just hours ago in Delhi, India's Defense Minister Rajnath Singh and the Russian Defense Minister Andrei Belousov, they've jointly laid a wreath at the National War Memorial. It's a symbolic reminder of the decades-old military partnership that still shapes India's strategic choices. So that is the backdrop. Now, can India strike the right balance between Russia and the US in this historic Putin visit? That's a big question we're asking tonight, and we're taking it across to our panel of experts. And joining us tonight is Phunchok Stobdan. He's former ambassador and Russia-Eurasia expert. He joins us on the show, along with Lieutenant General Shankar Prasad. He's a defense expert. Rajoli Siddharth Jayaprakash is also with us, junior fellow at ORF. And Deepak Bhojwani, former Indian ambassador, also joining us on the big question. So let me begin by asking you, Phunchok Stobdan, you know, if you try and compare the kind of relationship that India and Russia had before Trump came into the second term that he has as President of the United States, and before these tariffs, the heavy tariffs came in, how has that impacted India-Russia ties since that has happened, since Trump has come into the second term and these tariffs have been imposed?
I think the relationship and the context has become far more serious, far more intense, I suppose, compared to what it used to be maybe a year ago, partly because of the changes that have taken place. But I think this is typically a symbolic in the international relationship, you know, the visits of the head of states to another country. And at this juncture, President Putin's visit is really, really very important symbolically, at least, both for Russia and India, to show that we are not isolated, despite all that happened in the last 1 year, what Trump did to curtail the Russians and the Indian interests everywhere.
Yes.
So I think this is to demonstrate the solidarity, the unity, and I won't say balance. Balance is a very difficult thing. Balancing act is a very old phrase used during the Cold War, but balancing of power is no longer important. It's an outright politics, outright political stand, geopolitical stand one nation takes
Yes.
in favor of the others. So I think this is more than a balancing act.
Yes.
And I think this visit is very, very crucial.
So, what is that messaging that is going out on the defense front with the ratification coming in on reloss? Lieutenant General S. Prasad, this question to you. Now that that ratification on the reciprocal exchange of logistics support has come through, is that a signal, is that a message which is talking to the US as well, that India is actually doubling down on military interoperability?
Well, not really. If you look at the acquisitions of military hardware of India for the last 2 decades, you will find that this is one country, India is one country, which buys the best equipment available in that particular level, whether it's the tanks or the guns or the aircraft, which best suits Indian condition and it best suits our economic condition. We find that we bought Rafale from France. We bought a large number of military hardware and platforms from US in the last 8 to 10 years, and our dependence on Russia and military aid, military purchases from Russia continues. The most important thing at the moment is this. While very large number of items must have been already discussed with the frequent meetings between the foreign ministers of India and foreign ministers of Russia, as also about the NSA who frequently visited Moscow in the last 6 or 8 months, many of these issues have already been finalized. That's the way diplomacy works. But what is most important is, and that I think will be publicly not even be shared with the public, is what is going to happen tonight at the Prime Minister's private dinner. Now the issue is, with the sanctions put in by the United States on the oil and other trade between Russia and India is a serious matter.
Sure.
If you recall, President Trump has even mentioned that he wants to make sure that the BRICS people, the BRICS countries don't hijack the entire system of monetary system in the world. Today, we need to discuss and finalize, and I think the two heads of state who are meeting tonight for dinner will discuss this in very private as to what can be done without overtly annoying the American president, but also circumvent or find ways and means to overcome these sanctions that have been levied. I think the answer would be also perhaps what kind of rupee and ruble trade that can take place.
Yes.
Many years ago, you'll recall, when the large number of agricultural equipment were being exchanged between the two countries, including leather goods and other garments, a lot of trade used to take place in rupee-ruble trade. Is that the answer? And how much is the answer? Of course, obviously, the trade imbalance is very large, as you've seen.
Yes.
We only do about 4 or 5 billion, and they do about 60 to 80 billion. So the issue today is, and the primary issue which I think needs discussion between the two leaders, independently of the delegations, is how to circumvent, how to find ways and means that you do not upset the Americans, as also continue our trade between Russia and America, in which manner to avoid these taxes and the tariffs.
So
this is the most critical part.
It
which
is.
I think is going to be discussed very privately today.
Yes.
Tomorrow onwards, it's all delegations and the 8 ministers that I hear, they will discuss each of those things. Many of those things have already been ironed out, whether it's S-400, take the example of the 2 aircraft.
Yes.
The F-35 and the Su-57. India is good. I'm not an Air Force guy. I don't fly planes. But I can tell you, India will go for an aircraft which is better between the two of them. From what we know as laymen from outside, Su-57 is far ahead, whether it's in range, whether it's in load capacity, whether it's endurance. You will find, if you read these through the newspapers and to other defense magazines, you will find Su-57 far goes beyond the F-35. We have to see how to balance this with America, because after all, the Americans are also looking at India in many ways to sell equipment to us.
Correct.
And to also retain our friendship as far as the AUKUS is concerned, and as far as those, Southeast Asian, Japan, Australia, India, and America are concerned.
Correct.
Those have also got to be kept in mind.
Yes.
So it's a very complex situation. What is important is that this is a very critical moment maybe we've had 20 meetings between the two heads of state.
Correct.
But this particular one, which is taking place under the shadow of the American tariffs and the Ukraine-Russia war, and the India's phrase that this is not an era of war, we have to resolve problems by dialogue and by diplomacy.
Yes,
this visit
but
takes
on
very,
that
very
point,
important.
Lieutenant General, on that point, and perhaps I should take this across to Ambassador Bhojwani, because you raised an important issue when it comes to that rupee-ruble trade. With India running this massive $59 billion trade deficit, Ambassador Bhojwani, versus that $41 billion surplus that we have with the US. So I'm just wondering if that economic imbalance is going to distort India's room for diplomatic maneuver between India and Russia at this time, with that kind of economic imbalance that we have, and if you're going to strike a more rupee-ruble tilted kind of relationship than we have in the recent past at least, is that not going to irk the Americans?
I think in the first place, Mr. Oza, we should realize that our relationship with Russia and our relationship with the US have to be treated differently. It's not a zero-sum game. The Americans may want us to believe it is, but I don't think we should agree to that. As our External Affairs Minister said the other day, what we need to do is recognize how different regimes are behaving and react accordingly. If the US is behaving in a manner where it feels it can radically alter its foreign policy priorities and its actions, I believe we have the right to do what we feel is in our interest. And the time-tested relationship with the Russians has shown that we should amplify the relationship no matter what. Now, you're talking about an imbalance. Let me remind your viewers that in the 70s, 80s, 90s, we worked up a $30 billion trade deficit with the Soviet Union, which is the successor happens to be Russia to that state. And we paid it all off, despite the fact that by the time we paid it off, I mean, in the early 90s, Russia and India went through seismic economic shifts, as we all know. But nevertheless, India paid off that debt, and it paid it off at the rate which it was supposed to be before the ruble devalued considerably after the Russian changes took place in the 90s, okay? So we've had these kind of imbalances with the predecessor state to Russia because we have imported more from Russia historically. What Mr. Putin's visit is seeking to do, and will to considerable extent do, is balance that trade somewhat by importing more from India. But if we do need to get more from Russia, whatever that may be, whether it's strategic material, whether it's energy, whether it's nuclear power plants, whatever, I think we should go right ahead, because the Russians have never treated us as if we are debtors and have never deprived us of opportunities. Even despite the debt that we've had with Russia, we've been allowed, our companies, for instance, ONGC, BPCL, and the other oil companies of India, the public sector companies, have invested billions of dollars and realized considerable profits from Russian oil fields. So the relationship has been very beneficial to India, and I don't think we should allow imaginary sort of phobias about having the deficit to get in the way.
So it is very clear in terms of India's stance from what we are hearing from the ambassador and Mr. Stobdan. Perhaps you can answer this for us. Even as India is now trying to do this entire balancing act, and like ambassador is pointing out, that there is a stark difference between the relationship that India has with the US and what it has with Russia. But that pivot is very certain that India is looking after its internal interests. I don't know how you see this, but perhaps you can tell us whether India's stance today in geopolitics, when it comes to concentrating on our needs first, with this visit, the sanctions have already been imposed on Rosneft and Lukoil. That kind of pressure, I'm just using that as an example, is it going to reshape Russia's expectations from India at this visit? And can that American kind of pressure that is building up change our nature of the kind of trade that we've had and the defense ties that we've had?
I think the Russian options are limited. If they want to diversify import from India, I think they will have to go for a big item projects like the migration, which now perhaps the two leaders are now going to talk about, the mobility agreement of taking some 70,000 Indians in the Siberian region, or maybe in the Vladivostok area, for working in the military and the industrial areas. Now that would be a grand initiative. How to take it forward would be very critical, not just in terms of the relationship, but also balancing what you are saying in terms of economic and deficit and all that thing. So these are very, very important. But I would say, if you treat India-Russia relationship only as a market dynamics, it won't work. Then this utility items like fighter jets and these things, that will come in the category. But to me, I think India-Russia relationship signifies far more deeper.
Sure.
If you go to Moscow, I have seen myself, a lady finds a small empty packet of tea, with the Taj Mahal photograph on that, somewhere on the street. She picks it up and puts it in the frame at the house. Now, it's so much deep, feeling that they have for India. So it's the spirit which is very important, and the trust,
right,
which is driving the relationship. Not so much F-16 or what do you call it, S-400 or S-5. That will come and go depending on the purchasing power of India or whatever requirement that we have.
Right.
But I think it's the spirit of relationship. And end of the day, it is only Russia which is going to save us, Kashmir. Because otherwise, the way it looks like that Americans are going to take the Kashmir away from us to put it with Pakistan, which is not easy. But history shows that it's only Russia which has able to protect our interests when it comes to Kashmir issue.
Right. So even as we talk about how there is a tradition of trust between the two countries, Lieutenant General Shankar Prasad, when you talk about the defense relationship in particular that India has with Russia, historically now moving from that buyer-seller to co-development. So there is a restructuring, as it were. How important is that in the current dynamics? Because this submarine lease deal, it reinforces that very trend. Or do you think that shows India still dependent on Russian platforms? Do you think it's actually changing the nature of the relationship, even though the basis, the foundation, like Mr. Funchok is pointing out, is trust?
Of course, yes. The trust is the most important thing. Russia has been with us on a strategic plane right from the 71 war, which we cannot forget. And thereafter, we have found that continuously throughout the period, the Russian and Indian friendship has only grown by leaps and bounds. Today, if you look at India-Russian relationship, the Russians fully appreciate and understand that India is a country which is following the policy of genuinely non-alignment. In fact, it is alignment of what we feel wherever is the best issue available to us. We've gone to the world to say, we will buy the oil from where it suits us. We will buy the weapons from where it suits us. We will import and export things from where it suits us. We have a national interest first. That is the story which is not so prominently known a few years ago. Today, India is known world over in the fact that India is looking after itself. What is India's interest is what is paramount to us. Now, in this particular case, today, India also has another very interesting position to exploit, if I may use the word, that today a large number of people, and if you, I think somewhere in yesterday's newspaper or this morning's newspaper, it even took an article out to say that the NATO countries, although openly they're saying,
Lieutenant General, we seem to have an audio issue over there, and we'll try and rectify it. But I want to take this point across to Ambassador Bhojwani very quickly because we are running short of time. Ambassador, can India, you think, sustainably balance this discounted Russian oil that we are hoping for, the American sanctions? We don't know when a trade deal is going to take place with the United States, the kind of defense diversification that India is looking for right now, and that $132 billion trade relationship with the United States. Do you think that balancing can happen in a way that is sustainable?
I don't see why you have to use the word balancing again and again. Our relationship with the US will proceed. The only difference is that President Trump has sought to link our purchase of Russian oil to tariffs on goods which we export to the US. That's the only linkage. And that's a spurious linkage. We've established that we can buy Russian oil if it's in our interest. Of course, the problem is that it has diminished, not because we don't want to buy Russian oil, but because increasingly the ships that carry this Russian oil are being sanctioned. So they're not becoming available. And there are still over 1 million barrels a day being imported even now as we speak. So as a result of that, it's not as if we're not buying Russian oil. We are. As far as the defense relationship is concerned, to your earlier question about our diversification and indigenization and so on, you must remember that we have been manufacturing BrahMos missiles, which were supplied to us initially by the Russians. And now we are even selling them to countries like the Philippines and so on, with the collaboration of the Russians. It has been a win-win relationship all through on defense. This has been the case for decades since we started making the MiGs and automatic weapons, which were initially supplied, the technology supplied by the Russians.
Right. So Rajoli hasn't had a chance to speak and we lost connection with him for a bit. But Rajoli, if you can tell us from your perspective, Ambassador doesn't believe that this is about any kind of balancing. Would you agree with that or not? Because Moscow, when you look at what it really wants from India at this moment, perhaps that could be different from what it has wanted in the past. Yes, defense orders, oil commitments as well, but the kind of agricultural access that India needs from Moscow, the strategic signaling that sends out to the West, is that something that Russia also needs with closer ties right now? Have the needs changed? And is that going to impact how these talks progress?
Actually, I agree with the ambassador because I think the word balancing is just taken a bit too far because I think that you have to understand that the premise of the India-Russia bilateral summits have been taking place for the last 20-ish years. So I think it's not to do with balancing, hedging with one power or the other. It's more to do basically with keeping the bilateral relations relevant. So in that light, even if there is a new trade pillar that has been discovered, or trade being the flavor of the year, it's still about keeping bilateral partnerships relevant. It's not about balancing one power with another power. Even though the United States, even though Trump is the first leader who has tried to punish India for its relations with Russia by imposing secondary tariffs, but it's not about balancing with one power or the other. I think it's always been clear that our equation with the US is completely different from our equation with Russia and with any other power to begin with, because that's not the foreign policy we follow by balancing one power with another.
It certainly, yes, of course. And indeed, how this entire visit pans out, as historic as it turns out to be, India hosting President Putin at a time of global churn, the challenge in navigating an increasingly polarized world without losing strategic autonomy is the basic focus where we are coming in from. We'll have to see how New Delhi is going to take the oldest defense partner and its largest trading partner, how they are going to be looking at both of these, even if it's individually, but we are going to be looking at it holistically in terms of India's approach in times to come. But thank you very much, Phunchok Stobdan, Lieutenant General Shankar Prasad Rajoli, and Deepak Bhojwani. Thank you very much for joining us with your insights on this discussion here on The Big Question on NDTV Profit. And indeed, we'll keep our focus as President Putin makes his way to India. We've got our eyes and ears peeled for all the developments on the trade front and indeed the defense front as well. So all of it here on NDTV Profit. But for the moment, from me and the entire team on The Big Question, thank you for joining us. Have a great evening.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The rupee has weakened past 90 rupees per dollar.
what is the RBI has to say about the rupee under the current context.
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, this means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys are
Hello and welcome. You're watching Market Express and I'm your host Makshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So Nifty ends the day above 26,000 level. Sensex ends marginally in green with an uptick of 50 points. Advanced decline ratio tilted in the favor of the declines. And if we talk about the sectors, so most of the sectors have ended the day in the green, with IT sector gaining on the back of a declining rupee. So media and energy were on the back foot. Viewers, all eyes on the crucial Modi-Putin meet. The much-anticipated visit by Russian president underscores critical bilaterals on defense, pharma, agri and tech services. Ukraine conflict and crude imports too on the agenda. In more news on Putin's India visit, India will pay about $2 billion to lease a nuclear-powered submarine from Russia. The delivery of the vessel has been finalized after roughly a decade of talks. Talks for leasing the attack submarine from Russia had stalled over the years because of price negotiations. The two sides have now agreed on the deal, with Indian officials visiting a Russian shipyard in November. So India expects to take the delivery of the vessel within 2 years, although the complexity of the project means that it could be later. Viewers, the rupee slide to record lows is proving to be a tailwind for India's IT sector, with the currency down 1 to 3% against the US dollar and euro. Revenue translation is getting an immediate lift. So this is as dollar billing converts into higher rupee earnings. Now, since 75 to 90% of its revenue come from, in foreign currencies, majors like TCS, Infosys and also Wipro were among the gainers in today's trade. So the weaker rupee also widens some margins because offshore delivery costs remain rupee dominated. And for context, offshore margins are nearly 3 times higher than on-site work. So typically a 1% move in the rupee can actually shift the margins by roughly 30 basis points. Viewers, Websol Energy is betting big on India's solar surge. Industry demand for photovoltaic cells is projected to hit 20 gigawatts in FY26 and double to 40 gigawatts by FY27. So to capture this growth, Websol is planning a massive capacity expansion. Solar cells to 5.2 gigawatts from 1.2 and also modules to 4.5 gigawatts from just 550 megawatts. So this rollout is targeted by 2028, implying a 50% annual growth rate in capacity over the next 4 years. Next up, we have Lupin. That has inked an exclusive licensing deal with US-based Valorium Biologics. Under the pact, Valorium will handle commercialization and distribution of ARML Lupig in the US. I beg your pardon. It's the distribution of ARM Lupig in the US, while Lupin will manufacture and supply the drug. So Lupin will receive an upfront license fee and also royalties on the net sales. So ARM Lupig is used for patients undergoing chemotherapy, making this agreement a strategic push into the oncology space for Lupin. Next up, we have BML that has bagged a 157 crore order from Lorem Rail Maintenance. The order is for supply of switch rail grinding machines, which are critical for maintaining rail tracks and also ensuring operational safety. So this deal, reinforces BML's position in specialized rail equipment manufacturing and also adds momentum to its order book in the infrastructure and rail maintenance segment. Copper prices are on a tear globally, and Hindustan Copper is riding the wave. So the stock has jumped 11% in just 5 sessions as rising copper prices boost the demand and also valuations across the sector. Adding to the momentum, the company recently signed an MOU with NTPC Mining aimed at collaboration in critical minerals, which is a space that's gaining strategic importance. So analysts say that elevated copper prices could actually keep the sentiment strong for metal stocks in the near term. Electricity trade volumes on the Indian Energy Exchange saw a sharp uptick in November. Total trade rose nearly 18% year-on-year, and this was driven by strong growth in the real-time market, which surged over 40%. So prices have also moved higher. Real-time market rates have climbed 9%, while day-ahead prices were up nearly 7%. However, day-ahead volumes stayed flat at around 5,668 million units. Next up, we have Petronet LNG that has locked in a major long-term deal. They have signed a 15-year agreement with ONGC for ethane unloading storage and also handling the services. So as part of the arrangement, Petronet will provide an ethane storage tank capacity of 1.7 lakh cubic meters. ONGC, meanwhile, has committed to reserving roughly 600 KTPA of that capacity. So the transaction is expected to generate around 5,000 crore rupees in gross revenue, and operations are set to begin between FY28 and FY29. So this marks a significant step in strengthening India's ethane logistics and also midstream the infrastructure. Viewers, next up we have Newgen Software Technologies that has secured a notable global client win. They have bagged a 13.9 crore rupee order from Mercedes-Benz. Now the contract is for implementing a loan management system, reinforcing Newgen's presence in the enterprise-grade financial automation. So the project will be executed over a 5-year period, and this will also add visibility to the company's long-term revenue pipeline and strengthen its footprint in the automotive financial services space. Next up, we have Pace Digitech that has announced a significant order win, securing a 99.7 crore rupee contract from Advait Green Energy. So the deal is for supplying an LFP battery energy storage system. For context, that is a key component in renewable and grid stabilization projects. And under the delivery schedule, Pace Digitech will supply 50% of the BESS DC blocks by March 15th of 2026. And the complete system is expected to be delivered by April 2026. So the order adds strong momentum to the company's presence in India's fast-growing energy storage sector. Next up, we have
in line with the sizes of those economies. So we need to solve system problems. We need to increase communication between our businesses in order to get to much higher volumes of India's export to Russia.
Mr. Oreshkin, in the past, we've seen a couple of problems when it's come to trade between Russia and India because of currency and the transfer of funds. Has that been resolved?
Already now we see that the most of the trade is being done in rupees and rubles, so it's done in local currencies, and there is not that huge problems like it was in the past. But as we will see more businesses, more contracts and more exports from India to Russia, we will see even less problems with all these systemic issues. It's not only about payments, it's logistics that need to be solved, insurance and so on and so forth. So we will be gradually working on each of that issue to make the trade between the two countries more comfortable.
Showing our viewers images from the area where your president is going to be landing any moment now. Our Prime Minister has reached the Parliament Technical Area, the airport area, to receive him in person. What do you make of this kind of personal relationship, these gestures that both of them, both the leaders, make for each other, the fact that today the Russian president is going to be welcomed by the Indian Prime Minister at the tarmac itself?
Definitely the relations between the President Putin and Prime Minister Modi are at a very high level. This is true friendship between them, and this of course helps us to solve a lot of issues that raise and pushes the relations between the two countries forward. This definitely helps.
Mr. Oreshkin, just in terms of, in your opinion, the big takeaways from this visit, what do you expect?
Well, another big step forward in terms of goods trade, step forward in services trade between the two countries, issues connected with the technological cooperation, especially on the artificial intelligence, and also of more free access of labor force of one country to another jobs market.
Okay. You know, this visit also comes immediately after you had Steve Witkoff and Jared Kushner in Moscow. What is the messaging from there? That you had that meeting, of course, any of us would have loved to be a fly on the wall for that rather long meeting, but soon after, Mr. Putin is in India.
I believe that there will be a lot of themes to discuss between the President Putin and Prime Minister Modi, definitely. They will have extensive discussion, I believe, of all global issues. But I'm here to discuss business opportunities between our countries, and we are doing a substantial progress in that area.
Okay, Maxim Oreshkin, appreciate you giving us your time right before the President of Russia lands. We've got these live pictures on our screens, and I'm going to stay with these pictures. There's a tri-service ceremonial welcome. As you can see, the soldiers have all lined up there to receive the President of Russia. They're there, right there on that apron. You can see a few aircraft landing and taking off, Vishnu. That's far in the background. But the Russian president's aircraft, of course, is going to be unmistakable. So I want to stay with these pictures and nothing else right now. Vishnu, a tri-service welcome for the president. The Prime Minister will, of course, also be there on that carpet to receive his friend Vladimir.
No, absolutely. And if I can just request our PCR to bring up flight radar so that, our viewers know where exactly this aircraft is. Just a couple of minutes away. It's the most tracked flight in the world, which is why we want to track it as well. But yes, it's a tri-services guard of honor. The national anthems of both sides, I presume, would be played out. Prime Minister Modi will be, sort of greeting Vladimir Putin. I think Shiv raised an interesting point earlier on. I think it was Padmaja who raised this point earlier on that, will Prime Minister Modi get into the vehicle of the Russian president? The Russian president usually travels in his own vehicle. It's called, well, like the American president's car, it's called the Beast in a sense, but it's a Russian vehicle, heavily armored. It's got, it's blast proof. It's got secure communications, etc., etc.
And has been delivered here ahead as well. Right.
I would suspect more than one of them.
Yeah.
So would that be done for a while, or would they go their own ways? I would suggest that they would actually travel, their own ways, because there is a dinner which the Prime Minister is hosting for President Putin later.
And the reason why we talk about all of this is, remember, this visit also has ramifications on the kind of politics that we see here. We're right in the middle of the winter session of the Indian Parliament as well. And again, one of the long-standing allegations against the government has been that right now you've got nobody in your corner. Everyone, did not stand up for you, did not stick up for you, especially during Operation Sindoor. And all of these countries were put in that same block. In fact, we've had the Congress saying that your friends like America, like Russia, they did not apparently call out Pakistan. They did not vocally put Pakistan on the mat, as it were, for what happened in Pahalgam and thereafter in Operation Sindoor. But these images tell a different story.
He's landed. The president of Russia has landed. We can confirm to you. Pictures just in. These are live pictures from the Palam airport. The president of Russia has landed. Prime Minister Modi there in his motorcade on the apron. So it is going to be a big, big Kodak moment tonight. The Prime Minister is there in person. These are the first pictures of Prime Minister Modi at the Palam technical area. So that settles that. Vishnu and Padmaja, he's going to be there on the apron. Expect hugs and handshakes as well on the red carpet as the Russian president gets out from his Ilyushin 96 aircraft. I'm still wondering whether they're going to travel in the same vehicle. You never know with these two leaders. Let me put it out there. You never know with the both of them because they share a bond that is quite rare, quite unique. So there's every possibility that may happen. But like Vishnu rightly pointed out, I think the Russian president goes to his hotel first and then...
But can I just say, Shiv, if he has landed, then there's another aircraft in the air which is also from the Russian Special Flight Squadron,
decoy,
which is on its way. And that would possibly be a decoy aircraft, right? Or Padmaja, that might be the aircraft that he is landing in. And the one which has just come in earlier on, if indeed that is the case, is the decoy.
Well, this is a special gesture. The Prime Minister has broken protocol. He is there in person to receive President Putin. But what I do want to, ask both of you, the fact that all this while you've got Europe, you've got America in particular, asking India that you must try and isolate Russia. Despite all of that, this personal gesture, going out of your way and saying, not only am I not going to isolate him, I am going to accord him a special welcome in person.
No, but I think this is the most important point in all of this. India's foreign policy has been entirely independent. The word non-aligned is an unfashionable. We call it an independent foreign policy.
Which is funny because again and again we hear the word surrender in the discourse we hear in our country.
The fact of the matter is India has chose to do exactly what we feel works for our interests. So we have a great relationship with the United States, but we've got a great relationship with Russia as well. It's not one or the other. This is the path which has worked well historically. It's certainly something that this government actually takes. And as far as the entire narrative is concerned about countries not being on India's side, the facts
or that
are
India
there.
is kowtowing to one country or the other.
The facts are on the ground on what India achieved. And we've got differences on Donald Trump's sort of interpretation of the sequence of events. But if you actually look at the support that Pakistan has gotten, it's just from a very small handful of nations who protested against India during Op Sindoor, Turkey being one of those countries. And therefore, I'm not sure that we have necessarily lost the diplomatic narrative post-Op Sindoor. We acted decisively.
Far from it.
And I think some of the points mentioned by the opposition, quite frankly, are ludicrous.
In fact, what the Prime Minister said that, earlier we used to talk about having strategic distance. Now we have strategic closeness with everyone, and depending purely on our own interests. We are not going to listen to X person's concerns or say that, we are going to bow before somebody else's pressure. We are going to see where our ends are met.
And exactly. The man on your screen, just to add to what Vishnu said and to answer you, Padmaja, is Narendra Modi is perhaps the only leader in the world. In fact, I'm sure he's the only leader in the world who in the last 18 months has met and hugged both Vladimir Putin and Volodymyr Zelensky. He's a person who has met both President Trump as well as spoken to President Trump as well as President Xi Jinping. A person who has not stumbled off that path of having a completely independent foreign policy. So I agree with Vishnu when he says that while it is tempting to look at every action as a reaction to a temperamental leader like Trump, and sometimes it is, because remember, even diplomacy ultimately is a delicate dance. But the fact is, India's independent foreign policy predates many of these leaders. And that's the reason why we're able to stand strong.
And has told both Russia and Ukraine that this is not the time for war, while being friendly with both of them. Again, saying, listen, it's better you come to the table, you talk about peace, this is not the time of war.
So India's foreign policy, Padmaja, has always been, we will be everybody's friend if you're friendly with us, but it's India first. Which is our primary goal. And so this is something that works. I think the point on oil, and this was mentioned earlier on, is that, look, I mean, we've got relationships with oil all over the world. We wanted to import from Russia. We couldn't at the present moment, but because we've got great relationships elsewhere, we continue to sort of fill that void for the moment.
But Brahmachalani, what do you make of people who still are wondering, how do we trust, or how much do we trust? It had happened when we were engaging with China, that fine, you're going ahead, you're having those hugs and handshakes, but can you really trust China? How much can we trust Russia? Because one of the factors quoted there is they also have a working relationship with Pakistan. They do trade with Pakistan as well. And with China, of course.
लैंग्वेज को कैसे भारत के
All right, we don't seem to have his audio now, but can I just
don't
say...
think Dr. Chelani is with us.
I think the other point, Padmaja, is that, and you make a great point, is that the Pakistan Air Force's JF-17s have Russian engines.
Yeah. No,
the same ones as...
But it's a fraction, right? I mean, if we look at the kind of trade they have...
It's a problem. India doesn't appreciate Russia, that their
But Russia will also look out for themselves.
Their transport, let's look at it from an India standpoint. Pakistan's transport fleet of aircraft
China
is Russian. The Russia provides Pakistan with jet engines. So that's a bit of a problem.
Guys, I want to zoom in for a moment to these pictures. Let's just dwell on these pictures in a bit. Once the leaders are here, we'll talk about the trade and other things. Vishnu, the officials you see around the Prime Minister's vehicle right now, because our viewers are very interested in this stuff, are the Special Protection Group, right?
Yeah.
Who are the agencies that will be arriving with the Russian president?
So it's there's a special group which protects the Russian president. There is the KGB as well. There are his inner line of bodyguards who would be sort of coming in at this stage. These images from just a little while earlier on, Prime Minister Modi over there, he's of course protected by the SPG, which is his inner line of protection. So there's a great deal of security over here at this particular time. Remember, this visit does come not too long after the horrific Red Fort blasts which took place, and the plot against India at so many levels, which is a cause of concern. But President Putin has chosen to come over here. He operates under extremely high security conditions, not least of all because of the ongoing war between Russia and Ukraine. If you look at the flight path of his aircraft, he was flying in east of the Black Sea, not too far away from, the center of the conflict between Russia and Ukraine, before his aircraft entered Afghan airspace, Pakistani airspace, and I think in just a little while from now, he will be landing. So a couple of aircraft likely landing, either one of which would have him. One might be a decoy aircraft. But the Prime Minister, in this very rare gesture, it is quite rare, it's infrequent, it's not that he's not done it before, sort of sending out a strong message of friendship, sending out a message where he sort of lets everybody know about the warmth of this gesture. Now, how will America look at this? How will certainly European countries? That's interesting because Shiv and Padmaja, as you know, just day before yesterday, we had 3 ambassadors of European nations writing in the Times of India in a joint article that they had serious concerns about Vladimir Putin and the way that he's been dealing with Europe, to which the External Affairs Ministry and sources over there seem to indicate that, look, you're in our country now, so this third-party interference in the name of, freedoms to write what you want, let's be respectful of one another. I think that was the basic message. Padmaja?
Absolutely, but it was interesting. You can also look at it from the prism of, well, in India, you do have the right to free speech because you had a very, cogent rebuttal or a response to that coming from Russia as well. Despite what is said about India, the fact is that we are standing up for ourselves. We are engaging with everyone on our own terms, and everyone gets to say their piece as well, respectfully. However, red lines should not be crossed. I think that has been made very, very apparent. Ambassador Sajjan.
Excellent discussion, and if you permit, I will make 2 very quick points. I think one, we need to, both between the United States, that is the one that has been pushing against India. The United States, Mr. Trump told EU also to levy the same tariffs, that penalty tariffs that he had imposed. He said no. As far as these countries are concerned, maybe we need to differentiate between what Europe is doing, because Europe has said that fine, we recognize what India's position is with respect to Russia and Putin, but we will continue to do business, and we are looking at signing an FTA with the EU. For all we might have the president
All right,
of the
Ambassador,
European
I'm just
Commission.
interrupting you now. We do appear to have some images which are coming in at this stage of an aircraft. This is at the Parliament airport, as I understand it, that we've got these videos coming in. This is an older. Ignore that, ladies and gentlemen. I think that was the French president's aircraft.
Yeah.
We just got to ignore that for a while. I think this is a mixed feed, which is actually coming in over here. But this is the live images from Parliament. But Ambassador Sajjanar, carry on with the point you were mentioning.
Yeah, so that was one point. Second thing, the point that was made by, I think Padmja or you, Vishnu, that Russia is having good relations with Pakistan. I think this is not an era of exclusivity in relationship. That way even Russia could tell India that you have such excellent relations with the United States. You have such excellent relations with Europe. So, we are following that policy of multi-alignment, that we will work with those countries with whom we can work. We will continue to take that partnership forward. And of course, the most important thing is make ourselves very, very strong, very, very capable to deal with any of the challenges that might emanate, whether it is from a Western neighbor or it is from a Northern neighbor. The second point that I was making was, or let me mention about, Prime Minister going to receive Mr. Putin. Mr. Putin has been here 3-4 times earlier. The Prime Minister never went to receive him earlier. So, we have to see it in the context of the changed circumstances that were taken place. He has gone, I did my research work, he's gone to receive just about 6 or 7 leaders. Barack Obama in 2015, Trump in 2020, Sheikh Hasina in 2017, Emir of Qatar earlier this year, and MBS, some time back, and also the president of Abu Dhabi, and Shinzo Abe, Netanyahu. These are all the leaders that he's gone. But Putin has come here 4 or 5 times earlier.
Yeah.
So I think we need to really see what has changed now. I think this is time to pay back what Mr. Putin, the manner in which he conducted himself in Tianjin, and he was able to create that moment. I think that is, one of the very significant reasons. And the last point that I was making was earlier, that was we really need to differentiate between Europe and the United States. We club them together in the West. But I think, as I was saying, we might have the president of the European Commission as our chief guest at the Republic Day next month. So, our relations with Europe also continue to be. They are also mindful of India's interest, that India has long-standing.
What shots are these? All right, Ambassador Sajjanar, one other key point which I think we need to reflect on slightly is BRICS. Now, that's something that irritates the United States to no end, but Brazil, Russia, India, China, and South Africa, that's a formation which is absolutely huge. The fact that we've had President Xi, Prime Minister Modi, and President Putin meet in Tianjin in Russia recently, and the fact that Donald Trump is wary of BRICS, could you tell us about the dynamics there between the 3 nations, in as much as India has problems with China?
Of the expansion of BRICS, as China has been, and Russia has really had not much. It has gone along with China. Let me put it this way: it has gone along with China in terms of the expansion of BRICS. But whether it is India or it is Brazil or it is South Africa, they are not happy with the expansion of BRICS, because they thought that when we are just 5 of them, then they have a certain clout, they have a certain preeminence, they have a certain profile. But when the club gets expanded to 15 or 20, then of course the preeminence of China will remain. preeminence of China will remain, but the importance of the other members like India, Brazil, etc., that will come down. So that is the internal dynamics. But as far as Mr. Trump is concerned, I think we have told very clearly that BRICS for us is a non-Western organization. It is not an
Interrupting you now, Ambassador. I'm sorry to do this, but we've got some breaking news coming in. President Putin's aircraft, assuming that this is the one that Flight Radar is tracking, it's going to be landing in about 2 or 3 minutes, maybe 4 minutes from now. It's just flying over South Delhi at this stage. So, ladies and gentlemen, in case you've just joined us now, what you are seeing are images from Indira Gandhi, from the Palam Technical Area, which is a part of the Indira Gandhi International Airport. That's where the Russian President's special aircraft, an Ilyushin 96-300 PU of the Special Flight Squadron of the Russian Air Force, will be landing in a little while from now. Prime Minister Modi, you can see, is there to greet him. It's uncommon for the Prime Minister. Okay, he's landed over there. This appears to be one of the aircraft which has landed. That is an Ilyushin aircraft 96, IL-96-300 aircraft, which has landed. We are waiting to see if that is the primary aircraft which is carrying Vladimir Putin, or there is another one as well. There is a decoy aircraft. It's not decoy. It's actually a backup aircraft in case one is non-functional for whatever the reason. But I think it is safe to say that there is. It's likely now that the Russian president has landed in India. He was expected to land at about this time. I would suggest that about 20 minutes later than what was expected. Shiv.
That is Putin's Ilyushin 96 wide-body aircraft. It is the aircraft that the Russian president uses. It's a cold night here in Delhi as the president of Russia arrives. He was here in India the last time 4 years ago, but Prime Minister Modi and Putin met only a few months ago in Tianjin in China for the Shanghai Cooperation Organization Summit. So this is the second time that they're meeting this year, Padmaja. And the president has only 2 items on his agenda tonight. There's that ceremonial welcome that we'll be seeing live here. And I can't wait for those pictures for the Prime Minister and Putin. I think we just have to wait a few more minutes now.
And a lot of people talk about the kind of chemistry they have shared since 2014, but it goes far, far beyond that. In fact, some very interesting pictures that had emerged of when, as the Chief Minister of Gujarat, Mr. Modi had met with the Russian president in Moscow. He was at that time, of course, a junior figure. He was representing what many would later call a small state. But when the Prime Minister spoke about that meeting in 2001, when Mr. Modi had accompanied Atal Bihari Vajpayee, he said that President Putin treated me with great respect and honor even at that time. And that established the foundation for our enduring friendship. It was incidentally during that visit, almost 24 years ago, that Mr. Modi, as Chief Minister, had signed a historic protocol agreement for cooperation between the state of Gujarat and the Russian province of Astrakhan. So these two men have a relationship which goes back quarter of a century, 25 years. They've known each other, and they still say that that's what has deepened the bond. So irrespective of whether Mr. Trump is happy or unhappy with the kind of relationship that two of them enjoy, at least it's a strong one, it's an enduring one, and it seems to be only getting better.
Vasudha, our political editor, is also live with us. Vasudha, very quickly, we'll
come back to Vasudha in a moment, but just for our viewers, the aircraft on your screen, an Ilyushin 96, that's the Russian presidential flight which has just landed. There is another aircraft, I can tell you, also on short finals at this stage. We have to wait and see if this is actually the aircraft which has Putin, or whether there's another plane which the one that's about to land, which has him. And if you see a lift being taken up to the aircraft, staircases rather, the official one, with a red carpet being taken up to the aircraft, then this would be the likely aircraft. But we've got it. Journalists around the world have gotten it wrong in the past. We'll have to wait and see whether indeed this is the aircraft. But the presidential visit is beginning at this stage. It's a critical visit at this stage, one where we're going to see the president of Russia, Vladimir Putin, come out of one of 2 aircraft. This is the first one on the ground in a little while from now. And he's going to be having a meal with the Prime Minister tonight before a very busy day tomorrow before he flies out. It's been an approximately 6-hour, 12-minute flight, is what I can tell you. The president has a busy schedule tomorrow. There's the India-Russia official talks which take place, the summit as it were. We have a special privileged strategic partnership. There's a business delegation which is already in the midst of talks. And after that, we've got many more items coming up. Well, I'm joined now by our political editor, Vasudha, who has a lot more at this stage. Vasudha, what's happening? Where exactly are you? What's happening?
And what's going to happen at that dinner? And are they going to travel together in a car, Vasudha?
Well, Ashil, I had covered the Prime Minister's visit to Moscow last year, and I remember it was a private dinner that Vladimir Putin had hosted for the Prime Minister that made all the news because the Prime Minister made a very strong pitch for multi-alignment. At the same time, he said it very clearly that ye yudh ka yug nahi hai, and that also showed that while India can be friends with Russia, it's also very clear that it will send across the right message that it believes that there are no solutions that can be found in the battlefield. So there's a lot that's expected from the private dinner today. There's been a lot of secrecy over what the menu is, but I'm told that there's been a lot of excitement. We were not there was also a lot of secrecy as to who is going to receive him. But I remember covering the UAE King's visit to Gujarat for the Vibrant Gujarat Summit, and the Prime Minister himself went to receive him. This was his way of reaching out to his old friends, old allies, diplomacy at its best, Modi style. So we can expect a lot of desi tadka to this. At the same time, this is one of India's tried, tested allies, one of our most faithful friends. So, of course, there's going to be a lot of loyalty. There's going to be a lot of warmth in the dinner is what I'm expecting.
It's interesting you talk about this long-standing relationship. A lot of people have tried to make it seem as if this is in reaction to, that this closeness is in reaction to the seeming hostility or at least the occasional barbs from America, from Donald Trump in his second term. But the fact is, and we were just discussing it a while ago, and you've actually covered so many of these visits, Vasudha, that it stretches back from the time when Mr. Modi was the Chief Minister of Gujarat, cut to when in 2014 he met for the first time as Prime Minister. He met Mr. Putin again. And even at that time, he said that you are a great friend of our country. And this relationship, India and Russia, is incomparable. So between the two countries and between these two men, this relationship goes back more than 2.5 decades.
Well, Padmaja, I was in the parliament today and I happened to speak to certain sources, and they're telling me that there is more at stake for Russia also, because remember the last time the president came to Delhi, it was a different world, it was a different India. The war hadn't begun, COVID was on, and Trump wasn't there in his second term. So, this is also a great opportunity for Russia to send out a message that things are getting normalized for the isolationist policy that the West has towards Russia, and more importantly for India. We have been told by government sources there's going to be a lot of focus on MOUs, there's going to be a lot of signing on shipping and defense-related pacts, more importantly on pharmaceuticals. So a lot is expected, but most importantly, like Shiv mentioned, the carpooling, the softer highlights of this visit are also something that people are looking forward to, because Mr. Putin has always said that Modi is a great friend, and more importantly, India also wants to send out a message that it can
Good evening, viewers. As you can see on your screen, Russian President Vladimir Putin has finally touched down in India. The countdown that we were counting for so many days has finally come to a close. PM Modi, as you can see on your screen, the visuals, really captive visuals of the airplane landing in Delhi. This, remember, viewers, is Putin's visit to India after 4 long years. He had visited India back in 2021. This visit, as you can see on your screens, it is so important, it's so strategic, because for a long time, India and Russia's relationship has stood on a bedrock of defense ties. We have always had a very strong defense partnership with Russia, but this time around, along with defense, we're also focusing on strategic economic ties. We're focusing on how to really bolster our agricultural ties. We're thinking about technology. Of course, even before Putin visited India, there was a spokesperson from Kremlin who spoke about decreasing our trade deficit. There were talks about how India exports more and imports less from Russia, and from their end, this is the key important point of the messaging that is going to happen. I in fact have my colleague Rishabh Bhatnagar, who's been tracking this key diplomatic meeting between India and Russia, joining us at this given point in time. Rishabh, over to you.
Right, Malika, you have President Putin, who's landed in New Delhi. A very interesting 2 days of meetings lined up for him. From a trade perspective, what is important to highlight here is that there has been a very clear cognizance that has come in from the Russian side that the bilateral trade between India and Russia has been heavily skewed in favor of Russia, and that needs to be remedied. And that is something that Russia is very much on board. Russia, what the ministers today, a bunch of ministers at FICCI's Russia-India Business Forum today, they also spoke about how this trade balance is, there's a lot of imbalance in trade, and that needs to be remedied, and they are ready to buy more from India. And when it comes to what sectors they're looking for pharmaceuticals, they're looking for consumer electronics, they're looking for home appliances, they're looking for a lot of non-energy purchases. Remember, a very large chunk of the bilateral trade that India and Russia have, about $68 billion, almost all of it is purely coal and oil that India is purchasing to fulfill its own energy needs. But the aim now is to diversify that. It is to diversify India's export basket to Russia. Who, despite being such a large agricultural economy, India contributes less than 2% to what Russia exports. And Russia, being a very cold country, is not able to grow a lot of tropical fruits or even other crops. And that is where India can step in. So you have a lot of cooperation that is coming in on the agricultural front. There's a lot of automobiles, textiles, auto parts, leather, healthcare, IT, all of that is missing from Russia's import basket from India, and that is something that will be remedied. That is something the Commerce Secretary Rajesh Agarwal highlighted today, and he said that these are going to be very crucial parts of the trade basket. Remember, an FTA is also in the offing. You have the Eurasian Economic Council that is led by Russia, and they are willing to sign a free trade agreement. The terms of reference have already been confirmed by both the sides, and now what we can expect is a structure of negotiations to come out, and what we can finally understand is and possibly a timeline as to when a potential free trade agreement could come out. What we're also seeing is that there are a lot of tariff as well as non-tariff barriers that are left to be addressed. The Russian side has shown a lot of willingness into removing a lot of these standardization and testing protocols, and they've said that they are very much welcoming Indian businesses to come into India to tap the Russian market. Two of Russia's largest e-commerce websites, Ozon as well as Wildberries, those are essentially the Amazon and Flipkart of Russia, and both of them have very much welcomed the sort of demand that Indian goods have, and the sellers that and Indian sellers to be brought on board to their marketplaces. So we're seeing bullishness coming in from the Russian government so far. Tomorrow there's an entire day packed where you'll have a lot of engagements between Prime Minister Modi as well as President Putin, and we'll keep tracking that as well.
Of course. And as you also mentioned, there were some really interesting comments made at India-Russia Business Forum, and I'd actually like to draw attention of what Piyush Goyal also mentioned at the event. Piyush Goyal spoke about India's special and privileged strategic partnership with Russia and the expanding areas of cooperation that continue to deepen our economic engagement with Moscow. The minister also highlighted the untapped opportunities for Indian businesses, key sectors with strong potential for collaboration. And you can see on your screen, we can see Vladimir Putin. He will come out of that airplane anytime soon. Of course, before his meeting, we've had key ministers from Russia speak with ministers in India across the various sectors. In fact, we have been reporting a lot of it here on NDTV Profit as well. Remember, Putin's visit to India comes at a time when the country seems to be walking on a trade tightrope with the United States on one end and Russia on the other, because half of the 50% tariffs levied on Indian imports by Washington are imposed as a punitive measure for New Delhi's continued purchase of Russian crude. And India and Russia, as Rishabh already highlighted just a while ago on the phone, stands up to about $69 billion. And both these countries aim to expand our bilateral trade to $100 billion by 2030. And he mentioned that this time around, the focus is going to be on various sectors, not just defense. It's going to be on agri-tech. It's going to be on technology. It's going to be on how, basically, in one word, if I had to describe the diplomacy of India, Russia at this given point in time, it's going to be a multilateral focus. As you can see on the top band also, we write that energy and defense are going to be key areas of the talking points this time as well. PM Modi this time around is also going to host Putin in a private dinner meeting. And we have Rishabh also, in fact, with me at this given point. Rishabh, could you give us more?
Right, Malika, I wanted to add one more point, very interesting. When we talk about agricultural exports, what we often miss out is the seafood exports that India does. India is the largest shrimp exporter. India is the largest shrimp exporter that there is in the world, and Russia is a very large consumer of shrimp. But currently, India does not sell a lot of shrimp to Russia. And what we heard from a lot of fisheries today was the fact that they are willing to approve a lot of Indian fisheries, new Indian fisheries. So today, what the Fisheries Minister of India said, Rajiv Ranjan Singh, he said that about 128 seafood processing units for exports have been approved to Russia, and another 32 are left. And this entire day and this entire engagement could also see those 32 being approved. What we're also seeing is that seafood exports are the ones that have faced a lot of tariff challenges as well when it comes to the United States, and United States was India's largest market. So if that is shut, another door has opened with regards to shrimp as well as seafood exports in EU and Russia. So that is something that is also of a lot of importance as we go ahead. What we're also seeing, and like you mentioned, the oil exports and the oil tariffs have been a very large part of the conversation over the past few months as India has faced an additional 25% tariffs simply because it is buying Russian oil. And that is also definitely going to come up in the conversations. That's something that Kremlin spokesperson Dmitry Peskov had stated in a press conference a couple of days back. So that is something that is definitely tracking worthy. And what we also need to look forward to is the sort of agri-tech collaboration can be done.
Right, Rishabh, thank you so much for filling us with all that information. And viewers, we'll cut across to NDTV to get you all the latest updates from Putin's visit.
India Business Summit, which is happening at the Bharat Mandapam. President Putin will be going over there at approximately 3 p.m. in the afternoon. He'll be going to the Rajghat prior to that. Before that, there will be the primary summit between India and Russia before the evening. And in the evening, there'll be that banquet at Rashtrapati Bhavan before he departs.
You know, the last time we had a frame, okay, the Prime Minister, I think that there was the Prime Minister walking towards that red carpet. We'll keep an eye on those pictures. But, you know, Vishnu and Padmija, the last time we had a frame of this kind, live pictures of a VIP aircraft and expecting someone to come out. You remember it was that viral picture of President Macron and his wife, and you know what happened. Okay, that's the Prime Minister who's on the red carpet now. That's the Prime Minister on the red carpet. So he is going to be there, like we correctly told you, that the Prime Minister is right there. There he is. All right. There he is, skipping down the stairs off that IL-76 towards his friend Narendra Modi. Okay, let these pictures play out. And the President is on Indian soil now. There's no sound. I just want to tell our viewers there's no sound in these pictures in case you're wondering. But there you have it.
Okay, there's the money shot. You have the handshake followed by the hug. Prime Minister Modi there in person, breaking protocol, right there at the red carpet to welcome Mr. Putin as he touches down on Indian soil.
I think at this level, there is no real protocol. He decides it.
Pretty much.
The two leaders are on the red carpet over there. Yeah. You know, I mean, it's the delegation, receiving the Russian president over there, diplomats. I can see India's ambassador, Vinay Kumar, India's ambassador to Moscow over there, shaking the hand of the Russian president over there. You can see the Russian ambassador as well. You can see members of the Russian embassy, their defense staff who are posted over here in New Delhi, greeting President Putin, and then Prime Minister Narendra Modi along with the Russian president. Let's see what takes place. There's sometimes a small cultural event which also takes place. I think that's something that they are witnessing now. We'll just see what happens over there. We've got these images up full screen, and then we'll have to see if there is a small guard of honor. If that is the cultural event I was talking to you about, a small dance. They'll spend a few minutes over here before he proceeds to perhaps taking the salute and then getting onto his vehicle and leaving. So there's not very much formality.
These pictures are very, very important, Vishnu and Padmaja, with the dance. A lot of people will be wondering, why the dancers there. Is this really necessary? The soft diplomacy relationship between India and Russia is enormously significant. And it's something that Putin has mentioned over and over again. The dance culture, the connect between people of India and Russia goes back decades and decades. There are a huge number of Russians who learn Indian dance here in India and vice versa. So these things are not, just cosmetic little embellishments.
They're traveling in the same car. They are about to travel in the same car.
Did they get into the same car?
Yeah, I think President Putin got into that car, and you can see Prime Minister Modi getting into the same vehicle. So this is that vehicle of the PMO, which the two leaders are in. You can see President Putin in the back.
So we can confirm that both the leaders are in the same car. So Padmaja, you were right. You asked that question first. Are they going to ride in the same car? Here you have your answer.
Unlikely.
Here you have your answer.
It's over to you.
Well, it's wonderful. Talking about the soft diplomacy, it's interesting about 10, 11 years ago when Prime Minister Modi had gone to Ufa, at that time in a very small... I was there in Ufa, yes. Well, yeah. So in Ufa, you had an entire community of Indians who were teaching yoga. And you had about 50 to 60 Russians who used to wake up every day at 5 a.m. and at 6 a.m. they used to all assemble for yoga. And I was like, of all the places in the world, I hadn't expected people to wake up at 5 a.m. to do yoga in Ufa. But you're right. That's what soft diplomacy is all about. And that is why we keep analyzing these small gestures, the cultural exchanges, the cultural shows. This gesture of traveling in the same car, we will very likely get that picture of the two of them smiling at each other. This is very important. In diplomacy, it's not only about what you say, but also what you are seen to be doing. These pictures are going to be splashed on the front page of every newspaper across the world. Prime Minister Modi and the Russian president in the same car, leaving now for... where will they be going? Where will this car go, though?
It could be just Prime Minister.
Will they be going to
drop him to his hotel or going straight to the Prime Minister's house? I mean,
to be fair, Maurya is on the way to Lok Kalyan Marg. So,
but is it as informal as that? I mean, it's just unbelievable.
No, but Vishnu, I think we can agree that this is Modi-Putin protocol.
That's the Russian beast.
Okay.
The Russian beast, that black car, the Russian president's limo is following the two leaders.
That poor beast has been told, "Hamara picha karo."
That beast was brought in for the journey from Moscow, all the way flown across over here.
Follow this car.
President Putin gets into Prime Minister Modi's vehicle, and the two go off, and the beast follows.
I think this is such a beautiful symbol of how these two leaders, who of course respect protocol and the agencies that protect them and serve them, but are manifesting how there is a degree of spontaneity to this relationship. The fact that they are so easy with each other in their physical space, they're traveling in the same car. I don't even know what car that is. That's a PMO vehicle, I'm guessing. So either they're headed towards the hotel. I'm guessing they must be headed towards 7 Lok Kalyan Marg right now. That my guess would be that they're headed straight for dinner.
That probably makes sense. Because it's 7:20 in the evening now.
Yeah.
And whenever there's a visit,
early dinner and
at a hotel, there's a bit of a ceremony over there. It takes time. This, that, and the other. But I noticed that those armed forces soldiers who were there, the tri-services sort of contingent, they didn't have any role. I mean, there was no small salute over here. The playing of the national anthems.
I'm guessing that will be tomorrow at Rashtrapati Bhavan.
I'm just trying to understand whether this was abbreviated. It could well be that this, because there is usually a bit of a salute that takes place as you get off the steps. The president would likely salute, Indian soldiers, and there was a contingent that didn't take place. So there will be a guard of honor tomorrow presented in the forecourt of the Rashtrapati Bhavan. That's when the formal welcome begins. This is more personal, which is taking place now. And let's wait and see. This is outside Palam Technical Area, and that's right next to the Air Force Museum, when this motorcade is exiting. And we'll see the Prime Minister and President Putin in a white Toyota Fortuner SUV. That's the vehicle the two leaders hopped onto.
Also important to note that in Tianjin, it was Prime Minister Modi who traveled in the Russian president's beast, but today it is Mr. Putin who is in Mr. Modi's car. So a sort of a reciprocal gesture there. It's he who's hopped onto his car with his beast tailing all of them.
The beast has gone off. They were ahead of that. But it's interesting, isn't it? I mean, I think that point on reciprocity is important, that, both leaders sort of doing that. You come into my car, I'll come into your car. It shows the trust between the two leaders, the friendship. What I find interesting is...
When one is traveling in the other's car, does the security also accompany them in the same vehicle?
Padmaja, there were only 4 people in that car. So where is the translator? Because there would be a bodyguard up front, unless there was no bodyguard up front and there was a translator up front, because this is really, really informal. But President Putin speaks English. I've spoken to him in English.
Both of them speak English.
Yeah.
The Prime Minister speaks English too.
It's not something that President Putin dwells on for a great period of time. But I mean, it's evidently enough for the two of them to communicate. I don't think there was a translator in that.
No, I have to also underscore that level of trust. If you're leaving your security behind, or at least you're paring down your security, you'll have to. If you're traveling in each other's car, at best you can take one bodyguard along. I think we also got Aishwarya, Vasudha, all of our colleagues from the ground joining us. The convoy, of course, has already left the Palam Technical Area. Where they are headed, let's try and get a fix on that. Aishwarya? Where is the cavalcade headed? Where is the convoy headed? All right, we'll just try and get back to our reporters. You would imagine that there is quite a lot of movement in that entire area. We will try and fix that connection and go back to them. But a very, very... Okay, Vishal Vivek is joining us now from Bharat Mandapam. Any fix yet on where both the leaders go next, Vishal?
Well, as you guys have been rightly discussing that it could be either the PM house or, it could be the ITC Maurya where Vladimir Putin is expected to be living. But the dinner is supposed to happen. That we've heard from sources that the big dinner between both the leaders will happen. So all eyes will be on that, whether there are discussions that we have all been talking about, whether it's defense, whether it's AI, whether it's, cooperation when it comes to, exchange of personnel, because Russia has been wanting at least 500,000 skilled workers from the Indian side only. So that is one of the biggest points of discussions that both the sides will have. So all of that will be coming into play in the next hours, few hours or so. But the main, the main gist of the whole the visit, that will be tomorrow, because tomorrow the Russian president will be meeting officially the Prime Minister of India and also the President of India, and also there will be meetings with the business leaders of both the sides. That will be at 3 p.m. in Bharat Mandapam, where I am right now. There was a big conference here today as well. Some senior ministers of the Russian side were here.
We're trying to get a fix for our viewers on where the cavalcade is headed right now. Akhilesh Sharma, managing editor, is also with us. Akhilesh, both the leaders are in the car making their way towards, I'm presuming, the Prime Minister's residence. What are you hearing for that private dinner?
Yes, this is what we have also heard, Shiv, that immediately after departure from the airport, they will arrive at 7 Lok Kalyan Marg, which is the official residence of Prime Minister Narendra Modi. And PM Modi has actually arranged a private dinner for President Putin. And though the details of private dinner are not disclosed so far, that those who are invited, but it is believed that those who are close to President Putin, like Deputy Prime Minister is already here, he will be part of the official dinner, which is being hosted by PM Modi at 7 Lok Kalyan Marg. And apart from that, PM Modi has also invited a few senior cabinet colleagues for this meeting, and there will be informal discussion as far as this dinner is concerned. And because this is unusual, first Prime Minister breaks the protocol to receive President Putin at the airport, and now without being given the guard of honor, which will actually happen tomorrow at the President House, the private dinner is being hosted right now, and they are traveling in the same car. That is also a signal about the bond and the friendship both the leaders share. Sure.
Let's also go across to Himanshu, joining us live from Sardar Patel Marg. I believe the security has been set up there. The Prime Minister's route is going to pass through that area. Over to you, Himanshu.
Well, I'm standing a few meters from the SP Marg, and on my left side you can see the PM security protocol, and this is the cavalcade. We can see perhaps the first car in the cavalcade, which has just crossed our television screen now. This is SP Marg. This is the route which is just a few meters from ITC Maurya, where President Putin will stay. His entire delegation will stay. In fact, you can see one by one the vehicles are crossing this area, and on my right side you can see the barricades have been put in place, and this happens when Prime Minister Modi travels within the city. So all the vehicle has been stopped on this road, and any time now on the screen that you see, the Prime Minister with President Putin will cross this road just in next few minutes. And interestingly, this ITC Maurya is just a few meters from where I'm standing now, and this is also the route that Prime Minister takes to go home to 7 Kalyan Marg. So I think we'll have to wait for perhaps a few more minutes, but as you can see, the PM security protocol has been activated on SP Marg. This is exactly the route that Prime Minister Modi had taken when he had gone to Palam technical area to receive President Putin, and this is exactly the route Prime Minister Modi will take to come back with President Putin. Of course, you've been talking about the political significance, the diplomatic symbolism of Prime Minister Modi going to receive Putin, and now you can see the security vehicles are gradually crossing this area. It's a long cavalcade, we have been told, because there are Russian security agencies also along with the SPG and the Delhi police, and that's why there is very tough security. The entire road has been sealed from here till Palam technical area. There are hundreds of paramilitary forces who have been deployed along this route, and we have seen last 2 hours extremely high security. The ITC Maurya hotel, in fact, has been sealed from all sides. No outsider is being allowed to go inside except the Russian delegation. And I can see the sirens now on my right side. There is a movement of VIP vehicles.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And today, Anushi, the company is a Raymond Group company, but it is a demerged version of it. The realty business is coming in. And largely, there is no major coverage from the analyst community as well. And a lot of our viewers actually wrote to us and they stated that let's figure out what is this company all about. But there are a lot of questions about this company. But after its listing, Anushi, it hasn't been a great returns for the shareholders, of course, who are holding in the Raymond in that demerged basis. But let's put out the questions, what we want to actually know about the company. The first question is, which categories is the actually company focusing on? Is it the mass affluent or is it the recently announced luxury segment? They have a massive project in Thane, that's something which we'll be looking out for. And will this expansion involve non-MMR markets as well? MMR is the Mumbai Metropolitan Region markets, to simplify for our viewers, and how the demand queries are actually coming up for these new projects. Interestingly, Anushi, the third quarter is a very heavy quarter for realty space as well.
A lot of launches.
Yes, exactly. Launches, pre-sales, which you track. Land monetization plans ahead, that's something which you'll be looking out for. Will they go for JD, JV on an asset-light basis? And the timeline for the promoter press release, that is an overhang in this stock as well. And cash flows also, we saw in H1 numbers that got impacted, maybe because of upfront higher costs in the realty space. So these are the key questions for this company. Very less tracking of the company. That's why I think we should give a 360-degree view to our viewers for KYC. So Anushi, what is it about the company totally?
On that note, let's start off with what's happening with the company. So if we just talk a little bit about it, it's mainly its presence is in the MMR region, and it's a real estate development company of the Raymond Group. You know, Sharad just spoke about the recent demerger which took place. That was Raymond Lifestyles as well as Raymond Realty now. So it was demerged from the Raymond Group on 14th of May onwards, and then it subsequently got listed from July onwards. So since then, we'll be tracking its performance and how the financials of FY25 have also shaped up. But just a little bit about the kind of portfolio that the company has. Now, it has about 100 acres of land parcel in Thane. If you take the whole long-term portfolio consideration of the gross development potential size that we're looking at, 40,000 crore is what we are seeing. Thane land parcel of 100 acres. Along with that, they've signed joint development agreements as well. So this adds up to about 25,000 crore. JD opportunities adds up to about 14,000 crore. So cumulative 40,000 crore is the kind of mix that we are looking at. Now, do note that currently of this 100 acres land which is there, 55 acres of Thane land is currently under development, of which if you look at the realization part of it, revenue potential is around 13,200 crore, of which so far 8,200 crore have already been sold. While if you look at the remainder, from that, they have collected 6,300 crores so far as well. So, you know, FY26, the second half, the FY27 picture is an interesting scenario, considering that they have this huge land parcel which is already in place. With the JDAs, they have a development potential of around 14,000 crore. We'll see a couple of launches coming in these next 3 to 4 months, in the 6 to 9 months period itself. And these are 3 to 4 launches that we are seeing across Bandra and other key regions in Mumbai as well. Balance will be launched in the next 12 to 18 months is what we are looking at. So if we just take a mix of what's happening, your Bandra, Mahim, Sion and Wadala are some of the key areas where these JDAs are coming in picture. And if you are looking at that, all of these are located in MMR region. They do not have a presence apart from these particular markets that we are seeing. In terms of the mix also, while it is in premium and luxury, I want to just point out how the owned land bank is shaping up and how the JDA is, since JDA is a rather asset light model that we are looking at that. So current FY25 and 28, if you just pull up that one, from a 78% mix, now it is estimated that that would be 50% or odd so in FY28, while JDA contribution from 22% will move upwards to 50%. Now this is the management's aim to bring this ratio to 50-50. So this is an interesting part that we are looking for the company. And with these key launches planned in the second half, how pre-sales and thereof the cash flow shape up is something that we should be watching out for, right?
Yes, Anushi, the expectations is a very important portion, she pointed out. But Anushi, the entire KYC segment, there are 8 parameters where we judge the company. But remember, it's not fair at times because the company's history itself is on a very short notice and there is a literally zero analyst coverage in this segment. But nevertheless, our format of the show is first we take in the income statement, operational parameters, especially for a real estate company. We are also taking in the balance sheet and the cash flow. These are the 4 most important parameters in the financial segment. Apart from this, the shareholding pattern, how it's actually panning out post the demerger, and the street cred, how the stock has reacted. It's a very short-term basis, but nevertheless, we will take them in. Valuations is also there, and overall outlook, that is very much important that we'll be judging the company on. So 8 parameters where the momentum would be coming in for. But Anushi, starting with income statement, what are you gathering from here? I think H1 numbers is something which you'll be looking at now.
Absolutely. So, before I talk about the income statement, I want to point out to the key operational metrics because, with real estate companies, we have pointed out that there's lumpiness in terms of how the revenue shapes up, how that is recognized. So, if we just look at the pre-sales number, now by the end of FY25, we are looking at a pre-sales of 2,300 crores, showing about a 3% of a growth. This is in comparison with a 67% or a 40% of growth figures that we've seen. So how H2 will shape up is something that we should be watching out for because even in the first half, there was a dip of around 35%. So pre-sales for these last 2 periods have been on the muted side, but the management is quite optimistic on achieving that 20% of pre-sales guidance. So that is on a positive that we are seeing. Collections also, while they've maintained a 21 to 22% of a growth in these last 2 fiscals, this time the collections were also down about 18%, but they expect recovery also in this particular metric. So considering all of these parameters and a huge launch pipeline that they anticipate in the second half, we've given this a neutral rating. Do note that the 4-year pre-sales CAGR, that stacks up to about 55% and 4-year collections CAGR is 64%. So the history has been rather on the positive side. It's now the expectation and execution which will be a key monitorable to watch out for, right?
Thank you very much, Anushi, for that. And it's a very important thing you stated is first, let's just put in the operational parameters. Then I think I'll just discuss the income statement and revise it once again. So already a neutral rating coming in from Anushi when it comes to the operational parameters. And that's the first thing to look at, not the income statement. Now let's look at the income statement. The revenue growth over here, that's of course 1,000 crore plus in H1. And EBITDA numbers are also there, but largely we do not judge a company in terms of these numbers in the real estate space. Net profit for all companies, it matters. It's decent, it's around 77 odd crore rupees, but the company needs to have a long history for us to judge as well. But net, it is decent and margins 22.9% ahead of this demerger. Now you see that's actually coming down, so that might be a cause of concern. But nevertheless, let's give it more time to the company as well. So it will be a neutral rating coming in from my side.
So on the margin part, there is expectation that this would scale back upwards to 20%. So that would be something that, the street should be watching out for, whether this 20% number will be there in the next FY27 figure that we are looking at. But moving on to balance sheet now, if you just look at equity and other equity, of course, there would be divergence in terms of how these 2 numbers shape up, considering that there was demerger, so there would be new shares issued. Taking FY25 and H1 in comparison on a like-to-like basis would be unfair, but we'll just point out how the H1 has shaped up. Other equity stood at about 1,200 crores, almost up to 1,300 crores, while borrowings are 564 crores and cash in bank at 214 crores. So this considering the first half remains on the healthier side. So it's the future periods that we should be watching out for. Hence, considering the first half performance, considering the debt to equity level, which is on the lower side that we are looking at, we've given this a thumbs up.
Okay, a thumbs up coming in for the balance sheet. Cash flow, very important trigger for a real estate company, but of course we see the history is less, but it's on the lower side. Operating cash flows in H1 was down almost 300 odd crore rupees. Even the net cash flows is there just a mere 53 odd crore rupees. And we have seen that these cash flows, there's of course a lumpiness involved in that as well. Maybe initially the JV expenses which the company might be undertaking, that's why the hit is coming more on the cash flow. So because of that, based on the current numbers, I will give a thumbs down for the cash flow segment.
Okay, so that's on cash flows is what we are seeing. But moving on to shareholding pattern now, we'll have two periods of data as of now. Promoter holding remaining constant at 48.9%, while FIIs have offloaded some bit of that share that they had from June levels. We're looking at about 11% stake as of the second quarter end, while DIIs have about 4.5% of stake, and public holds 35% of overall value to the company, which is there. Hence, considering that there's limited data as of now, we'll be tracking for upcoming quarters as well on how the FII and DII mix shapes up. We've given this a neutral rating.
All right, neutral rating coming in for the shareholding. But overall, let's look at the street cred. Post its listing after the demerger, there hasn't been much returns coming in for the investors. Last 1 month stock is down 19%. But the cause of concern for me, since listing is down almost 46 odd %, and that downtick is something to be actually concerned about. Whether is this a wrong pricing which came in during its listing, or there's a lack of analyst coverage. A lot of questions do come in, but as and when company comes out with its own investor presentation, the management is going to talk with us in some time, then we'll get more clarity in as why there is so less coverage in this counter as well. But it has been on a free fall, so that's a cause of concern for me. So I will be giving a thumbs down for this category.
Okay, coming to the valuations now, what we've done is, while price to earnings, we've derived at a multiple of around 44 times, and this is based on the 12-month trailing EPS which is there. It seems like a metric that we should be constantly watching out for. It seems on the higher side though. So how this shapes up, considering that there's lumpiness in terms of where the income statement numbers are, we've given this a neutral rating as of now. So that's on the valuation part that we are looking at. So but coming to the outlook forward, which is there now, here is the interesting story. Firstly is the 20% of pre-sales growth expectation which is there. Along with that, now the mix in terms of joint development agreements, that is expected to be 50% in this next 2 to 3 years. Now this is an asset light model that we are looking at. So how the financials will improve with this higher mix is something that should also what we should be seeing. If we just talk about the planned launches which are there, now the company expects about 2 new launches on its own land, which is the Thane land parcel that we've talked about. Along with that, there's 3 to 4 new JDA projects which are coming. So if you just take a cumulative figure for the second half itself, it's a 5,000 crore of gross development value that we are looking at. And this is with the expectation that going forward margins will stabilize at 20% or so, which is a high uptick that we have seen from the FY25 and first half levels, going back to its previous trajectory which was there earlier. But along with that, they're also seeing that the cash flows, which we talked about earlier, that being positive as well from the second half. So that's the overall outlook that we have for the company. It's a neutral that we've given, right?
Sure. And let's just revise the overall standings, how the KYC ratings stand, and largely it has been neutral on the income statement and the operational metrics which Anushi pointed out. Balance sheet was decent, but cash flows is a cause of concern is coming in. And let's pull out the shareholding and the valuation neutral here. Street cred, we have given negative because there's a massive wealth erosion post its listing, and that's a cause of concern. We'll be dealing with the management. Outlook, it's neutral to positive overall, but net it's 4 out of it is generally historically we give that's an average number coming in for the company. But of course there was a big conversation you had, Anushi, and that was with Harmohan H. Saini. He's the MD and CEO of Raymond Realty. Please listen in.
Let me start off by understanding this new product launch or new project launch that we are looking at. If you can give us more details of this.
Sure. So this is a project which we are launching, which is in the luxury segment. The name of the project is Invictus by GS, and the location is BKC Bandra. This project has a total revenue potential of 2,000 crores, and it will be executed over the next 4.5 years. We are launching it today. The work at site has already begun. Then we are geared up for welcoming customers over there. We've already seen a very good initial response. This is going to be premium 3-bedroom, 4-bedroom, and even higher configuration, which will be available for sale. And good inventory with the excellent location. And this is what we have currently launched, and going forward we would be launching more projects also, since you mentioned our pipeline. So outside of Thana, we are launching another project in Wadala soon, end of December, beginning of January. That launch will happen. That's also a large project with revenue potential of about 5,000 crores of top line. And after that, in Q4, towards the end of Q4, we have another project which is in Sion that will be launching. That is with a revenue potential of about 1,700 to 1,800 crores. That's a project called Address by GS. Wadala will also be an Address by GS product. Apart from that, in Q4, we are also launching projects in Thana itself. So in Thana, we have already in H1 launched one Invictus by GS, one Address by GS. And in Q4, we will be launching a 10X product, which is a 2-bedroom community that has a revenue potential of over 1,000 crores. And then we are also launching a retail-focused high street inventory in Thana, which is Park Avenue. That there also the revenue potential is approximately about 1,000 crores. So in all, between now and end of the year, we'll be launching 3 projects outside of Thana and 2 more in Thana.
So, Mr. Sani, just want to understand, while the overall potential that you've given is around 40,000 crore, and I'm assuming this is a 5-year perspective that we have for FY26 and 27, what's the kind of overall gross development value that we are seeing, and how is execution going to shape up is also another question that I want to understand, considering that you're also targeting for an annual run rate of around 4,000 crore of revenue. So help us with that as well.
So what you're referring to is the pre-sales number.
Right.
So if you see last year we did pre-sales of approximately 2,300 to 2,400 crores. It's 2,300 some odd number. And what we've given a guidance that we will be giving a 20% growth over that, which takes the current year close to 3,000 crores, and we are on target to achieve that number with all the launches that we have planned. And this is how the entire year's planning was done by us. So in H1 we did pre-sales of about 760 crores, and it is going to be heavy in H2 for us. But that's how it was planned. And going forward also, FY27, if I see, there also we are looking at a 20% growth. Because with all these projects which we would have launched by end of this year, that growth would be more or less locked in, because we will have enough inventory available in Thana and outside of Thana to give us that kind of a growth number. And the 4,000 crore number that you mentioned that we will achieve, it will be towards the end of 28 or beginning of the year after that. We would have hit that number if you take this 20% growth run rate that I mentioned.
So just want to understand on that aspect, while you're maintaining a 20% of a booking growth, that's the pre-sales growth that we're looking at, the first half, we are looking at a decline of over 35% or odd. So is it on the basis that most of your launches are skewed towards the second half that we are seeing, or were there any other concerns like how other real estate players have also pointed out with regards to regulatory overhangs being there, or there would or pricing now playing into a factor which has led to that softer acceleration? Because across industry, if we see, there has been a slowdown in terms of where the volumes have been concerned. So just want to get the overall industry perspective as well, and how you are positioned for the second half, and even if you can give us a picture for FY27 as well.
So, for us, the situation was quite unique because we didn't have enough inventory to sell. So we did not see any hiccup or delay as far as the demand front is concerned. in Thana, we had such a bumper Q4 of last year that we didn't have enough inventory available for this year to show a big H1. But having said that, it was also planned in that manner because all our launches, when we see outside of Thana, because of the way they were lined up and how we had signed those projects, they were scheduled to launch only in H2. So, I mean, we have not experienced any regulatory overhang or any pricing pressure in any of our projects also. We've underwritten these projects at very fair assumptions, keeping in mind what the market is in terms of its cycle. So unless, we are compelled to sell at a very high price and then you see pricing pressure, I don't think we are in a situation like that. Can't say much about generally what the other players are experiencing. But as far as the market is concerned, I mean, I have not seen any evidence of pressure either on pricing or on volumes. When you talk about the growth number for us, for H1 as compared to last year, in our industry, you can't really compare quarter on quarter because a lot is dependent on when the launches are happening for each project, because you see a significant bump up in sales when the launch takes place.
Understood. So it's a 20% plus of growth that we can expect for FY26. And from what I'm hearing from the commentary as well, there's